Good morning.
Happy Tuesday.
You too, my friend.
Welcome back. Forex Focus on Tasty Live.
How about
Always
it?
fun to be here.
All right. Yesterday, interesting day.
Great day. Did you watch any basketball? No basketball.
I forgot.
I was trying to boycott. Me, lifelong Duke fan, got my heart ripped out on Saturday. So
But it's so funny because I was going to bet Florida just because I was like,
they're good.
but I wasn't going to bet the money line. I was going to bet the
Spread.
spread, and I
What
would
was
have.
it? Yeah.
The spread was 4.5,
There
so
you
I
go.
would have lost.
Yeah.
So
Good game. My roommate was in one
It
of the.
looked like a good game.
Yeah, roommate was in one of the bracket pools.
Yeah.
With his friends. Total prize was $1,300. Just needed Houston. That's a tough one. So tough morning for him.
Wow.
Sorry, Griffin, but yeah, no, I didn't watch, but good season.
Yeah.
Now on to
But
what?
you
Now
were
it's
disappointed
Masters
once your
week.
Duke boys were gone.
Yeah, no, that was really bad. That was a colossal meltdown. Up 6 with 30 seconds left.
Don't you like that though? That's hard when you're a fan, but I love that part about college basketball.
Yeah, it was impressive.
Again, you look at the favorite, and it's never quite sure, and
And you never know why.
No, and I think it's interesting. I mean, whether you're using DraftKings, FanDuel, or whatever, these guys are masters of science. As much as it's all about, what's Dave Portnoy doing and all the other junk, these guys are masters of data science because they are absolutely amazing at the way they set odds.
And even like copywriting and stuff like that. Like they're good at just creating engaging storylines.
That's a different piece, but I'm just talking about. They're running a trading business.
Yeah.
And they are running an incredibly complex trading business that, number one, they built great UX to make trading seem simple. And that is a real testament to...
hard thing to do.
Yes, but the how good they are at that. And when I looked at all those lines, like even last week when we were going through the Final Four, I was like, there's no blowout here. There's no edge. Everything's 2.5, 3.5 points.
And it's especially impressive when you have like these matchups where it's like, oh, you have the highest rated offense in the country and the highest rated defense in the country in two teams. And you're like, man, this could really go either way.
Right.
Like it could be a blowout.
So is this 3 straight for Florida? I should know this.
No, this is their first since like 2008, 2007. Yeah.
Now, did you watch the girl? The girls had their final on Sunday, right?
Yep, Sunday, like 3 p.m.
You watched that?
I did. That was not a close game.
You watched that at home, or did you go somewhere?
No, I was at home for that one.
You can tell the truth. It's okay.
I went to a UConn bar.
Loading, but
no, I was home. But yeah, nice to see them get a win. But yeah, it wasn't a close game. Run away.
Okay, so what's next for you?
I don't know. I guess Masters week, right? You watch any golf?
Yeah.
That's a pretty nice one to throw on. Watch at home. Or at work. It starts on Thursday.
Yeah,
right?
the boys do tee it up early. Yeah, I like watching golf. Golf's fun.
Yeah, we've got one Northwestern guy in it, Matt Fitzpatrick.
So no baseball.
I'm not huge on baseball. I like going to like Cubs games. It was fun. So in the summer, I'm tired of.
You like the spectacle, not the.
I don't watch day in day out.
Okay.
But man, it's still pretty cold out there.
Yeah, it's really.
We have like 2 weekends for it to warm up before I go somewhere else. Just call it.
Okay.
Out of here.
So when you go through the list of DraftKings stuff, you're not at ping pong at.
I'm not. I try not to be at ping pong. No.
F1.
I will. F1 is really tough. I love F1, but I don't bet on it.
I can't follow it anymore since they stopped doing the stupid show on Netflix.
Yeah.
I love that show.
They're just it's lagged. So the newest one came out for last year.
Are they catching? Oh, they are catching up.
Yeah.
Okay.
So check it out. It's pretty good. They just raced in Japan last weekend.
Okay.
But yeah, don't bet on it. It's hard. But I will say the fun thing to bet about in baseball is like you like finding out if the wind is coming in or out at Wrigley, and then you're like, oh, the wind's coming in, no home runs, and then they still absolutely.
What do you think about the new bat thing? Is everybody going to copy the bats?
Oh yeah, why wouldn't you?
Okay.
It's innovation.
Has everybody? I don't have the pay. they've done so much. I went to a baseball game last year, and the fact with that clock, it went so fast.
Yeah,
it's
wicked.
You had to watch,
Yeah.
or you missed stuff, which
done.
was great.
Yeah.
Because it used to be, there was too much.
Yeah.
It was 4.5 hours of just too much.
No, they did a great job.
Has anybody else?
A few teams have started with the other bats.
Okay.
I don't know how widespread now, but I'm sure it's only a matter of time.
Right.
And I wonder how big they can make. Or, they say they did it based on, like, the sweet spot. I don't know if other teams do their own data analysis and say, oh, for my guys, it's different. If we see the torpedo in different places, it'd be pretty interesting. But sure, if it's within the rules, go for it.
Do you golf?
Not very well, but I try.
Okay.
Early in the season, it's fun to get out there. Weather's nice. By August, you ask me, I'll say no. Probably 10 times out of 10.
So better equipment would help your game then. So in other words, if we got the sweet spot on the club face.
Exactly.
I don't know.
Yeah.
I
it would have to be large.
My clubs are like 10 years old. I went for a fitting last year, and my game's so bad. It was just like,
what's this
again,
gonna do?
they're talking about bigger heads and sweet spots and everything. It's like, it's still not helping.
Which one makes me swing better?
Well, that's it. And, they have you're just hitting against the mat, which is, for me, not particularly realistic.
Right.
So, I don't know. It requires time. You've got time. You're young.
All right.
I have no time.
I'll invest in my sportsmanship. I'm starting my basketball league up again this weekend, so that's big.
Oh, you're going to start playing now?
Yep. Because
Do we all know? Because there was a lot of money changing hands around your basketball performance.
I'll have to get the guys in the office, the roster.
Same basic team?
Yeah, some friends from Northwestern.
Okay. And you're playing the same basic assortment of Ahmed, Sidney, and Clayton?
Yeah, we'll probably get run over a couple times.
Okay.
But you never know. But yeah, I don't play the leagues in the winter just because I'm not going up to DePaul and it's 10 degrees outside on a Sunday. So now at least I can divvy bike up there.
Will you guys play outside or is it always inside?
No, it's inside. It's at like the DePaul Rec Center.
Okay.
But yeah, I just don't want to commute in the winter for basketball because I'm a big divvy biker.
That's right.
So it's hard to do in the winter. I still do it.
Okay.
But not advised. But we're off to a
all right,
strong
let's
week.
get into it. Yeah.
Yesterday, was that one of the craziest days you've ever seen in terms of not knowing really what's going on?
I think the whole thing Sunday night being down 4.5%, 5% in U.S. equities.
Aggressive, but
Kiwi new multi-decade lows, Aussie too. I think that was it was aggressive. The bounce back, I think the run up in equities on the tweet was amazing. When I say amazing, it just blew my mind just to see
the magnitude.
The magnitude of the rally and smooths and the rally. 1,000 points in NASDAQ.
And this was, I haven't done a great deal of digging, but a lot of CNBC at least was quoted as releasing this yesterday. Of saying that there were talks of a tariff pause.
And maybe it's me, but anything that's coming out on Twitter, I'm not relying although Trump is on his Truth Social all the time.
This is true.
So maybe I'm wrong and it's just me. But that was the classic of, again, the market pricing in. I think that move does more harm than good.
It was
because
ferocious.
If you're long, you're not likely to sit with those longs all the way in the rally.
Yep.
And if you're short, there was no.
It was bad enough to hurt you.
It went up, and it took half an hour to come back down change, and it actually rallied from there. But there was no way to reach to get out. So if you were trading equities, we saw the same rally in Aussie to a much more muted degree. Same thing in Kiwi. I think the takeaway for me was the Kiwi rally was pretty freaking anemic, considering 90-day end, suspension of tariffs. Did we have an up move? Sure. We rallied.
But here, yeah, we can't even go on the hourly because it was that fast. We go to 15 minutes, and there it was in the Kiwi. Yeah, got up there, but not to a crazy extent. And we're back there. I mean, we're lower than that rally, whereas you go to the Australian dollar, this one, very interesting, slightly different.
We talked about much bigger move in
Yeah,
Aussie.
and this I think was pretty. Oh, it's pretty similar. We're not exactly where we spiked. Still up on the day, but that was taken from Monday's close. So that's where you're getting this 1%. But yeah, I think the lesson learned here, if you're looking at currencies, is what reacted, because we were able to. The move in equities was so fast,
right?
That it was kind of what's going on, who's heard what, and it took a minute. I jumped over to our TastyFX trading platform to see what was moving, and now that we had just that shakeout, I think it's an important exercise as to what actually has the elasticity and what can move with this.
Right.
Aussie, we saw it get all the way above 61 cents, come down immediately, plumb new lows actually. Was at the low that we've seen this year.
Yep.
Yeah, so new lows off of that, then settle back in for the rest of the day, and overnight we had some China won't back down, never going to give up news, and actually didn't hamper the Australian dollar as much as the initial Chinese response.
And that's tough news at lows.
Right.
So we're not at 68 cents, and the market reacts to, oh my God, this could be longer, last longer, and be worse.
But another one as well that I was looking at, Canadian dollar, I think definitely has some elasticity in it, because we saw this one. Now it's kind of blending in, but these 4 red candles here on the 15-minute, that was a big move. I mean, we had 30 pips on top of 20 pips, so 50 pips total, and this was through the lows that we had seen at least until last week. And so I thought this one could keep going. This one immediately reverted and settled into its range. Now Canadian dollar stronger on the day,
Right.
Kind of mirroring that Australian dollar, New Zealand dollar. So these commodity currencies sticking together, but not really on commodities anymore. Really, with this tariff pause reprieve.
I think the whole news cycle is what we gain from it. And this is a lot of just supposition. Is that this is an exercise?
Yeah, yeah.
Because I mean,
and it's only for right now.
Sitting with the Israeli Prime Minister, we're absolutely not pausing for 90 days, but we're open to talking to people.
Well, now 70 countries are coming to the table.
Okay.
Knock, knock.
Right. And who knows what that number really is? There's not a lot of conviction of, and it's like, well, we'll talk, but we're not agreeing to do anything. I don't know what any of that means. And short of, again, a good surplus usually means a company running a good surplus with us is usually running a capital deficit. So they are the countries that are often buying our government instruments with those dollars. So there is this thought that, again, if you take out those buyers of treasuries, and if the argument is, well, we don't want foreigners owning our treasuries, well, all right, that's a natural mechanism for adjusting trade. Who do you have in mind stepping up to buy these? And, I think that brings into question a lot of just, this was put together very quickly off a 1-year sample set of stuff. It doesn't make a lot of sense. So they're either really misinformed as to what they're doing, or this is all just a very high stakes game of poker. And I think the takeaway from yesterday, and that's why we're seeing a recovery in U.S. equities, we're seeing bonds. We were at 122 Sunday night. We're at 116 today.
All
That's
gone.
6 points of bond move is a big bond move. So, while 122 was an extreme to the upside, 116 is a big move down. I think that we're at a point now where we're going to see the markets get a little tired, and they're going to consolidate ranges in a little bit. Any consistent bid in equities, we'll see those ranges we talked about that were so big in FX start to shrink up a little bit. And I know supposedly the Treasury Secretary is talking with the Japanese today. I have no idea what they're going to talk about.
Well, his most recent metaphor is that tariffs are like a melting ice cube if successful. So if that speaks to anything of like kind of the nature of they're in place and then they'll just whittle away with good relations. So that doesn't spell pause to me, but you never know. Melting ice cube.
Okay.
But yeah, you bring up a good point with Japan, just because, we have this exercise in what's now moving with U.S. equities with a possible tariff pause. And now we know what pairs kind of to watch for moves there, those traditional commodity currencies. The Japanese yen we've seen recently, a high correlation to U.S. rates.
Right.
And we've recently got the move you just spoke of in bonds. Steep.
Yen didn't bite though, really.
Exactly.
Yeah.
And so now you kind of brought up perhaps what is a fundamental piece of this in who's buying our debt.
Right.
If that fundamentally changes and the appeal is gone or has to come from somewhere else, maybe we see that correlation break down here. Is there any merit to that? Is there a changing relationship here
There
now?
was talk with me the Japanese, their currency's way too weak.
Mm-hmm.
I don't see, again, the market sets currencies. The one thing we've seen is every time a central bank intervenes, it's, again, the line in the sand till it's not. It doesn't necessarily work. Long run, short run, it doesn't work. The market set exchange rates. So I don't know if we're going to see a little bit of bias to the downside a little bit more now because, again, when what's been working for us, which is on a down bond day, higher U.S. yield days, chances are we see dollar yen a little bit higher.
Right.
We're not seeing that today. So
No.
Is it a one-day break in that correlation? Because we know it's not perfect. Or what I want to see is over the next couple of days, if bonds continue to sit between 114 and 117, and this continues, we trade through those lows at 146, that's going to tell me that correlation is broken a little bit.
Interesting.
And maybe we have a little bit further to go because we talked about currencies at extremes, Aussie, Kiwi at extremes. Dollar yen, certainly off the 160, but well below the 120 or 125.
Right.
So I think there's probably, I'm not ready to say that this is now broken because it's not working for one day. We know they're not perfect correlations.
Right.
But I think I am mindful of thinking about where I want to, if we continue to soften a little bit, I think that correlation is being overridden by other things. What are those other things? I'm not quite sure right now. Is it the trade talk, whatever? Running down the rabbit hole of what's doing it is a futile exercise because it's never just one thing. But I do know something I hung my hat on as a trader, which was I want to be mindful of what my bias is in the end and be mindful of where U.S. rates are because that's worked for me.
Right.
Why? Really, don't get hung up on the why. If you want, we can always talk about the why, and we do. Don't get hung up on that. Just when it does break down, and correlations are cyclical means they come back in and out, but they ebb and flow. And if we see this consistently, U.S. yields continue to rally and dollar yen just have a offer tone to it, that means we've probably seen that correlation kind of fall off the map for the time being.
Yeah.
So I don't look at that as, well, bonds are up 2 points, I want to be long yen.
Right.
Or bonds are down 2 points, I want to be long dollar yen. So I think that is kind of my takeaway for that here. The sickness in Aussie and Kiwi is an interesting dynamic that I can't quite, I mean, they're still cheap. They're off the rock bottom lows.
Right.
We're 100 points off the lows we posted yesterday. I not 150, 55 points. They're still cheap by any means. But the tape action here, again, leads me to think that we quite haven't turned the quarter on these pieces. And is it China? Not sure. Could be.
Yen, I think, is one of the most interesting to me right now, just because we're looking at this tape action just over the past few days. And this one, to me, is one that stands out as not really settling anywhere. I mean, we spent some time at 148 yesterday, but that's really just the U.S. afternoon. And now we're back down below 147. We've got a pretty big range here between 145 and 148. So that, spells some potential opportunity if you have conviction in this market. But like you said, if you're looking at this market and bonds, maybe bonds right now more attractive for not trying to pin the low, but for a price extreme.
Absolutely. And let's look at cable, because we talked about cable yesterday, and it actually worked exactly like we talked. We were sitting right there, right there during our, and we're talking about if you're a momentum trader, you're looking for a break at that low.
Because this was right through it.
And you got that break, and then you got the bounce on the tweet right up to that level again. You got another swag at selling it, and it gave you a good 70 pip pullback to scalp. Now, if you were the contrarian, it was a good level to play. We're going to see a bounce back up to 130. It didn't do that, and if you managed it,
you maybe got out.
You had an opportunity. The first time through, you definitely had an opportunity to get out. It was quick, You had an opportunity to get out.
Because it did run up and down.
Right, but this was, again, these are great setups in terms of, you've got the range, you're able to work through it. Now it's kind of sloppy a little bit. I don't know quite what the cable trade is right now at where we are right now. So we're seeing Euro and Sterling bounce back a little bit with stronger U.S. equities. NASDAQ continues to rally. We're up almost 400 points this morning. Bonds are continuing, I would imagine. 116.26, they didn't sell off that much last night, but they had a pretty big hit here. So interesting stuff to walk through. This is another one that will, Euro, the same thing. You've got the opportunity here, if you get a little bit of a pullback, you see where the range is, and we're setting it up about 109.10 to 111. If it takes out 109, and you're the momentum guy, you're probably selling that 109 break to look to see what you can get. And I would say you'd look for the 55 or 60 points you ran. If you're looking for a little bit of a bounce here, anything between 109 and 109.20 is an interesting value area. And what are you looking for there? Trade back up to the middle of the range, 109.60, 70. Both setups work depending on what you want to do. And we'll check back in with that tomorrow because we're at this really an interesting inflection point for that. So let's wrap it up because we've run out of time. But we'll be back with you tomorrow for the latest edition of Forex Focus. Lots going on in the FX markets. But for now, coming up next, Tom, Tony, and Vanetta. We'll see you back here tomorrow.
Thanks, guys.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Happy Tuesday to you both.
Oh my God! Guess who's back? Back again.
Our savior, Sosnoff. Sosnoff, I said it yesterday. If the market rallied because you are back in Illinois, here at the helm of Tasty, then I will give you the win. I give you the win, Sosnoff. Even the S&P's up almost 3%, 137.
Oh, we're all back together. Did you guys miss me?
So we always have short conversations between the two of us. It's usually direct and to the point, not too much fluff. When you were in New York and I said, you know what, we're going to go to calls all day long, I never got more text messages from you in one short time frame. But you sure you don't need me? I'm going to be okay. All right. I'm going to be good. I'm like, yeah, you go enjoy yourself. You were as giddy as can be. It was the best I've ever seen you. I couldn't have been happier to make you happy.
That timing did work out super nice for me. Your girl got to sleep in. I had like some bagels with some shmia, walked around New York City. I went to a Greek diner. Oh my God, it was run by this Greek man and like his two sons.
Greek diners in New York are special.
So good. And like they had me at Jump. They're like, hey, pretty lady, I have seat for you. You come, you sit down. Do you want coffee? Okay, what I get for you? Mm-hmm. And I'm like, oh yeah. And they're like, baby, yes, I take your check.
Steve, they're all Steve.
I don't know, but he was like gassing me up, and yeah, it was nice.
Where was this so-called Greek diner?
It was somewhere in Midtown, somewhere that I don't know. I looked on my phone because I searched like for diners because I really wanted to go to just like a bunch of diners in New York, and I was not disappointed. And it was like old school, like the booths were like teal and pink and yeah,
cedars.
Yeah, they were like little tiny booths and good coffee. They had black and white cookies at the checkout. It was great.
Yeah. Any good meals? I mean, I saw your Junior's picture.
Yeah, I went to Junior's in Times Square. I had a open-faced turkey sandwich, which was really good. My friend, she lives on Long Island. She took the train. We went to some fancy Mexican place where they do tableside guacamole. It was really good.
I like a little tableside guacamole.
Yeah, it was good.
Yeah.
So, good times. Good times.
Good bagels?
Yeah, I didn't go to, I wanted to go to Pop-Up Bagels, which is like the trendy TikTok spot, but I didn't get there, but We went to Essa Bagel, I think.
I've been there.
Yeah. Yeah, it's good. There's not bad bagels, there's not bad pizza in New York. Like,
Where was your best pizza?
I will give you that too. You are correct.
yeah.
Where was your best pizza?
Like here, you got to go to what's it, Einstein's. Like that's like your.
No, you don't.
Chicago Bagel and Bialy.
Don't go.
There's no bagel store in my neighborhood. I can't. There,
Oh,
I have
nobody
to
told
go.
you
I have to go 2 towns.
Right, yeah, there's no bagel stores that are walkable.
Exactly.
Right,
But I can
yeah.
walk to Einstein's.
Like I could walk to Panera, maybe. Like
Right. Or
right,
Panera.
yeah.
I mean, that's what we have to deal with.
That's
when
what
it
we
comes to
have.
bagels. I mean, listen, we may have the best
nobody told you
steakhouse.
to
We may
live-
have the best steakhouse
nobody
in
told you
all of
to live in the
Illinois.
suburbs.
But if we want a bagel, we have to go.
Nobody told you to live in the suburbs.
Yeah. No, good pizza. Bobby picked out a pizza place. I think it's called Joe's. The line was really long, but it moved really fast. It
a
was
famous pizza place.
It was good. Yeah, they had thin slices, but they also had like the grandma slices. Garrett got like 2 of those. He's a big fan of the grandma slice.
Got it.
Yeah. It was just like I love New York. I love the energy. The people. I kind of miss the Midwest nice. But the people are nice. But New York's got just like a different vibe. But I'm happy to be home. So, but how was the wedding?
Great.
We didn't talk about it yet.
I know you didn't even talk about it.
I did see some pictures. Of
I
the
saw
wedding
some
party.
pictures.
Oh,
It looked like it could have been in a magazine. Stunningly
some milfs there,
gorgeous.
Sosnoff, and I know it was just
her
immediate
dress.
family.
Shut up. Her dress was beautiful, and the flowers and
what
the
did you think of her
colors.
dress, Sosnoff?
It was pretty.
It was,
You
and
learned,
just the
Sosnoff, you
location.
learned.
Whoever did the tablescapes and the floral design,
Yeah,
and
it was very colorful.
it was really very well done.
It was very colorful. Go ahead, please.
Very
give me the
colorful. It
Sosnoff.
was really nice.
And their dog was like the ring bearer was in the wedding. It was just really cute.
Yeah, it was really, the whole thing was really nice.
Aw.
Band was great. They,
Oh my God, you've matured.
How was the food?
You're bringing a tear
How was
to my
the
eye.
food?
the food was okay.
Normally, you would say the flowers are very colorful, but
The flowers
they're
are
not
very
the
colorful.
colorful. They're not the colors I
Flowers were
like.
colorful. The food, it was it's hotel food. But
You have no taste buds anymore. Wasn't it spicy?
yeah, it was spicy.
But I didn't see pictures of you in your little outfit, though.
Oh, I saw a picture of him in his outfit. He looks very good.
I want to see.
Todd, slow clap for my man Todd.
If you haven't seen that video, it's up on our socials. Todd
Oh.
shoehorning him into an outfit.
Todd is the best. Not only did he go the extra yard to actually go and buy. Did you put out for Todd? I guess that's the
I
only
guess
question
so.
I haven't.
I know, with your
haven't
bespoke personal shopper, like
He went to the store for you without you being there, decided what size you were, brought you 3 or 4 outfits for you to choose. I think he was 3 for 4, 2 for 3. I mean, he was well outside of standard deviation. I mean, he was at the end of the curve for sure. He might have been 4 for 4.
he should get nominated for like a Nobel Prize or
But
something.
did you put out for him? Because that's the only way. I mean, there's got to be something going on between you two. I mean, that's the only way another man does that for another man. Would you do that for another man?
Never.
Would you do that for anyone?
That's not his skill set, though.
That's not his.
That's,
What is
that's
his
not
skill
his
set?
skills.
Can you
I'm
give
just
me his
saying.
skill
like-
set?
Not his skill
What, CompuSalts? I mean, that's the best thing he
no, but
does.
Todd,
I'm a good
Todd,
orderer.
You're a good orderer.
I'm a good
Used to be
orderer.
better.
Todd has sartorial supremacy.
That's something. But
But the wedding was good.
it was really beautiful.
Aw, that's nice. And
Yeah.
congratulations
She
to
said
your
yes?
son.
Yeah.
Okay.
They yeah,
And Case looked lovely as well. I saw pictures
they
of
were
Case.
they were
and the young prince went, right? You took the little baby with you too, right?
Oh yeah.
I mean, he's still good to travel with probably at this
Oh, yeah,
this
he's
age, 'cause
easy.
he
Does
just
the baby fly first class already?
baby's like,
Baby's upgraded.
Yeah, baby can't be in coach. The comment.
Baby gets upgraded before I do.
Yeah, okay, yeah, that tracks.
No, it was
Good job.
It was very nice, and they did everything like really good. I had no involvement.
All joking aside, how stressful was the combination of the market chaos and your son's nuptials?
Well, the only thing I had to do the entire wedding was to give a toast the night before,
Oh, okay.
so of which I forgot.
That tracks.
So I had to wing it.
Yep.
But that was my only job. So the rest of the time, I spent in a cabana trying to read the screen on my laptop in the sun.
yeah, there's nothing worse.
There was nothing. On Friday morning, my wife threw me out because it was 4:00 in the morning there,
Yeah.
and I realized that.
But you met a friend?
I realized the spoons were down 250 pre-market.
Sure.
And I'm like, and so I'm on the computer at 4:00 in the morning. She's like, "You got to leave." I'm like, so I went to the lobby of the hotel.
I'm surprised you had the same room to begin with. So.
I mean,
It was a suite.
Yeah.
He was in the other room.
Okay. Yeah. That was
and then
But you met a friend down there, right? Another
I met
fellow
a
trader?
friend.
Yeah.
I mean, not a friend. I met
know.
another person whose girlfriend kicked him out.
Sure.
Niece.
No, it's his girlfriend. It's a girlfriend. He was a hedge fund trader.
Nice.
And he's there. He's like, "You trading?" He goes, "You a trader?" I go, "Yeah." I go, "You?" He goes, "Yeah." We're both there at 4:00 in the morning lobby.
That's funny.
It was really funny. And so, we're plotting our stuff.
Demise.
Yeah, we're plotting our stuff for 2 hours. So I sat in the lobby for like 3 or 4 hours until they opened for breakfast.
That's just got to be so hard. Like it was just
It's
the
worst feeling
timing
when
of
you're-
all
when
of
you're-
this. It's sort of
When
funny.
you're kind of hopeless in when you're sitting there and you're
Do you
just.
feel like a fringe trader? You feel like you're on the outside looking in.
Yeah, it was the worst.
Right,
It
that's
was
right.
the worst. It was
The
down
bats had to do the
250.
heavy lifting.
I'm sitting there down 250. I hate my positions.
Sure.
There is no such thing as a good position down 250.
Mm-hmm.
And I'm like,
Did you make your son's wedding toast all about your positions?
okay, really, really funny story. You'll like this. So they have a
Well, because I'm good at improv.
they
You
have a
not so
rehearsal-
much.
the rehearsal dinner, right? Kind of like pretty normal. I have rehearsal dinner. But anyway,
Yeah, they have rehearsal dinners. We're all aware.
They have a really beautiful, like in this private house on the property, really beautiful.
Sure.
So they give you a little menu. And the first thing on the menu is duck confit.
Duck confit. You love duck with feet.
Duck with feet.
Duck with feet.
I know, but it's duck confit over rice, right? So I'm thinking, well, I really don't have anything to talk about today on my speech. So I'm going to tell them the duck with feet story.
Oh my god!
It was the best thing that they served was the duck confit over some kind of like crispy rice or something.
Mm-hmm.
So I told them a story about how we're on the road and we always ordered duck confit and then we changed it to duck with feet. We own the website Duck with Feet, and
I'm sorry. What does this have to do with your son and his lovely bride?
who cares about them? It had to do with me.
Okay. Yep.
Story.
Yep.
I made it into a fun story.
Oh, I'm sure you did.
So in the end, everybody was happy. And, yeah, they did a thing, and then they had a one of Cole's friends was in a very popular band, and so they had those guys play at the wedding.
That's great.
Yeah, and so they were amazing. This is like the
that's
first time they ever did a
wonderful.
wedding.
Ooh, where are they going on their honeymoon? Can you say?
They're not going.
They're not going on a honeymoon? You cheap bastard.
They decided they wanted to go because they live in LA and the weather's always nice.
Sure.
So they decided they wanted to go.
But there's other reasons to go places than just the weather.
There is, but they're both
No,
they're both starting new jobs next week, and so they want to take their honeymoon in December.
Oh, that makes sense.
I went to Tahiti one time on a honeymoon, and I was already in Vegas. The second time I was on a honeymoon, it's better just to be where you are because I didn't in Tahiti. Didn't end the way I thought it was going to.
Okay, that's a you problem, not a nation
I'm not
of
gonna lie, like an
Tahiti
extra
problem.
week together, and you got things you want to do, and
As somebody that's been around you for a lot of hours every single day, a week is more than enough.
good for a short time, not for a long time.
Exactly.
Yeah, I'll give you that.
Yeah.
Listen.
Vegas, a couple of days was absolutely perfect.
You're 2 days in Vegas, guy.
Yeah,
You're not
exactly.
You're 2 days in Vegas. You're not.
You're
not 7
know your
days in
limitations. That's know your limitations.
Like I had that issue myself. Like
Yeah.
like we're gonna go away this summer, and Corinne's like, just like she said.
Oh, you're already planning your time off so that the half days aren't enough for you. You're already planning your 2-week vacation
Wow,
because
nobody
no
works
one
around
wants
here
to
anymore.
work anymore. But I'm here all day. But
She's like, I'm like, how long do you want to go for? She's like, well, a week with you is a lot.
it is. It is. Yeah, I feel that in my soul, Corinne. Yeah.
A week's a long time.
Wait, where are you going, girl?
We're still debating.
Oh, okay. Ooh, let's pick a place. I think you should go on a safari because I like the animals' odds.
He was
I like the animals' odds against him.
No,
His wife, all she has to do is outrun him.
I say he never goes on a safari. I say I never go on a safari.
Oh, I want to go on a safari.
First of all,
Didn't Case go on a safari?
Case did for honeymoon.
Yeah, for her honeymoon. Yeah.
Loved it. I will not go on a safari.
Why? I want to go in a shark cage. I want to go on a
On
safari.
a shark cage. I'm going to show you a video I saw the other day.
Oh, the shark got in the cage?
Where the shark got in the cage.
Can I pet that shark?
And the two guys on top of the cage. This is down in Mexico. Like,
Oh, I saw it. The guy just takes his hat off.
They were watching.
Yeah, the guy just takes his hat off, and people in the comments are like, "What's you taking your hat off gonna do?"
Like he was gonna jump in, he took his
But there
hat.
did you see the video?
Yeah, and it
Yeah.
was a huge shark.
Giant shark.
The guy
Hey.
guy swims out. No,
Yeah, he was
No
fine.
problem. It was all an act. Yeah.
Look, I bet I could pet a shark. I bet I
the
could.
shark was freaking out too, but the whole point was those
anything
things.
can happen.
Those things. Yeah. You're not
Well, that cage on top is supposed to be closed.
The lid, yeah.
lid. I mean,
Right, yeah.
I mean, that's
the shark got in the cage.
because the cage top wasn't.
He
closed. They
just
weren't
wanted.
following
He
protocol.
just
Can I
wanted
just say
shark
something?
cuddles.
If you watch that, you're never getting in a shark cage.
I'll do it. I'm missing the part of my brain that tells me things are a bad idea.
Well, Case went
I'm
swimming.
never getting a shark cage
Yeah.
in Mexico.
I went
where they
swimming
don't
with
close the
stingrays.
top.
And she went swimming with sharks.
Yeah.
She said it was really cool.
Yeah, see?
Yeah,
But
yeah.
I have
think
no
they
interest-
have the video. If
I have no
put it up
interest
there.
in swimming with sharks. I have no interest in going on a safari. I mean, yeah, I have no interest.
Yeah,
And
you're not going.
You don't want to go to Antarctica.
Wait a minute.
Antarctica.
Side note, there's only one reason he's not going to a safari. I mean, you only have to be as faster than the slowest person in the group. You ever see him with that leg?
Right, yeah,
I
you're-
mean, he's a bit. Here's the shark picture. Let's take a look at
Yeah,
it.
look at this.
You see, there's that cover, side note, that's supposed to be flipped over.
Okay,
That
watch
cover
it.
on the right.
Play this back.
Yeah. Oh, this is you already played the shark going in.
Yeah.
You got to play the shark going
That's
in.
the size of that shark.
Hold on. Go back a little bit.
Yeah, and it's a great way. No, this is all they have.
Yeah.
They're going to
Shark
back
that
it up.
became
It's
this
fine. But
story
yeah, the lid is open.
Yeah, the lid is open.
But you didn't get in through the lid.
So the
see-
shark is like
you see that
candy
lid on the
grams.
right there? That lid on the right is supposed to be closed.
Kept yelling, "There is someone in the cage."
We got
The
right in
shark
the-
then
he got right
jumped out
down-
of the
down
top
below.
of the cage, and the gate was slammed closed. But there was no sight
know what
of the
happened to the
diver.
shark.
One man on the
He
boat
just did
readied
it-
himself to pull the
What?
tourist.
I hope the shark's okay.
They're-
But there was
they
no
don't-
sign of him.
Hope the
We didn't get
shark's
time to
okay.
prep this. Now you're at the end of it already, I believe.
All right, whatever. I'm just telling you like that. I've watched enough safari videos too. It's like I've been on a safari. So I've practically. Yeah.
That's not how that
Great
works.
Zoo here, Lincoln Park Zoo. You got all you need to see. I mean, that's,
See, I think a good.
we
Vacation,
can tell the kids that if they're young enough, they're at the safari at Lincoln Park Zoo.
I think a good vacation, for me, like
a little grilled octopus.
is a little grilled, like a grilled lobster lying on the beach in St. Bart's.
Sure.
That's what I can do.
Oh my God, that's what you love.
You send me to St. Bart's and with a grilled lobster, you can have all.
Can you gamble in St. Bart's?
No,
Do they have
no,
casinos?
no.
Oh, okay. I didn't know if you wanted a casino. That's all.
No, I don't want a casino.
Because like Aruba has casinos, I think.
Yeah, I don't care.
Okay.
You send me to a nice island where they have grilled lobster. I'm totally happy. I don't need to be on a safari. I don't need to be, what's the other one?
In a shark cage?
A shark cage.
You don't want to go through the Drake Passage in Antarctica where the
Did you
waves come
see
up
the
over the
waves
boat?
over the
Yeah.
top of that boat?
Yeah.
Got to be out of your
Yeah, people pay like $25,000, $30,000.
40-foot waves over the boat. I wouldn't do that. I have zero interest.
Yep.
But they have luxury meals on the boat.
I have zero interest. Like I said, just put me on a beach in St. Bart's. I'll be totally happy.
Hey, real fast, congratulations, Florida
Thank you.
Gators. Florida Gators
Oh,
winning the
yes,
NCAA championship, and to UConn because we didn't get to that the day before. Lady Huskies winning. Paige Buckers,
And to Nick
congratulations to her.
Batista, who won the Tasty Trade pool.
Nick Bat won. Nikki Bat won. Congratulations.
Talent prevails. You can't.
Wow. Wow.
It's a good game last night. I really liked it.
It was. It was hard fought.
Yeah, it was.
Yeah, they played hard.
Yeah.
I didn't watch the women's final.
I didn't watch the women's final either.
Well, it was on at like a weird time. It was on in like the middle of the day instead of I thought it should
Well,
have
I wasn't the
been
only
prime
one who didn't
time.
watch. Turned out nobody watched it.
That's not true.
I mean, it was down like.
I think it was on at the same
cable
time.
park? Nobody watched?
I think it was the same time that Ovechkin was playing too. I'm not sure. Maybe. I don't know.
That's not good timing.
Yeah. Well, anyway, congratulations to the Florida Gators.
Yep.
Chomp, chomp.
Yeah.
Florida with the win.
Hey, we got a great show for you today. I know it's been a hot minute since you've had the daily dose. Let's see if we can all remember how to do my job. But we got a great show for you today. First and foremost, at the top of the 8 o'clock hour, we're going to do an options jive. I think Kai is going to come in the...
No. We're just doing it. Yep.
No? Okay, it's just going to be market correction following Liberation Day is the OJ for 8 a.m. is what my...
We're just
schedule
giving you
says.
some interesting stats.
Okay, I'm literally just reading what's on my computer. If you want what my computer says to be different, you need to change what's in my computer. Hey, in other scheduling news today, 8:40. Let me explain. We got Chris Vecchio in the house. Chris, what are you going to talk about with Chris today?
I don't know. We'll have plenty to talk about when this market opens.
Okay.
Plenty.
And then 9 o'clock, we got a little market measures daily streaks in option strategies. That's headed your way at 9 o'clock. And then 9:30, live from the trade desk, big boy Scotty S. counting down all the top trending tickers over at Tasty Trade. Programming note, we are back to regularly scheduled programming, and barring any crazy shenanigans today, we will need your trade ideas for tomorrow for what's your assumption. We love this part where viewers have an underlying assumption and a directional bias, and they submit their trade ideas, and that is for tomorrow's show. But hey, in the meantime, in the between time, you guys want your daily dose?
Sure.
Been a minute since I said that. Hit me with my theme music. Let's go.
Our leading story, breaking news,
Coming
across the wire.
This just in.
Top story, just in.
Today's headline.
This just in.
Breaking news.
All right, everybody. Today is a terrific Tuesday. It's April the 8th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
I would be remiss, but I was not on air yesterday. I was here. I was working. But happy birthday to my dad. His birthday was yesterday, so I didn't get to wish him happy birthday yesterday.
Happy birthday,
Dad.
happy birthday.
He's been retired for 1 year now. Retirement's going great. Market's fine. No worries at all. Not a care in the world for my dad. Mr. Bat, any earnings on the horizon? We're getting close.
Yeah, no, you're. I mean, Delta Airlines.
Delta.
I mean, all these airlines have gotten banged up. I mean,
We'll talk about that. I got
$25
yeah.
yesterday, so there could be some opportunity here on either side. What do you think? And then Constellation Brands, STZ. I don't think Tom will be looking at that, but
Did you see Buffalo Trace is underwater? The distillery in Kentucky.
What do you mean? Well, that whole wait a minute.
There's a
Buffalo
river.
Trace-
Buffalo Trace. There's a river that's right there,
Yeah.
and because
didn't
of the
see it.
storms. Yeah. So Buffalo.
Well, that's
Trace.
a lot of them. That's that Buffalo Trace, Blanton's.
Yeah, they're all in
Eagle
the
Rare,
do
that's
the Bourbon
same
Trail. Yeah.
region right
So
there.
people in the comments are like, "Y'all gonna have a hell or high water sale on some whiskey?"
No, actually, that would make whiskey prices go higher.
Right. Yeah.
Right.
Well,
There'll be no sales.
I hope everyone's okay, and because it's a lot of people. I've done that tour. It's really nice. You should.
I haven't done it.
You should go.
I would
Yeah,
like
it's cool.
to do it. I've driven.
Get a
by
designated
the
driver
RV.
though, because they give you samples.
Yeah.
Hey, getting to the first headline of the day. This was the wildest thing I ever saw. How actual fake news caused a market whiplash. In around 30 minutes or so, the erroneous message about a potential 90-day pause in tariffs caused $2.5 trillion to come flooding into and then rapidly out of the markets. The false post may have originated from a real Fox News interview with the National Economic Council director. What did you guys think was happening yesterday when this was going on? It was wild.
It was
Have
very
you ever seen anything like this? Were you able to capitalize on anything?
$3 trillion.
$3 trillion in 30 minutes.
Yeah.
Yeah. I mean,
You're gonna get that this morning too.
well, it's a different. This is.
Yeah, I'm
this
just
is-
saying the
that
magnitude
was
of the
all- that
moves
was
are
like-
so big.
That was in a crazy. I mean, I did.
Sure, but we were all affected by it, regardless if it was true or not. Like, it
wasn't-
happened.
It wasn't a bad thing for us, to be fair. It wasn't bad.
Were you able to capitalize? What do you mean it wasn't bad? Like, explain.
I was able to sell some stock
Okay.
on the rally, but not knowing what was going on.
I didn't know if that was possible.
Nobody knows what's
because it
going
was
on.
so
That's been the
fast.
point for days.
No, I understand. I'm saying, were we able to capitalize? In a small way, yes.
Okay.
Then they sold back off, and it got pretty ugly right away.
Yeah.
Yeah.
Yeah. So.
All right. It was just
We
interesting.
talked about being nimble in here, even before the magnitude of the move these last, 4 or 5 days, whatever the case may be. We've talked about how it looked like it was going to be some two-sided action in the market, and I didn't see this magnitude of the move, but it definitely been a two-sided market here.
President Trump is threatening additional tariffs on top of the additional tariffs that were on top of additional tariffs that he's threatened China with, and is opening negotiations with other countries. Tariffs set to go into effect tomorrow. I did just want to talk about China as a larger arena for trading and what you are doing or adjusting in regards to your China
Well, the
exposure.
Bob of the worlds are not responding back to this movement in the market back.
Okay.
Like Bob is basically unchanged, maybe even down small this morning. Baidu's another one that's, it is up about $1.50 this morning, but it too is only a few dollars off of its lows, down from close to 100 before all of this happened. So some of these stocks have gotten hit by 20%.
Sure.
The last.
Yeah, but Baba's been like up 56% in like Q1, like compared to everything else, like relative, right?
That was
That was
yesterday.
before, in the
we're
before
back to
times.
October numbers.
Right? Yeah.
But yeah, you are correct.
Tom, what are you doing in regards to China? And more importantly, have we pissed off China enough that they're going to take TikTok away from us?
First of all,
Because this is all combined, man.
I really don't want to talk about tariffs anymore because
Well, this is talking about China. I'm not talking about. I'm talking about China. But you trade China. I know you don't.
I'm listening. I understand.
And it's also about TikTok.
It's not about TikTok.
It is. It's all combined.
It has nothing to do with TikTok.
China has some feelings about it
Really, what's their feelings?
because they're like, hey, if you're gonna screw us, we're gonna screw you. And
They're going to screw us.
well, then they don't have to sell TikTok.
Well, of course they don't have to sell. They don't have to sell TikTok right now. But
Right? Yeah. But we're not.
China
It's not
doesn't
helping.
own TikTok.
China does own TikTok.
Not really.
China owns ByteDance. Do you not know how China works?
China gonna be China.
I'm not against arguing with you, but TikTok's owned by a bunch of American entrepreneurs. For the most part.
Business people.
Yeah.
Okay.
TikTok is pretty much owned by a bunch of
What are you
American-
doing in Chinese tech stocks?
What?
What are you doing in Chinese tech stocks?
I mean, we're a little bit long, I guess.
okay.
But I don't really care about Trump's tariffs anymore.
Yeah, that's fine.
It's just all noise.
Fine. Skipping a story here. Can we talk about bonds?
Sure, I just bought them.
Actually, just sold some puts.
All right. Even safe haven trades like treasuries are falling. What does that tell investors? Again, the headline. But
Well,
let's just talk about bonds. I know, but this is the only
Not
headline.
even- The reason that the safe haven trades are falling is because people think the worst is over. Anyway, I was telling Tony this morning.
Do people think the worst is over?
Well, the bonds wouldn't have dropped from 122 to 116 in one day if they didn't think the worst was over.
Okay.
What I think one of the things I told Tony this morning was,
Volatility did drop from 40 to 30. I'm talking about
Yeah,
forward
I mean,
SPX.
one of the things I mentioned to Tony already this morning, and one of the things I've already done is sell some.
But I don't think the market movement's over. But go ahead, sir.
I'm selling the May 115 puts. I sold them at 132. That's right where they are right now.
Okay.
And the reason I sold puts, I haven't traded bonds in 3 days.
Okay.
Is because I kind of feel like the best play on the board. If you think this rally might not live very long,
Yeah.
might be short lived, then I kind of like getting long bonds here.
Okay.
And they were 122 yesterday morning. They're 116.22, 116.27 right now. I think the bonds, selling puts in the bonds.
You've got 100% Ivy rank across the board, whether it be
In the bonds. You haven't seen 100
equities. So if you want to play reversion in equities, you've got stocks at lows. I believe is what Tom's trying to say. Lower end of the range. It's
Sure.
hard to sell them here, and a lot of your positions might be leaning a little bit along because of the type of move we've had. Your bond position, on the other hand, they've been in a range between 114 and 122, and they're 116 and change, 117. They're a little bit more mid-range here. Maybe you want to do something there. I think is the point.
I mean, my point is, I think it's at 101 with the Ivy rank, which we haven't seen in the bonds in.
But you do have that Ivy rank across the board.
I understand that. With a 101 Ivy rank in the bonds, which we haven't seen in years, anything that close that high, and with the bonds dropping 6 points in one day, I really like the bonds here.
Okay.
I'm thinking about. I've just been selling puts, but I think it's going to be. I think I need to be a little bit more aggressive, and I think I actually need to buy bonds outright.
Easy, girl.
He usually is 3 days early.
Right, yeah, just so you know.
I usually am a little early.
Fade the beret. We're getting shirts made.
Maybe in the end of the year.
I think I'm going to actually be a little more aggressive here.
Okay. B. Aggressive.
By more
B.
aggressive, you're just adding more contracts at this point. What is
I'm selling more I'm talking myself into as we're doing this. I just bought some bonds and I just sold some more puts.
Sold puts and bought bonds.
Yep. And I'm going to offer some more.
Yeah, this is what I love. I love when he does this. It makes my day so much easier.
Sure. Well, I wish the best.
And if they go lower, I will do more because
Hey, shifting gears to commodities, U.S. crude oil losses deepen as the word I'm not allowed to say fuels recession fears. U.S. oil prices fell around 2% yesterday. That is not translating to the pump. AAA reporting gas prices up from a week ago. I paid $3.59 at Costco last night.
which doesn't
Criminal.
make any sense.
Criminal. Everyone should be in jail.
Not a conspiracy theory, just criminal.
You deserve
Exactly
federal
right.
prison.
I mean, there is no explanation.
Gas is cheaper in New York City. Make that make sense.
Well, crude oil's dropped, into the 50 handle. And
I paid $3.59 at Costco. Costco's supposed to be my safe haven.
I mean, now it's 61 this morning, but it dropped into the 50 handle, and gas prices have not come down at all.
Mm-hmm.
And this is a real sensitive level for oil producers because at this 61 level, it kind of becomes not cost effective for certain types of oil production is what I am hearing. So it is a critical level. So do with that what you will. Hey, in other news, U.S. crypto stocks slipped as Bitcoin hits a new 2025 low. U.S. listed shares of crypto companies tumbled, mirroring a sharp drop in Bitcoin as escalating sheriff tensions and fears of a global trade war triggered a broad retreat from risk assets. Bitcoin fell 5.5% to hit its lowest. MSTR, which holds billions worth of its token, fell more than 10%. Hate to see it.
Yeah, there were some, Tony and I posted the piece of research yesterday afternoon showing how much some of these cryptocurrencies were down, since the start of this year. And some
besides really Bitcoin, right? I mean,
besides Bitcoin,
ETH and
ETH's been cut in half.
Yeah. Some are down 45%. Some are down. Bitcoin was the best performer. I think Bitcoin was the best performer.
Best of the worst. Yeah, at least on our slide.
and XRP and stuff
Beth,
like
do you have that slide from yesterday afternoon?
I think
by any chance?
Bitcoin,
Sure,
I mean, they
I'll
said it was
find
down 25% from its highs. Some of the others were more like 35 to 50%. Again, I'm just doing it from memory. If they get it up there, they could put it up there. I saw from 35 to 50%. But listen, I actually thought Bitcoin should be a lot lower. So.
Well, with Bitcoin in this sub 80 level, Tom, what number are you looking for?
Well, I thought Bitcoin, the way the market was behaving, not today,
Tom,
but the
here's
way the
your
market,
chart.
I thought it'd be in the 60 handle. I mean, but I don't know who came on or somebody was.
No, not that one, Beth. There's one that shows all the prices.
You had it. It was the first one. I think it's yellow and after the yellow.
I thought that was the consumer staples one.
No, not that one.
Yeah.
Keep going. You're on the wrong slide. There's another one.
Nope.
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 Yeah.
There
we go.
Hey.
Okay, so here you can see. So Bitcoin down year to date 19%.
Right.
But ETH down 55%. Litecoin 38.
Oh, poor Doge.
Solana down 48. Doge we don't really care about.
I know.
That's what I thought Bitcoin would. I thought Bitcoin would be in line with the rest of them. That was my.
XRP's done the best of all the other coins, down 24%. But just like Tony said, ETH has done the worst.
Mm-hmm.
And Solana's right behind it. But
yeah.
So what are you doing right now in Bitcoin or Bitcoin related stocks like Coinbase or MSTR? I'm sorry, Strategy.
We're short strangles. That's it. And Bitcoin, we're not doing anything. We haven't stepped up. We haven't done anything.
Okay. What number are you looking for to do something?
I'm honestly not really looking for. I don't know.
Just a vibe, just trying to catch a feeling?
Just trying to free up some cash. Yeah.
Okay.
When I free up some cash, I'm selling some stocks pre-market right now, just freeing up cash. That's exactly.
Fun note, MicroStrategy lost $5.9 billion on Bitcoin in the first quarter, and they haven't bought any since.
Yeah, which is really interesting to me. Do you find that? Don't you find that kind of interesting and counter to their model? Because their model is always to buy, every dip.
Yeah.
When they actually have a dip, they don't buy any.
Yeah.
Which makes me think that, again, I don't think I've been wrong on MicroStrategy at all. I think it is.
And I don't think you're alone on this view. I mean, they seem to be polarizing on both sides.
It's a very public Ponzi scheme, in my opinion, and they are at such risk. If Bitcoin drops significantly lower, not here.
Bitcoin has a move kind of like the rest of these.
If the Bitcoin was down 55%, I could see MicroStrategies. I mean, I don't know. I could see them going to I don't want to say it. I could see it being really ugly. I don't.
Sure. Yeah. No. That's a big matzo ball they got out there.
Unlike, I got to give a slow clap to AVGO. I don't have a position there.
Wait, I have the story.
Oh, you do have that? I didn't know if you would. Okay, please. Well, they
you didn't know if I would, bitch. Am I new? I'm not new to this. I'm true to this. Keeping it real. First up, Supermicro was the top performer in the S&P 500 yesterday. That's a nice little surprise. Shares of Supermicro were up 10% yesterday, even as the broader market did seem to waver. Let's talk about some of the chip stocks real fast. I do have the Broadcom story. That would be the next one. But let's talk SMCI and NVIDIA.
A lot of people jumping on MU, too. They were talking about it wasn't, again, the macro view of it doesn't have as much exposure to foreign, more domestic. So we'll jump on that, too.
Tom, for you, in the chippies?
NVIDIA's up big, MU's up big, but everything's up big.
SMCI, what are you doing?
Nothing.
Nothing? NVIDIA?
NVIDIA, I just sold stock, actually.
Okay.
Well, you sold stock to close.
Yes, I just sold stock to close. I bought it yesterday.
Reddit stock to close. When you say I just sold stock, it applies.
Pre-market, I just sold NVIDIA at 101.65. Do you know we bought it yesterday?
Because you were buying stock for people that don't know.
Morning pre-market.
Right, yeah, I know. But I'm just filling
pre-market,
people
you can
in.
only trade stock. So pre-market yesterday, I bought it in the 88 handle.
Sure, must be nice.
Today at 101, which is a good trade for me. And Reddit, we're selling it. I just sold some at 98. And yesterday morning, I bought it in the 80 handle.
Wow.
We got a partial in SoFi. You're looking to sell some of that, too.
And I'm also looking to sell some SoFi, which we bought yesterday at 870-ish.
Seems like there should be bagels in the office.
1040 and change.
1040 we're offering. I got about 50% filled in SoFi.
Yep.
Hey, Broadcom. Now here we go. Announcing a new $10 billion share buyback program. Broadcom says they are launching the program set to run through the end of the year. That sent the shares up nearly 3%. The next story, Beth, hopefully, yes, maybe, yes, no, maybe.
No, we don't have it.
Slide in there. Oh, it's fine. I have the double thing. Well, I do have the story. It's just a double photo. It's my fault. But I do want to talk about Broadcom. Shares of the Palo Alto-based company has a market value around $724 billion, close 5% higher. What are you doing in Broadcom?
We're going to be a little short in there today.
Okay.
I came in a little bit long.
Okay.
And we will be a little bit short. We're short some 50 calls. We had to. That's one of the stocks I had to roll down to.
Okay.
So we rolled down to the 50 strike, and I'm short the 50. I'm short the 55.65 strangle.
And where is it right now?
163.
Oh, okay. Use all the numbers.
Yeah.
Bat, what are you doing in Broadcom? Anything at all, or?
I'm giving them a slow clap. AVGO, at least they're looking to, at least announcing, I don't even care if they buy a share or something, at least they're announcing that they're going to buy back $10 billion worth of shares on lows, as opposed to what we were doing supporting the market when the markets were at highs. They were just going to buy more stock even higher. I think that was the true scheme of things.
Shifting gears to the Mag 7, which were not so magnificent yesterday. The Mag 7 had around $2 trillion from their combined value wiped off. Apple nearing a 1-year low. Poor Apple Apple. News coming out yesterday that Apple's highest end iPhone could see price hikes of $350, $500, $1,000. No one knows on Sheriff News. I'm not allowed to say that word. But what are you doing in Apple? Again, close to a 1-year low.
I bought some yesterday. I don't remember what we paid for the low. The low, I think we bought it in the 177 handle. I also bought it at the 197 level.
Okay.
So I think I bought it at 197 2 days ago.
Okay.
And I bought it, I think, at 177 yesterday. Is that possible to trade there? Yeah, it did trade there.
Yeah, it did.
Yeah.
And so we're probably long at about 187, 188-ish.
Okay.
And it's probably 183, 184 right now.
It's close. Getting there.
185. First up to the side in quite some time. Yeah, it's up about $3. But Apple is a underperformer.
Yeah. So we're still down money in Apple. We're We're down pretty good in Apple.
Should I buy an iPhone today? Like today's like the last day because I have an iPhone 13. But I was like, should I buy the?
I bought the 16.
Yes.
I mean, it's nice, but I can't really tell the difference much.
You're not butt dialing people
It
anymore.
doesn't butt dial as
Okay.
I can hear you when you
Yeah.
speak to me now because you used to
can hear
break
me.
up on your old phone.
So it doesn't. I don't lose connection.
That was probably because you got
Right.
and it
You can
doesn't-
still watch all your tiki takis.
doesn't butt dial as much. But there's not like a great. I mean, you know what?
Yeah, but you also turn off all the other features. Like you're not using Apple Intelligence. You're not using the camera or video. Like I don't know what you want.
But I
Old
will
man
say
yells
one
at
thing.
cloud.
The battery is better.
Okay, so you're like you're naming things. You're like nothing's really better, but except
No,
for this
I'm
is
gonna give
better.
you
This is
the highlight is that they didn't charge me any money. So they took my old phone,
sure.
gave me the new phone, and gave me some slightly lower rate. But all I have to do is sign up for 2 years. So it wasn't like I didn't have to put down a penny.
Right.
Take it up in volume.
And make it up in volume, but they actually lowered my rate
Well, because they realized that you
You
don't
were getting
use
ripped
your
off
phone.
before
because they were
Never
totally ripping me
negotiated.
off before.
Yeah.
Some guy goes, "Did you even know what you were paying?" I'm like, "No, not really." And he goes, "You were getting ripped off."
Must
I'm
be
like,
nice.
Oh, great.
Well, but also, did you explain that your friends and family didn't want you on their friends and family plan,
He was taking off.
and so that you're all alone?
I think he
Because
understood.
you realize if you had a family, like you could greatly lower your. So anyway, hey Meta, there's more tech stocks here in the Mag 7. Meta releases a new AI model, Llama. Want that drama? No, Llama 4 Maverick. Meta said Llama is a multimodal AI system capable of processing and integrating various types of data, including text, video, images, and audio. What are you doing in Mighty Meta?
Nothing, no position actually.
Meta, I mean, on the close, Ivy rank a 97, good. Up to 532, up about $16. So
That's a big move in Meta.
it is. I mean, it's
Maybe
not-
for your podcast.
Maybe for my podcast option trades today. You might
Yeah.
be right. I mean, I'm gonna have a quandary today with the market.
Yeah, there's a lot to choose from, but earnings starting again.
Yep.
Amazon.
Thursday.
Amazon says its AI video model, you can tell how things are returning to normal because I have about 10 stories that just feature the word AI. It doesn't matter. But Amazon says its AI video model can now generate minutes-long clips. Nova Reel, which was announced in December, was Amazon's first foray into generative video, and they now say they are making strides. I don't know if you saw this, Dr. Data. He came over to my desk yesterday. He's like, he's like, I gotta show you this. I'm like, okay. And so his friend had sent him a picture of their Chihuahua, and I'm like, thank you for coming over and showing me this. His name is Cheeto. He was so cute. But then Data using, I forget which AI I think he was using Sora AI, which is OpenAI, was able to bring a still picture to life of his friend's Chihuahua. So it looked like a video. So they sent him just a picture and it looked like a video, very cute Chihuahua. So then Data was like, I want to see how this works. So Data found a picture from him from our old office. I was like, wow, Data, you kind of still had hair. He's like, yeah, I know. So Data took a picture of him and he tried to make it a video sequence. This is true and this is hilarious. For some reason, the AI video model turned Data into a black man. And I was like, Dad, did you send this to your wife?
No comment.
So it worked with the Chihuahua, and it was able to, for some reason, it took a photo of a smiling Data, and it
You
made
see
him.
some of these AI pictures they can do, like Photoshop, like headshots for you and stuff like that. Maybe if like you're looking for like something on LinkedIn or something like that.
You know what's funny is that
you would look good.
AI makes a lot of mistakes.
Sure.
And people don't realize that AI makes a lot of mistakes.
Sure, it hallucinates. It's working
has
out the kinks.
Crazy hallucinations.
Yeah. Well,
Yeah. So that's why when people
are you doing anything in Amazon?
just use AI, but you got to read it.
Are you doing anything in Amazon?
Yes.
Okay, what are you doing in Amazon?
181 up about $6.5.
Oh, that's nice.
Yeah, I mean, listen, we're back to where we were basically on April 3rd. It's April 8th, and we had a weekend in there.
Hey, just real fast, quantum computing stocks climbed yesterday as Rigetti and IonQ tapped for a Department of Defense program. Shares of the two companies were among those selected to participate in a DoD program. RGTI and IonQ are quantum computing stocks, and they rallied. I don't know if you trade them, but I thought I would mention it. It's just a different sector because we don't normally talk about it.
We don't trade a lot of this. I have traded IONQ and I have traded What's the symbol for Rigetti?
RGTI.
Yeah, we traded that once. Very.
QBTS is the other one.
Did they get annihilated? They must have.
What is it?
RGTI.
I know we've traded. I just don't remember.
RGCI.
G as in goat. T as in Tom.
T. There you go.
T as in Tom.
I knew I had it wrong.
I is in
$8 stock.
Ipecac.
It's $8.33. It did get up to $20 back in the beginning of the year, but I'm going for. I think I pick up hearing aids on Thursday.
Blessed be with something serious. A lot of people should talk about. There's no shame in getting your hearing tested.
There is no bigger shame.
And
sitting in that room and them saying, "Did you hear that?" And you go,
"Hear what?" Hey, go ahead.
Now I have no reason not to answer my wife when she talks.
No, but you can turn it down. Hey, just real fast because we power through all of this.
I cannot wait for this.
Affirm shares.
I'm aging gracefully, Sadnoff. Glasses when I was in my late 50s. Hearing because I had monkeys like you screaming in my ear for 20 years as a floor trader.
I think it's wonderful, Bat.
It's okay. I don't want to stare at the screen like this and have selective hearing. I want to be able to hear my 15-year-old.
You're both deaf.
Score a goal.
My hearing's perfect.
You have 20/20 hearing.
Just real fast, Affirm shares were down around 30% last week. A lot of the buy now, pay later stocks taking it on the chin. So much so that Klarna is delaying their IPO. I pulled this story for last week, but obviously I didn't get to it. But this fact still remains. What are you doing in Affirm, and what are sort of the risks to these consumer-facing fintechs?
Yeah, I don't like this buy now, buy later.
Buy now, pay later.
Buy now, pay later.
Well, sure.
All of these
reminds me too much of my friend.
I think the slippery slope. I think when they partnered with DoorDash, that's when I was like, no, that's dangerous. That you
people keep
first of all, I think everybody Klarna delayed their. I mean, you almost have to delay your IPO. You're not going to pull an IPO, push an IPO out in this market.
Sure.
And I saw that. Who else did we see that? Oh, eToro delayed theirs.
Oh, okay. I didn't see that.
Klarna delayed theirs.
Yeah.
I mean, it's a tough market. What is that?
CoreWeave had their IPO. That's the latest
that stock
one.
was down in the low 40s. I don't know where it closed yesterday, but
I don't know.
I mean, it traded down to low 40s yesterday.
CoreWeave, CRWV, trading 52 and change. Really didn't get hit that much.
Yeah, well, it was down. I saw it 42 yesterday or 40 yesterday.
Closed at 49 and change. You are right. The low is around 42.16. Probably near the.
What are you doing in Affirm?
This morning we're going to be a tiny bit short it.
Okay.
Because it got killed, but I had to roll down calls in there.
Right. Yeah, it lost 30% in 2 days.
$2.
Yeah, I didn't want to get double whammied, and so I've tried really hard to keep long deltas everywhere. But the only place I'm going to get hurt is some of these stocks that begin with an A.
Mm-hmm.
Okay. Hey, just real fast, Tesla shares also dropping amid auto sheriffs and a brand crisis. Tesla shares took a hit Monday after a leading analyst slashed his price target by more than 40%. Let's talk about Tesla and opportunities.
Kind of spiteful. I don't care what stock it would be. It would be like them downgrading AVGO that's back near its lows. I mean, again, this is the same thing, the opposite of what I think it do. It's up about $8 this morning, but everything is.
Sure, everything's up, yeah.
Great IV rank of 112. Great opportunity on price. Either way, if you believe the underweight or you believe that price is king, 230, 240 and change is really the low end. Not something we've seen since November.
Tom, do you have a Tesla position?
I do. It's relatively small. Actually, I think I need Tesla to rally. I do.
I need it closer to 250. It's 241.
Yeah, I need the perfect number for me in Tesla would be 250 to 255. Where is it right now?
241, but it closed at 233.
Yeah, so I needed Tesla about 10 points higher.
Yep. All right, we'll see what happens.
Earnings April 22nd.
U.S. airlines expected to cut their 2025 outlooks as travel demand falters. Airlines are expected to cut outlooks when they report earnings starting this week. Wall Street analysts have slashed the price targets for U.S. airlines and downgraded ratings as concerns about travel demand continue to grow. Delta up first, but what are you doing in like UAL, Love, Boeing?
Again, crazy. UAL at 100, 110. No talk about anything about, price, how it's ran from 50 to 110. It was perfectly normal. Now the stock goes from 110 to 50 and change, and they're talking about a 50 and change time to underweight and stuff. I just don't understand how people look at things.
I'm long UAL, but we need the stock a lot higher to get back to even. And it's the only
stocks have been cut in half. Delta's been cut in half.
It's the only one I have on. I think I'm going to buy some American Airlines here.
Okay. Even though they didn't have Wi-Fi?
It's under $10, and I was waiting for I missed it yesterday. I forgot about it.
Don't worry, it's only up a dime. You got plenty of time.
No, I don't know how low it got to yesterday, but
it was under $9 yesterday. The lows were like $8.
Can I say I am a fan of LaGuardia? I haven't been there in a hot minute. LaGuardia, because last time my parents and I flew to New York. No, last time we flew, we landed at Newark because for some reason like the tickets were cheaper or whatever. So I hadn't been to LaGuardia in a really long time. I like it. It's a nice airport. I got no beef with LaGuardia.
Well, it's better than it was.
Yeah, that's what I'm saying. I hadn't
United or American?
Yeah, and I love United. Like they're my ride or die. You can't say nothing bad about United to me. Hey, just real fast. Yeah, go ahead.
The United terminal, you go to the right, and the Americans go to the left. So it's like,
Yeah, and there's a United lounge at LaGuardia. Your girl's up in the lounge. It overlooks the concourse. It's nice.
Yeah, it's.
You're just mad because you don't have lounge privileges because you basic.
I do. I have the American lounge privilege.
Hey, you have 1 month left, Jamokes, to get your real ID. It is a May 2025 deadline.
ID.
It is crunch time.
I already got mine.
Not sure you have a real ID?
Yeah.
I have a. You don't.
How did you have a real ID?
The yellow star.
You have a yellow star on your
real ID.
Let me see.
Years ago.
I don't.
No, I don't think you do.
Do you have that
I don't
little
think you do.
yellow?
I waited online for 3 hours.
The white star on the right-hand side.
What?
It should have a white and yellow star on the right-hand side. Oh, yeah, he's got it.
Hey, look at you. Hey, you're good. Hey, I do not have a real ID, but I have a passport and a passport card, and I have a global entry card, which you can use in lieu of.
I have a problem. Mine expires in 3 months when Tom's going to get me a birthday present.
What, your license?
No, my passport is fine. No, I checked that. Don't worry. I'm coming to London with you, boy. There's no way.
You guys have to get an ETA. You have to get a visa, though.
I got that
visit
too.
to London.
How about this? So my wife and my son is coming with us, and myself. So we all had to get this special. The
ETA, yeah.
ETA, only for England. It's not for anywhere else.
Yeah,
sure, for the UK, yes.
It's only for England. So they make you fill out a bunch of more in-depth things about yourself.
Yeah.
My son passed right away. My wife
passed. It's not a quiz.
They got their.
Oh yeah,
credentials
you
really
passed.
fast, right? Yeah.
Call it pass.
Yeah, yours didn't come right away.
Mine did not come for like 3 days.
I mean, you're shady.
There's a lot of things.
I've never been arrested.
Yeah.
Well, I mean, I was been arrested. I've never been convicted.
Hey, just real fast, and a great sports story. I think this is awesome. Going to the last story here, Beth. Budweiser, in a cheeky promotion, they sent celebratory cans to goalies who did not get scored on by Ovi at any point in their career. So this is Budweiser 0. So they say this is 0 of 895. So they listed out all of the goalies here, probably around 24 goalies or so, that never allowed an Ovi score. And they sent them a special commemorative.
Great.
I think this is great. I don't have anything bad to say about this. So.
Budweiser is 0. I never heard of that before.
You don't drink beer, man. You are a White Claw girly.
Right.
You are a White Claw girly. Hey, finally today, for my viral video of the day, I'm not a big baseball fan. I mean, I like to go to games. I thought about going to the Yankees game when I was in New York, but the weather was a little, because I wanted to see the torpedo bats. Because I was right by Grand Central. I was like, I could take the train out to Yankee Stadium. I could be right there. See my boyfriend, Aaron Judge. What? You don't think there's a train out of Grand Central that goes?
A subway, but
a subway.
not a train.
A subway is a train.
Okay.
Is a subway not a train? Is a subway a boat? What is a?
There's two different things. There's a train and a subway.
Okay. Well, I could take the sub. Okay. Anyway, you are so pedantic. It hurts. But anyway, I wanted to go to Yankee because I've never been to Yankee Stadium, but the weather just didn't work out for me. But I don't really follow baseball. But apparently, there's a man named Cal Raleigh, and he plays for the Mariners, and his nickname is the Big Dumper. Again, I don't follow baseball, but Mariners are leaning into it. So if you want, you can have this dude break up with someone for you. So Bat paid. Watch this.
Let's do it.
I hate to be the one to tell you this, but it's not working with Windsor. Don't worry though. When one door closes, another one opens. Specifically, the door to a new apartment. Because need the big number for do some dumping. Drop me an email.
I don't hate it. I mean, they can get married there.
But it's addressed to Tom.
Yeah.
It was addressed, so Bat paid up. So that's funny. I'd never
pretty
seen.
good.
Yeah.
Pretty good.
When one door opens,
Pretty
when one
good.
door closes, another opens.
You got to be a mean SOB to do it. Pretty good. Pretty good.
Anyway, hey, that's
supposed to be
my
private.
time. I'm happy to be back. Bat, what's coming up next?
You liar. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with Confirm and Send.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade. What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, with Confirm and Send. Should we talk quickly about the market? Because we really haven't, but nothing's really moved too much. Even the S&P's up around 2.25%, up about 120 handles. NASDAQ up 385, up the same. Russell up the same, which has been the weakest of the group, up 43. And the Dow up the same, maybe a little bit stronger, up 1,020. Man, these moves in the Dow 30 stocks have been big and violent. Volatility down by 225 after trading as high as 40. I'm talking about /VX futures down to 3065. Still extremely elevated. Actually, the number I thought we were going to get up to, boy, was I wrong, because we went another 10 handles higher than that, albeit for the day. Bonds down 27, 116.25. Bitcoin up $1,700 to just under 80. The low end of its most recent channel or range, barring yesterday's move. Ethereum really can't get out of its own way, sad enough, only up $25. Oil up 40 cents, no change in the pump prices. So what difference does it make there? But there might be some opportunities. IV rank is 78. You can see here exploding to the upside. If you've got a directional bias or just want to sell premium, you've got price and you've got premium. Gold up $45, south off a 3-day slide back over 3,000. Just about every equity is higher. I'm not going to quote them.
All right, let's go. Quick little, haven't done much this morning. Bought some bonds and sold some stocks. That's it.
You bought some bond futures and sold some bond puts, and then you sold some existing stock positions that you nibbled on the buy side yesterday.
That's right. Just selling a few deltas here. We're still very long this morning.
Did you get full on your SoFi? I don't think so yet.
Nope,
right?
not yet. I'm Tom Sostam. He's Tony Batista. Let's go. Confirm and send emails that came into us overnight. I was hit with assignments on Thursday and Friday, but my positions are in May. Why would anyone exercise so early, and how often does this happen?
I mean, it doesn't happen often. Listen, if you're out of the money, it doesn't happen at all. If you're deep in the money, it happens less than you would expect it to happen because it's just a math model. How much it costs to hold the stock versus giving you the stock to hold as opposed to the put position you have on, which is exactly the same directional bias as the stock that you're getting put. So nothing changes with your risk other than the amount of money it costs to hold the position. So assignment really doesn't matter. Now, I know the pushback. You don't have the money to hold the stock, which means you had a spread, which means if you had a spread, you have another side to that spread, which you can exercise and immediately be done with the whole position, which was a full loss at that point anyway. That's the point I'm trying to make.
It is very rare to get hit with assignments when there is a significant amount of time left.
To be hit on puts. To be hit on calls, you get hit a lot more because there's, especially short calls, because you have dividend risk. But
May expiration is 38 days away. It is very rare to be hit on with put assignments. However, the market dropped, the market dropped almost 15% in 3 days. That'll do it. Yep. And when that happens, it's no change to your risk. There's no risk change, but that's why it happened.
Yep.
It's just a math model. It was cheaper to give you the stock than it was to hold the other position. That's all it was.
Yep.
So don't overthink this. What happened the last couple of days is really rare. So getting assigned in those situations is really rare. Let's go next slide. It happened once every 5 or 10 years.
Yep.
In this kind of market, where we are, would you switch to all defined risk trades? I realize that volatility is rich, but these moves are pretty big. Does it make sense to use defined risk or do spreads trade too cheap to make it worthwhile?
I mean, I like the flexibility of the naked options. I like the flexibility of spreads. If you're sending this email, it all comes down to your account size and how much buying power you have on the side. I'm going to assume that you don't like the moves and you've gotten caught, and a wider spread, not $5 or $10, but $15, $20, $25 might be a happy median to you as opposed to just going with a naked option or a tight vertical spread. That's the way I would answer this question from just the information that's here.
Yeah, I mean, you're right that when you get moves that's big, verticals are going to trade super cheap because, we're having 100-point moves. I think what we say yesterday, the expected move today was 170 points or something. Mm-hmm. So, the vertical spreads are going to trade like nothing. I think you kind of can't go to all defined risk trades. I mean, you certainly could if you want to.
Yep.
I mean, it takes a lot of risk off the table.
Yep.
Takes a lot of profit potential off the table too. So, let's see. My gut says we will not go to all defined risk trades, but if that makes you more comfortable, go right ahead.
Yep.
We would have no issue with that. Let's go next slide. How is probability of a touch calculated?
It's half the delta. I mean, there you go. I mean, that's the easiest way to say it.
So the probability of a touch is 2 times the probability of expiring. So whenever you see a delta on an option, like let's say the delta is 20, that means the probability of that option closing in the money is about 20%. That means the probability of touching that strike is about 40%. That's just a rough ballpark, okay? And that's probability of a touch. Probability of a touch is 2 times probability of expiring or 2 times delta. Okay? It's a ballpark, but it's close enough.
Yep.
Let's go to the next slide.
Ballpark, between friends.
I have a question on how price in the markets move and how price in the markets move. For example, what drives the price up and down in S&P futures and NASDAQ futures? Is it institutions moving the market? Is it market makers?
Is it you? Yes, it's all of it. I mean, it's a queue. I mean, there's no pure supply and demand market than futures market. I mean, meaning it's a queue. If Tom puts an order in at 9 o'clock in the morning and I put an order in at 9:10 at the same price and we're both away, Tom's order is in front of mine. If an institutional order goes in there, it's time stamped on their time. There's nothing different with that. Now on options, it's a little bit different. With options, if I'm an institution, professional, and I put an offer in and I'm on the offer and I've been sitting there for an hour and you're a retail investor and you come in at the same price, your order actually goes in front of the institutional order. So to answer your question, supply and demand, a more aggressive buyer, markets go higher, a more aggressive seller, markets go lower. It really comes down to price.
I have a bunch of I have a bunch of thoughts about this, but what Tony said is, I mean, it's really that simple. I think that the retail investor plays a very important role because that's kind of like the, when it's professional to professional, it's not that interesting. The retail player is the retail investor is the one that actually moves markets by buying offers and selling bids and creating some, what we call paper, some liquidity. Mm-hmm. The majority of the order flow, though, is from prop traders and from arbitrageurs that are just trying to arb the underlying stocks along with the indexes or the options along with the futures. The largest customer of the New York Stock Exchange and the CME are the option exchanges. Sure. So, I know you're thinking this. They're all intertwined. It's very incestuous. But the largest customer of the CME is the CBOE, and the other option exchanges. And the largest customer of the New York Stock Exchange are the market makers and the prop firms on the option exchanges. Nothing's even close. So, if you want to know who it is, it's not really institutional traders. It's not as much the prop traders. It's the arbitrageurs, and it's all the option traders hedging their positions. That's what drives the price. Let's go to the next slide.
So if there was a seller, just hear me out. If there was a retail customer, seller of options, call options, and I buy them as a market maker, I have long delta. I have to go in and sell futures or sell stock or do something else against it to neutralize my position, right?
Of course.
So it equals itself out. So if I, as a market maker, am not willing to pay more, or the customer's not willing to sell it cheaper, then you can't have a trade, right? So something has to move in between there, or price.
Every day Tony says something like, well, 2 million SPX options traded.
Yes.
Okay. They have to hedge those things somewhere.
Yes.
And they're hedging them in the S&P, the S&P futures. That's where all the volume comes from. I noticed a lot of traders have been calling in to discuss managing or saving their defined risk trades like iron condors and put credit spreads. From my understanding, defined risk trade mechanics start with sizing the position appropriately at order entry, taking profits early, otherwise close the trade at 21 DT regardless of P&L. Are these solid mechanics for defined risk trades, or am I missing something?
Yeah, you're rolling down the untested side is the way I see it here in just a long-winded. If your delta gets out of hand and you don't like the delta that you have, even though it's a defined risk trade, sure, I would look to roll down the untested side, roll it out a month, depending on the time frame. Sure, I have no problem with doing that. I like to be active.
Yeah, I have no problem with these mechanics. I think they're actually pretty damn good. I think that moves like we had over the last 2 days can throw everything off because we've had, we're not used to 10, 15, 20% moves in the markets or 30% moves in different underlyings at the magnitude and velocity that we saw the last couple of days. So that throws all the mechanics off because you can't even adjust fast enough. When you gap open up 150 or down 150 or 200 points to the S&Ps, there's not really a lot of time to optimize those mechanics or to use those mechanics. But are you missing something? No, this happens once every 5 or 10 years. So no, the mechanics are solid, man. Our mechanics are as good as there's nothing better. Let's go next slide and the last one. How does a large institution know when to hedge their commercial goods they sell using commodity futures? For example, Hershey's consumes a lot of cocoa. They might buy cocoa and sugar futures to control the cost in the future. What tools does Hershey use in order to know when to buy or sell those futures?
Man, I know big companies are hedges of product, but I don't think they hedge as much as you think they do.
I agree.
I think it's really the smaller suppliers that hedge more frequently than the large Hershey's of the world.
I think that futures were originally a massive, were used for hedging, everything from farmers hedging their corn, wheat, soybeans to something like here, Hershey's.
Cotton and butter. I mean, it was
Hershey's cocoa or Starbucks, coffee, whatever it is. I think it's less than you think as part of the overall volume. There's obviously certain commodities where it is all pure hedging, but a lot of the hedging's done in OTC markets and things like that. But how does a large institution know? They don't know. They just know. They only know what their own needs are, and they have their own idea of what price extreme is. So, if you're building a pro forma model out and you think that at this particular price, you can model something out that looks really good to your investors, then they'll hedge it at that certain price. Then they can model it out into the future. So if you're an airline and you can lock in the cost of jet fuel or close to lock in the cost of jet fuel, and then you can model out the next 2 quarters and it gets to where you want it to be, then sure, you go for it. I mean, what happens is they don't know what's going to happen next, but they just know what's good for them. Just like what's good for you.
So you would agree? You think they hedge a lot less than?
Totally.
I agree with you. We're going to take a quick 90-second break and come back. We got more. They're not as sophisticated as you think. Tasty Live after this. What do we got coming up, Sadnov? That's right, an option jive. We'll be back in 90 seconds.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
Well, we got Nova Vanetta today. She's out on a secret mission. Is this correct?
She's on a secret mission in New York City. But yeah, we're doing a funny little promotion and we're going to see how it goes. And there's an outside chance, a very small chance she
gets arrested.
Yeah.
So you guys sent me to New York to deface a national treasure, and I did not get arrested. No, in partnership with a testicular cancer charity, we mounted cherries onto the back of the charging bull on Wall Street, and it was awesome. We did a test run last night at midnight. People went nuts for this. Some guy yelled at us, and this other guy was like, oh, he's just cranky. But it's all for a good cause. We're out there for a couple of hours. It took months of planning. It takes 2 people to hang them because that bull's ass is pretty tall. So that's why I'm in New York.
Those cherries got some good hang to them.
Mm-hmm.
Yeah.
Friday might be interesting. I'm not allowed to work on Friday. I have committed to my family because the Golden Prince is getting married.
I know. Congratulations.
So I have committed that I have to do family stuff, like take pictures.
I'll take things that Tom excels at for 100, please.
I'm just going to be a good,
attentive husband and father to the groom.
I'm never a good attentive husband. What I'm probably best at is
Dancing. I watched you at the last wedding. You really excel at dancing.
I excel at picking up the tab.
My big question for you, and you know Slappy as he's gotten older.
What do you want to know about Steve?
Do you think after dinner, it was his 60th birthday?
No. Don't do it.
Beth knows Tony better than I know Steve.
Do you think he...
I have no idea what you're talking about, and I am just going to move on from this conversation. I'm with Beth. No.
That was like Minority Report, like a pre-crime Omaha. You know, like she knew the Omaha was coming. Like she got the little ball that came down and was like, okay, Tony's gonna go there.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
It's option. Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, sound enough with an option jive. Even the S&P is trading their highs 154 and change, 156 on their highs. 3% now just across the board on everything, sound enough.
I've been selling some stocks all morning.
Selling out longs that you bought. You're not
selling out longs, not getting short.
Shorter, right.
Just a little
naked stock that you bought from afar.
Yep. And buying some bonds, and that's about it. So the bonds are actually just a hedge for me against another sell-off. I think the bonds are selling puts in the bonds as a cheap hedge against the market selling back off. I think it's a cleaner trade than trying to get short the market here, which I don't want to do. But I can't believe bonds are back to 116.5. Amazing. Mm-hmm. What an incredible move.
Yep.
I'm Tom Sosnoff. He's Tony Batista. Market analysis following Liberation Day. Can we get rid of that Liberation Day? You know, it should be. I hate that. But let's go on, because Liberation Day is anything but.
Yep.
In the past 44 days, the S&P 500 and the Nasdaq have dropped 17 and 22% respectively, a decline not seen since COVID. We're just giving some kind of like a little bit of a look back at the last couple of days, which is kind of remarkable because I don't think any of us saw this coming. No matter what, we just didn't see this coming. Let's go next slide.
We both weren't selling in the hole yesterday.
No, we weren't selling yesterday. I think yesterday we thought we were spot on, thought they're going to rally. Right up until 3 o'clock, I thought they were going to rally. And then rally again this morning.
You did. You bought NASDAQ futures, which I thought were kind of a silly-ish buy with 10, 12, 15 minutes to go. And you said,
and considering they were down 100.
I'm going to make 100 handles on this. They went down 100 in your face.
200.
And they went up 200 the other direction.
And they're up 500.
You closed for a nice 50-point rally, which was good.
But they're up 500 this morning.
Yep. The only reason you were able to do that is because you traded small. I mean, it was a small.
Historically, there have been 11 instances where the Nasdaq's dropped 22% in a 45-day period. And only 5 instances where the S&P dropped 17% or more in a 45-day period. This places the current market decline of the last couple of days among the most significant in history. So we're going back a ways here, but there's been only 5 occurrences. So people that say, well, how much risk am I going forward? Well, I don't know, but I would say that there's only been 5 occurrences in the 2000s. Let's go to the next slide. There was more than a 10% drop in the S&P 500 over just Thursday and Friday. All the other indices saw similar declines. Such a dramatic 2-day moves have occurred less than 0.1% of all the time for all indices historically. So just to put some context around this, you know, we are under 0.1%. So it's,
I didn't have it on my bingo card, so I don't know if I'll be the first to admit it.
Well, nobody did.
Right.
Nobody did. Anyway, we put the numbers up here.
Not that magnitude of move in that period of time.
For a 2-day move of 10%, you know, you can rest assured it doesn't happen. You're pretty good 99.95% of the time.
Mm-hmm.
Let's go to the next slide. The VIX climbed above 45 on Friday, a level also not seen since COVID. In the past 2 decades, the VIX has finished above 45 on fewer than 2% of all trading days. And so you can see COVID in here and you can see where we were. And it's just interesting. You'd have to go back to 2008 and then COVID to see anything like, close to where we were the last couple of days. Let's go next slide. Besides this, the VIX had an even more substantial move on Friday, jumping to 45 from 30 in just one day. That is the 6th largest single day jump. I mean, Friday was pretty violent.
Yes, it was.
It was pretty damn violent.
Those who were here and traded through it, lived through it, really remember that. So enough. I mean, we went out partying with the hoity-toity.
I was lying by the pool with the hoity-toities. Yes. Drinking what was I drinking? Pina colada.
Pina colada.
Let's go to the next slide. The following table shows the 6th largest VIX single-day upside move since 2004 and their causes. And you can see that on Friday, which was the 4th of April, that was the tariff day. You'd have to go back to 2011 and 2008 when no, they have the wrong. It's not Trump, U.S.-China trade war, but the U.S. and EU debt crisis, and then what do they have? I think there's the wrong numbers on there. But anyway, point being here is you've got COVID and COVID 1 and 2, and that move in 2018. Ooh, that was scary too. That was a 20% jump.
Yep.
Let's go next slide. So asset diversification is critical during market corrections, though it becomes more challenging. You can see how everything becomes more challenging when we have that kind of move. When volatility spikes, correlations between assets typically increase, meaning most investments tend to fall simultaneously within the broader market. And as you can see here, when the VIX level gets to a certain point, this is why everything did virtually the same thing last week. We go from kind of low correlations from one stock against another stock to basically everything doing the exact same thing.
Yep.
That's the above 40 level. I mean, there's almost no difference. It didn't matter what you owned. Everything got annihilated.
Yes. Some got annihilated more than others, and then individual stocks got annihilated more than others. But there was no place to hide. And I got the Walmarts or some others that had some smaller movement. I get it. There was no place to hide.
Let's go to the next slide. For option traders, selling richer premium offers more opportunity when volatility spikes. However, realized volatility increases too. So risk management must be a top priority. Using risk-defined strategies and a higher probability of profit approaches work better for premium sellers trying to capture credits. Next slide. Some of the takeaways. The current market condition is a major downturn. Its magnitude ranks among the strongest in decades, only behind 2008 and 2020. The VIX reaction was also extreme. Friday's VIX jump was the 6th largest single-day increase in the past 20 years. So asset diversification and proper risk management become important, and careful option strategy selection is essential. But you know what? It wouldn't have mattered.
No.
I mean, obviously risk-defined would have been better, but how do you know?
And with a risk-defined trade, you might be completely out of the trade now and have no opportunity to get anything back. I mean, there's that other side of it too. We're gonna take a quick 90-second break and come back. We got more Tasty Live right after this with the opening bell sounding off. Even the S&P is up 165. We'll be back in 90 seconds with Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade. Named best online broker for options trading. Genius loves company.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading. Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. The opening bell in about 3.5 minutes. Even the S&P's up 173. That's a almost 3.25%, 3.5% move right in the middle, 3 3/8. NASDAQ doing the same, up 580. Russell up 60, and the Dow up almost 1,400. Sadna, if you asked me when everything was up about 3% or a little bit less on the break, what do you think here? Do you think the market is going to hold? And my inkling was, no, I don't think. I think you get an opportunity to buy them lower from here. But it is very reminiscent of the way we went lower on Thursday and Friday when we opened lower and we pretty much stayed there for most of the day. We rallied up 25, 50 handles, but quickly sold back off. It's with volatility down 3 points. That's a big 10% move, just under 10% move. /VX trading just under $30 at $29.85. VIX, if you're one of those that look at that, 39 and change. I don't know, Sad enough, kind of supporting. We just sit. What do you think?
I'm a little concerned here that I mean, I shouldn't say I'm a little concerned. I just hope they hold this rally. Like I'm
encouraged by the rally. For anybody
I'm
with
encouraged
any
by the
kind of
rally.
positions that did anything that we said yesterday, whether it was those who looked to mitigate buying power, roll
I'm
down
going to sell
Delta by
Delta
half.
into this rally. I'm going to sell Delta into this rally. I'm not going to get short.
I'm going
to sell Delta
I don't
into
hate
the
it. You're
rally.
going to reduce Delta. I don't hate it. Sure. It's a good hold.
Have to sell Delta into the rally. We bought too much yesterday.
Yeah. It's not a bad play.
Yeah.
And I hope you kick yourself in the butt for doing it. I mean, that's you'll be in a better place for it.
If you like the bond trade before, you're going to love the bond trade now.
At least today's action couldn't be better, I think, for the majority of Tasty Nation, and that's all that we can help. I believe from the phone calls that everybody that called in, at least, and the emails, everything like that, needed a little bit of a rally. You've got that rally of 3% now. What do you want to do? You want to neutralize your delta? Probably a prudent thing to do. You want to sell down calls if you hadn't already? Probably a prudent thing to do. You bought on that dip over the last couple of days? Probably lightening up a little bit, ringing the register? Probably the prudent thing to do because nobody knows the future, but at least you could make an offensive decision and not a defensive decision like you've had to do over the last couple of days. That's my speech.
Totally agree.
So help me, I'm done.
Thank God.
But now, what now, brown cow? Used to be a drink back in the day.
I know. I'm going to buy more bonds if they get under 116. I'm going to consider that a gift.
Yeah, I hate when you do this. I hate when we have a market that is opportunity abound and you go to, the bonds. I just hate it.
Well, I don't want to get short the market, so I gotta buy bonds.
Sell some premium. You still got high implied volatility.
Yeah, I am selling.
You know what? Option trades today every Tuesday and Thursday. I'll show you how to trade the market.
I'm selling puts. I think it's a gift.
You're selling puts in bonds.
I think it's a gift. I'm rolling up. I'm rolling down.
Even though bonds are back down to 116.
Yeah, if they get near 116, I'm selling more puts.
So bonds have made a move completely back to where the market had sold off from, right? Bonds went higher,
100%.
the market was selling off.
100%.
Completely come back, and the market itself has only come back a minuscule amount, a nothing.
It's insane.
Right.
Something's-
I mean, so that's your reasoning for going to long
Something
delta
is-
in the bonds. I don't hate the reasoning.
Something is so off.
I don't hate the game. I hate the player. I guess that's what it comes down
Something
to.
is so
the
off.
opposite of what I'm supposed to be.
All right. The only problem, child, we have this morning is AVGO. It's up a little bit more than I needed it to be.
Mm-hmm. Well, if they're buying back stock. A nice thing for them to say on lows. Congratulations to them. No, I mean it. I mean, come on. Congratulations to them.
Yeah, we got some good positions on this morning. Mm-hmm. And wow, UNH up $58. What'd they do?
UNH
up $50.
Up $50.
That should not affect me. Let's see what else we got here. Let's take a look at some of these stocks. Snapple. 186.10.
Mm-hmm.
Sold a little bit, but not enough.
Too much?
No. I'm curious what we should do in there. I'm going to pass for right now.
You're going to sit with a pass.
ABGO, we are going to have to do something in there. So we're going to roll up some putties in there.
Yeah, putty here, putty.
Done. And let's see, what else do we got? Any other problem children? Not really. GLD. How come that's a problem child every freaking day?
Yeah, I don't know.
Every day.
I can't help you there.
Every day. Doesn't matter what it is. I don't. What is the expected move in gold? Because it seems to move $50 a day. It can't be $50.
Let's see. / GC is what we're looking at for, right?
Can't be $50. It just can't be.
/ GC. $36. Sounds enough? $36.
Feels like it moves $36. It feels like it moves
for the 1 day option.
It feels like it moves $50 a day.
It does because it is.
Yeah. Let's see.
Yes.
I'm just seeing what else we got going on here. Just lightening up a little bit, but what would you do? Got to take a few deltas off here. Where do you go?
I mean, I think you go to your indices because I think when I look at your positions, that's where you have some of those deltas.
So IWM, let's take a look.
I think that would be the logical one. It's been the underperformer, and it's still the underperformer today. I think my son Nick got that right and kind of taught me a little lesson in there. It's up only 2.5% with everything else up 3%. It's been the hardest hit to the downside.
And let's take a look at some of it. Like Tony said, start with the big bad boys, the Qs. Actually, we're pretty flat Qs this morning. I'm going to pass on adjusting the Qs. Let's see the SPY. And we could adjust the SPY a little bit. How's your delta here? I'm still pretty long.
I'm still a little bit long. Better than I was. Tesla up $14 and change. Apple up almost $5. Google up $4. Volatility contracting, which is nice.
Yeah. Doing anything in Tesla?
I have a position in Tesla that needs Tesla over 250. It's 247 and change. I have not done anything to adjust.
I'm going to take a quick look at Tesla and then decide what I want to do. Tesla, we're long a lot of deltas. We're having a good day in there. I think we got to roll down calls in Tesla.
Okie dokie.
Not a lot. Maybe to the 280 strike. That's it.
Yes.
All right. I'm good. I just took off a lot of deltas. About half the deltas we came in with. And
Beautiful.
Leave the rest. It's a good morning, but we still got a lot of work to do from the last 2 days.
Yes, we do.
The Thursday and Friday were not kind to the good kids.
No.
So we have to got back a nice chunk of it this morning, but let's take a look. Sold some SoFi out this morning. It's the same price. We sold some NVIDIA out this morning, pre-market. That's a lot higher.
Yep.
NVIDIA is definitely higher. We sold some Apple out this morning, and that is a lot lower. So I guess it all works out in the wash.
Even the S&P's at 154, NASDAQ up 598. Some of the bigger movers that we're seeing in the market. Let's go to what's bucking the market these days on the high option volume. Few and far in between, but PDD down $1.50 and change. Obviously, volatility products and then bond products. I'm not going to mention Las Vegas Sands down 15 cents. On the upside side, enough, you got some movers to the upside. You just mentioned UNH up $40 and change. That's going to help the Dow up almost 3%. Netflix up $38. These moves sound big, and they are big. But remember, Netflix was under $830 and change at one point. It's up to $906. Of course, it was higher, closer to $1,000, now in the middle of its range. So my point being, you have something to do here if you have positions in any of these.
What's the IV rank in Netflix now?
I mean, it's still high, 83. I was expecting it to go a little bit lower, but...
it was like 130 the other day.
Yeah. But 83 is the new 110, right? I mean, because 130 would be as high as it's ever been. I mean, we mentioned Apple, because we'll put it up there. We mentioned Apple monthly implied volatility, or at least I did yesterday. Used to be 40 was the high when it came out there. It's still 61 in May, and in June, it's 55. So this is volatility we haven't seen in quite some time.
Well, let's take a look at Netflix, because you brought it up, and this has been the biggest thorn in my side. I guess we can roll down some calls, and we'll call that a day. All right, what else you got for me?
That's it. I'm ready. Even the S&P's only up 140. I say only up 140 because they were about 40 handles higher than that just a moment ago. We'll take a quick 90-second break and come back. Sad enough, what you got now that they've sold up by about 40-ish handles. If they're going to hold, this is where they need to hold to be kind of similar to the down move.
I'm staying with my. I'm nervous that they could turn around today, but I'm staying long.
Volatility 30, 20 and change, still down 8%. Watch volatility to see what's going to go on the other market. If volatility upticks here a little bit, maybe you have a little bit more weakness. If volatility stays right here, goes a little bit lower, maybe it will hold a little bit of legs. We'll take a quick 90-second break and come back. We're only 8 minutes into the day, and it's going to be a crazy day. Let me explain with Chris next. We got more Tasty Live in 90 seconds.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Hi, I'm Tony Batista, and I've been trading for more than 30 years. I've picked up quite a few shortcuts along the way. I call them trade hacks. Traders for all eternity have been looking for the reason to make a trade. Whether they were looking at charts or they were looking at fundamentals, they just had to figure out what direction the trade had to be. With the research that we provide now, we kind of take the direction out, because it's just a 50-50 shot, and say, what's the best strategy that we can apply? By the nature of the strategies I pick, I'm going to have a high probability of success. And I think my expertise comes from managing those trades, when to take them off, how to maximize the profit on them. I think that's what sets me apart from the novice trader.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
We're back. I think we're back, yes. And you know what that means? We got Let Me Explain with Chris. Chris, what's up? Testing
morning.
now. Good morning, how are you?
I'm doing well today. Not as good as this market, but I'm doing well. How are you guys?
Good. Better today. You're all my friends again.
That's good. After all those nasty tweets and text messages I was getting yesterday about how we're no longer friends, it's much better to be friends.
I never did that at all. Don't start that rumor.
I'm not starting any rumor, Tony. Why would I do such a thing?
Never, ever did I do anything like that. So what's going on?
No.
What do you got for us?
Well, we come into this week, and I know you've been very clear-eyed about this, that people were living through a crash. You started talking about this on Thursday. You said it Friday. You're talking about it on First Call on Sunday. This is really one for the ages. In market history, this is the 11th worst 3-day crash that we've ever seen. The stats that are wrapped around it, it's not that great. So we'll call this the tariff sell-off, 13.56% lower over 3 days. The other ones wrapped around it are in the Depression, the financial crisis, the crash of 1929, the start of World War II, Black Monday, right? These are all historical events. And so what we've just seen is something that does not happen very often. And that begs the question, or what we are seeing today, is it a typical turnaround Tuesday, dead cat bounce, or is this the start of something else? Well, the thing about dead cat bounces is that they can run for a little while here. We've seen this in recent markets. In the global financial crisis, we had a 24% rally in stocks over the span of 46 days. In the 1973-1974 bear market, we had a 13% gain over 51 days, even though the market had already fallen by more than 20%. The first month out of a market going into the bear, if you will, produces a rally on average of 2.7% since 1950. It's 81.8% positive in terms of the return profile here. So short term, this is a bounce that we should obviously, if you're in it, you're enjoying it, it's good, but I don't know how long you can trust it to run, considering the size of it all. So, gentlemen, I suppose the question I'm asking you folks here this morning is, do you think that the lows are in?
I'll give you my 2 cents.
Sure. And then I'll give you the answer.
Yeah.
Kidding.
So I don't think that we've seen the last of this kind of volatility, and I don't think we've seen the last of a sell-off. I think the lows of this move are in. I think the market is, I kind of was I felt like I wrote about this the other day. The markets are too big to fail, and it takes them a little bit of time to adjust and to process everything. And in this case, it took a little bit longer than usual. It took a couple of days as opposed to a single day, just because the magnitude of the announcements and decisions. Now it's been able to process everything, and it's been able to kind of normalize things relatively quickly. I don't think it. I think just if you look at the way the different commodity markets have acted and reacted, including bonds, including some of the metals, including some of the in some of the equities and some of the AI stocks and everything else, I think that everything is kind of normalized a little bit now. I think that a down move from here would probably be a buy, not a sell. But I also think you'd be foolish to think that we bottomed yesterday and we're going straight up. I think that would be a huge mistake for people to make. So like, I'm leaning long deltas because I came in long deltas, but I'm lightening up, if that makes sense.
Yeah,
I think
it makes perfect.
I think the play here, I think in hindsight, it was easy to say, well, I could have closed your eyes and bought anything yesterday morning. And the answer is, of course you could have. Right. But how the hell do you know? You know, you're down 250 after 3 straight down days. And, so are the lows in? I'm going to say yes. Are the down moves done? I'm going to say no. I'm going to say we're still going to have some violent down moves. I think they're all going to be a buy. But, knowing when to step in is going to be really challenging. And that's my take.
Mm-hmm.
Tony?
I think we've seen the highs for volatility, which would support Tom's.
I agree.
Tom's thesis there, which would support legs into this market. But I don't think we're getting at a V bottom, and I think that's the way I've been staying true the last couple of days. So I think we're going to have some chop around, and I think there'll be more tweets and more movement than we probably like. So I think if I had to put a finger to it, that overnight low on the market is probably the lowest. Yes.
Yeah, I mean, I think between the bond market, what the bond market's done, and what volatility's done, the last couple of days, I think it's a pretty good. I think it's a pretty good bet that a lot of this cyclicality remains. A lot of the risk is still on the table, but I think that the shock of all the tariff announcements and things like that are pretty much in place.
Yep.
I also think there's a very real possibility of some upside risk here. Like in case Trump's been known to just change his mind or whatever. So you could have be careful about some of the upside exposure.
Yep.
I think earnings coming up is going to defer to this. Earnings will defer to this high volatility that already exists. So I don't really think earnings are going to be that big a deal, other than there'll be interesting binary opportunity. But I don't think they're going to pump a lot of extra premium into earnings. And you do have April expiration coming up in 2 weeks, which is, traditionally one of the most bullish expiration cycles of the year.
The other night it was looking really sticky out there, right? You have Japanese topics and Nikkei futures lock limit down because of the market sell-off. Chinese markets see their worst day in since the global financial crisis. Yeah. You think about what happened yesterday morning, though, and Ilya brought up a great point, and kudos to him. He saw the Trump tariff announcement against China come into play, and the market sold off and didn't find new lows. And so he gets out there and starts selling puts in the market. It feels like this is that type of approach here on pullbacks. If we get more jostling and spikes in vol, unlike in 2023 and 2024, when I was the guy who's like, let's just buy out of the money calls and see where we go. This is very much what I like to call the wedding crashers mindset. Owen Wilson runs up to the stage at the end of the movie. He says, I'm not saying you have to marry me. I'm just saying don't marry him. The trades that we're placing effectively are that we're betting the market has found a low against yesterday. It's not necessarily going to go higher, but with theta decay, with the volatility coming in, it seems to be that's the favorable setup to express long delta exposure here. But what's happening in the stock market to me is not even the most interesting thing that's occurring here in the past few days. It's whatever the heck's happening in bonds. Because for all the hand-wringing about, needing to bring rates lower and wanting to refinance debt at the federal level at lower interest rates, we've seen Treasury yields now move higher than they were on Liberation Day, if you will. And that is something that really sticks in my craw, because not just being someone who's long delta exposure in bonds, but that suggests that there's a bigger force in play here on the macro level. And so yesterday I was doing some research, and into this morning I was looking over some more data, and I came across several interesting studies about trade deficits and relationships between tariff levels. And in particular, one of these studies from the Peterson Institute for International Economics looks at the relationship between global trade data and tariff levels since China joined the WTO in the early 2000s. And what they find is that countries with higher tariff levels see every 1% increase in the average tariff rate is associated with a 0.45% GDP decline in the trade balance, which is to say that tariffs are associated with increasing trade deficits. So if we think about a widening trade deficit as a result of these higher tariff levels, and we think about smaller businesses in the United States facing issues sourcing component manufacturing goods, head over to Reddit Small Business Forum right now. You're going to see a litany of complaints of people talking about how they're being slapped with like a $2,300 bill from DHL on top of the $3,000 worth of goods they just brought into the country. You enter a scenario where actually you could see what they call the J-curve effect, where initially a lot of the smaller, lower margin producers here in the United States that rely on this component manufacturing get knocked out, and initially we shrink our tax base. And so not only does the trade deficit not improve, we actually see that our budget deficit has to grow. And so the net effect of all this is, well, more debt for the U.S. economy. And why is this so important? Because if we're boxing ourselves in with less trade potentially moving forward, there's less of a reason for our trading partners to recycle those U.S. dollars they've just received for the trinkets they send us and put them back into U.S. debt. So we could be looking at a depletion of outside funding sources for our auctions in the short term. This is a really nasty outcome for treasuries here. And so I don't know if I have the answer. I don't know if this means short the treasury market into oblivion, but it's a dynamic that I find incredibly fascinating. The fact that treasury yields aren't lower throughout all of this, it's a major red flag for me. And it's a big warning sign.
Well, there's no question that I think the silver lining that Wall Street was that I shouldn't say Wall Street, but the silver lining that was being painted by the tariff bulls was that don't worry, because the offset is that with lower interest rates, we're going to be able to refinance debt and all this stuff, blah, blah, blah. Well, what's happened was essentially the exact opposite, as you just said, which is rates are actually a few ticks higher, and you've wiped out, trillions of dollars of market cap. So it's been an absolute disaster in that sense.
In this micro
small swatch of time. Yep, I agree. But in the micro small swatch of time, there's been it's completely backfired.
Right.
Now there's a lot of
it went way too far than anybody would have hoped or wanted.
Bonds went up too much, and then I just bought bonds this morning because I think they just came down too much. Mm-hmm. So I feel like it's easier to get long bonds than it is to get short the market right here. I think it's a much better trade. I think that spread's out of whack, but that's just me. But I don't want to get into a big economic policy discussion because I have my own feelings on tariffs and why anybody would be.
We're not talking tariffs.
No, I understand, but I'm talking just trade deficit for why I don't understand why when you basically when you're the leader of the free world as far as countries go, why you give a crap about a trade deficit. I don't even understand it. Like I really don't understand it. You're already the top of the food chain. Why do you care? Other than retribution, why do you care? Like it doesn't make any sense to me. You own everything. Like who cares? Like that's the whole point. Like you already are on the top of the heap. Why would you want to mess it up? If it ain't broke, don't fix it. And it ain't broke. But when you get to having a discussion on bonds,
you hope it's because you think you're going to make it better.
Sure, of course. And your discussion on bonds, Chris, I think it's valid. The bond move, I think, is valid to have a discussion on bonds as it relates to stocks and why are they trading? Why are bonds trading where they are? Why are rates trading where they are with stocks where they are? But the problem is that I don't think our viewers and our customers should focus at all on bonds. I think bonds, just like every other commodity right now, is a secondary play. I think stocks have so much more opportunity across the board. It's not even close.
Agreed. More importantly, let me flip it over to you. Do you think the highs are in for the year?
Yes.
I'm going to give it to you, Mr. Vecchio.
You think that? You mean the highs we made before the sell-off?
Yeah, 6,200, whatever the E-mini S&Ps were. Are the highs in for the year?
That is a very open-ended question. A week ago, we were talking about how this market is one defined by fat tails.
Well, I wanted to give you a question you weren't prepared to answer.
You think they are?
Yeah, I'm thinking through this
asking Chris
out loud.
first as he asked me.
I'm just curious what you think.
I will answer. Go ahead, Chris.
I can't say no right now. And that's just not because I'm a permabull. It's because if you get a gigantic free trade zone among North America and Europe and parts of Asia, which low tariff rates.
So you're saying if this play works, the highs
already failed. It can't work
in this short swap of time. I'm just trying to play devil's advocate.
I understand. I'm just saying the play's already failed.
Yeah,
like you can't
in this short swatch of time.
You can't lose all your money.
So I'm going to ask you the question next, and then I'm going to go to the answer.
Okay,
Chris. I'm asking you, I'm putting you on the spot.
Yeah, if
like you put me on the
probabilities spot. The probabilities of it working out, in my opinion, are low. But if it were to work out, this is a market that would be
That's
back
not
at
an
new
answer.
all-time
I'm
highs
asking
before the end of the year.
your opinion. Are the highs in for the year? Chris's opinion.
Based on the information I have now, yes.
Thomas.
Okay.
I'm gonna say no. I mean, there's 1,000 even the S&P, to go to your point.
Yeah.
Expected move, which would put us at the high end of right. It would put us like right there.
I'm gonna make it really simple for you.
So I don't think we hold the highs, but I think we can see them.
Are the highs in like going
here,
forward?
6,200.
No, probably not. I think they could go easily higher than that. But the reason they go higher than that is because we have an incredible strong economy and a machine. Here, the answer is, are the highs in? I don't think they are. Was this tariff play, was this whole play a positive or a negative, or will it turn out to be a positive? And the answer is, it was an absolute disaster no matter what happens. It's over already. You can't take 20% out and then go rally back up and say, well, you see, it still worked out. Because it didn't work out. It absolutely did not. It's a total failure. But could the highs still be higher? Of course. And in fact, I think they will be. And I think it's possible at the end of the year that we've already seen, it's possible we've seen the high and the low already. That's totally possible. But I do think
volatility, it's telling you that we could do that. We could hit both of them easily again, especially to the downside.
Yeah. 4,800 to me is a number that I didn't think we were going to get to this year. I will tell you that. And I don't know if we actually traded 4,800 or whatever, but it's a number I didn't think we can get to.
Just over, but sure.
Just over.
It doesn't matter. We're all friends.
I could easily see us getting to 6,200 again. No problem. But it's not.
It should be a problem because it's only $1,000 point expected.
That's 6,200.
Right. That gets us all on one side, Tom. I mean,
I know. I'm just saying. Yeah. I could see it. Sure. I'm definitely not ruling that out. Definitely not.
You know, I'm looking at the 267 data expiration, December 31st call. Long the 6,400, short the 6,500.
I mean, it wasn't
layout,
long ago you bought the 8,000 calls or something like that. What calls did you buy?
Oh, that was back in September when I was buying the 6,100 calls, which were hits. They were hits. So different market, different times. But there's that part of me that can't hold out and say, if for some reason this does all work out, we're not going to get the manufacturing boom that people expect to see. I know that experience firsthand with startups. I'll tell you, though, that you're going to have a lot of capital that can flow into the country. And that could really juice the markets here. But that is not necessarily on anyone's bingo card. Trump did say something yesterday, though, however. He said in his speech talking with Netanyahu, we want open borders, which gobsmacked me. But if you're getting open borders for trade, it means that you have capital that can flow anywhere. And where else would you want to flow except for the United States in that world? Pipe dream, but can't rule it out.
We'd be having a different conversation if the market was down 4% today than we're having a conversation with it up 4%. I think we get sucked into looking at things so bright, so tight into what's happening into the here and now. I think we have to take a step back for a quick second and just show that we have 1,000-point expected move. Opportunity abounds, just like it was happening on Friday, and I talked to you on Sunday night. You have opportunity here today on both sides of the market to do something. The worst thing you can do is do nothing. We've waited for this for so long. Do something.
Sure.
Put it out there, but put it out there in an intelligent way with a high probability trade. Sorry, go ahead. Oof.
What's the expression? Fortunes are made in bear markets. They become liquid in bull markets.
Okay.
Thank you, Mr.
Respect the bear, respect the bull.
Yeah, I could easily see. I would have no issue with new highs.
Beautiful.
I think it'd be fun I think it would be. Well, listen, I'm a little bit selfish here too. In our business, you know damn well that we want to see new highs.
Yeah, bull markets are good for customers just because listen to all the noise you've had about 401ks and everything else. Yeah, sure. I mean, but ultimately the market has positive drift. It rewards those that
100%.
take risk. So I want people to take risk. That's what like I told my daughter on Thursday, Friday, and Monday, if not now, when? And that's exactly what I said to you and everybody else. If not now, when?
Does she listen to you?
She did listen, but I don't think she listened as much as she's supposed to, but she's always been my other child. Chris, thank you so much for your time. Sorry to put you on the spot like that. We're going to take a quick 90-second break. We'll come back. We got more Tasty Live after this. Sound of what comes up next?
We got a market measure today. It's
Give me the S&P's up 190. We'll be back in 90 seconds. Tasty Live.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
In road trips, my family, it was like whoever could get the captain seat was it.
That's great. I'm having a great time.
Me too. But, I mean, stay a while. Take your jacket off.
No, I mean, I'll stay, but the jacket's not
Come
coming
on,
off.
take your jacket off.
Nope.
Come on,
No.
take it out.
I'm sorry. I didn't mean that.
No, I'm sorry.
You hopped on this cowboy's horse, so I guess you got to hear his tale. In '87, I took it off. There was the market crash. In '92, NBC canceled Blossom. A couple of years ago, I lost it for 2 days, and the Lakers won the NBA Finals. Bottom line is when this thing comes off, bad things happen.
You've got to take it off sometimes. I mean,
Never do.
how do you shower?
And the jacket's kind of gotten used to it. In fact, every few days it needs it.
No matter what, you keep it on.
I can take my shirt off if you want, but I'm not taking the jacket off.
I just don't know if that's something that I could deal with.
It'll be like a teal tornado. Just endlessly washing up on your short.
I mean,
This is moving so fast, and I like it.
Yeah.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, sound of what comes up next. A market measure.
A market measure.
A market measure. Says the bat.
Yeah, I'm Tom Sosnoff. He's Tony Batista. This is Tasty Live. Thank you for spending the morning with us. A lot of crazy stuff going on. But before we do the market measure, which is called losing streaks, options versus underlyings, what do you think's more prone to a losing streak, an option position or an underlying stock? Strategy, let's say, an option strategy.
An option strategy versus an underlying, I think it has to be the underlying. If you're starting with a high probability trade, how could it be any different?
You're going to see. It's interesting, actually. It depends on the strategy. The simple answer is it depends on the strategy. But before we do this, just a quick little mention. Tony and I are going to be on the road together. I know.
On the road again?
I know. On the road again. We're about to hit the road in May, at the end of May. And our first trip, May 30th, we're going to be in Atlanta, Georgia. It's a Friday morning. It is after Memorial Day. It's a Friday morning in Atlanta, Georgia. And it's a show that starts at 9 o'clock in the morning. That's why we call it At Work at 11, because you can go out early, you can meet with me and Tony, you can watch a live trading event, which is going to be so much fun.
Yes.
And then you'll be back at work by 11. Nobody will even know you're gone. Just tell them you had a doctor's appointment.
Tell them you're going out for a smoke.
Yeah, tell them you're going out for a smoke.
Yeah, you get it sick.
Yeah. Just tell them you're going to run a little late. You'll just be at work at 11. We promise you. At work at 11. So, well, then later on this summer, we'll be in Denver, Chicago, San Francisco, New York City, Los Angeles, Charlotte, and then Austin, Texas. So lots of different places. But the first one and the only one you can sign up for now is in Atlanta. And it's at the Buckhead Theater. The Bat and I will be coming in Thursday night. We'll be doing the show on Friday morning. And doors open at 8. Show starts promptly at 9. It's over at 10:30.
Mm-hmm.
And you'll be at work at 11.
I love it.
Take a half hour, get anywhere you want in Atlanta. Easy, no problem.
Yeah, no problem.
Then we're going to be in London on June 20th. That's a 6:30 at night event because just the time change. So we're doing that. I'm sorry, that's a doors open at 5. Let me change that. Doors open at 5. Show starts at 6 at night on a Friday night for Triple Witching. And then we'll be in Milan, and we're going to do our first event ever in Milan, Italy. There will be an interpreter there. So
you'll be able to understand me?
Tony's Italian is not, you can speak a few words, right?
Giallo.
Tony, he's not even going to be there. What am I saying?
I'm not going to be there. You're going to be with your friend who's now fluent in Italian.
I got my boy Dylan.
You learned the language of love very quickly, my friend.
I got my boy Dylan Radigan there, and I got Rich McDonald in. Tony will be in London. Dylan and Rich will be in Milan. And then we are going to do our first show ever in Milan. There will be an interpreter there, but we are really looking forward to doing the show in Milan.
Yep.
But right now, if you can make the Friday morning in Atlanta, we'd love to see you. And it's a new thing this year. We're doing a live trading show, and it starts on Friday morning. All these events are Friday morning at 9 a.m. All right, perfect. Thank you.
Beautiful.
We won't let you forget it.
No, we won't.
All right, let's see what else we got here. S&P's up 192 with no sell-off.
Who would have thunk?
Who would have thunk it? Apple 189. Man, I couldn't wait to get out of some of that. I think a little bit too early.
$7.80. I don't blame you on that sale for some reason.
Oh, I still kept some.
Oh, good for you.
But I needed 10 points higher.
Need a lot of things 10 points higher, sure.
Yeah. Anyway, we're doing a segment on losing streaks, underlying versus options. Let's go to the first slide, Beth. Even high probability option traders take an occasional loss. That's for sure.
Mm-hmm.
Over the long run, however, we do expect to profit. For a retail trader, the biggest danger to being able to stay in for the long run comes from consecutive losses. Previously, we've considered how frequently consistent short option positions resulted in serial losers, but recent market behavior has led us to narrow our field of vision. How often have short option positions racked up large losses several days in a row, like the last couple of days?
So they're just looking at short option positions versus long stock? I mean,
short option positions. Well, I'll show you in 1 second.
Okay.
So how often have short option positions racked up large losses in several days in a row? Because Thursday, Friday, Monday were tough.
Mm-hmm.
Let's go to the next slide. So 20 years of data, and we use SPY in this case. And we considered holding the SPY shares, selling strangles or selling iron condors, initiated 60 days to expiration. We examined occurrences of large down moves defined as more than 1% of the previous day's closing prices. For option positions, we contrasted the rates during 60 days to 45 days, 45 to 21 days, and 21 days and in. All right? Let's do it. So we have all the different time frames covered. Over 20 years, the SPY had 3 consecutive down days about once a year. Does that surprise you?
Yes. Surprise you?
3 consecutive 1% down days. I'm sorry, not down days.
Yeah.
3%. 1% down days in a row happens about once a year. Now this was crazy because this was almost 5% 3 days in a row, which is really insane if you think.
Which I think happened like
four times in 20 years.
In 20 years, right?
Yeah. So let's talk about what this meant.
Mm-hmm.
Just, this is only 1%. So we looked at shares, then we looked at straddles, 20 delta strangles, short 40-20 iron condors, and short 30-20 iron condors.
Mm-hmm.
So the frequency of 2 days in a row, 3 days in a row, and 4 days in a row, you can see of your shares being down 3 days in a row, 1% or more in the SPY, it's 2% of the time.
Yep.
If that's 2 days in a row. 3 days in a row is 0.4%, and 4 days in a row is 0.1%. God, that seems so low, but it is what it is.
It is what it is.
And
the
straddles are about the exact same as stock. Strangles, a little bit greater. Iron condors, a little bit greater, but really all kind of the same.
Mm-hmm.
There's not that much difference between all these numbers.
Yep.
And so when you look at it, what are your chances of, if you bought, let's say you bought 100 shares of IBM, well, your chances of being down, 4 days in a row of 1% or 3 days in a row, 1% is 0.4. If you sold strangles in there, the chances of being down, if you sold strangles, iron condors, or straddles, your statistical chance of being down 3 days in a row for 1% is pretty much the same.
Mm-hmm. Mm-hmm. Mm-hmm.
Let's go next slide. So then we went to the 21 days to expiration. I'll go back one slide. The last one was the overall, right? So now we're going to break it down to different expiration cycles. So the 21 days to expiration, this is the scariest part for us, is 21 days and in. And you can see this is when your numbers explode.
Yeah. Yep.
When you get 2 days in a row frequency, 3 days in a row frequency, or 4 days in a row frequency, it's significantly higher than it would be for, what we just looked at a minute ago.
Yep.
In the overall space. So this is not healthy. 21 days in. This is why we manage a 21 DT.
Yep.
So let's go to the next slide. This is what we do, 45 days to 21 days. As you look right here, these numbers are very similar to the shares themselves. So the consecutive 3 days in a row, 2 days in a row, or 4 days in a row are almost identical to shares outright. So if you want to know why we close or manage the trades at 21 DT, just look at this slide and go back one slide, Beth. These are like 6x to 8x of what the next slide is. Go forward, which is 1/6 essentially the amount of times, which is crazy because this lines up very closely with the actual stock. If you go to the next slide, which is longer, this is going to be less because you're going out as far as possible. This one, there's nothing wrong with this, except it's really hard to make money. Because between 60 and 45 days, it's just tough to make money. There's not a lot of in there. There's not a lot of juice. But I think it's unfair not to show you this. We don't go out this far, but if you have to, you're going to take a lot less risk. So the bottom line is the further out you go, the less risk you take. But if you want the sweet spot, it's 45 to 21. But if you want even less risk, you go outside of 40, 45, go to 45 to 65 or whatever it is. Let's go to the next slide. So these are some of the takeaways. Overall, short straddles and wired iron condors had very similar rates of serial 1% down days as the underlying itself did. The out-of-the-money strangles were slightly more streaky, while narrow iron condors were slightly less streaky. Near expiration, option positions pose significantly more risk than simple shares. That was my big takeaway from that third slide.
Sure.
Looking beyond 45 days, option positions were actually somewhat less prone to streaks than the underlying itself. And contemporary volatility, if contemporary volatility is more turbulent than you like, rolling expirations further out in time can lead to option positions, especially defined risk positions with fewer serial large losing days.
Good job out of you. Good job out of team. A lot of information there. Even the S&P is up 200. It looks just like the down move starting off of Thursday, Friday, and into Monday's move where we stay down and don't change. Here we are staying up and not changing. Volatility in by 340, still 29.50. You've got some market movers to the downside. They're far and few in between. To the upside, you've got some big movers. Netflix up 43, UNH up 38. You mentioned Apple just a moment ago, Sadnov. AVGO up 15. Apple is up $8 and change. Tesla's just kind of been hanging in there, Sadnov. It opened higher by about $13. It's up 15 and change. We'll take a quick 90-second break and come back. We got more Tasty Live after this with Oh Joy, your friend and mine, Mr. Scott Sheridan, next. Tasty Live.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
If you missed the live show, here's our cherry on top weekly recap.
Well, we got Nova Veneta today. She's out on a secret mission. Is this correct?
She's on a secret mission in New York City. But yeah, we're doing a funny little promotion, and we're going to see how it goes. And there's an outside chance, very small chance she gets arrested. Yeah.
So you guys sent me to New York to deface a national treasure, and I did not get arrested. No, in partnership with a testicular cancer charity, we mounted cherries onto the back of the charging bull on Wall Street, and it was awesome. We did a test run last night at midnight. People went nuts for this. Some guy yelled at us, and this other guy was like, oh, he's just cranky. But it's all for a good cause. We're out there for a couple of hours. It took months of planning. It takes 2 people to hang them because that bull's ass is pretty tall. So that's why I'm in New York.
Those cherries got some good hang to them.
Mm-hmm. Yeah.
Friday might be interesting. I'm not allowed to work on Friday. I have committed to my family because the Golden Prince is getting married.
I know. Congratulations.
So I have committed that I have to do family stuff, like take pictures.
You get to.
I'll take things that Tom excels at for 100, please.
I'm just going to be a good,
attentive husband and father to the groom.
I'm never a good attentive husband. What I'm probably best at is
dancing. I watched you at the last wedding. You really excel at dancing.
I excel at picking up the tab.
Uh-huh. My big question for you, and you know Slappy as he's gotten older.
What do you want to know about Steve?
Do you think after dinner, it was his 60th birthday?
No. Don't do it.
Beth knows Tony better than I know Steve.
Do you think he...
I have no idea what you're talking about, and I am just going to move on from this conversation. I'm with Beth. No.
That was like Minority Report, like a pre-crime Omaha. You know, like she knew the Omaha was coming. Like she got the little ball that came down and was like, okay, Tony's gonna go there.
Get the full scoop by checking out the archives at tastylive.com.
Tomas, we are back, my friend, and you know what that means. Time for a little more Tasty Live with my friend and yours. From the Scott Sheridan Studios, that's right, the ever popular Mr. Scott Sheridan. How are you, Mr. Scott Sheridan?
Good. This is like a cookies and cream Oreo cookie. You're the cookies and cream.
I'm the cream. I'm the cream. You guys are the cookie.
Yeah, see? I like it. The black, white, black. There we go. Double stuffed.
Blue on blue. It's like an old Oreo cookie. Blue and white.
Blue.
Yeah.
I like the golden. I like the yellows, actually, more than I do the traditional.
Nobody says... You like the Goldens too?
The Oreo Goldens?
Versus the original?
Yes.
Oh, no.
Yes.
No. You mean if I have my choice?
Yes.
I prefer the original.
Thank you.
But I like the Goldens.
I like them too. I mean, you're...
I like the fake...
Fake Oreos?
Yeah, what are they called?
Schmorios.
No. Not the Trader Joe's version either. The one that... There was a competitor. It was like a little different.
Sorry,
it was more oblong.
No. There are certain products.
What were those called?
You just stick with the original.
I don't know.
A Fig Newton?
Well, no, not a Fig Newton.
Yeah, that's a good one. See,
I like
Oreos,
a Fig Newton better.
I know you do. I know you do.
You can't go to fake Oreos. You can't go to fake Fritos. There is no substitute for a Frito. And you got to get the regular, not the giant scoops. Here it comes. You're
talking about what are you saying? Fritos. There's no substitute for what?
Fritos.
Fritos?
Fritos, one of the greatest chips ever made, but it's got to be the regular. Can't be the scoop.
The scoops taste different?
Yeah, they do. Texture-wise, they
you know what's
totally
weird
different.
The Fritos
seriously.
I
love you, but you are warped. Okay, you are warped.
Yo, go.
The other problem with Fritos is they're corn. I don't like them.
I love them. I love them.
See, because he likes a flour tortilla. I like them too with you, but
I do too. But
I like a flour tortilla too. But I love. You know what? You are such a liar. Now I'm hearkening back to the days. Yes.
I don't like Fritos.
Yes, you do. You and JJ used to go and get those big bowls of the...
I had them leave those off.
Frito salad. The burrito salad.
I leave off the Fritos.
The whole thing was
I don't
Fritos.
like the Fritos.
It was instead of lettuce, it was made with Fritos.
Taco in a bag.
No, it wasn't me.
Not taco in a bag. Even before that. I'm going back to 1985,
You're going back to the Board of Trade.
Going back to Board of Trade days.
I don't like it. I don't like that salad. It had Fritos in it. I don't like Fritos.
You're a liar. You're a liar. You're a liar.
I don't like Fritos.
Oh my God.
I never ate that salad. I didn't like it.
Thank you. Okay. Thank you, Scott.
What?
Right? For everything that you consume, and then You
I
don't
didn't
like
say
Fritos.
I'm not allergic to them. I could eat them. I just don't like Fritos.
See, no fig Newtons. I think slightly
I don't like
allergic
Doritos either.
to figs, but I like Doritos too, but the 6 won't let me have them anymore because she says there's the red dye number, whatever, in it, which is going to kill me.
But I like.
Thank you, Kennedy. You're welcome.
I like. But I like Fig Newtons. Yeah.
I like Fig Newtons.
Except
But
for
I haven't had one in forever.
my throat starts to swell up a little bit when I have figs, but sometimes it's worth it. Like my kids will look at me like I'm crazy. Like, why would you eat that if your throat swells up a little bit? Yeah, every once in a while, good Fig Newton. Fresh Fig Newtons are amazing. Once they get a little stale, not so good.
Fresh figs are amazing. Fresh
figs are amazing.
Thank you. Yes, I agree with you.
The problem is it's bees. They get pollinated by bees. I'm allergic to bee stings, and therefore I think that's the problem.
You're allergic to bees?
Well, I haven't been stung in a long time, but yes.
My wife's allergic to bees.
I don't really think
I've been
anybody's
stung a
actually
long time.
allergic to bees. I think people just think they're allergic to bees. So they don't want to get.
They don't need an EpiPen. Throw that EpiPen out. They don't need it. EpiPen is what you use.
I know what it is. I just don't think there's really.
You know everything. Of course, you know what it is. Of course.
I just think people that go, I'm allergic to bee stings. Like, oh, okay. You know.
Wait a minute.
No, I think.
Wait, here it comes. Here it comes. People aren't. There's no allergies, right? People aren't really allergic.
Being allergic to
anything.
bee stings, overrated.
I just think it's a ridiculous number of people that are allergic to bee stings. Like, so I don't think it's like the case.
Name one besides me. I just said it. Oh, I'm sorry, Chris. Go ahead. Name another person.
Well, his wife.
My wife is allergic.
I just said Chris. So there we go. So,
okay, so there's 3 people in the room and 2 of them are allergic to bee stings. I don't think that's the case.
Yeah.
Oof.
Oof.
Yeah.
Oof.
Oof. Okay. More importantly.
Yeah.
So we had dinner at the French Steakhouse that the gracious host.
Yeah. That we went to. Okay. What about it?
Yeah.
Average at best, right?
Yes, but great action. Great. I mean, just jams.
What kind of? Now we're talking action. We're talking action. Like I like.
Great
action.
people watching is what you meant.
Great people watching.
Yeah, you know what? Those who can do, those who can't watch. I mean, so you know what I mean.
And what are you?
Wait a minute.
I'm a doer.
You're a doer.
I'm a doer. I'm a doer. All right, I wasn't one and done over there. You know what I mean?
Yeah. You're a doer, right?
Yeah, I'm a doer. Unless you tell your story that you can't tell live on air, you are not a doer. That's it.
You are not a doer.
That's it.
Wait a minute. So you're going to tell a story on air?
No.
Don't look like it. Don't look like it.
No.
I thought you were going to.
No, not me. Not me. I've told too many.
I thought it was fair.
Yeah. I mean, it's a fun visual.
Yeah, fun room. Yeah, it's a fun room. Nice. Okay, we'll leave it at that.
The barbecue joint's got better food.
Barbecue joint's great. I've been to both now, the new one and the old one. And I guess there's a Taco Bell out here, the 30th or 31st. It was one of the original cantina, like the brick. It's closing on Friday. People are flying in from all around the country. 31st Taco Bell in the country.
And it's closing? Why is it closing?
Yeah, because they're opening across the street because there's only 3 tables. Because it's tiny. There's 3 tables. But I guess if you are a Taco Bell aficionado, this is the last of the cantinas.
Oh.
There you go.
It's very emotional.
I am a breakfast defector. I will give you that. And I know you haven't had it yet.
I've never had
it. But the Taco Bell breakfast, my son Nick turned me on to it when we were traveling the country, meeting the people, Sosnoff, shaking the flesh down from our gilded tower that we live in, and meeting the people of this country.
All right, enough.
Taco Bell breakfast was the best.
What is it? Like a burrito or a
yeah, like a breakfast burrito.
What? That's 2. Breakfast burrito.
It was
a breakfast burrito.
Yeah, beautiful. They do a crunch wrap is good. Everything they do. They use fresh avocado. It's
fresh avocado.
Fresh avocado.
Let's dial this down a little bit. There's nothing beautiful about it. It could be tasty and edible, and we'll leave it at that. It's Taco Bell.
Okay. I'll give you that. I used the wrong adjective. I'm a man that can admit when he's wrong.
Thank you. How much hot sauce do you need? That's the key.
Oh, hot sauce is great.
They have good hot sauce.
They have good hot sauce.
No, they do not.
They do.
They have good hot
Yes, they
sauce.
do.
Their Diablo
They have
is
good hot
great.
sauce. Yeah, they do.
Really
I will
good.
say they do.
I know
But the
it's
problem
hard
is
for you to
need a lot
believe
of
because
hot
it's not
sauce.
a Michelin star, but it is very good.
I'll have to try their hot sauce again. Last time I
Speaking
did.
of which, when you were here, here's the truth.
I didn't think it was very hot.
When you were with Uncle, we gotta get the Diablo. You gotta get the hot. When you were with Uncle T in Mexico City, and you went to those fancy schmancy Mexican restaurants, did you douse everything in hot sauce?
No, only the street food.
But the Michelin,
so
as Mr. Batista says, so that food you don't douse in hot sauce, but when you're out on the street and they give you a taco,
When you're in a Michelin star taco place, fancy, they don't sit there and give you bottles of hot sauce. You have to
you don't ask for Cholula.
You get what they give you. Okay.
Hey, you got any Red Devil? You got any Tabasco?
Right.
It was a taco omakase.
I know you.
It's a taco omakase.
I know you.
You give
Okay,
you eat
let me
what they
ask
give you.
Okay.
You
I'll
get
ask
what
in a
you
different
get,
way.
and you have no regrets. That's right.
Hold on. What is the
I'll
thing?
ask you in a different way.
What's
I'm
the
gonna
other
ask you
thing
a
we
different
say?
way.
We look and we don't judge, or something like
Oh
that.
yeah. We look. We
listen.
We
and
listen.
don't
We
judge.
listen and we don't judge.
Right. If the guy
think about that.
the guy hands me a beautiful Michelin star taco, I take it and I don't judge and I don't ask for hot sauce.
Okay.
But if the guy
I'm gonna ask
takes
you a different way.
if he takes his bare hand, puts it in a pot of roasted pork, throws it on a tortilla, and hands it to me, okay, all with the same grease dropping off, I'm gonna throw the hot sauce on it, and yeah, that habanero was good. It wasn't that hot though. They made it seem like it was hotter than it was.
Okay. If you didn't think that it was offensive to the chef, would you have liked hot sauce?
No, I would have found I wouldn't.
I'm a seller.
in a Michelin.
Sorry, God, I'm not believing you. Yes.
Oh
in a
my
Michelin,
God.
because you're gonna say it's offensive. Okay, you put hot sauce on everything.
No, I don't put hot sauce. I put hot sauce.
If you have the choice, you will.
If I have the choice, I
put
will.
hot sauce
Yeah.
on.
Okay, I don't put them on everything, but if I had the choice, I would put them on everything. You can't win, Scott. I can't win with.
I mean, I don't put
win
hot sauce on there. I mean, I put hot sauce on stuff I want to put hot sauce on. You know,
Which is everything.
no, no. Hey, we're having
Did you watch the Taco Tuesday?
Pat's Pizza.
Pat's on
Pizza.
Tuesday?
Today?
No, tomorrow, I think.
Tomorrow on Taco Wednesday?
Oof.
Thursday.
Which Pat's?
Thursday.
though?
You are
Wait,
you don't get anything right.
Thursday.
Okay, you
You're
are.
a wealth of misinformation.
Yes.
More importantly, which Pat's? The
I
one
haven't
on
been
Lincoln
to
or the one-
Pat's. I think there's only one Pat's.
No, there's one
No, there's
down
a-
by
there's
the
a few.
exchange on Congress. There's
Yeah, there's
one
a few.
down like State and Congress,
There's
but it's
few.
not as good.
I don't know.
Original is always the place to go.
Well, the original
Yeah,
shut down, and
original's
now it's
always
on
the
Yeah,
Lincoln.
yeah. There's one on Lincoln and there's one on Clark.
Well, the
that
one
I
on
can see
the
here.
one on Lincoln is what I call the original. Where was it originally?
The original was on Sheffield, right by my old house. It was actually like
It's
about
been
three.
on Lincoln. It's been on Lincoln for 30 plus years.
No, when I lived on George, it was on Sheffield, and it was.
What year was that? How many years ago?
It was in the 80s,
Right.
early
I
90s.
just said 30 years. That takes us to 95. It's
Yeah,
been
it was
on
in the
Lincoln for
late
sure.
80s, early 90s. It was on Sheffield, and it was.
Oh
It
my
was in
God,
the.
Tony, all day?
All day like this.
You said the
All
original.
day.
I'm telling you where the original
All
was.
day. It doesn't end.
I
And it was great.
understand, but I said it's been on Lincoln for 30 years. You're like, no, it hasn't.
All day.
No, I didn't say it. I agree. I know.
No,
Listen.
you didn't agree.
Oh
You
my
like to
God,
just
I
disagree
can't
with
listen to
everything
you.
I say. Okay. All right, so tell Tori she's got to order from the one on Lincoln, even if it's not really.
Anyway,
hot when it gets there.
it's
a
one of
better
the
pizza.
it's one of the only like really thin pizzas that I like. It's so good.
Great. So
Well, you liked Vito and Nick's. I think we had it.
No, I never had it.
Oh, you didn't have it?
no, you haven't. I had it.
I had their
drove
frozen
down
pizza.
by
And you like that other pizza that I could only get. Didn't I get it for you? Didn't I get you a pizza from it comes out of like West, like Lombard somewhere, or
You can get it from me.
I didn't.
But I got Vito Nick's frozen. It was good.
Vito Nick's frozen is very good.
It is.
Yeah. You can get that at like Heinen's.
there is no frozen pizza that's good. They're edible.
Vito and Nick's was. It was good.
All pizza's good. I love pizza.
Yeah, Vito and Nick's was good.
Yeah, but I mean,
Oh, I had your stupid Jets. Disgusting. I mean, you really. My wife is like, let's just.
Tony,
It was like 8 o'clock at night. Go ahead.
Just put hot sauce on it, you'll be fine.
Just put hot peppers on
She
it.
goes, let's get like a fast pizza for the kids or something. I go, you know what? Let's try this Jets. Tom said this Jets.
Hydrox.
Hydrox what?
Cookies.
Hydrox the cookies.
Yeah,
Hydrox are the
those-
cookies.
Those are great.
Somebody wrote into you?
God.
Yeah. I love Hydrox.
Hydrox.
Anyway.
Yeah,
you really
Hydrox.
lost your taste buds, sound off.
Hydrox.
You really have.
I totally forgot about Hydrox. I love Hydrox.
Okay, change.
Did you like Hydrox? You don't like Hydrox?
I mean,
it was a poor man's
Eat a lot
Oreo.
of cookies.
Listen,
Right,
listen,
I eat a lot of
listen,
cookies.
listen. Stop. I'm gonna listen. There's nothing like an Oreo. It's the best thing in the world. There are other imitation Oreos that taste good. And as a child who's been on welfare, having to have the substitute, the dupes, unlike you guys who do it by choice, okay? The dupes are not as good as the original.
We used to have our chefs make our own Oreos. Like our in-house pastry chef would make homemade Oreos.
Did they get it right? Did they get it right? They got it right?
Not really.
Unbelievable.
Throw 'em at 'em if they-
Unbelievable.
Yeah, so we'd have our
Throw 'em
in-house
at 'em.
pastry chef do it.
You know, you all say you would give your last $20, but you've never been in the situation where you had to give your last $20. You guys are amazing.
When I would go to my friend's house, I didn't like the way their pastry chefs made it either. I liked our pastry chef the best.
You almost made me spit it out. You almost made me spit it out. Oh my God.
I'd go over to Kenny Rubenstein's house, and his pastry chef, they were
Who had the best pastry chefs? You partially your own. It's like your mom's cooking kind of thing. You miss them? You're unbelievable.
See, and Scott's not saying anything because Scott knows.
Change subjects. You're going to go to the NCAA. Go ahead, Scott. Give it to me. Great game. Well-fought game.
Scott's
My
like,
son
don't
won the
make me
pool
tell you
game.
about my pastry chef. That's what Scott's saying right now.
I thought it was a great game. Really.
I thought it was a great game too.
The only thing I don't like, I don't know when they started this in the last 2 minutes or whatever. They stop every play. Like, let's review. Let's make sure we got the call.
Only at the end of the game. You know what? They let those guys play in the first half.
They were banging.
They let them play because they were killing each other, and they didn't call anything.
Yeah, both and the two game. Well, I only saw the first half of the Duke game, but the Florida Auburn game, they were banging too. I mean, they let these guys go. It was good.
Agree.
But is the Alamo Dome built? Excuse me, for basketball? What do they play there? Because it looked like a really nice stadium, but it didn't look big enough for football. What would they do there?
I have never been there. I don't know. I thought they played arena football in there for sure.
Maybe arena football. That could be, because it could be big enough for that. Not a regular. It looked like a nice arena.
I'm sure it is nice. I've never been to San Antonio.
I was there in the middle of summer. It was, I don't know how people, I guess I can say anything about Arizona when you're in the middle of summer. I don't know how people can live there. We played basketball outside. I thought I was going to die.
I'm getting some pushback now. Hydrox preceded Oreos by a year.
Really?
That's what they say.
I did not
They
know
may
that.
have, but
All
Oreo
you rich
took
kids
over.
steal
It's the
our
same thing.
cookies.
Can I also say,
Dear.
I also don't like all the Frankenstein Oreos out there.
I don't like that
now.
either. They got like the salted caramel now.
Gross. And I also don't like the fact that I don't like the double stuffed concept either.
Oh my God, the double stuff's the only way to go. What's wrong with you?
I don't like it.
Double stuffs are the only way to go.
I know, but
I agree with
only
Tom.
way to go.
it ruined the whole. It ruined the whole thing. It's like a shortcut to the.
Tony, could you put a survey out there, please? Double stuff versus regular. I'm not going to ask the yellow versus the chocolate, because to me the goldens that's the way to go. I know I'll take heat for that, but who doesn't want a double stuff? It's more the best part. You don't eat it for the cookie; you eat it for the stuffing.
I like the cookie.
Uh-huh.
Oh my God. So please tell me you wouldn't twist it, have your butler scrape the cream off, and then put it back together and just eat the two cookies.
Well, I wouldn't twist it. We had people that would do that for us.
Right, your butler. Right. Yeah. Your butler. You go, come on, twist some more, take them off.
Oh my God.
Oh, God.
I would have my mom twist it off for me, and then.
Guilty.
Tony, all day?
Unbelievable. All
no,
day.
Beth,
All
please
day.
tell me you're not guilty, Beth. You did not just say
Listen,
that.
there's only one way if you have time to eat an Oreo, and that is to get a glass of cold milk, put the Oreo half in, let it absorb ever so slightly, let it go, And when it starts to fully go to the bottom, scoop it with a spoon real quick and then eat the Oreo. That is the only way to eat the Oreo in one bite. It's the only way to eat an Oreo.
It's kind of gross. I don't want to put my Oreo in milk.
I know. You don't like anything touching your milk. You don't like touching your nuts. You don't like anything touching your milk.
I don't
have
want
to say
Oreo
I'm not a
dipped in
milk person.
milk.
You eat like a child.
That's not eating like a child. I don't really think an Oreo should be dipped in milk.
Cookies and milk don't go together now. You really are anti-American, aren't you?
I don't like cookies dipped in milk. You're a dunker.
When was the last time you
Dunk chocolate chips?
You're a dunker.
When was
I'm a dunker.
When was the last time you had a glass of milk? 30, 40 years?
A glass of milk?
Yeah, 40 years, 50 years?
Probably 50 years.
Yeah. Yeah. Like
I had a
who
chocolate
drinks
milk.
a glass
I've
of
drank
milk?
it.
You are a liar.
I've drank a glass of chocolate milk.
Thank you.
But
That's not milk.
Okay.
I've never had
See,
a
that's
glass of
my
regular
son-
milk. 50
Like
years.
50 years. My son is a chocolate milk aficionado.
Oh, Hydrox,
Hands
I'm
down.
learning is kosher.
Oh,
Now I know.
Of course, kosher, yes.
The original Oreo was not. Now,
We
you
got you,
people.
see?
You
We got you coming and
people.
going.
Got to make your own thing about everything. Unbelievable. Unbelievable.
Trader Joe's chocolate milk.
I've
Levi
never had
can
it.
nail it. Oh my God. If you want to try it sometime, Levi will seriously, he could drink a half-gallon chocolate milk in a sitting, which I don't understand. But he is an aficionado. So go ahead. Give it a test drive one day.
I'll try it. I've never had it before.
There you go.
I
TJ.
have had the Costco chocolate milk in the little cartons. It's delicious.
Wait, the little horizons you stick the straw in, like those?
Yeah, it's good.
The stuff you don't have to refrigerate?
Yeah, you don't have to refrigerate it. It's great.
Yeah. Okay. Get a half gallon at TJ's. Let me know. I'll report back to Levi.
I couldn't drink a half gallon of chocolate milk if it took me a year. I don't really.
Do it before the goy comes over. I guarantee you the goy drinks chocolate milk. For sure.
The goy, he drinks chocolate milk for sure.
Yeah, for sure. Just get a half gallon on an outing. Have him come over. You have a sip and let him have the balance. He can take it home with him.
Yeah, he'll drink. Yeah. All our goys will drink. Tony's goy will drink it too, I'm sure.
Tony, when was the last time you had a glass of milk? I'm going to say more recently.
It is more recently. I got a 15-year-old in the house, so
there's no way he drinks milk at 15. He's moved on from that.
No, he likes chocolate milk, and he'll drink
Chocolate
milk with cookies because he's a dipper too. That's right. You plant the bean, you get a bean, Sosnoff. That's right. That's right.
We're a big milk house.
You're a big milk house because you got a goy. You got a goy. You got a goy.
I have milk. I have milk in my house. I like cereal.
So you've had milk with cereal, which means you've drank milk.
I've had milk.
No,
I just haven't had a glass of milk. Yes.
I said a glass of milk. There is a difference, and I suffered because
There's a difference. There's a difference between a glass. So if you asked, so wait a minute. So you mean to tell me if I ask somebody if they've ever had dairy and they've never had a slice of cheese, but they ate a cheese pizza, they didn't have dairy?
That's not the same
Didn't
thing.
say that.
You didn't ask the question. Have I ever had?
That's my argument. Not my argument.
He said, "Did you ever have a glass of milk?" I go, "No," but I drink milk all the time. I have milk all the time in cereal.
I'm so dumb.
Yeah, milk and cereal. That's
Beth,
different.
can I get
agree
Nick
with Tom.
Batista in here, please? I would like to do a show moving on
Milk with cereal.
with just
See,
Nick
let me
Batista.
explain to you. I'm going to explain to you my tragedy. We started at 2%, went to 1%, and then eventually landed on skim milk, which I don't even know what skim milk is. It's blue. It's disgusting. Okay, skim milk should not be legal.
I love skim milk.
You can't love
See what
skim
happens?
milk.
See what happens?
I love skim milk. I can't drink whole milk.
Okay.
I don't like it. I have to have skim milk.
How about 2%?
I can have 2%, but I don't really like it. I prefer skim milk.
Oh my God, Beth, I gotta ask because you've got to be a skim milk.
2%. I like
I'm
skim
sorry.
milk better.
Beth,
Yes, Scott. Yes.
2% or
Oh no,
skim?
we're still on whole.
She's got cute little
good for
kids.
you.
So there we go.
Yeah.
Whole milk, good for you. See, that's the
Whole.
way to go. Yeah, get the cream on right there on your lips.
They
nice,
love it.
The texture, love it. See, now will you go for chocolate milk? If you do, try Trader Joe's.
Good to know.
Telling you,
Yes.
it's life-changing. But you might not want your kids having that much chocolate. But well, all right. Should we get to some business?
Sure.
Okay, that's pretty good.
That's
No.
All right.
We make
No?
a hot Mexican chocolate milk.
Hot chocolate? I
Hot
like
Mexican hot chocolate. Yeah.
That I do like. Nice little spice to it. Little sweet, little spice. Where do you get it? TJ's?
Mexico.
They have it.
Mexican hot chocolate from Mexico.
Unbelievable. I'm not even going to touch it. I'm not even going to.
What do you mean?
So wait a minute. You think the TJ's that comes from Mexico is not as good as the stuff that actually you brought back or had in Mexico? Oh, sorry, at the Michelin 3-star restaurant.
We get real Mexican hot chocolate. That's what we sell. Real Mexican hot chocolate from Mexico, not from TJ's.
Okay, I guarantee you, if you go look at TJ's, it's made in Mexico.
Maybe it is, maybe it's not, but we get the good stuff.
Is it from your coffee supplier or from Uncle T?
Yeah, it's from a supplier.
How'd you find the real Mexican hot chocolate?
It's from the guy, whoever supplies the teas. They supply Mexican hot chocolate too.
Tony.
I'm not. I don't want to touch it. You can't make me. I'm not going to. I'm not going to
let you touch it.
No.
Has it been like this all day?
Pretty much, my friend. Pretty much.
All day.
Yep. All day.
Did you go out last night?
Did I go out?
Mm-hmm.
On a school night after I've been away
I think
all
he had a meeting this morning that didn't go well or something like that.
I think it's allergies.
That's what I think happened. Am I right?
Nobody has allergies, okay? Nobody has allergies unless Tom has allergies, and then he could say his allergies are real, but everybody else's allergies are fake.
Oh my God! All I'm saying is
you got the allergies from drinking milk. You were going to talk about the NCAA, so you never said anything. You said it was a good game. That was it.
I said it was a good game.
How about this? The women's NCAA. Did you watch it?
I told you nobody
I saw
did.
The end.
I'm not asking you. I'm asking Scott.
No, I saw the highlights. Connecticut killed them. South Carolina.
The viewership was down 55%.
That's what I told you. I just said to you, nobody watched it.
I know. I'm telling you, because no Caitlin Clark. Hey, the lady.
Pay the lady. What do you want to pay her to go back to college?
Pay the lady.
Does Cooper Flag come out or does he stay because they lost?
How old is he? 19? He's coming out.
He's making $5 million a year. He's making more in college than he's going to make in the pros, or probably around the same thing. And he's going to make more now. I think he made $5 million last year. I wouldn't be surprised if he made 10 this year. I think he wants to win.
There's injury and everything else.
The problem with it is that at some point he's going to have to deal with a rookie contract anyway. So you might as well get it over with. Like you could stay in, but then when you get out, you're still going to have the rookie contract.
I mean, the two worst teams I think are the Jazz and the Wizards. So, like,
I'm getting feedback sounding off. The only way to go is to Duncan Oreo. The other two are idiots.
So who would you rather play for if you had that choice? The Jazz.
I hear you, and you're just going to have to the Jazz. He's an East Coast guy, so I think he'd rather be in Washington. He's from Maine. He's playing at Duke, but whatever. I mean, how long is the contract? 3 years? So he'll suffer with $15 million or something, $18 million for 3 years. But his endorsements, he's going to get a $100 million contract on endorsements. So I don't know. We'll see. I think I'd come out. All right. Top 15 symbols going through the system. First 40 minutes a day. Tom, I know you don't listen to this, but just listen this one time. No broad-based indices or futures. Okay?
Does that include S&P futures?
That does. So for you, number 15, SMCI to 39. For everybody else, number 1, NVIDIA to 57, Tesla to 97, Apple at a 77, PLTR at an 83. Amazon at an 80, TQQQ at an 88, Meta at a 77, AMD at a 73, AVGO at a 79, Microsoft at a 71, TLT at an 84, GLD at a 73, MSTR at a 31, Google with an L at a 74, and number 15 for Tom, SMC at a 39, rounding out the next 10, Intel at a 98, Netflix at an 81, SOXL at a 69, MU at a 69, Hood at an 82, SoFi at an 86, Audit at a 68, Baba at an 83, Boeing at a 73, and SQQQ at a 78. More importantly, this will have nothing to do with Tom. That's why it's more important. Tony or Beth, have you watched the last episode of White Lotus?
I have.
Oh, yeah.
I can't believe.
Good.
I can't believe.
It was good.
I can't believe they die in the end.
You can't say anything. You can't say anything to the people.
Everybody knows somebody dies.
I didn't know anything about the show. I haven't watched any, so don't tell me.
Beth, you hated it?
Oh, so stressful. Yeah.
Oh, stressful.
It was.
Right.
It was great. I mean, the way they did it was great.
It was good.
It was good.
Yeah, I thought they did.
It was
Yeah,
good.
they
Oh,
did a
screw
good
it.
job.
Let's ruin it for them, right, Beth?
No.
Where's season 4 going to be?
Oh, I don't know. I have no.
Where was the last season?
Thailand.
I heard they wanted to do it.
So you'll be going to Thailand
resort.
next year to that resort like you did when you went to Greece?
Right, Beth?
Where was the season
Ski
before?
resort.
When the Greece place that you wanted to go to?
No, it was in Italy, and I was there.
Italy, whatever.
I was there before the show was.
Oh, you're so trendy. Oh, you have the finger on the pulse. You're so good.
I was in Taormina 2 years before they did the show there.
Oh, yeah, sure you were.
No, you were not.
Thank
You did it. It was the show was done already, and
Thank
you're like,
you.
I'm going to the place where they did the White Lotus.
Thank you.
No,
Thank you.
Yes, I was already back from there, and then you said I never even heard of the show.
Okay, hold on. White. I want to know what year you went.
It was like 4 years ago.
Oh, he doesn't know.
5 years ago.
You don't even know. The Santa Dominga Palace at Four Seasons Hotel. That's where you were.
Is it in
Let's see what it
Taormina?
was.
Oh, you bougie SOB.
Yeah, Taormina. Yeah.
Yes. Ooh, look at these rates. I'm not even quoting these rates.
Oh, man.
I was there before those rates.
Oh, wow. Okay. You do get the butler with those rates. Anyway,
Where was it the next year?
There was Hawaii. Hawaii was the first year. Italy was the second year, and then the third year we just finished was Thailand. Hawaii was good.
Amazing.
Oh, I mean,
yeah.
I was in
You gotta go
Taormina
there
2
too.
years before this show.
You should just follow. You should just do that. Just follow.
Yeah,
I'm sure
so
you
you
do that.
can pay premium for everything. You should
I was
do
there
that.
2 years before the show was on the air.
No, you weren't. They filmed it a year before it was. You were there. You were there.
Oh my God.
We'll leave it that way. Revisionist history. That's okay.
But I will tell you one thing. That was a nice hotel.
Sure it was. In the Four Seasons, I think they're all Four Seasons, actually, now that I think about it, because Hawaii, Beth, wasn't Hawaii a Four Seasons?
Yes, they're all Four Seasons.
I don't remember
Wow,
it as
wonder
being
how
a
they-
Four
How
Seasons
did they
hotel.
book that one?
I don't think it was Four Seasons when I was there.
Really?
No.
Because it says a Four Seasons hotel in Taormina, Sicily, served as the main filming location for season 2 of The White Lotus.
Taormina, not Taormina.
Oh, excuse me. Taormina. There you go. It's a 14th century convent transformed into a luxury hotel.
And let me tell you something, the walls crumbled when Sosnoff walked in there. They crumbled.
With being a
No
heathen?
doubt.
It's all right. It's all right. All right.
It's all right. Are we ready to call? You cost even the S&Ps to go down by 50, Scott, but put them into a range where they opened even the S&Ps.
So when they rally, when you're talking, and you take the credit for that, but when they sell off and I'm talking, I'm to blame. Okay. I know how this goes.
Obviously.
Well, people
What's
listen
the
to you and they
chance-
get
what's the-
depressed. So they sell stocks.
What's the chance they're down on the day?
Pretty good.
Gotta be it's gotta be a delta higher than 0.
Well,
5, 10.
I can tell you that expected move is 71 on the SPX. The expected move on the E-mini S&Ps are obviously 71 also. So
71.
I would say 2 times the expected move is not there today.
I'll take a 5 delta. You want to lay 20 to 1?
Yeah, that's probably the odds. No, but I'll give you even money. Right now, Scott, if you're ready. If you're ready, I'll give you even money.
Can we wrap this up? Okay.
We're going to take a quick 90-second break and come back. We got more Tasty Live after this. Oh, don't forget, Option trades today every Tuesday and Thursday, wherever you get your podcast.
I got to check my hotel reservations in Turkey.
Yeah, check your hotel reservations. The Four Seasons.
You're going to Thailand.
Oh, I'm definitely not going to Thailand.
Ooh, I'll go.
Too hot for you?
Thank you, Beth.
Too far. Peace.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on tastylive.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The beauty of Thinkorswim was that we were different. From the name to the front-end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building. The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back? But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. That's what I do.
We built tastytrade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. tastytrade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Everybody, and welcome to the Liz and Jenny Show. I'm Jenny. That beautiful blonde over there is Liz. Liz, just so you know, spoos are up 144.
Jenny's reading to me now because I forgot my glasses, ladies and gentlemen. Welcome, Mr. Sosnoff.
Are you? I thought he was here bringing you your glasses. Liz forgot her glasses.
That's 100% him.
Tom, while you're running around, get Liz's glasses.
Okay. Where are your glasses? No, I don't need them. Who needs glasses?
Where are they?
No, I really don't need them. I'm good.
All right. Well, I will read everything to you if you can't see the numbers on the
You
screen.
totally drew a picture of my dog.
That's crazy. All right, Spoo's at 144. What was the we were in the car. I don't really know how. Let's go to the platform first, since there's a lot going on. Today, high of the day, 523. Right now, 519. Close. Yeah, very close. Very close.
Oh, I'm sorry. Okay. I was looking at the SPOOs, and you know how those don't match. So the SPOOs are 52.43. So when you were reading me numbers that I can't see anyway, I was like, what is she saying?
I just pulled up the SPY chart. So, but when was it as low as 481? 40 points lower. Well, I guess SPO's only up 100. They're still up.
Yeah, that is still up. Yep. So we're getting a little bit of a relief rally, right, today?
Yeah, and we have bonds down. Bonds down. Gold's up.
Yeah, no, gold's up. Yeah, gold's up. And you know what's so crazy is everybody's like, oh, gold was down when everything's down. Gold's down when everything's down. Because they're like, that's a safe haven. And it totally acted like a safe haven. It should go down when everything's up because people were then they were selling it when it was up.
Wait. Rewind and start over. I wasn't paying.
So gold has been going up as the safe haven. And so when everything started to crash, gold should come down a little bit because
people are selling it to get back in the market.
Yeah.
It's funny because I was talking to a friend of mine, friend of yours too, and she said her dad had taken all of his money out of the market, put it all into gold and oil. He took everything out of the market, and he's almost 80. He's retired. He's long retired. Took all out of the market, split it up, put half in gold, half in oil, and so with the market down, taking it back out of gold, and putting it into the market.
It's pretty good. SMRT.
All right, we're making some money back today a little bit. We don't have a lot of positions on, so we're not making that much back.
I know. Should we jump into the account and take a look at it?
Sure. We are going to be we're back to normal. We're back on schedule. Liz is home. I'm home. Back on track.
Back at the SIBO tomorrow. Can't wait.
Back at the SIBO tomorrow. We'll have an amazing study from Jacob. And I talked to Dr. Data. He's working on a really, really great cherry picks right now. It's not quite finished. It'll come out today. But he said it's so great we should go over it again tomorrow on tomorrow's show.
On tomorrow's show, or I don't know, is it topical or is it?
He says it's very topical because it just talks. It's more about futures and he just says it's very topical, just so people understand the risk and when you're putting these positions on, so you know the risk of these positions. Because there's been
are big.
They're big, and we've had some big moves. And
that's good. Okay.
Yeah, so he said very topical.
Sometimes at the SIBO, it's hard to go over that stuff. I'd love to keep it and maybe talk about it on Thursday.
Yeah, that's not
just because I want to give it its due. I know that sounds crazy, but sometimes I don't want to look at the camera. When people are screaming around you, it's hard to discuss other things that aren't.
So we definitely will go over it this week.
Yeah, for sure.
Because it'll be helpful for us too.
And then Kai came up to me this morning when I got here too. Late morning. But he was talking about the move that we had on Thursday and Friday because he's like, "I'm sorry, I didn't send you the slides for Friday." I was like, "Listen, I was on a boat. I don't know if
you weren't even. Yeah, we didn't need them."
He's like, "I was watching the show," and he said the move that happened on Thursday and Friday is like 0.01% of what could possibly happen with all the things that happen, and he's going to put that in together for us for Friday.
Oh, for Friday, good.
Yeah, so I'm excited.
We've got a busy week.
Hey.
Busy week. Today, Tuesday, we're taking live tweets. If anyone has a question, comment, picture, whatever, show us that you survived last week. Send a tweet, include the hashtag LIZJNY. Do you want to show that so people see?
Let's pop in, if we could, into Twitter real quick, because the one thing that did go through, I mean, don't get me wrong, I had the internet and I had everything on there, but this is Frank Walsh, and it says, you will go very far in life. This is a fortune cookie.
No. It says you will not go very far in life.
You will not go very far in life. Well, my point of this, I didn't read that is that one of the only things I got from Jenny on the cruise was a picture of a fortune cookie.
I know. Okay, so one day we were out.
I probably have it. Do you want me to find it earlier? Because you texted it, so I'll be able to find it earlier.
Yeah, I can find the text. I was just going to search text with Liz. And while you were on vacation, I didn't text you the market at all. I did not want to ruin your vacation with the market.
We talked about it every day, but you didn't send it
I didn't say anything. I didn't say anything until you brought it up. But I did text you my fortune. Here it is. And it said...
Tweet it. Just throw the hashtag on it real quick.
Okay, sure.
So this is what I was saying. When keep in mind I can't see. So I can see a fortune cookie right here. I know that Frank Walsh sent it. Not exactly sure what's happening, but I do know that Jenny sent me a fortune cookie while I was on the.
I will tweet. That one says, "You will not go very far in life." Mine, on the other hand, was a good fortune.
Yep.
Good fortune. I will tweet it. Here we go. Make sure I include the hashtag. Hashtag LIZJNY. That's all people need.
That's all they need. Hashtag
Post.
LIZJNY.
So we were out at my in-laws' house. They ordered Chinese. There was a bag of fortune cookies. I picked one out of the bag, and my fortune was...
You didn't eat all the cookies until you got the one you wanted.
No, picked one out of the bag, and here comes my fortune.
There it goes.
Try to read that, Liz.
Well, I know what it says because you sent it to me. I couldn't read this if my life depended on. You will make a fortune with your friend.
Yes, you will make a fortune with your friend, and I thought, I got to send that to Liz.
Retweet that.
And I must still be at my in-laws' house because I don't have a table that's that color. I must have.
I thought you were at a Chinese restaurant. They have tables that color.
I was at my in-laws' house because I must have taken it, sent it to you right on the spot.
Yeah.
As soon as I opened it, I've got to send this to you.
Immediately. I need to send this.
Well, that fortune came and then the market crashed. And we didn't have short positions. We lost money last week.
It didn't say tomorrow. It just says in general.
There's a chance. There's a chance for us.
Yep. Hey, I feel like the richest person in the world being able to do this show with you on a daily basis.
Oh, thank you very much.
Okay, so do you want to do Twitter first before we do anything else?
Sure.
Just because we're in here already?
Sure, yeah. Although, Scott, some are coming in to say, let's say you have an account with about 38,000 net lick. You have been doing a mix of jade lizards and 0 DTE, where if your account net lick dropped below 25,000 would cause a PDT issue. What adjustments can or should be made to avoid the PDT? Well, okay.
Wait, so jade lizards and 0 DTE.
So jade lizard's fine. That's not
because that'll never come off within that day. So if you put a jade lizard on, you're waiting for time to pass. It's within there. That's never going to cause a pattern.
I think the question was more about the SPX 0 DTE, and so let's go into the platform because we'll talk about how to avoid it. We see. Let me go to the table page. Okay, one way to avoid it. Let's say you buy this call spread thinking SPX is going to go up, and it goes up. Instead of selling out that call spread, you just sell out the next one, and you create a butterfly taking a credit. And we see Mikey do this in whether he's in SPX or XSP, where he'll buy a spread, and then when it moves in his direction, turn it into a butterfly and lock in a credit and have that butterfly.
And then you leave it. So, I mean, don't get me wrong. When you're doing this, if the 0 DTE, so if the stock goes up, you could take it off for $50. It has to go up a little bit more for you to lock in that same $50. A little bit more for you to lock in that same $50 and butterfly it off, but not that much.
So you can do that and then you leave it and let it all, because it's cash settled at the end of the day. If someone were to, let's say someone wanted to sell, daily spreads like this.
So what she's putting in right now is a $10 wide Jack Tucker-esque iron condor.
And then
is it 10 or 15? 10.
This one's I just threw in it. This is just a 10. I just threw this in for example. So let's say someone's, and I'm gonna have to think through this as we go on. But day passes, vols coming in, theta's coming out, and you want to take the risk off of this.
You could still butterfly each side.
Yeah, what I think you would have to do would then...
You'd have to sell an additional 51.25.
Or you could just buy, instead of buying this short back, all you have to do is buy...
Wait, you can't, you got 4 legs in.
Oh, right, you just have to buy something, another strike above it. Or like, you said, turn it into a butterfly. I'm going to take off this side here.
Take off.
Oh, whoops. What the heck? What?
First day in a set of hands.
How do I get back? Take me back. Okay, so then if you have this on and it's cheap enough to come in, instead of taking this off, you could, like Liz said, sell out that one or buy this one. And basically, you're turning that into a butterfly.
So if this is a winner, That should be cheap to do.
You should be able to like end up with 2 butterflies on for a credit.
Yes. So that is what we will do. Now, I don't want to misspeak. Please call your brokerage firm. Scott Somer is very, very clear of the concept. Well, you could also use ES because you can get in and out. If you know you're closing it, you can use ES.
Yeah, or can you use, if you wanted, so ES has options. You can use the 0DT ES options. Yeah. You can't let them, they're not cash settled.
No, if you know you're closing it, you can use ES.
But you're right when I don't think this counts towards the PDT, the ES futures.
And keep in mind, like
the ES options.
You were just in SPX, so you can create whatever kind of width spread you want too. Here, can you pull one up?
Yeah. Now, I will say though, you have to keep an eye on this. Well, you can close it. You can close it. It's not like, oh, you got to keep an eye on it. You can close it.
But so if you're an active trader, so I love the cash settled, especially if I'm trying to do something crazy at the end of the day, right? Where I just want to let it go and walk away. I love the cash settled. And sometimes it's nice to use those cash settled where you know you're just going to walk away with it. But if you know you're closing it, if your goal is, and a lot of times you and I have done these studies where it's 25% or at noon. We're closing it.
Right,
It doesn't matter what you're using.
True. So here you can do it here and close it. Yeah. Here you don't have the luxury of like, it's cash settled, I'm leaving it. Because if the end of the day happens and it's in between, and even beyond the end of the day, it could go till a little bit after, 3:15.
This goes to 3:15. SPX stops at 3.
But this could go till 3:15. And you have to make sure if one's in the money, one's out of the money, you have to close it. You don't want to walk in with a future.
Do you see that too? Like, you know how SPX stops at 3 o'clock? Mm-hmm. Sometimes I'll have a long option and thinking I know something. And right at the bell, it ends. And then all of a sudden it'll run in the direction you want. You're just
right after. It closes, price is set, and then it moves. Yep. I've seen it. I've seen it happen. SPOO's only up 113. But that's a
good move. I mean, do you expect it to, I mean, we were down, what percentage is that? I know I shouldn't talk in percentages, but what can you?
We're up 2%.
2%. I mean, we were down almost 6. So, you know what I'm saying?
Oh, it's a decent move today, but if you look at this, where are we back to?
No, I mean, it's in where the fat bars.
Here we are. Yeah. Oh, then I was looking at the wrong bar.
Yeah, you need the fat bar. I can't read that.
This bar here.
You're on your own, Jenny Andrews.
Today, low 51.75. Oh, right around where we are. And high 52.67.
Yeah. But I mean, we had, 5%, 3%, 2%. I watched us down 250 on the first print on Sunday night.
Sunday night was crazy.
So this is a little bit of a relief rally, but nowhere near where we were.
Okay, do you today when you saw the market up, were you like, oh my gosh, I wish I put more in?
No, I still think you still have opportunity. Where's the VIX? I still think so. I don't think anybody's going to paint the bottom or paint the top. I think. Right? So
it would be too obvious. I feel like it would be too obvious, and everyone, if Friday were the bottom.
Yeah.
Don't you think so?
But take a look at this, Jenny. So the VIX is still above 40. So if I didn't see it, let's say I couldn't look at a chart at all. Like the charts were banned from this platform. If you open up the VIX and it's at 40, I would still think there's opportunities abound. You take a look at, you were just in SPY. What's the IVR there? Here, I can look too. So I'm not demanding you do things.
No, that's all right. go ahead. I can
No,
look.
it's okay.
So SPY IVR is...
You still got a 90 IVR. Or an 89. Yeah.
Right.
You've almost got a 90 IVR. So if you're not looking at a chart, I still think your opportunity. And I don't think it's upside or downside. I think your opportunity is opportunity. And because of the direction. You could go downside diagonals. You can do downside anything if you still think it's going to go back down.
Now, and people are there are plenty of people there, and I know people that there are people who've had margin calls who, are putting more money in.
Margin call? Who dis?
So who are putting more money in, and when you put that money in, you could be waiting for it. I know for my son, we moved some money into his account, and he was still waiting for that money to settle so he can get back in. So I don't think he's going to be calling me today like, Mom, we missed it. You didn't get anything in.
Yeah.
And when I saw the move up, I thought, well, some people are still waiting to get back into some.
So I put some in yesterday, and I did like what Tony was telling his daughter, Gina. Did you hear what he told Gina?
No.
So Gina called. So it's so funny because, we trade for a living, and Gina doesn't trade. And so she calls, I think, on Thursday or Wednesday or something. And she's like, I've got this cash on the sidelines. What do I do? And I thought what Tony said was good. He said, take whatever cash you have, put 25% of it into the market. And then he called her Thursday night, and she was like, what did you do to me? And he's like, now take whatever cash you have and put a little bit more back in. And so, so he was just saying little bits in. So even yesterday when it was down, or Friday, I was Rip Van Winkle, so I didn't do anything. But I put a little bit in. I still have stuff on the sidelines. Do I think I missed it? No. And is the stuff I put in coming off? Probably not.
And we were on the phone yesterday, and I said, I'm putting X amount in today. And I put X amount in this, X amount in this, X amount in this, X amount in this, waiting for, and I talked about this with Tony Rehan when someone called in and was looking for a strategy of making X amount percent a year. And he talked about going out a year and selling puts about 20% down. And he didn't say, go all in today. It was like, put some on today. And I think he used the example of maybe having, 21 or something. If you put in a fourth today and then next month a fourth and then next month a fourth and then next month a fourth. And so then you're always
coming off.
You're always having, always having a fourth coming off. You're always moving it.
Yes.
So I do like that.
I do. I think that's a good strategy. Don't get me wrong. It's hard. Everybody wants the get-rich-quick scheme. But the get-rich-quick scheme can take you out pretty quick, too.
Hey, someone called me yesterday and said, there's so much money to be made now. There's so much money to be made. Everything's moving so much. If you could jump in and catch it. I'm like, that's not what I'm, not even catch a falling knife, just jump in and catch a move. Like, because everything, you saw how the market was whipping around. But I said, like, that's not how I'm trading. I'm not trading to try to catch a move and hit it big on one move. I'm trying to just take advantage of the volatility, but
I might ping pong it around. So if you've got the high vol, so if you got iron condors in, just iron condors, I don't mind taking off one side then the other. I mean, look where we are right now. SPOOs are only up 100. When we got in here, they're up 150.
Right.
So you can do two-sided action
and take off one side then the other.
And I was saying too, the commodities. So can we take a look at some of the commodities?
Well, I want to just
like soybeans and
all that. Sure, let's look at that. But so yesterday's gold move, high 30.84, low 29.70. Everything's been having big moves.
It has.
We've been seeing this. Okay, ZS. So TP was more bearish on the commodities.
Meaning, your softs or your oils and gases?
Like soybeans, wheat.
He was, okay.
Right, he was more bearish of like, even though it looked like it wasn't near its high, he was like, let's sell a call spread here. He was more bearish on them.
I mean, I get that. You guys didn't do anything though, did you?
We tried to. I think we didn't get filled. We got in and out of ZN.
And ZN and ZT are down today.
And I did think of trying to, but he was, we were selling call spreads. We were putting on bearish trades. So maybe today we put on something bullish.
No, I get it because that's right because it has fallen. I got out of mine. I had TLT, so I'm not big by big like you guys were.
Tuesday, Monday.
But I had TLT and I got out of them yesterday. Thank the Lord.
So it was on this day that we were. No, maybe we were. What did we do? Let me pop out the side because we were trading ZN. So activity.
Well, yesterday, you were probably trading ZN you had them Thursday and Friday, so one of those two green bars.
Oh, we did sell a put spread. So we sold a put spread, 112, 111 put spread, and bought it back in a day. So it was Thursday here.
Yeah, you had them Thursday and Friday.
And so we sold a put spread and then took it off. And so do we sell another put spread in ZN? He had his method to his madness of what if we should use ZN or ZB. And
if I'm remembering correctly, all you got to do is double it. If the implied volatility is double, that's it. Right?
That's what I was going to simplify. I was going to simplify and say if it's more than, if the other one's less than double, then you use ZN. If it's more than double, you use ZB. But he had this, he kind of went into the calculation.
And that's why the one time we saw him, we're like, just tell us what it is.
So here, if I'm going to trade, and he was sticking with shorter term, like 24 days. So if I look at the 24-day, this cannot be right, that 19.
19% implied volatility. That's not right. In a second?
So look at, it's because it's about 8, 9. It's one of these 8, 8, 9. It's not 19.
Oh, so I can't see that.
So it's got to be, so figure 8.5, 8.5, 8.9 if you're looking at ZN. And then when you see something like this, here's what I'm going to tell people. If they see ZN and they see the vol
13,
is like
10, 8, 19, 8, that 19 is wrong.
I would think that.
Let me ask you something though. Is there a meeting? Is there a binary event in that cycle? There might be.
But then why wouldn't the following be high too?
So, well, let's go to Z.
So-
let's go to ZB and see if it's in there as well.
I'm going to implied volatility, and I was going to see if it was like one strike, because then you could go to implied volatility here and see 10, 10, 10, 10, 10, 10, 10. And then sometimes it could be one super wide market on a strike that's throwing it off. Like, I don't see anything here that would
ZB,
be.
It's insane the opposite direction for ZB implied volatility.
All right, and that's at the 24-day. We're looking at the, is I looking at the 24-day?
You're looking at the 24-day.
Yeah, because what you could sometimes look at something that would be throwing it off.
Do me a favor, go to ZB. So I got to show you something.
Okay.
So the 24-day was very high.
9.
The 24-day here is a 9, where it should be like a 15 or a 16. You see what I'm saying? You picking up what I'm putting down?
Yeah.
Something is amiss. Something is afoot.
But then you go to these options and you look, okay, here, 12, 13, 14, 15, 12, 13, 12, 13, 14, 15. Sometimes it's just like something that's throwing off the calculation, or maybe there's a little glitch.
That's what I'm saying. We need Frank.
But you trust that, I trust the option prices.
Yes.
So here, if we have, I'm going to, for just simplicity, I'm going to look at the 45 day.
45-day, yes.
So
just do it.
15.3 in ZB, and in ZN, it's 8.5. So we trade ZN. Because you double 8.5, you're up to 17.
Yeah.
And the ZB was only 15.
Yeah.
So we trade ZN.
That's how I think.
That's what I would say. Whether we trade 24-day or 45-day, although TP liked sticking with the shorter term.
Well, let me ask you this, though, Jenny. Inquiring minds want to know. I understand that you're doubling one and doing the other, and maybe it's if you're doing a pair straight. But in your ZN, you've got a 70 IVR. In ZB, you've got an 88.
He said, I'm just following.
I know.
I'm just following the bond experts system.
I know. But do you see what I'm saying? So I don't think there's a right or wrong. I think at this juncture, when you've got these high implied volatilities, either one is fine.
So look at this. We sold, it's the 17-day now, the 111, 112 for 19 ticks.
What is it now?
111, 112. If I go to this, the one where we sold it, the 111, 112, 31 ticks.
It's the little things.
Wait, why am I in the 9-day? The 17-day.
Oh, yeah, it's not going to be as good.
111 and 112. Yeah, 31 ticks. Because it's in the money now. That's what we sold. So now I could go.
You can do 111, 110.
If I go to the 24-day. Oh, and then I'm moving. That's the part of my.
No, you're not.
Do you see how it's opening up the wrong one?
No, I can't see anything. Please keep in mind I don't have my glasses. You need to be descriptive.
Okay. It was okay. So what I want to make sure is that I'm in this future that is the M, where it's 111, 245. So that's the M. What I don't want to do is jump to the next one, for sure. But I'll stick with the 24-day. And here we can sell
111,
110 for 23 ticks.
Sure.
Max profit 359, max loss 640.
No, let's take a look at something down there. This I can see and this I do know. So your buying power effect is a lot more than your max loss.
What on God's what is going on?
And I was like something, there's a lot more numbers on the buying power effect than there is. So this is saying that it's holding up a lot more.
Call Woody.
And I'm telling you, I think
it should not be.
No, something is happening in that May 2nd cycle.
Oh, I feel like there's some kind of glitch.
I don't know, but Frank the Great will help.
Remember how every time there's a platform glitch, we'd be like, we're going to shake down Woody. I'll try the 17-day, and let's look at the 17-day, 111, 110. Yeah, this is what it should look like. Max profit 265, max loss 734, and buying power 434.
Yeah,
there's
usually-
something going on with that 20. There's some kind of like glitch in that 24 day.
With futures,
the buying power should be way less.
the buying power should be way less than what your max loss
I'm
is.
putting that in again to see.
Did you put it in backwards? Did you have an extra option in there?
111, 110. No?
Yeah, that's backwards. That's backwards.
No, I mean, it's in right.
No. That's the margin in.
What if
Your
I
max
sell
loss is 600? It's holding up $3,000.
What if I sell the 10 and a half, 9
Do
and
you
a
have
half?
something in there?
No, it's so nuts. Why is it looking at that? Is it? No. Call the trade desk. Call the devs.
I love when I have to call the trade desk. And I should call from in here and be like, are you at work today?
I always pretend I never say I'm me. Never. I'm never like, this is Jenny from the Liz and Jenny Show.
They have your name, Jenny Andrews. They have your name with your account.
I guarantee you, when I call in and say account number, blah, 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 and they see account Jennifer Andrews, no one's thinking like, oh, this is Jenny's account.
There's nobody named Elizabeth Dierking out in this world except.
But there's a million Jennifer Andrews. There are a million Jennifer Andrews.
I wonder how many. We can go ask how many Jennifer Andrews accounts they have.
I bet they have a few. When I tell you that Google Jennifer Andrews, a lot of people come up. A lot.
You know what? I've Googled you so much that when I Google you, you come up.
That's funny. All right, so then here's the dilemma. Do we sell the 17-day?
You're not even top on my page.
Oh, let's go to Liz. Let's go to.
No.
I
did it on
don't.
my computer.
Then don't.
I didn't do it there. You're not even top on my page.
Okay.
But you know what's funny? Everybody on the cruise, once again, were asking me if I'm married to Dan Dierking, the football player.
I thought he was a basketball player.
No. Scott Dierking is a basketball player, who is like my in-laws' age. But Dan Dierking is 10 years younger than me.
That's what I was going to say.
My husband's name is Dan Dierking, but he's 10 years younger than me, and he's a fucking killer athlete. Excuse my language.
Oh my goodness! Yeah. Beep this out.
Beep that out. Killer athlete. So I was like, "Are you married to Dan Dierking?" And I have to be like, "I am."
That's what I thought. He was a lot younger than you.
A lot younger. He's 10 years younger than me. One time they were delivering a fridge to the house, and they're like, "Does Dan Dierking live here?" I was like, "He totally does."
What team is he on?
He played for Purdue.
Oh, okay. Oh, so he's like local enough.
Yeah.
Good story. One of our high school guys who went to high school, he's younger than me, obviously. He just signed with the Bears.
Ooh, who is it?
Miles Boykin.
Awesome. Congratulations.
Yeah.
Gonna go see him in Arlington Heights?
Are they building the stadium there?
I believe so.
When did that news come out?
I don't know. I just am.
Like, is there new news about that?
I believe so, yes.
I thought that was kiboshed. I mean,
it was kiboshed, and now it's back on the table. Because the only reason I know that is we were driving into Arlington Heights to go see that hockey game, and Dan's like, "That's where they're going to put the Bears." And I was like, "Is that happening?" He goes, "I think so."
Really?
Yeah.
I'll scope it out while I'm living at the Westin.
You're going to be by O'Hare.
I've got nothing to do. I'll drive over. All right, let me get this trade on. I'm going to go to the 17-day. I'm going to do the 111, 110. I want more than that.
I mean, I got to tell you, this smart computer knows that I do a show with you, knows that I say Jennifer Andrews from the Liz and Jenny Show. I Googled Jennifer Andrews. You're not even anywhere on here.
Well, you're on a different computer.
This is my computer.
I want this 24-day buying power. You know why there's because it's thinking the vol is 19. It's like doubling. It's thinking the vol is double what it is. And let's get to the bottom of this. What is throwing off the vol? 10, 10, 10, 10, 10, 10, 10, 10, 10.
Well, the other vol is thrown off exactly the other direction. So something's happening in the May 2nd cycle. We might need
somebody help. Somebody help me.
Get to the bottom of this.
Somebody help me.
We need you.
I don't know. All right, then let's stick with the 17-day. And I will sell the 111, 110 for 17 ticks. Not quite as much as we sold it for 19, bought it back for 11. Sure, 17. I'll take it. Filled instantly filled. 17 ticks.
Well, that's amazing.
Okay, so that's on the board today. American Airlines. With the market up so much, are you surprised that it wasn't up at all?
No, because it got downgraded today by everybody.
Did it?
Yes, to sell.
Really?
Yes.
Better scratch that from my list of things to buy. That was on.
I mean, that shouldn't matter either way, but it did get downgraded today.
No, the kids, Logan's college friends, they're texting me, oh, what should we buy? What should we buy? And they're all young, so they have small accounts. So I was trying to look for things they could afford. I think that was on my list.
Yeah, but just because somebody
Strike that from the list.
Just because somebody downgrades it, like Vanetta makes fun of the analysts all the time.
Right.
What are the other airlines doing? Like, because Delta Airlines has earnings today. Hold on, Jenny. I'm going to do this real quick.
Oh, let's go to Twitter.
Let's go to Twitter real quick. We'll pop back in if we can to Twitter. So I'm going to go to Bob real quick here. And I will get to you, Herb, too, because I know you're underneath. So the Delta Airlines has earnings today. So I do want to take a look at that. And thank you very much, Bob on Fire. And then we've got the banks coming in.
Yeah, so that'll be interesting. It'll be fun trading earnings now that things are down and there's high vol. It's like...
It's going to be so fun. So we will look at Delta Airlines, but I want to make sure we got to everybody, too. And this is Herb. Hold on, let me get out of this so you can see it.
Okay.
Can you read that for me?
Yes, I assume you have a portfolio margin. I assume you have. Do you use this table? Do you lower your max buying power amount since you have portfolio margin? And if so, by how much? And if you use the 50% of the price of the stock for BP, what percent of total BP will you use? Okay, so this is talking about if the VIX is less than 15, you should only have 20 max buying power, 25% if you're, I'm guessing, NLV, what is that, notional?
Notional value, I guess.
If VIX is between 15 and 20, you should have more, between 20 and 30 even. So, okay, you have to be very cautious with portfolio margin, which is why I choose not to have, I have chosen not to have it because I could get crazy.
So I have it. I manage a lot of accounts. I have it in one account. I don't have it in any other ones because I decided not to get it from my husband's account that I manage. But it's funny. Do I use this chart mentally? I mean, mentally I do because I know I have portfolio margin. I can put on trades where it's giving me credit back. Where my buying power, I was like, well, that's not really right. But I do kind of. Well, it's you and I both consciously say, if the VIX is higher, I'm moving more cash in the sidelines. When the VIX is lower, I've got a lot of powder on the sidelines. And it's because when the VIX is lower, my trading strategy changes. And I've had portfolio margining for a long time, and I've never gotten myself into trouble with it. But I always have a lot more, what looks like a lot more cash on the sidelines. And I'm sure you're probably surprised by that because I don't have it in because I don't need it in.
But so I like to, and I've said this before, I like to, if I'm selling puts in something, like here, for example, let's go to the platform. So let's say whatever, okay, like coin, or not coin, or Micron. Let's just go to Micron. It doesn't matter what. If I'm selling puts here, let's say I'm going here and selling the June puts and I'm selling the 60 puts. Well, that's only using $595 to sell those 60 puts in Micron, which is nothing.
Okay, but hold on. Let me just do some, we'll just have fun with this. And keep in mind, whatever you have in your portfolio margining nets out what you already have.
Right.
So sometimes it could be more.
Yeah, you can't use an account that's already full.
So which account is that you have at your 73 days? Let me see. I don't have anything.
It's not going to be much less than $595 in portfolio margin. This is very little margin here in Micron. I'm actually surprised by it.
Yeah, it's $320.
Yeah. So I this is where people get in trouble, I think. I know that if the wheels fall off and this turns to stock, which how many products did we see short puts turn to stock? Short out of the money puts.
Oh, in
turn
the
to
last
stock.
2 days,
everything.
A lot of them, yeah.
Everything. So then when they become so far in the money, they're stock, and it's like, what am I going to do with this? It's basically stock. So I think of it as if I have to take stock at 60, that's going to use $3,000 in buying power. And so in my mind, I allocate, and I actually was writing it down.
Margin. So if she was an IRA or cash security account, it'd be $7,000 in buying power,
right?
$6,000 in buying power.
So on margin to take 100 shares at 60 is going to use $3,000. It's only cost me $595 to put this on. In portfolio margin, $300, half. So I think you could overextend yourself if you're not paying attention.
If you're not paying attention, the other thing I don't do is say, okay, so it's almost double for this, for that. I'm not like, I'm going to double up and get to that point of whatever the margin is.
Right.
I don't.
Right. But so I think you have to be cautious. I think when you're looking at, when we're looking at Herb's list and it's like, okay, this percent of my buying power, that percent of my buying power, if you know to sell that put is using $300, but to take that stock would use $3,000, then In portfolio margin, click on buy 100 shares. What is it to buy 100 shares? Because here, if I buy 100 shares in regular margin, it's using $3,500.
1,000.
Only 1,000 in portfolio margin, so it's using even less to buy the
Now,
shares.
but keep in mind, this is netting out my position.
But you can end up getting so over leveraged, you have to be really cautious.
Well, and who was this? I did a show. I think it was Tony from Mexico because we talked about portfolio margining at one point, and he's like, if you're smart, get it because you're not. It's there if you need it, not if you know what I mean.
Right.
If there's something that happened and you need it, kind of like your son, he wanted to get in, but he had to wait until whatever. So like, if there's something that you wanted to do and you didn't have the capital for it, if you needed to get in and get out, you can.
But we've heard stories. We've heard plenty of stories of people who have portfolio margin, and then when you dip below, and I don't know what it is.
With great power comes great responsibility.
Yes.
Like, keep that in mind.
Yes.
And just like the Budweiser commercial, trade responsibly.
Yes. So like if you dip below, let's say you've got all these products on and you're know pretty leveraged, then you dip below the threshold, and I don't know if it's 150,000 or 135,000, or you dip below the threshold, and then we've talked to viewers who then one day, one move, like last week, you dip below that threshold, and then you no longer have portfolio margin.
Correct.
And then what? Then your account, then everything that was margined by portfolio margin turns to regular margin. Then you can't even. I'm not saying you. I'm just saying you just like you said. You need to be very.
With great power comes great responsibility. Understand what you've got at your fingertips.
Right.
I like to have it just in case. If something happened and I needed to get in immediately with a ridiculously expensive trade, I could.
I like, there are lots of benefits to it. You know, if you could have stock and have a collar around it, frees up all the buying power, then you've got that buying power to use for something else. So you could have, there are plenty of things you can do with it. But I do think with trading in general, you have to be smart. You have to be cautious when you're putting these trades on, or that's how you get in trouble if you're not.
Yeah, I think once you add to your level, once again, it's a high-class problem to be able to have it, right? It's a high-class problem to be able to have it. I like to have, like, to your point, a big buffer so I know I'm never going to dip no matter what happens, even the last 2 days or last week.
Right.
You know, you don't dip below that. But to kind of understand where it comes from, I think it's kind of good to have. Like Tony, and we're going to go down a rabbit hole, but that I was talking to him when you were gone about the BOXX, which is the box.
Right.
That holds up the capital even in portfolio margin. The box doesn't.
The box, if you do it yourself.
Yeah.
And so, and I know I've gone back and forth with Herb on that. Like, he's got, if you have money in something like that, then you've got that capital free to do something else. And that is, if you can use it smartly, wisely, but not overextend
Because it can
yourself.
take you out. Leverage can take you out. And that's what it is. It's a bunch of leverage.
It's a bunch of leverage.
Yeah. Yeah. So yeah, it's good. But once again, that is something that I think you have to understand and be an experienced trader. That's why there's so many checks and balances to get it. There is.
I think you have to be so far over the, like, what is it? You need 150,000 to get it or something?
No more than that. They'll let you dip down to 150. I think you need more than that.
I don't know. I think you have to be so far over that so that you've got such a cushion. If you dip down below it, you're not going to risk.
No one's using all their margin.
You say that, but
you shouldn't be.
You should. So if we go back to Twitter and you see that this, you know, above 40, 50%. Now, is he asking?
You're only using, and I will tell you, I was there. Like, I used 50% of I always had a ridiculous amount of capital on the sidelines, even through this whole process.
Mm-hmm. So what he's asking is, I assume your portfolio margin, do you use this table? Do you lower? So are you using this table for just margin, or are people using this table for portfolio margin? I think that's his question.
I think it's portfolio margin.
No, I think this table is, yeah, maybe.
Yeah.
Maybe.
But nonetheless, I think it's good to know. But I think the common sense slide that we're talking about here, that Jenny and I both agree on, is that when the VIX is lower, everybody's got less capital at use. And as the VIX starts to go up, the volatilities of everything start to go up. And that's when the opportunity's in. So, like, a lot of times you are selling puts or buying stock. When we talked about that yesterday. Is it time to nibble? We nibbled. Like, I put a little bit more cash in yesterday.
And so, like, if I think about it, if I think of my account right now, I'm not trading on portfolio margin. I'm trading on regular margin. And I probably have 60% of my buying power at use.
Yeah, I mean, that makes sense.
But if I were in portfolio margin, it would only be 30% of my buying power.
I have about 35% of my buying power at use.
Yeah. And I'm always afraid to flip that switch on because I don't want to, but maybe, I don't know.
I have it on, and I like it. Like I said, it's different.
I guess I like the idea of being able to put on those boxes or put on BIL or put on something like that, and then you can still use that money
if you need it.
You can still use that money to trade.
Yes, that's what I was going to say. Is if something happens, like your son yesterday when he needed it like ASAP, where he's like, I need this cash, Mom, now. I need to get in the market now.
Sell me $2,000. I need to put it in my trading account.
And it's available.
Oh,
man.
man.
Okay, do you want to take a look at Delta earnings?
Sure.
Let's take a look.
Yeah. The world is going to be our oyster this earnings season, Liz.
Well, I wanted to see so Delta's up with AAL down.
Delta's had a bounce today. UL's probably had a bounce today, I guess.
Yeah, UL's up.
UL's up.
Do you notice ever since they put the percentage change, I just quote it in percent.
Yeah, you don't.
I hated it when they first put it on.
I know. Coinbase notification, let's see what's going on. Crypto rebounds after trade war turbulence.
I don't know if that's true.
That just came up. Breaking news.
I mean, Bitcoin's at 78. Is that a rebound?
I think so.
From
a little
72,
bit.
I guess.
Where's Ethereum? 1533. It was in the 14 handle, wasn't it?
Yes. So, I mean,
a little bit of a rebound.
I love these updates.
All right, Delta.
Delta has a little bit of a pop today. You're up 3.45%.
How can you 75 rank? I think the weeklies. Here's good. This is going to be my earnings trade. This is going to be my earnings trade for every product.
Talk to me.
Weekly expected move put. That's all I'm going to do. Weekly expected move put. That's it.
Well, especially with things down.
Yeah, I'm not selling calls.
Oh God, no. With things down so low.
All right, that's it.
Because, okay, so let's talk through this. Now, we swore this off.
Swore off what?
These things, we swore off naked puts when the market was at the top of its range because and you had no implied volatility. So market at top of its range, everything up last time. We were doing diagonals because
they were cheaper. You could get it wasn't worth the risk when everything's at the top of its range. Now everything's at the bottom of its range. I'm going to probably just go to the expected move and sell puts.
It's kind of like, okay, so, and I'm not saying it's like that chart, but it's kind of like, okay, we know there's a 76 rank here. You're looking at 145% implied volatility. You've got a $30 product. The worst case scenario is you would own Delta Airlines at 35. That's the wheels fall off.
And how much buying power do you think I'm going to need for that, Liz? How much buying power do I have to mentally allocate for that position?
$1,500.
Well, and people don't have to do that, but that's what I do, and that's how I'll never have a margin call.
I've never had a margin call.
I know, but like people have to. It's it's been crazy. Last week was crazy. We've had
yeah, but I think it's people when they get themselves in trouble. Like the kids are like, oh, I got this. No. It takes a little while to understand what you've got.
Right. Okay, so I think that's all I'm going to do. $72 using $412. I know it's not a lot, but
hey, in the words of TP, because you just had a show with him, your return on capital is not bad.
In the words of TP, I'm getting $24 a day in theta.
There you go. So you're not married to this position. This is going to be hopefully off on Friday.
Off on Friday.
How much I'm glad you put it in. How much did Delta take a hit during the last couple days, or on Thursday and Friday?
In the last 2 weeks, it went from 49 to 38, $10. Not
that bad. I mean, we were just there August 1st, basically.
20%.
Yeah, we were just at those lows. I mean, I'm a little bit higher on August 1st of this year.
It's fine. We've got some money to burn. We still have buying power in our account. There's
still buying power, but we need to make up for some things too.
What would happen if this account got a margin call? Who would they call?
Not us.
I don't know. I think my name's linked to this account.
But they don't even tell us when we get assigned.
Yeah, that's true. Okay, we're in 35 put. And is that it on earnings?
Oh, I've had margin calls in here when you were gone because did you get assigned on anything? When you were gone, it was assignment city. Like we would have a $5 wide spread and I'd get assigned on one side.
Okay, all symbols in the last 7 days. If I look for stock here, I don't think so. That's
what was crazy. When you were gone, it was assignment city.
No, I was never assigned. Where's there it is. On the 455. That 455 spy put that we sold for $5.27, that was 29 cents.
I know, it's crazy, right?
And we laughed when we put that on. We're just throwing away 29 cents.
Yeah, but it was fun to follow.
Okay, so we've got Delta in. We've got our ZN in. Anything that you put on yesterday that you're like, oh, this seems like a great...
No, but you know what I forgot to put on yesterday? And once again, I'm trying to put little bits in. I don't have PLTR in here.
Oh, okay. How far did that fall?
I don't know. That's what I'm saying. I missed that move.
It's up 7% today, Liz.
Missed it.
Let's see. How far did it fall? Not really that far, honestly. It only got down to 66.
That's not that bad.
No.
Yeah, but I like to be in PLTR.
So
it's got a 91 rank. If I want to get in something...
it's tough. Okay. You could go to the... Now, I know yesterday when we were trading, we were going shorter term.
I might do a diagonal before earnings. I might do an earnings setup diagonal for PLTR.
Earnings setup diagonal.
Because I know I want to be bullish PLTR. There's certain products that I don't
They're just
mind.
expensive now. They're expensive.
But there are certain products I don't mind being bullish. I might even do a little, like, or maybe put spreads in this.
All right, earnings setup diagonal. So if I buy the 38-day for $9.75.
It's not that bad.
And then where would I go? 24-day?
Mm-hmm.
Sell the 24-day. If I'm buying the 85, I can sell the 95. That's not terrible.
It's not, I mean, if I want to be bullish, I don't mind. I would still have the 98. Don't you want to go to the expected move?
Sure, I was just trying to make it cheaper.
Yeah, you can. So this is something that I want to be bullish in though, but with an IV rank of 90, so you're at least selling something, which is great, but
you have positive no, you don't. No, you don't. You have negative theta. You have to bring it down in order to have positive theta.
But I might just sell put spreads too.
And that's the problem I'm having these days. I haven't done any diagonals because you're paying too much. The vol's too high.
I know, and you got to sell something. You can't just be buying, and that's why the zebras are so expensive. What about put spreads in the 24-day?
Sure.
Why don't you sell the...
Like the 75, 65?
Yeah, or even 75, 70. I don't care. I just want to get in it so I'm like, if it falls back down, great.
75, 70.
Or my other go-to move and things that have been like this is the downside ratio spreads. And I know I talked about that yesterday with, who was it?
Okay, so if I did like the 80, 75, I'm getting 222. That's not
no,
bad.
it's expensive.
Right.
But once again,
it's expensive, 225. It's tough if I want to collect anything. You've got to, that's not bad. You're getting $1 using 890.
No, that's not bad.
That's not bad.
Yeah.
Your break even 69.
Yeah, I mean, that's been my move. I had it in NVIDIA. I've got it in Apple. I've got downside ratio spreads. And I kind of like that when the market is going down. It gives me a peace of mind. Now, they've blown through them, but they've all come back.
If it goes down, it can blow through it. But this is one of those where we would just kind of stay with this position.
Yeah.
And in case it would come down to this point. This is not that different from, so like Tony from Mexico was looking at basically buying a put spread. He would call it the 111. So we'd buy a put spread, let's say the 75.80, and then that's $1.85. Pay for it with a put, which I like that.
This is a bearish trade.
Right. Where yours.
So if it gaps down, I want to make sure, especially. So I guess you have to ask yourself when you're doing the ratio spreads or the 111. I did put some 111s in yesterday.
Oh, yeah.
I did. I put them in XSP. I put it in.
So with the move up today, you could look at, can I butterfly those off yet?
That's if you take in a credit for them.
If you take it, you have to take in a decent credit.
My infinite wisdom took in like 30 cents instead of $1. And I know Tony likes to make sure you take in $1 to make sure you can butterfly it off.
In this vol, you have to, like, there's nothing for 30 cents to buy.
Yeah, right.
But I think when he came on, I feel like he was taking in even more, like $2 on them.
Yeah, and they were really wide.
Mm-hmm. And honestly, if you want to get into something, that's not a bad strategy.
I do like the downside ratio spreads. They've helped me. And it gives me, and even when I was on vacation, that was my hedge, was the downside ratio spreads. Now, it was a crazy move and it blew through all of them. But right now, they're all coming back.
Because, like, look at, so I pulled up one where here's 82.76. So I don't even need to have it that wide. Here's $5 wide. $5 wide, and then I sell a put to pay for it. I'm getting $1.40 and gets my break even down to 66.
If it goes
that
down,
111 is not a bad strategy right now.
No, and I was kind of mad at myself I didn't do it on Friday, but I was not even in my account on Friday.
Right.
Because I wanted to do it on a down day. I think it would look so much better on a down day. But if you want to get in, just make sure you're taking a credit in for it, and this isn't a bad play.
I'm going to the Kurt analysis here just to show you what these look like, where, here's the $1.35 credit to the upside. We make that. Now we're not like hitting it big if Palantir goes up, and you are bullish on it. So it's not making a ton of money if it goes up, but go down
with those put spreads, you're not making that much money either.
I kind of like the 111 as far as if it goes down, you get in at a much lower price.
Yeah.
Mm-hmm. Right.
It's kind of fun, especially in this market.
In this market.
And with the vol hiking, let me just see what my...
So the problem here is these, Palantir, would be good. Let's look at something that's not so much buying power.
So Palantir always has a
high buying power.
And so does Coinbase. So you can't look at Coinbase either.
So here, let's go to the Tasty watch list.
Why don't you go to like a Target? It's got dollar-wide strikes, right?
TGT.
I think it's got, make sure it's got dollar-wide strikes.
Okay, so in Target, if I go to May, no, it doesn't.
Okay.
But you can still...
What about gold? GLD. That's a good one, because if it goes down, great. If not...
Okay.
You could still do that. It's just easier with dollar-wide strikes.
GLD. So you go to May.
Because this would sacrifice both bearish and bullish people, right?
So if you buy the 270,
okay,
that's $1.69, and then you sell a put for $1. You want to collect money though. You're close. Then you're at the 2. It's still this.
Yeah, but look at your break even. It brings your break even, so you can make money if it goes down. So this, I like the 111 concept here because you can make money if it goes down, right?
Right.
And your break even and getting long gold is 262.
But we need
a lot of buying power.
I didn't think we'd get much room here to give ourselves more room for that, to take in enough credit, because what we're trying to do is take in enough credit that if it goes up, you're happy with the credit you're getting too. Let me just see if we can find anything.
IWM? Do we have anything in IWM? Dollar-wide strikes?
We're in a very small account. We're not in, you need to be able to afford a naked position.
I was just looking for dollar-wide strikes.
I'm looking for something we could put into our account.
So you need a $50 product with dollar-wide strikes.
So if I go to Tasty Default.
Disney.
And we find something, we can sort by price.
Disney's going to be $80, right?
Yeah, Disney's, but I don't...
$5 wide strikes.
Disney, Starbucks.
Those are $5 wide strikes. So, go XLE. The energy sector, because if we're bearish anyway. Should be dollar-wide strikes, $70 product, right? Yes. All checks and balances until you get to the bottom.
So you buy a put spread, 79, 76. You have to make it narrower here because you're not have that.
You can do 75 if you want.
And then
yeah.
Yeah, it's just. I think it's got to be.
It's got to be in SPY.
It's got to be something bigger. I'll look at IWM. It'll work there. It just has to be in something bigger, I think.
This will work to show, and it's going to be less buying power.
180.
Yeah. So
180, 175. If you got $5 wide, $1.71, and then you want 270. Do you want to collect at least $1?
That's not bad, and it's $1,700. This is a low buying power trade.
And then your break even's down to 155.
Yeah. Now, okay, so here's the deal. So if you're going to sell that 155, you can get almost $2 for it. I'm willing to give up that dollar by just selling that put in order to have the profit potential of if it comes down to make more.
To a little bit of, right, if it comes back down a little to make more.
Yeah.
Now, how far out would you go with these?
I've been going to 45 days.
So here, May with the 38 days.
I can't believe we just didn't do what I did it in. XSP would have been a perfect example.
Here, XSP, if
I
we
went
go to
May.
May.
You can go to the 38 day. Yeah, whatever. Right.
So here's like the 515, 510 is $1.75. We can make it even wider. 515, 505, 338. And then you only need 330. You need like 438 to get an extra $1. Here, you can go really far.
So an ironic turn of events, Jenny. I put this on yesterday, and now we're up.
Right.
It's up $11, and this is making money.
It should be.
Yeah.
It should be. That's why you should have the opportunity to try to butterfly. If you take in enough credit on an up day, you might be able to try to butterfly it off. But there's no way. You would have to. So look at this. If I'm taking a $1.31 credit and to butterfly this off 515, 505, where am I? 495. There's no way it's ever going to happen.
Hold on a second. I just went to my what I did. No, don't get me wrong. I like taking in the credit. I'm 100% fan of taking in the credit. I wanted to use this as downside protection, so I didn't take in a credit. I actually paid a little bit for it, and it's up a little bit.
So
it's up like $150.
Right.
Which makes no sense to me because I paid for it.
Hold on one second. 505, 595. To butterfly it off, I'd have to sell the 505, 595, and it's 276. So you can see how much it would, like if I put that on today, we would need an update in order to try to, you need to take in a decent credit to try to butterfly it off.
I don't think you do. Not to take a win. Okay, in order to butterfly it off, you do.
Yeah, in order to butterfly it off. Not to take a win, but in order to butterfly it off, I think we need to take in like a $2 credit.
Yes. Yes.
So, I know. Okay. Is there anything on Twitter that we didn't get to?
Let's pop back in. Oh, thank you very much, Jason B. No, okay, so this is, I went Herb, Jason B. Does your talk on the Roger Bannister breaking the 4-minute mile exist? No, it does not.
Oh.
I watched you give that talk twice on Bad Trader Tour, and it gave me boost. I was supposed to record it, and then something happened.
Yeah, why didn't you?
I don't know.
Did we record? Oh, because we had to change it.
No.
Because it was just the strategies. Then we recorded just the strategies.
Just the strategies.
Just the strategies.
No, I don't. But I could give it to you blindfolded.
And then you switch.
I could do this. I've done this so many times because I practiced, because my daughter was coming to New York. So I practiced that speech timed so many times that I could give it to you blindfolded, backwards, and while drinking.
Maybe on your next road show.
Yeah. So I'll just bring it back to the next road show.
Yeah, because
send that to Tom, and I'll record it for you.
Oh, that's funny. And what else do we have?
The table is from regular market measures on regular margin. Okay, so then Herb says,
regular margin.
If you're using 50% of the stock, and this is for you, I think, for your buying power, are you going to use up to 90% of that buying power? Oh, I see what you're saying. So you're saying you want to use 50% of your buying power on everything. Are you going to use more of?
Yes, then I'll use more of my buying power, knowing that, like, kind of like our boys' accounts.
Yeah, because you know that it's going to stay.
Yeah, kind of like our boys' accounts, like our boys' accounts and smaller accounts too. I mean, when you have smaller accounts, you have to use a bigger percent of your buying power. And so, like, a Logan's account is pretty much almost 100% of his buying power is at use. Almost, because he mostly has just long stock now.
Yeah.
So does JD. He mostly has just long stock.
He's got 2 puts and he wants them removed.
So then you are using more. So if in my mind mentally I'm thinking, no, then I'm not using that much of my buying power. Nowhere near that, because in my mind I'm allocating like, okay, I need this much money for these positions.
He's asking is, in your mind, are you using 90% of that if it becomes your stock position?
Yes. But I have a lot of money on the sideline because the margin isn't using that much.
Yeah.
I keep it all on a notepad.
Sure.
I started writing things down.
All right, Jenny, it is the fast hour of the day. I can see the other 3 hosts that are about to come in here. I saw a Thomas Westwater sighting, so I think you got Nick, Mike, and Thomas. But we will see you tomorrow live from the SIBO. Everybody remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you tomorrow.
See you tomorrow, everybody.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
If you missed the live show, here's our cherry on top weekly recap.
Well, we got Nova Vanetta today. She's out on a secret mission. Is this correct?
She's on a secret mission in New York City. But yeah, we're doing a funny little promotion, and we're going to see how it goes. And there's an outside chance, very small chance, she gets arrested. Yeah.
So you guys sent me to New York to deface a national treasure, and I did not get arrested. No, in partnership with a testicular cancer charity, we mounted cherries onto the back of the charging bull on Wall Street, and it was awesome. We did a test run last night at midnight. People went nuts for this. Some guy yelled at us, and this other guy was like, oh, he's just cranky. But it's all for a good cause. We're out there for a couple of hours. It took months of planning. It takes 2 people to hang them because that bull's ass is pretty tall. So that's why I'm in New York.
Those cherries got some good hang to them.
Mm-hmm.
Yeah.
Friday might be interesting. I'm not allowed to work on Friday. I have committed to my family because the Golden Prince is getting married.
I know. Congratulations.
So I have committed that I have to do family stuff, like take pictures.
You get to.
I'll take things that Tom excels at for 100, please.
I'm just going to be a good,
attentive husband and father to the groom.
I'm never a good attentive husband. What I'm probably best at is
dancing. I watched you at the last wedding. You really excel at dancing.
I excel at picking up the tab.
My big question for you, and you know Slappy as he's gotten older.
What do you want to know about Steve?
Do you think after dinner, it was his 60th birthday?
No. Don't do it.
Beth knows Tony better than I know Steve.
Do you think he...
I have no idea what you're talking about, and I am just going to move on from this conversation. I'm with Beth. No.
That was like Minority Report, like a pre-crime Omaha. You know, like she knew the Omaha was coming. Like she got the little ball that came down and was like, okay, Tony's going to go there.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batiste. I got my man, Mikey Butler, and of course, Mr. Thomas Westwater in the house with us today for our Thomas Tuesdays. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Come hang with us for the next hour of the day, my favorite hour of the day. Get spend it with my buddies, Mike and Thomas. Thomas, how are you, sir? Have you been surviving?
I've been surviving, haven't been too long equities until Friday. I put on a long call spread for SPX.
I like it.
I didn't like it until yesterday when that Walter Bloomberg tweet happened, and then I liked it.
Of course.
But yeah, everything's good. Just waiting for this warmer weather. I'm smelling those tacos out there. So. Not bad.
Rumble in my tummy here.
Yeah, same here.
We're as hungry for tacos as we were for a rally.
Yes. Yes, it is nice to see. I'm glad you dipped the toe in. I allocated my sister's remaining cash today. She's been asking me, when's it going to stop? When, is this the bottom? I said, I have no clue. She says, okay, well, just put it in there. And I said, all right, fine. It's about time.
Yeah.
But that's the thing. Everybody wants to catch the bottom, and I don't know if this is the bottom for whatever this current blip of time is, but I imagine years from now it won't be the high. I would think that things will go up.
Yeah,
it's a good
and
spot.
I've been trying to tell my sister that and my friends that, and just positive drift.
Yeah, trading is completely different than investing.
Yes.
You're trading in and out, you're being very frequent with the trades, you're throwing on new trades, you're exiting because the market's moving. Investing is just, is this a discount relative to where it's been, and do I like the company in 5 to 10 years?
Yes.
That's literally it. And to your point, yeah, we can go lower from here, but you couldn't buy Apple at 185 unless you did it May of last year.
Yes.
So, and that you can do the same exercise for any other stock that you're looking at. Most stocks are significantly lower than where they were.
Yeah.
So for long-term investors, even into this rally, it's still a significant discount from where it was.
Yes, I stand by the idea that this is a blessing for younger people that have a longer time horizon.
Yeah.
This is a really interesting time to start allocating something. Obviously, you have to have cash and capital to do that, and you don't want to go full send on everything. You want to keep some cash and all that stuff. But this is what you want. You want to buy at lower prices. That's just kind of how it works, right?
Yeah.
Buy low, sell high. Isn't that seems to
that's
work
a thing.
pretty okay. Buffett does that sort of thing.
Does she have 40 years left until retirement?
Yes.
Then this is a great time, I'm sure.
I would think so. That's kind of the whole point. That's why I told her, I'm like, I don't know if we're down another 5% tomorrow, but
yeah,
you're what are you waiting for?
Yeah.
What's the point? She's sitting in high yield savings accounts for the last 2 years, and I told her that's
it's the classic.
That was worse than catching another 5% on this downside.
Yeah.
You missed out on 50% to the upside, 100%, whatever it was.
It's like when Grandma would open a CD for you back in the day with $50 in it, you get $52 back years later.
My most disappointing moment was when I cashed in my savings bonds from when I was born. My dad bought a bunch of those. It wasn't a bunch, but it was 10 grand maybe worth. It's not that much. You don't get, you think after 25, I think I did it when I was 25, something like that. 25 years, it's you think that's a big thing. It's just not that much.
Were you at the bank waiting for your check? You were going to go to the Lambo dealer next door?
Yeah, I'm thinking, man, you've been holding this, it's been around for 25 years. It's got to be a big thing. And then it's 12 grand.
Yeah.
You're like, what?
With the market the way it's been, I always think of that South Park episode where Stan goes into the bank and he's and then the guy's it's gone. He's
and it's gone.
That's a great one.
How it's been. Well, I know what's not gone today is some of the profits today. E-mini's up 113 right now. We were up, I want to say about 200 was the high. 53.05 was the high. So, yeah, about 200 at the session highs. We've had about 175, 180 point range today. NASDAQ up 475. You got the Dow up 950 and the Russell up 23. So the Russell really the laggard of the group here. Oil catching a little bit of a bid, up 52 cents. It got into the 59 handle yesterday into the continued selling. Volatility down $1.10 right now. It has perked up here into this 80 or 90 point down move from the highs today in the minis. But volatility has remained sticky, obviously. I mean, you're not going to just get a overnight crush in volatility back to 20 just because we rallied 100 points. I think it's important to understand that, and I posted a a little thread tweet about like spread trades and just taking advantage of volatility. I know it is painful with a lot of trades that have gone against you, but you have to look at some of those positions, those in the money put spreads. You know, the volatility, this pop in volatility has really saved you a little bit in terms of like it relative to if volatility comes in, which we anticipate at some point in the future, it to be a lot lower than where it is now. But that volatility has sort of hedged you. And so, you know, into a move like this where you're getting delta, you know, you're getting that up move that you really needed, and volatility is staying bid, a lot of your spread trades are moving a lot more than they quote unquote should, especially for those that are like deep in the money. So when you look at your deep in the money put spreads, just keep in mind that those are synthetically long call spreads, out of the money long call spreads into volatility that is historically very, very high. So your long vol, long delta. A lot of those trades, you know, maybe you consider eating some of the loss and rolling to new at the money or out of the money trades where you'll be net long delta, but you'll be short volatility as opposed to long volatility with those far, you know, deep in the money put spreads. So just something to think about. If you haven't read that, it's on my Twitter. You can go find it, Trader Nicky Bat. Bonds down 21 ticks. They had a huge move yesterday. You have gold up about $39. It was as high as 30.37, so it got up like 50 or 60 handles. About 60 handles was kind of the high of the session. Silver having a little bit of a bounce too, but it has gotten murdered over the last week or so. And then Bitcoin has had some two-sided action, but floating around 78,000. Spots down 1,900. Futures basically unchanged. So. Not a ton of risk on movement in the Bitcoin futures, which maybe is telling for sentiment in the market right now of this being, you know, just kind of a, you know, little chill out moment. Not a V bottom. I think if it was playing into the V bottom, you'd have people rushing to high beta, you know, Bitcoin and, you know, Russell, stuff like that.
Yeah, and I think historically when we've seen sell-offs that are 5%, 6% sell-offs, we look at implied volatility and we see volatility in the teens, volatility in contango. That's when we were, you know, buying dips and calling for V bottoms. Now,
yes,
we're seeing a little bit of a volatility collapse here, but there's still a 4-point, almost 5-point backwardation between the J and K contract. There's backwardation between K and M. And then it flattens out between MQU. We're still backwardated though. So I think that speaks to the fact that you should not be thinking that this is a V bottom because volatility is not pricing it in as a V bottom. Maybe if you get a couple more days to the upside and volatility continues to get crushed and we go flat and then we go back to contango, you know, we would have already seen a big rally when that happens, but we're not seeing that right now in the volatility structure. Yeah. So still got to be nimble out there, stay small, but it's nice to see a relief rally that I think a lot of people are looking for.
I think generally it would be good to have, you know, this not be a V bottom, just to have a little bit of churn back and forth. You kind of stop the whole YOLOing on both directions. Maybe the velocity of the move stops being so big. I think for markets, it would be good to have a little chill out, you know?
A little cool off period?
A little cool off, yeah. Have an opportunity to buy some dips, sell into some rallies, that sort of thing.
Yeah, I think that makes sense because, like, how much worse could the tariff thing get? Like, we're already tariffing every country, even those that are solely penguins. Yeah. I mean, you can't get worse than that.
You would think so. I mean, I don't want to put that out there that how much worse could it get because, you know, I didn't foresee this situation happening. So anything is possible, clearly.
Yeah.
And we have a lot more of this to come.
But yeah, the markets will always move first.
Yes.
The markets are all seeing, all telling,
all
knowing. And right now we're seeing a little rally, which is nice.
Yes.
But we're not out of the woods yet based on volatility.
Yes.
Regardless of what you're seeing in the news, what you're hearing, what you're reading, volatility can tell you a lot, and we are in backwardation still to a very strong degree. So we'll see what happens, but yeah, still plenty of opportunities there.
I see you did something in NVIDIA.
One thing I did today.
Okay.
I tried to do more, but there's just not, like, I need these stocks that I'm in particular to have bigger rallies than they are. However, NVIDIA seeing a nice rally, at least it was when I made this adjustment. I have the 120, 115 diagonal spread, or I had it. I had the June long call in NVIDIA, and I had the 120 9-day option. So into the rally, the 9-day 120 call barely moved, and the further dated options moved a lot because we were seeing a bigger rally, 5% rally here. The 9-day options, the near-term options aren't going to move that much when they're significantly out of the money. So bought back the 120 strike for 9 days, rolled it up and out to May for the 125 strike for 90 cents. So I re-diagonalized by 10 points, and my basis is $7. So if NVIDIA continues higher over the next couple weeks, months, it'll be a nice trade. But that's really the only adjustment I can make at this point in a lot of these positions. Had some iron condors come back into play, like the SMH iron condor, seeing a nice rally today. SPX iron condor, the 50-50, 50-40 put spread. That was 300 points in the money yesterday, is now 100 points out of the money.
Yes.
It's insanity.
Crazy. Big moves.
But yeah, keeping my eye on those, but still need a little bit more of a rally before I can make more adjustments on some of the other positions I've got.
Very nice. I have been very active this morning, managing some positions in the Johnny Trader account, rolled down a call spread there in the Qs, taking off some of the junk that I've been holding, like this EQT position. I took a couple bucks out of that. It was like a nothing trade, but just closing out of stuff that, you're getting bailed out today. Figure you lighten up on some of your positions. IBIT, close out some junky calls, and NVIDIA. I did kind of what Mike did, rolling into a diagonal spread or rolling that call out. Closed out some of the put spreads that I sold in the Qs and SPY, and took off a Palantir call that I had left over, and reduced some delta in AVGO. It had a big move today. Reduced some delta in Tesla. Sold a call spread that's out of the money. Amazon and NVIDIA. I sold new iron condors to kind of take advantage of that. In SPY, I bought back some of my junky out of the money short premium. And then in SMH, I did kind of what I mentioned here with kind of the change in volatility, or at least the in the money put spreads, taking those off, like these kind of far in the or deep in the money spreads, 20, 30 points in the money that aren't at full losses because of the pop in volatility. I was basically just long this call spread at $5. That's an expensive call spread to be long. So close that and then roll to an at the money put spread where if we get a $5 or $10 up move, I'll make more on this than I will with this call, this short put spread, which is really a long call spread. You're not going to get anything from that if we go to 200. That's still an in the money spread. So trying to play into that pop in volatility, or at least the sustained volatility we've had in the market.
I like it. Yeah. A lot of opportunities out there still.
Stay small.
Just got to stay small, yes.
Always.
I think we talked about this yesterday, but if you're just trading SPY, QQQ, implied volatility is elevated. You can still do diagonal spreads, things like that, because even if you're buying an option in May, you can sell premium against it in April to offset some of that. Same thing with like June, May. I'm probably going to actually load into something like that, maybe a downside calendar, keep it smaller, just to hedge a little bit in case this sell-off is eaten up by shorts.
Well, it's getting eaten up right now.
Yeah. But yeah, if you want to join us on the YouTube channel, you can certainly do that. We're streaming live on Tasty Live. I've got the Cherry Picks newsletter pinned to the top of the YouTube chat, so you can get that coming out today. And yeah, wild times. A lot of people in here. Appreciate you throwing your trade ideas, questions along the right-hand side chat. We'll get to them shortly. But first, Mr. Thomas, we've got some slides. We've got a little examination between gold versus copper.
A little bit, yeah, and you've been looking at the copper chart, and it's screaming like buy me, because it's at this support level. You might be in trouble.
I saw that same thing. I was like, come on, this day just went, it's down 20%-ish in like a week.
Yeah, it's wild.
The lows.
It's wild.
I mean, and if it goes south, I will still blame you because I don't think I've traded copper until you introduced these to us. So I do take this.
You know where to find me.
Yes, I know where to find you.
Yes. Yeah, we stare at each other all day.
Yes, we do. We do.
Yeah, so I mean, this is a big move, and we'll look at some of it in the slides here. But what I want to do is, there's a lot of moving pieces in the economy right now. Copper is seen as, Dr. Copper, an economic indicator, health of the economy, everything.
I like that.
When the tariffs come on, Dr. Copper's saying
we're
economy
sick.
bad.
Yeah.
So that's like an old trading adage. I think it's from like the 90s or probably before that. Before our day, I think.
Very nice.
But anyways, we're going to be looking at the copper-gold ratio. This is where you're taking the price of copper. It's kind of like the gold-silver ratio, You're taking the price of copper, though, which is priced in pounds, by the way, and you're dividing it by the price of gold. So, you could normalize it for ounce to ounce or pound to pound. It doesn't matter because you're looking at the absolute value and the direction. So this chart is just showing you the copper-gold ratio. It's been declining recently, but we got that really big drop over the past week, and that's because copper prices have outpaced gold's losses. Gold has held up a little bit better than copper has. And that makes sense when you consider, if there's going to be tariffs and a one-time inflation bump in the economy, you want to probably own gold. Now, the extreme volatility we had that caused liquidation across most assets, people just moved to cash. But, gold is your typical inflation hedge, your typical safe haven asset, whereas copper is going by more, if you think the economy is going to do very well, China's going to ramp up production a lot, you buy copper. And that's what was happening a lot, since January. And we've undone that entire move,
in 3 days, 4 days.
3.5 months of price action gone in 3 days. That's pretty wild. But anyways, let's go to the next slide. So this is a Z-score. Bring you back to statistics class or business class. It's pretty much a measure for anyone who's watching and doesn't know. It's pretty much a measure of, in this case, the ratio that we talked about. It's deviation from the mean in standard deviations. And if we see on the chart on the left, right now we're at about 2.7, 2.8. That's a pretty significant event because 2.5 standard deviations contains about 99.4% of all of the prices, or the Z-score in this case. And we're looking at a 60-day window. So if you take the price of copper, you divide it by the mean of your population, which is the past 60 days in this case, and then you divide it by the sigma of your population again. That's what the calculation is. So we crossed really quickly below 0, below 1 standard deviation, -2, -2.5. So I did a little back test on if you bought copper and if you bought gold when this Z-score drops below 2.5. And what I expected to see is that when, this happens, people would maybe buy copper, be neutral in gold, or sell in gold. But that's not what the data shows. So we'll go to the next slide, give it a little look. And so I did the trade. If you buy it right when it crosses below the -2.5 and you hold it for 10, 20, 30, 45, and 60 days, the win rates And in this case, there's 53 events since 2000. This is when I ran the data back to. And the typical time between events is 120 days. So if we see here, if you're doing for 10 days, if you're holding it after it dropped below 2.5, your copper win rate 48%, you're getting a negative return. Your gold win rate 51.9, you're getting a slightly positive return. Now gold starts doing a lot better. You go out to 20, 30, and 60 days especially. You get a win rate, going up as high as 60% pretty much. You get that 2% return, whereas copper, on the other hand, you do get some positivity in the 20 and 30 day time frames, but then 45, 60 days out, you start to go down again. The average time between these events is 120 days, so usually if you're taking this trade, you're not going to get another cross below that negative 2.5 Z-score again. And yeah, I was kind of surprised to see this, but it makes sense when you think of the reasons why this ratio goes, because it's in times of economic uncertainty like we are right now.
Yeah.
And people are going to buy gold when there's uncertainty, even though that price divergence is really in favor of copper at the time, and you do eventually, on a much longer time frame, get that reversion back to normalized levels. It's that's longer than economic cycles and cycles of fear in the market. So you get people buying gold when this happens. And even though that Z-score may return or normalize a little bit, the returns you're getting on these trades is telling you to buy gold. If we look back, going all the way back to 2000, the 53 times this has happened, it's pretty clear, buy gold. So
I would think that the S&P returns during like these blips were probably 3% downside moves,
right?
Like on average, I think it goes to exactly what you're saying of like, this isn't a unique time for this to happen because the market is down. I mean, and there's like lots of fear, which makes it even more, or at least my thought would be that it would be more quote unquote reliable because the situations are all sort of the same. They're not like random occurrences. They're all highly correlated situations where the market is like, not good and there's peak fear. Like that would be kind of the situation here. But now I feel like a dummy because I saw copper down so much, and I had the first thing you said of like, this is such a huge move in copper. How do you not nibble here? And I did.
It doesn't mean it's not going to rebound a little bit. It just means gold could go up more.
Yes.
It's there's so much fear in the market. The technicals you look at, it's really good. I don't know, this kind of move though, doesn't normalize just after 3 days, like so much of that price action taken out from the past 3 months.
Yeah.
I was thinking about nibbling too. When I ran this data this morning, I would have gone long gold if I wasn't already. A little underwater on my gold position, but I have 49 days, so I'm going to hold it.
Yeah.
Don't expect it to really come out anytime in the next couple days. I'll give it a couple weeks, let it ride. I'm long silver too.
That's been an insane move too. I mean,
that has. I mean, everything's been crazy. So I actually wanted to include the S&P 500 in here. I didn't have time to do it.
Yeah, I probably had
maybe next time I look at it, but
I think
it's it's going to be the same story.
We can, I'm sure if you've looked at the data, I'm sure that is, the exact situation of it, the S&P being weak. Do you think the move in like silver and gold, it obviously has to do with kind of liquidations and just, the leverage that you have in financial markets, you probably have to lighten up on stuff that you have, that is working, that's in other places. You figure gold and silver are a perfect spot to get some liquidity. Do you think the move in silver and gold, it obviously has to do with kind of liquidations and just, the leverage that you have in financial markets, you probably have to lighten up on stuff that you have, that is working, that's in other places. You figure gold and silver a perfect spot to get some liquidity. Do you think the move in silver and gold, it obviously has to do with kind of liquidations and just, the leverage that you have in financial markets, you probably have to lighten up on stuff that you have, that is working, that's in other places. You figure gold and silver a perfect spot to get some liquidity. Are you short-term bullish or short-term you think kind of that we chop around a little bit until things stabilize in markets? Like, meaning is the capital going to go right back there, or
I don't
what
think
are your
so.
thoughts?
I think we're gonna consolidate for a little bit.
Yeah.
And then I think the market needs to wait for some resolution on these tariffs. The move in silver was crazy, but I'm thinking like, if you're a 60-year-old guy, you're nearing retirement age, you're looking at this market and you're liquidating things, and you have a gold position and a silver position, you're going to take off your silver first because gold is just more. It's got that like bigger,
shiny.
Yeah,
it's sexier of the two.
You'll drop your silver before you drop your gold. So.
Yeah. So you think silver has more downside then, just because of that sort of situation?
I mean, I think that's the reason it dropped more than gold.
Okay.
Right. But, if we do get another significant event here, I think you'll see the same thing. I think.
Yeah.
I like it.
It's interesting because you're kind of saying, you need the market to go up for gold to go up, even if, the idea of gold is like the safe haven.
Right.
You need a kind of everything. You need a risk on.
Yeah.
Of kind of everything for us to kind of continue with the move.
Right. I do like the Australian dollar right here. I don't know if you saw that had a really big move here too, and that makes sense because China got heavily tariffed. Australia is China's, or China is Australia's largest trading partner, given the proximity and everything.
And doesn't it play into gold? Like it's got a super high correlation.
Yeah, I believe it does.
Their currency is like so heavily. All right, I got long some.
There you go. We were long that a couple of weeks ago from Katie's trade idea for sure.
Yeah.
I closed out of mine, but yeah, I like this dip buy.
You don't see moves in currencies like that too often.
We've been saying that for a week, though.
Right.
We saw that euro move, which was...
Yeah, and then a week later, you're like, oh, you don't see this too often.
Yeah, I mean, this has been a crazy trade. What's the dollars was up today? Let's see what we're looking at. If you do DXY is the dollar index, a basket. So, yeah, it's having a little bounce there. You think that's bullish market-wise?
Yeah, I think,
dollar strength.
I think a little bit. I mean, when you see these big, huge dollar down moves, it's been driven by like fears of a paradigm shift in the U.S.
Yes.
Global market of is de-dollarization going to actually happen this time? But yeah, I mean, it's a nice market bounce. It's the Australian currency is risk sensitive as well, so it kind of got a double whammy there. But man, yeah, copper is just selling a little bit more while we speak.
That's a huge move.
People are watching the show, I guess.
Yeah, probably. Yeah, they're front running my exit.
Front running it.
Nothing really happened with any of the grains. Any of the ags?
No, they did a little bit. Let's see where soybeans are. Soybeans is a big China product,
Mm-hmm. Oh, yeah, into this kind of soybean.
Definitely took a move down. It's normalizing a little bit now.
But they had one of the reports was after we had our show last week, right? It was on Wednesday.
Which report are you talking about?
One of the bigger ones.
Yeah, that was last Monday. Orderly grain stocks and prospective plantings. It's kind of old news now with the tariffs and everything.
Yeah, tariffs are front and center and everything now.
Yeah.
Nothing matters.
Craziness.
Yes.
So I'm already long silver with a call zebra 30-31. So that one's just gonna sit there.
I could give you a gold thing.
Well, I had the gold broke wing butterfly that I converted to a free butterfly with the strikes at 3200, 3210, 3220.
Oh, nice.
But I just added, since that gold butterfly has no risk, I added a gold diagonal spread in GLD.
Okay.
So I went to the 275 call in June, right at the money, and I sold the 290 in May. Total package $8, 15 points wide, brings you back to all-time highs in GLD. If that happens, that will print. Call me gold member from now on. Yeah.
I like it. I did a similar trade with an upside crab trade. I sold 2 of the 285s in May to kind of play into the volatility because there's so much vol here, in gold and silver, obviously, and we've seen realized vol play out too. So,
and gold volatility usually increases as gold prices go up too. So it's
from already high points right now.
Right.
So, if you had, but you would think the market's probably not in good shape if you have that explosion to the upside now.
Yeah, absolutely.
Do they still sell Goldschlager? You remember that?
Yeah.
Yeah, I do remember that. There was actual gold specks in there,
Yeah,
right?
You got the little flakes in the bottom.
We're gonna have to get a bottle of that if these trades come in. Yeah.
I wonder if you filter it out and you drink it enough over time, if you make some of your money back selling that gold.
I don't know. It's got to be.
I always thought when I was drinking it, though, I'm like, is it healthy to drink gold?
Probably not. Like they talk
gold
about
leaf. It's like-
microplastics in your body. How about precious metals in your body?
Yeah, but that comes right out. It's shiny on the way out.
Oh man.
Well, I mean, zinc is good for you, I guess.
Yeah. There's probably something to it. I'll have to Google that. I see some people in the YouTube chat saying Trump talks at 3 p.m. today. Is that fake news, real news?
I don't know. I thought I saw something about that, but I just saw something say White House says 104% tariffs on China went into effect at noon today.
104%?
The number, I can't keep track. I need like a rolling matrix that has like the changes in real time.
Right. Yeah.
Not that it would help me understand anything, but it would, at least I could.
So 3 p.m., the president participates in Unleashing American Energy Executive Order signing event. So he'll probably talk a little bit about maybe oil is relevant for this event. Maybe he'll make some side off comments about tariffs at 2. So yeah, this is coming 3 p.m.
Do you have any interest in oil down here?
Not really.
It's another one of the the copper type moves.
Yeah,
where
it's just.
It's saying, that shit's about to hit the fan.
I mean, 60 was a good place, or 60 is like, the thing is the break-even price for a lot of Permian and other U.S. producers is like 55 to 58, 59.
Okay.
So this level is like notable for U.S. production because if it starts falling under that and it stays there for a little bit, you're going to start seeing shut-in production. And
we don't want that.
Yeah,
If it's, Liberation Day, America first, you got to have your companies making money.
Yeah, right. And so, I mean, yeah, we do have to release energy dominance. I hope he has a good plan because we're near break-even prices for a good amount of the producers. They will not be happy if it drops more.
Yeah, interesting spot for you. Do you have an oil position?
Oh, yeah. I have a micro crude contract that I bought at 67. No, 66.
Okay.
Actually, I think it was 66.66. If I'm not, yeah, it was 66.66.
Maybe
I should have never done it. Not knowing that it was the 6666, should have never done it. But here we are.
Vol is high, so you can certainly look to like sell a call or something like that. I have an in the money put spread that's a little further out in time, around 64. So I would love to see a little bit of an up move too.
Yeah, I'm in the K contract. I'll probably have to roll here in the next week or so to the M contract. But yeah, the 37-day, 66, trading for $1. So yeah, could hedge a little bit. But yeah, I'll probably just hold it into this move. I'll probably just hold it until I have to roll and then see where we're at when I roll.
All right.
Market's selling off a little bit here. Oh man.
No
Scary.
more. No.
Scary. Thank you, Thomas. We are plated with gold with these positions. Again, I got the 275, 290 call diagonal, long June, short May for 815. And then I've got the free butterfly and GC futures, and then a fringe SLV call zebra. So long all the metals here.
Very nice.
All right, popping over to the YouTube chat now. If you want to join us there, just pop over to Tasty Live. Throw in your trade ideas, questions along the right-hand side chat. Kicking off with Fearless Genius. On a butterfly, what happens or how do you manage it if one of the legs gets exercised early or assigned early for you? You're still defined risk because it's a butterfly, so you still own the long option that protects your intrinsic value risk on your shares, but your buying power is probably increased. You can close the shares, close the butterfly, and just exit the position for whatever it was trading for. But outside of that, there's no difference unless you want to you want to keep the shares. You could do that, but that's pretty much it.
And we actually had a similar question last week. When you route the order, assuming you got assigned on both the shorts, you want to do them 1-to-1. So 100 shares, selling out of 100 shares and selling out of one of the one of the long puts that you still have open. You'll do that transaction twice, and they'll trade to parity of the long option. So if your long option's at 100, selling the shares and selling out of your long put will trade around $100. But do a 1-to-1 because you won't be able to do the 200 shares with one each of the long puts. You have to do 1-to-1, 100 shares to one option.
Yeah. Yep. Couple trade ideas here. What do you think about a 90 strike short put in May for Tesla for $1?
90?
90.
That's what it's trading at?
For $1.
Wow.
Yeah.
Yeah, look at that.
Yeah.
It's a pretty wild spot.
Yeah. I saw another question about short puts. So like similar to this, if you're selling this put, you have to be willing to take the shares. Like if it goes down there, that's where you want your shares. Like that's the whole point of a naked short put without defined risk, especially in markets like this, is like you're picking a point where you want to take the shares. Like if you like Tesla now, you're going to like it at 90, I assume. So
yeah. You hope so.
But if you don't, like if your plan is to exit if it reaches 90, you just define your risk. Buy the 50 or something. Like do something because there's just there's no reason to have undefined risk if your plan is to exit for 1,000% loss.
This is a wild 38 days. So you got it costs you $100 to have a 50% downside hedge.
It's crazy.
In 30 days.
Yeah, it's crazy.
That's pretty wild.
But yeah, someone else in the YouTube chat was asking, I usually sell puts, but I'm seeing big losses now with the market selling off. What do I do? You just have to, if you're selling naked puts, there's two things that can happen. Of course, you get your premium and you keep it, or you have intrinsic value risk below your strike. I really don't like the idea of selling a naked option, especially a short put, and then not taking the shares. If that's not your plan, just define the risk up front. Because if you're doing a short put perpetually, you will always have a situation where you are seeing a 2 standard deviation move, 3 standard deviation move against you, and now you have intrinsic value risk. You can't be closing those out. Like the whole point of a short put, in my mind, is to take shares at a lower basis and get paid for taking that risk. And if you're not doing that, then just define the risk, and it'll save you the entire heartache of having these big losses on your hands. But if you sell out of the money puts in an environment like this and you get tested, you can now take the shares at a much lower basis. You can ride them back up over time if that's your plan.
Sell calls against it.
Yeah.
Volatility is super, super high.
Yeah. 4,800 SPX 0-day today. I assume it's a short put.
Yeah, again,
another one.
If you're selling tails, you got to be careful.
Yeah.
I mean, we just watched, and not that this, it seems like it's free money, and 99% of the time, it's free money, and then you get whacked. So you got to be careful. I don't like 2, 3, 4, 5 delta options. It's just not. I would rather sell, the 59.50 at a 10 delta or something, a 10 delta, and define your risk, 100 points, and do it at 2 or 3x that value and at least cap out if something crazy happens, as opposed to, you know, sell the tail and watch it go bananas.
David, on Friday, got a margin call, closed out of my risk, and kept my hedges on. Now I have huge negative delta, low or negative theta, I assume. Do I close my hedges or add more risk?
What do you mean?
Yeah, I assume you have downside hedges. You have negative delta, huge negative delta, so you probably have downside debit hedges on. But the question is really, when do you want to step back into a bullish stance if that's your trade?
But if you took off your core positions and now you just have the hedges,
yeah, the sell-off here,
you're short at lower prices. You know, like the hedges are supposed to help you into the downside move, and you have
with bullish positions that are
with
offsetting.
bullish positions, and you have to monetize that and take that risk off the table because you can't flip the cards now. I mean, it's hard to say without knowing the position.
Right. It is very hard to say, but really, if you have downside hedges, at some point you're going to want to close those out and then reestablish a new core position with new strikes and everything. So when to do that, nobody really knows. It's just a matter of sizing appropriately and being able to withstand the future variance of that new position. With higher tariffs,
vol up 34.
Yeah. Into the sell-off.
Yeah, VIX is back at 44. Spooky.
Spooky.
Yep.
Higher tariffs, raise costs, can that squeeze profit margins? For sure. Coupled with interest rates at 4%, debt servicing costs go up. What do you think the macro effect, like out of all the tariffs, what do you think, what company stands out to you the most that's going to get hit the hardest? Or companies or sectors?
I mean, retail, I'm thinking like something like Walmart, you know, where they're sourcing their goods from the cheapest places possible.
Mm-hmm.
Already at low margins.
Yeah, right.
Yeah.
Yeah.
Unless we turn Tasty into like a shirt factory, we could just take our tastytrade.threadless.com if you want to get Tasty merch. Not yet made in America, but might have to be made in America soon.
If you want a...
Mike will be sewing, you know, or screen
I'll be
printing.
making the bed covers exclusively.
The bed covers exclusively.
If you want the cherry the bed cover, I'll hand make it for you. But no, you can actually buy that on the Threadless store. If you want to walk into your bedroom and see a giant cherry on your bed, that you can make that happen. Let's see. Yeah.
Anything?
Amazon, custom Amazon position in May.
Okay. What do we got?
185, 175 credit spread.
185, 175. Okay. Put spread, yes.
And a 195, 205 debit call spread for a 263 debit. Thinking about rolling the the super mega bull. Thinking about rolling the 205 call down to the 200 for $1 credit. Yeah, you could do that. You have a 10-point wide debit spread on that would turn into a 5-point wide. Your debit would be $1.60. As long as your debit is less than the width of your debit spread that you want to fill up in value, you still have no risk to the upside.
Yeah.
So yeah, I don't mind that.
Yeah. I mean, this would have been a better adjustment earlier this morning, obviously, but
yeah.
Can't always top ticket.
Was anyone able to short Newsmax?
Oh my God, I forgot about that. Where is that now? 40 back to 42. Do they have options yet? Of course they have options now that it's already gone to basically zero.
Yeah.
This parlays into H. Montero's question: will you still enter trades with wide bid-ask spreads or wait for normalization? It just depends. I mean,
in general,
yeah. Like Newsmax options are there, but they're very illiquid. They're $2 wide, $1 wide. Mm-hmm. So the question is, what are you willing to give up to trade this thing? Because you're gonna pay a penalty for getting in and getting out. It's just an unknown slippage penalty based on wide bid-ask spreads. So that's the question.
Yeah, this is a nutty move.
Yeah, generally, like you can kind of avoid situations. So like, let's say you're in a illiquid product. If you stick with like the 55 strike, the 60, the 75, the hundreds, like those are generally going to be the most liquid. But you can look at open interest and volume and just line up your strike selection with the most activity. That'll help you a little bit in illiquid markets, but you're still in a liquid market nonetheless. What's the oil play? POTUS keeping at 60 or we fill the reserve?
Oh no, is the reserve still a issue?
The SPR?
Yeah.
I mean, I haven't heard too much about it
Yeah.
recently.
Been swept under the rug.
I don't think Trump's even talked about it too much. He's mentioned it a couple times, but I don't think he's come out with a strategy to, refill it or repurchase. I mean, if prices are coming down like they are now, this would be a good time to
do that.
Probably, do that.
Is it big enough to really move anything? I obviously the news event of it would move markets.
Mm-hmm. So you can fill like 700 million barrels in it, I believe.
Okay.
I don't know how full it is right now. I know they have charts online.
What's that relative to like a day's worth of production? Like, what do we do in a day?
Oil production. 12 million right now, 13 million,
Okay,
something
pretty big.
something around there.
Yeah.
Trying to see the SPR level. So we're at 396,000. So that's 396 million barrels. We could go.
We're half.
Yeah, I mean.
All over.
Yeah, back in 2010, we were at like 726 million.
Okay.
Been dropping ever since. Yeah. Yeah, you could cover, a couple months of production.
Yeah. All right, maybe that's our bullish catalyst.
Yeah.
The thing is, I don't know how fast you can actually fill it. Like, can you fill it that fast? I don't know.
I would think the news event would be the tradable part of it. I don't, I don't think over a period of time we'd be, it'd be that initial move type thing.
The thing is, if the economy stays weak, I mean, if Trump's trying to reward producers right now, he needs to do something to raise prices, but at the same time, he wants gasoline prices to come down. So this is kind of like, it's a really careful balancing act to reward energy producers.
Finally got the natty gas move.
Yeah, there it is.
Even though it's 20 degrees outside.
Yeah, right.
The state's crazy. Yeah, 3.5. Wow. Big sell off there.
Held through some pain.
That's what you do in natty gas. You place the trade. You feel pain for a long time,
If
and
you're
then
watching
eventually,
us, you wait 3 days.
Yeah.
Minimum.
Yep. Ryan, with backwardation, wouldn't diagonals and calendars be the play to take advantage of the vol premium in the front and cheaper long in the back? Certainly. The setup is there. You still need the delta move, but like just looking at Qs. So the way that you look at this is, okay, what's the expected move? If you look at June, 52 points. You look at May, 40 points. So that's about 70%, let's call it. 75% of the expected move is in May relative to June. Then you look at April, 30 points relative to 40. It's about 75%. But the time is multiples. So April's 9 days, May's 38 days. It's multiples. It should be, if it was even in terms of implied volatility distribution, you would have a significantly lower expected move in April relative to May and a significantly lower expected move in May relative to June. But you're not seeing that. You're seeing the front-loaded premium. So you can set up diagonals like buying the 420 in June for $2,000. Then you sell the 400 in May for $1,100. It's more than 50% of the premium, and it's 20 points further out of the money and half the time. And the same setup goes for May and April. It's almost the exact same cost. So it's just a matter of what sort of hedge you want, how much you want to pay, and you still need the directional move there for that to work out if you're doing a diagonal spread. If you're doing a calendar, you can get away with a neutral move, but you need the short option to go to zero, pretty much.
Yeah. And as always, you got to close at some point too.
Yeah.
You know, you can't. Assuming you're mostly long delta and you're putting on this as like a hedge into, you know, the up move and that we had today, you know, you have to be realistic with. You want to monetize those hedges when they work because it allows you to get into better long delta positions.
Yeah.
In terms of price, that's what I mean, better, as in lower priced.
Yeah. Why wasn't yesterday's intraday range being spoken of? Has to be a record from lows to highs.
Yeah.
Pretty sure it was. From a dollar value range, it certainly was. But from a percentage standpoint, it was not. Because we've had limit downs multiple times. Like during COVID, we had 4 limit downs in a 2-week period. We have had 0 limit downs this period. So percentage basis, it's not the largest. But from a dollar standpoint, it was the largest. Yeah.
And
SPY.
It wasn't. It happened so quick, and the markets were the bid-ask spreads across the market were such junk that I don't even know how you could even take, unless you had some sort of tail trade ready to go at that point, and you were able to close it into that move. I don't think there were many people that really were able to capitalize on it. It was so quick.
Yeah, that was fast.
It was fast. I mean, that was 400 points, 200 up and then 200 down in 10 minutes.
Yeah, I looked at it, I'm like, oh, I'll get rid of my call spread on the SPIX. And
you can't
I looked
price
at it again, I'm like, what the fuck just happened?
Yeah, you can't price any of that stuff in. It's too quick. It's too quick.
Yep. Couple of quick ones. What do you think about diagonals? A call diagonal and SPY? Yep. I think diagonals to the upside and downside. Yeah, they're at play. The diagonals and calendars are in play simply because volatility is in backwardation. Yes. And you can collect a ton of cost basis reduction against the long you're buying, especially because the long you're buying, if it's in May or June, if you're selling April or May against it, you will be offsetting the heightened IV in the back month. That's certainly lower than the heightened IV in the front month. So any diagonal in ETFs right now is likely going to be in play. Just make sure you're paying less than the width of the spread because you're playing for that thing to fill up with intrinsic value.
One more?
I saw one more. What did I lost it. Where you can find trades. So if you don't have Twitter or you don't have Tastytrade, you can find some of the follow page stuff on the tastylive app. But if you have a Tastytrade account, that's where you see all the follow stuff. So if you want to check out Thomas's trades, my trades, Nick's trades, they're all on the follow page.
Everybody's trades.
Yep, everybody's trades. They're on the Tastylive app too. It's just very limited in terms of what you can do. Like you can't filter, you can't sort. It's 20. So if you have a Tastytrade account, you can see everything. You don't need Twitter. But speaking of Twitter, if you want to chat with us or ask us any further questions, you can certainly do that. I'm at Trader Mikey B on the Twitters. Nick's at Trader Nicky Bat. Thomas is at FX Westwater. We're all long the gold. And Nick's long copper.
Because I saw the move yesterday, so wait 2 or 3 days, maybe we get a bounce.
We got plenty more content coming your way on the tastylive.com website as well as the Tastylive YouTube channel, so stay tuned. We'll be back same time, same place, 11 a.m. Central tomorrow, and we'll see you then. Peace.
Craig in New York City, what's up?
I just want to say, I've been with you since the very early days of Thinkorswim, and traded all kinds of markets here and there. And I got to say, I could be off so much worse if it wasn't for what you guys have sort of drilled into me over years and years and years. And so I just want to thank you, because you could have easily just taken the money and run when you sold Thinkorswim, and you didn't, and you started this. And you basically have just given me this full education in this thing that was completely foreign to me many, many years ago. And so even though I've lost money in the last few days, you've saved me a lot at the end of things. Like, losses could have been catastrophic, and they're not. Cool. So I appreciate you.
I hear you.
I appreciate you guys. Thanks so much.
Thank you, man. And I appreciate you holding on the line to say that to us. So thank you.
I think I went down the typical path of investing in stocks, and I was really frustrated in the sense that it was a buy and hope type strategy. And so I was looking at, different ways to learn about options, and I saw Mike and his whiteboard, and it all made sense. There's another world out there with options. It gives flexibility. It's more capital efficient. And tastylive does it again. They teach it in a way that is fun. It's easy to understand, and you're learning from people that have done it for 40 years.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
We are back. It is Tuesday, April 8th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He is Jamal Chandler. Jamal, how are you?
Good, my friend. How you doing?
Ready. Interesting day. Stocks turning negative right now. Russell down more than 1%. We were up over 4% in the NASDAQ. We're quickly giving it back here, Mr. Chandler.
I mean, really no surprises, right? Anything is on the table these days, so I'm not shocked.
Something that occurred earlier in today's session that seems to have been a trigger point for the market spilling over has been China's response to all of this. What do we mean? China itself is waging a trade war against the United States as well, and it's not ready to give in here. We know it's not ready to give in because it let the yuan weaken to its lowest level ever since the free float began. Jamal, we're going to focus on that here today. You and I were discussing it last night. You sent a message out over Twitter. I promised today we'd be looking at some of the math behind whether or not we see a trade war coming through other segments of the market. And certainly it looks like it's happening right now. For lack of a better phrase, we'll call today's show Weapons of the Trade War.
Yeah,
a few years ago when
go ahead. I was curious because, just watching yesterday, it seemed evident to me that at some point in time there was some selling of gold and there was some selling of bonds, and those are the two things that I think we both have been leaning on long in some way, shape, or form. And it made me wonder. Obviously, we know China's a big holder of U.S. Treasuries, and obviously they've been doing some buying of gold at some point in time too. So when I saw that message, I immediately retweeted it and copied you and Ilya on it because you guys are some of the best that I know as far as foreign exchange. So I was curious, and that's what gets to kind of where we are today.
China did respond with retaliatory tariffs. And in response to that retaliation, Trump announced he's going to slap another 50% on China. We see today at noon, according to press secretary, that we get those 104% tariffs put into place against China. Now, that is a huge level that the Chinese government could try to retaliate against, but considering that most of what we are sending them, or a good amount of what we're sending them, would be soft ag, they would effectively be importing inflation in doing so. That leaves really only one channel left, as we saw in the 2018-2019 episode, and that would be through FX. Now, we could talk about today's move in particular. We can point to what's happening in treasury markets. The yields obviously have not moved lower as the administration hoped after Liberation Day. We are seeing that there is enough space in the dollar yuan exchange rate right now for at least enough of a weakening to occur so that the economy itself in China is insulated. If China really wants to knuckle down and is ready to fight this out and is not going to give in to the Trump administration, it's going to let the yuan weaken, and it's going to do so perhaps on a fairly quick pace here. Now, we can model this out a number of ways. All this text is already on the screen, but the assumptions that you have to take into effect are the trade-offs between the exchange rate and the trade balance. A few years ago, when we were looking at this up until 2018, the available data sets suggested the elasticity between the trade balance and the yuan was about 1. And the IMF at the time was suggesting that a 1%, or rather 10% depreciation in the yuan would lead to about a 1.5% increase in net exports. Data that's now available since then, and an updated study that was produced in the Asian Economic Journal, citing Chen, Salike, and Thorbeck, suggests that the elasticity of demand in the exchange rate from the period 2009 through 2023 is negative 0.65. So for every 1% depreciation in the yuan, you get a 0.65% increase in Chinese exports. So thinking about the total state of Chinese exports at the end of the most recent reporting period that we have available annually, 3.513 trillion, with the cost of U.S. tariffs pushing 640 billion, given the recent estimates that are publicly available, considering the 104% tariff rate that went into effect here today at noon, and that elasticity factor of negative 0.65, we run into some interesting math here where the required increase in exports for China is about 18.2% to offset the U.S. demand gap that could potentially occur, assuming it gets zeroed out. And in return, if we do see a 640 billion impact to Chinese growth, as a result of this trade, they could allow the yuan to depreciate as high as 9.3 from the level that I saw before we went on the show of 7.39 over the coming weeks and months. Now, just for some backdrop here, Jamal, before I let you jump in, back in 2018, 2019, when we were having this conversation, when the trade war went into effect, I had a paper that was put out through one of IG's sister companies about modeling the trade war impact on dollar yuan. And I modeled out for dollar yuan to rise to 7.3, and I linked to that a thread, if you will, last night on Twitter. So this has been something that, as we see over time, where has the yuan exchange rate been sitting for the past several months and years? Been sitting between 7.2 and 7.3. They've kept it here to offset the impact of the tariffs in Trump round 1. This is the clearest sign that we're looking at the trade war digging in from China's side. They're letting the yuan weaken, and the more they let it weaken shows the more serious they are about not giving into the Trump administration's demands here. And when the yuan hits a new all-time low today, what happens at exact minute in time? Stocks peak and begin to turn lower.
And so, I mean, is that essentially the kind of fallout we could be looking forward to? Like, you know, stocks obviously reacting to that and moving lower. How does that affect our dollar? How does that affect, you know, other things like gold and copper even? You know, how does that affect those things?
It's interesting because right now, given China's accumulation of gold, one of the considerations now that could be on the field of play is that in order to weaken the yuan, you know, several levers that they could put their hands on. They could lower interest rates. They could flood the market with more yuan, in theory, right? They could grow their M2 money supply. The issue there, though, would be, do you think that there might be capital flight in China? So does that come alongside capital controls as well? You decrease external demand for your currency. You prevent currency from fleeing the country. But if currency flees the country, what does that do for other markets? So a Chinese government that's trying to flood the market with yuan without the capital controls could see the yuan move all the way offshore. But they could also do things on their own balance sheet, right? They could sell gold and use the proceeds of that gold to hold it in US dollars. They could then take those and buy it in euro. They could buy pound. They could buy Japanese yen and diversify away from the newly created USD reserves. But gold would be a way to do it. Certainly would be a way to do it. The implications, of course, for Chinese equities are there. The implications for oil, I think, are a little bit more mixed. But it's a very serious consideration here that if we're going to dig into the mud on a trade war with China, the U.S. and China are together more than 50% of global GDP, then there are profound implications for how capital flows globally. And the yuan weakening is something that we should not ignore here, even if, math and various mathematical equations regarding trade wars and deficits these days, they seem to be, make it up as you go. So maybe my math is wrong here, but that doesn't seem to be a very high bar to clear.
Yeah, and the math is important, obviously, but just the idea, the concept, right? That's why I think it's good to kind of flesh it out, like get an idea of what are the things that we should be worried about, right? I mean, there's certain things that people probably don't even want to trade. You talk about these equities, you're looking at some of these Chinese names, looking at some of these Chinese ETFs. I mean, do eventually, we have a situation of XI and KWIP? Do they do something like an RSX? I don't think so. But these are things you got to start considering when you're starting to trade, because this thing is getting really dangerous, and there's going to be more fallout than just markets falling like we've always gotten accustomed to and bouncing back. There could be a lot more fallout to happen.
S&P 500 is now negative on the session, 50.95 here. We did have a high earlier on the day that was all the way up at 5305.25. That was 200 points ago.
Yeah.
This pullback has really all transpired within the last hour and a half, 2 hours. Well, actually, it was 2.5 hours. But you hit those highs around 10:30 this morning, and right there as that occurs, you see a yuan that starts to check into those new all-time lows. Intentional weakening by the PBOC. You flagged it last night as something that was occurring, and it's continued throughout today's session here. It's not something you can ignore. China does not seem willing to come to the table in the short term, and we now have IVRs back in the above 100. When I was on with Tom and Tony for Let Me Explain this morning, the market was moving up on the highs. The IVRs had dropped into the 80. So how do you square the circle now? We move through the other half of this day where we now have given up that 4% rally.
I think, this is what you would expect when you see the VIX doing what it's been doing, upwards of 40 and change. I don't know, is it back up to 50 now? I'm not even sure. 47 and change, the actual VIX futures, front month at 35. These ranges, this is exactly the kind of activity you can expect in the market right now. Yesterday from Sunday night, kind of including Sunday night, of course, to Monday, 454 point range. Today, about 219 point range. So this is the kind of market that we're in. And again, it's headline driven. We've been saying this for a couple of months now, and I don't think it's going to change anytime soon. It makes it difficult to trade, honestly, but we still do it. Again, this is a market where you definitely have to trade both sides. If you're selling some put spreads, you need to find some call spreads to sell as well, just to sort of offset some of the risk that's occurring right now.
To see this going into effect, I don't think we can consider a total surprise. It was yesterday morning, of course, that we had the very fake rumor about there being a 90-day window for negotiations, if you will. That, of course, is smothered by the White House itself. We then get news that Trump would be instituting another 50% tariffs against China, bringing the tariff rate up to 104%, and that would go into effect noon today. When the market pulls back, we don't get down below 49.80 or so. And so this reaction that we're seeing here intraday, it's a reminder, yes, there's not an off-ramp immediately here, at least for China. But the White House also told us there are off-ramps for basically everyone else. This is really a China issue. And they're willing to negotiate with everyone else a little bit more quickly than with the White House's clear identified geopolitical rival. If there are greater selling pressures over the course of the session here in U.S. equities, I would keep an eye on that 49.80 level. That's another 100 points away. But consistent with the idea that, vol's elevated here, Jamal. These levels of tariffs are unsustainable between the U.S. and China. The Chinese economy would struggle a lot, and there is a very high incentive for them to actually do something in terms of a negotiation with the Trump administration. I would question to see that we wouldn't get more positive headlines to show that we're not just driving wedges everywhere. So fade the sell-off, I think, should be on the bingo card. We knew this was going to happen. We knew this was going to happen yesterday. The market reacting so negatively to the news today is maybe just a wake-up call, but we're now basically flat, right? This could be a day where we're easily back up 2% or down 2% by the end of the session. I think that we need to be looking for, that's really the play right now if you're trading this intraday. There is a long ways to go. 2 hours and 44 minutes. The day is but young, my friend.
Yeah, there's no doubt about it. I mean, if you did it yesterday, it worked out for you. Again, it is just like normal markets. It is tough to find, an opportunity when to get long. Do you do it like here when it got negative? I mean, so far that would have worked for you. And then the question becomes, how long do you hold it? I think you got to figure out sort of tight limits, right? Like maybe 20 to 25 points, because I don't know, man. I mean, again, it just bounced up to 16 points after going negative, and then it's headed back down. So it's all over the place. These are very jumpy, and these are more liquid than they were, I would say, on Sunday night and yesterday, but still, it's very fickle.
So there is a part of this that I don't want to ignore either, which, not to put anyone on the spot, because obviously we're all trying to do the best that we can, but there were a few banks and hedge funds that sent out notes yesterday quoting the Kevin Hassett comments. So there's a world, Jamal, that I envision where people saw this email being circulated, these emails being circulated that Kevin Hassett says a 90-day pause is coming, and people start to buy, and all of a sudden they go for a walk, they go outside to get a coffee, they come back, the White House has denied it. Now they're trapped in a position and ES at 5,300. Mm-hmm. There is a window today where if you got trapped in the market yesterday at the highs, you were afforded a window to get back out and neutralize your position. Mm-hmm. And so I think so much of this move to the downside has been driven by the fact that yesterday's positioning was torn asunder basically by the fact that we had this rumor. There was a little bit of an opportunity to clear some of that risk off the table here. And so a natural point of profit, even if you scalped off the lows yesterday, we got back to the Monday highs. You made 4% in the span of 24 hours. Cool off. Let's reset. So now that we have a reset here, Jamal, what's the play in equities? Are you ready to take bigger swings here, or given the news flow still, this is a tough environment to model out? How do you approach this?
Bigger swings? No. I mean, I have, as typical, I've been, adding a few short, long deltas here and there with a couple more long deltas and short deltas, but I do have a couple of short delta plays, and a lot of it has been from leaning on the bond position, if anything, which we'll get to, but I think you just have to sort of find a few things that you want to get long delta. I've been doing it mostly in June for my option positions. That's mostly where I've been making my bread, if anything, or making my bet, if anything. And then coupling it with a couple of short positions, further upside, right? Like things and I've been finding a couple of things to sell sort of at their 200-day moving average, selling some call spreads there. So that's the way I've been playing it, and it's not necessarily right or wrong, but I just, I don't really see any other way to play it. Honestly, this is going to be a tough market no matter what you do right now, and honestly, in just about every asset. And until cooler heads prevail with this tariff thing, until it's not, every day is not a headline that's going to affect the market. This is just how it's going to be.
Yeah, there was part of me this morning when we were on Let Me Explain, and I was talking about bear market rallies and the market did rally 24% during the global financial crisis, and it didn't really mean anything. There's definitely part of me that was like, should have bought the low on Sunday night.
We always feel like that, though, right? Like when it happens. I actually did buy, not the low, but I bought Russell, actually. I think it was about 1750. And then I closed it out. I bought it for, 1730 or something. I ended up closing out for 1750. I wasn't gonna hold it overnight. I'll tell you that. I was not comfortable holding it overnight. I was a little worried about that because there's just too many headlines. You just don't know how things are gonna go.
Today we run into our 1 week moving averages in ES and Q. Likewise, we can see that over in the Russell, which is not having a good time here, up 1.71% right now, 102.7 IBR. We run into the 1 week moving averages. One of those signs of stress. What's keeping me out of the market being a bottom fisher right now? In February, as a momentum guy, in February and March, we stay below that 1 week moving average. And what happens? No reason to get long. keeps us on the sidelines. They take a small long here off the low. You get a bounce. We fail at the 1 month. And what happens after we get there? Back below the 1 week. Jamal, until we see some sustained momentum here, is a very difficult case to make that you're going to see any significant sort of a rally. And there was a chat yesterday in overtime. Someone said, how are you using technicals in this environment at all? That is an awesome question.
How are you?
What's the corollary? Like, what's the data set that we can pull out and say, aside from it seeing high volatility, where can we point to this being another type of situation? Is this like an 87? Is this like a 2008? Is this like a 1929? Right? But the reality is that there is no good overlap, fundamentally, quantitatively, technically. So flying by the seat of our pants here. And that's one of the reasons why I'm not getting too, I'm going to try to stick with what I know what works for me. I haven't chased this off the lows yet. And now I feel less worse about that. But staying disciplined is ultimately what's going to keep everyone's shirt on their back throughout all this.
No, it's a great question. It's hard to use technicals at a time like this, especially when most of the market is being driven by headlines. The interesting thing though, like I always say this about technicals, they help you find greed and fear spots, right? And right now, obviously, you don't need any help finding the fear spot because you know exactly where it is. It's just we're riding the wave. You're right. There really is no precedent for this because this is something that we haven't seen. I haven't seen it since I've been trading markets. Sure, have I seen fear and VIX high and down days? Yes, but I haven't seen it. Have I seen it predicate? Basically happen due to the fact of headlines for sure, but have not seen it in this manner and not the complex calculus that we've seen with regard to what's going on with all the different asset classes, whether with the recession signs that we're seeing from oil, what we're seeing from equities, what we're seeing from a lot of these other asset classes. So this is completely different, and I think you have to trade it as such.
Do have to trade it different as such. I mean, this is just, you got to be very nimble, right?
Yeah.
Speed dating, not married to anything right now.
Yes, 100%.
And the duration, even if you're speed dating in longer duration trades, right? You're, scalping inside the 0, 1, 3, 5, 7 DTE. That's not my forte. I just don't. Whenever I do it, I just lose money. So I should just not do it. All right. I know my weakness. And I think as a trader, more importantly, you have to find the style and strategies that work well with your personality. And scalping is just not me. So to that end, you have to find something that you're comfortable with taking risks on, right? For me, it's going to be the momentum setup. I don't think the daily time frame is particularly beneficial for executing any trades right now. If we look down to the 4 hour, you can see that we really can't even get to a neutralized momentum point, right? We get 1, 2 candles where you get the 5 above the 8 EMA here. You'd never get MACD getting back above its signal line. It's been nestled in that bearish territory below its signal line since the sell-off started anew back here at the end of March. Where's the entry point from that momentum perspective right now? So for someone like me, this is really just, if I'm going to take the trade, I'm going to do it in a longer dated product. I'm going to do it at like 45 days to expiration. And if it turns against me, at least the call spread or the short put spread will have enough intrinsic value embedded within it that if I'm wrong, I can flip it off, as opposed to being stuck in something that's like 1 or 2 or 3 DTE where there's a ton of convexity that just stomped on me. And by virtue of this being such a quick moving market that I'm not going to have time to get out at a price that I like. And it incurs a much bigger loss. So patience, patience, patience. It's boring. It's not fun. It's nerve-wracking. I'm waiting to deploy capital. I feel less bad about waiting today.
Patience is key. I bet you do. Patience is key, and just like you said, being nimble, being not married to anything. And honestly, for me, a lot of it is defined risk. I do have a couple of short puts and some smaller names that have gotten haircuts. One probably you could call it dangerous, but like Nike is one of them right now. Just experimenting in that one. But again, I'm not married to it. I'm willing to act at any given time, and it's a little bit further downside. But that's kind of the way I've been doing things. Most of it has been defined risk. That's one of the examples. It's not, but most of it has been defined risk for me because I just don't know where things are going.
Don't know where things are going. We have an interesting set of content coming out, articles coming out. We've been tasked with finding stocks that could be on someone's watch list, if you will. If you liked it before the soft, do you like it now? I was looking at names, personally, I'm looking at names like Google or rather Alphabet and Meta, Facebook. I don't think that the AI trends are dead, given everything going on in the space. It's clearly been subsumed by the tariff talk. And if the cost of GPUs are going to go up because we have to import parts from overseas, then deploying the CapEx to build out the data centers and the capabilities may take longer. Okay. But the testing's going on still. And it's not the testing that requires all of the GPUs, it's the inference. And the models that have come out in recent days and weeks are showing that companies like Google and Meta are producing very high quality outputs at increasingly reduced costs. And if we talk about productivity gains, I don't think that AI supercycle trend is going to go away. We have previously talked about how phase one winners probably dissipate and it goes into phase two. The data providers themselves, the people that provide the customer-facing applications, right? Less pick and shovel, more mining. And Meta and Google are certainly sitting at that juncture right now. So I have my ideas of what I'd like to see here. Meta couldn't quite turn through the level that I was looking for earlier today to see if we could get more of a bottom in here. These former highs in July and August of last year. We have lows that we come out in November. I wanted to see a little bit more basing above 550 before I was comfortable taking a shot. We didn't get that, so I'm still waiting. But give me another flush down to lows. Heck, maybe it's 450 or so. I have my shopping list ready to go for short-term swing trades and obviously longer-term holdings.
That's it's an important thing, having a shopping list, right? You can, I think when you have that shopping list, it gives you sort of an idea of where you want to attack as soon as you get the opportunity, and eventually the opportunity shows itself. Maybe for some people that opportunity is right now after being up up to 5,300, and people were like, I'm not doing anything up here, and then now you get this opportunity. And then you get that little tingle in your spine, right? Like, oh man, like this is the area I said I wanted to do something. I think you just kind of find your opportunities, and if that's you, again, you got to have a shopping list and be ready to go.
Jamal, the longer-term continuous contract on ES, where do we bottom this week? It's a pretty important place, uptrend of the lows that you have in March 2020. We'll call them August 22, or rather October 22, excuse me. You get pretty close to there in October 23. That's the swing high from the start of 2022 as well. If we find ourselves back down near 4,800, it seems like a good long-term place to try to take some long delta exposure. That's a very significant source of support right now for the market. I didn't do it earlier this week. I regret it. Still be up if we did it earlier this week, just buying into that former resistance turn support. Didn't do it. So I'm not going to chase. The technical momentum here intraday is looking ugly, and these tariffs are in effect. So maybe we have another swing to the downside coming, but shopping list handy. All times, every day this week.
Yeah, if we get to 4,800, it could be scary, honestly, because I think those who had gotten long there might decide to capitulate. So I don't necessarily want to see that, I will say.
I don't either. The corresponding level in ES, or rather in NQ, would be closer to 15K if we want to. Not things we're hoping for. But long-term significant uptrends, can't deny them. And where is the governmental put, right? Trump, I don't think, is going to tap out, but Congress can always tap out. There can always pass legislation reining the president's tariff authority, as is afforded to them by the Constitution. So there is legislation going through right now. If this seems like some fantasy, the White House put out a statement yesterday saying if any tariff legislation goes through, the current bill that's being proposed will be vetoed by Trump himself. So there's already this tug and pull where Congress is trying to stick its neck out and say, are you really sure that this is the manner with which you want to go through with this? Maybe that's 15K in the NASDAQ where you get that 2/3 majority. Maybe not 17K, but maybe it's 15K.
Yeah, that's certainly a headline that could hit at any given time, right? And those type of headlines, not only that one you mentioned hit yesterday after the market was closed, but that's something that could hit intraday too. Like again, this is a very headline-driven market, and we've already seen what what prompted this move. Essentially, the news from China about China. So. I mean, literally anything is on the table, Chris. Like it really is right now. That's the fascinating thing about it, and it's different from other times, right? I mean,
this is different.
Yeah, this is very different. So that the tough part, kind of like what I was talking to you. That's the tough part that makes it hard to sort of want to push a lot of chips in on the table. If you'd told me we have 3 days like this down, just like we had in August, it was like, okay, I'll push chips in because a lot of what was, the fear in August seemed kind of unfounded at the time. This is not unfounded. I mean, this is a scenario where we know what tariffs or we are fully aware of what tariffs are going to do to our economy and economies across the globe that we're inflicting tariffs on. And so, until the narrative changes, we're going to get a lot of back and forth. We just are.
You retweeted that scene from Ferris Bueller's Day Off of the explanation of tariffs.
Yeah.
Right. And what it did to global trade and how it impacted the Great Depression. And it was like one of many factors. And there are different things, right? We were you had to have gold convertibility for US dollars back then. So there's also a banking squeeze that occurs as a result of all this. And that's not how the system is set up right now. The Federal Reserve has much more capacity. So would you see the same type of domino fall? No. But you could imagine in that scene in Ferris Bueller's Day Off, someone walking into the classroom after the professor speaks and just starts talking about tariffs, having missed the entire lesson, and insisting that those are the right answers. And that kind of feels like where we are right now, where this is some very rudimentary basic economic stuff, and we've seen this in history, and there's ways to do this. The manner with which it's being done is probably going to lead to some economic fallout, plain and simple, which begs the darn question, Jamal, how come bonds aren't reflecting it? Where's the recession trade over the past 2 days? I find this to be an incredibly alarming outcome. Forget the fact that you and I have both long deltas here in bonds and notes, and quite frankly, they're still up. At least I am. It's not as much as we were yesterday at the open, of course. But shouldn't this be the time when bonds are really shining, right? This should be the moment when bonds do well. Why aren't bonds doing well?
I don't think it's any other reason than people don't necessarily believe people don't want to be long treasuries and U.S. treasuries right now. And I personally believe that China's definitely sold some treasuries, if not sold a lot. I mean, that's the only other explanation I can think of. I don't see it any other way because, like you said, this is a time of real fear. And any time of real fear, that's what's so different about this time, right? Like any time of real fear, we usually see bonds being bought, treasuries being bought. And that's not what we're seeing. And this is the second day in a row. Because of the type of trader I am and in these type of environments, like you said, not being married in anything, I sold ZN on Friday because, again, it was one of those situations of it wasn't so much I didn't see this coming at all, but I knew I had ZB and I was fine with that, but I sold ZN on Friday to be able to do some other stuff, right? And then I think I think the last time we were on the show, I talked about buying this put spread that was literally, only $500, very low value, but just in case some craziness out, who knows what? Well, this is who knows what, this is not what I expected at all, but this is literally the who knows what situation. I totally did not expect bonds to be sold like they have been in the past 2 days. And honestly, I'm at a decision point right now. I'm trying to decide whether to close this put spread out because I got lucky and, we had this random selling and to keep my long, or do I take the whole thing off and just sort of start all over? I'm not exactly sure right now, and that's one of the bigger decisions I got. But I don't understand it. I really don't. And the only thing I can attribute it to is China selling and others selling treasuries as well.
Foundationally, right? And I think you're onto something there. Foundationally, why do so many foreigners buy U.S. debt? Because they have nothing else to do with all of the dollars that we give them in exchange for the stuff they send us, right? We are an incredibly wealthy country. Why has our trade deficit grown with the rest of the world in recent years? Because after COVID, our government pumped a lot of money into the system, much more than governments in Europe, Central America, or Asia did. And so as those economies grew slowly, ours grew quickly. And what happened to our equity markets? Couldn't really do anything anywhere else, so they're supercharged. You get that wealth effect. And so Americans are buying and consuming more and more stuff. And so we spend all this money to buy stuff from overseas. Those people say, like, okay, now we have these dollars. What should we do with them? We'll recirculate them back into U.S. dollar-denominated assets, treasuries. So if you now see as a country, you're going to have a less trade, you're going to have less dollars coming into your country, well, you don't need to hold as much U.S. Treasury debt now. It's not going to recycle its way back through the system. Is China selling U.S. Treasury, or is China selling U.S. Treasuries right now to factor in, like, they need to raise some liquidity, they need to get some capital, they need to offset the impact of the tariffs? They perhaps can't dismiss it. But the dollars roll throughout all this and the treasuries roll throughout all this is very, very troublesome. Because this should be the time when it shines. And since Liberation Day, yields are now higher. So if the whole point was to refinance the debt, cheaper, at 100 basis points cheaper for $100 billion of savings over the next decade, $100 billion per year in interest expense over the next decade, totaling $1 trillion total in 10 years, we've just wiped out $11 trillion of equity market wealth.
Yeah, I know, right? And I guess the other idea is the fact that maybe the market woke up to the fact that the Fed is not going to cut rates, right? I mean, I guess that's the other thing that we can't dismiss. Clearly, Jay Powell made that clear on Friday. This selling didn't start happening on Friday. It started yesterday, but maybe that was it. Over the weekend, it became clear, like, the Fed is not going to cut rates. And so why are yields this low, factoring in essentially this rate cut when it's not going to happen?
That's a huge part of this, Jamal. I mean, like, Powell told us on Friday that they're taking an even-keeled approach with the tariffs that go into effect. Just if you take the amount, China's share of our imports, and yet increase that factor by 104%, and you think about the role of imports, weighted imports in CPI, increasing the tariffs on China to 104% right now brings CPI up by 1.1% this year alone on headline CPI. And that's not taking into account any of the other inflation that comes through the system from any of the other tariffs. On China alone, we're adding 1.1% to headline CPI. We're sitting at, 2.7 right now? 2.6? So now we're looking at year-end at least 3.7, 3.8. Can the Fed cut rates in that environment? No world are they cutting rates in that environment. They might not raise rates because they're worried about the decline in real output, but they're certainly not cutting rates in that environment. And then what else happens if we do this trade war? Well, as history tells us, when you model out the impact of tariffs, you actually widen the trade deficit. We've seen this over the years. That's, again, another negative elasticity. For every 1% increase in the tariff rate, you lower the amount of trade that you ultimately do, and your trade deficit widens out over time. Correlation is about negative 0.45 when you look at tariff rates and changes in tariff rates versus global trade over the past 20 years. And that also means then you decrease your tax base. We're decreasing our tax base, so we're going to get a wider budget deficit. We're going to get a wider trade balance deficit. We're going to have fewer cuts. Those are all things that are bad for treasuries.
Yeah. It's just bad.
And I realized that too late. I realized that too late, by the way. So now the only hope here for treasuries is if you see the market begin to price in a more aggressive recession. I think I need to reassess my treasury positioning altogether, Jamal. This is not great.
Yeah, that's why I'm almost thinking of just closing it all out and having nothing on at the time, because this is it's real. It's as they say sometimes, this is complicated, and it is. And yeah, I mean, it's gotten beat up even more since we started the show. So it's one of those where I am really contemplating what I'm going to do, and I think it might just, as a result of how much things have changed, I might just decide to just take everything off, personally. I never expected this put spread to win so fast. I really didn't.
Listen, a lot's happened in the past week that one may not to expect. The one thing that I'm pleased, at least my initial reaction held when I saw the rates. It's like, this is going to be an economic disaster. And the market has since priced that in. Didn't move quick enough on enough of my trades to capitalize in the environment in a way that I want to during the sell-off. But now that we're pricing in what this new world may look like, I have a playbook to work from what happened in 2018, 2019. At least I think I do. And so that's going to take, again, I need a little bit more evidence to shift my positioning fully in that way. But I think I've been punched in the face enough to have learned a lesson that I'll carry through. ZN, ZB, it's worth considering here. The highs that we have are above 114. The recent swing lows that we have are down below 110. If we look to the one standard deviation iron condor right now, 45 days out, perfect, exact tasty methodology. The guts, you're short 109, 115. You're long the 108, 116s. 66% probability of profit, risking 3 to make 1. This is kind of like the prototypical iron condor trade, Jamal. 2/3 probability of profit, risking somewhere in the neighborhood of 2 or 3 to make 1. You can still get a pretty good value here, right? You're talking about a market that would have to go up to new highs in notes or break down to new lows in notes effectively over the next 3 weeks. Yes, this is a volatile market, but that is a very, very wide trading range. You're talking about clearing out the February lows on the other end of this too. So we can harvest the volatility here. It's an 83.9 IVR. We don't need to be directional throughout all this. That's usually my bread and butter. And I think the best way to take advantage of this situation is to forget the strategies that work well for you in terms of being directional, because this is a chop, 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 chop fest. But we can have something working for us along those lines here too. So that's what we're going to do here today. I'm going to put this on. Hopefully it gets filled.
Yeah, I might try and look to do the same because, like you said, I think right now we're our initial thesis was based on something completely different in a different environment, and it just so happened that things worked out really well for a little bit. But I mean, obviously, something has changed fundamentally, and I think we have to adapt as well.
If we look out to the rate pricing, by the way, Jamal, we don't need to just make this up ourselves, but what happens yesterday? Big pullback in those rate cut odds. Huge pullback. Basically, 3 cuts came off the table from high to where we ultimately closed. That is wild. Yesterday was a day for the ages. I'll always remember yesterday, I think.
Yeah, I mean, that just doesn't happen like that. You know what I mean? Like so fast. I mean, that's, again, that's probably something similar to some of that movement that we've seen. Some of that is similar to what we saw early last year and sometimes in 2023, that huge movement and swing between the amount of cuts, et cetera, expected. But this is just absolutely wild. I mean, and again, I think we just got to be nimble. Like you said, not married to anything. This applies to this as well.
Let's talk about what's going on in the gold market here today. Metals have given up their gains after we see the Chinese yuan begin to weaken. U.S. stocks, they top off. Gold, silver begin to turn the corner lower as well. Silver was up over 2% now, just under 0.75 here. Gold, you can see that we gap open lower, but over the course of the day, we run into that 1 week average and we begin to turn to the downside. Not liking this at all. You asked what could happen to gold? Sell. China may have to sell some gold in order to initially boost U.S. dollar reserves, right? That's one way to effectuate a change in the yuan's level. They could then convert that into other currencies, into euro, into yen. If they want to get the yuan off the balance sheet, they could flood the zone. But gold becomes something that they could bring down if they need to raise capital. And this is not unique or in isolation. A few weeks ago, when the tariffs were first being floated, we shared a story where, I believe it was the Central Bank of Belgium, was talking about that they may need to sell some of their gold holdings to offset the cost of the tariffs as an initial buffer. That was a flag that, this is not an unseen thing that could be occurring. But gold and silver today giving it up. There's a reason why we got the long duration, Jamal.
Yeah.
Before last week. I'm sticking through it right now. These are not losses I like to nurse. But if everything is panning out, the way that one thinks it would pan out, at least the way that I do, gold and silver still have a place in this trade here. The volatilities have shot up. I think that's the most important thing right now. Volatility did shoot up, and it shot up during a downtrend, which is really unique. Usually I like playing the long call side for, that reason, not selling the put spreads. Either way, though, here, I'm going to nurse this loss in the silver calls and in my gold calls. I feel like it's just a function of riding it out, because if there is an off-ramp, the core thesis for these trades on the fundamental side is that we are seeing balkanization of the global market, and that there's less trust for the U.S., and the U.S.'s role as a hegemon is disappearing and dissipating. And after the Russian sanctions are lifted, is that money flowing back into the West or elsewhere? Gold, hard assets seem to be the place that would be held on to. I know that's not a typical Tasty thing. It's not the Tasty methodology to incorporate that into your trade outcomes. But the vol is very, very high right now. And so I think there, again, directionally neutral things that you can do. You don't need to play for the long or the short. We can just try to harvest the vol here through something like a short iron condor.
Yeah, it's another example of how different things are right now. Like you mentioned, that vol shooting up in this big down move. We typically see vol shoot up when gold is on the rise, right? Because it typically crashes up, not crash down like this. But things are different. And I just happened to notice in MGC, and I'm sure regular GC as well, margins have gone up because, again, it's very volatile right now, and volatility has gone higher. So, gold's a world currency, man. And it's, we talking about China, but there's a lot of other, like you mentioned, Sweden, there's a lot of other global markets that are trading this gold right now and using it for different reasons, for hedging, et cetera. And I think it is definitely a situation where we've seen some of those get out more recently. So, but, that being said, it does seem to be holding in around 3K. So it's something to watch as of right now to see if it can bounce. It doesn't seem decisive as of yet. Like, it doesn't seem like there's been a decisive, despite what we've seen in these last 4 days, it doesn't seem like a huge decisive sell if everybody just wants to get out. It just seems like, there's been some profit taking.
It seems like there's some profit taking. When we go to correlation 1 environments, you find yourself in a situation where people are just selling everything. That's nailed down. Gold is a very liquid asset, and if you need to raise capital and you've been long gold this year, it's an easy place to harvest from, right? Sell that off. Everyone wants gold in their pocket. You got now some extra capital to play with to offset losses, cover margin calls, what have you. The price action isn't fantastic. The momentum here is falling apart. The close that we have yesterday is complete trash. If you're thinking about it on the recent uptrend basis from the January and the late February swing lows, today we begin to fall below that uptrend line. We can't quite clear out. And let's just pull you back down here. We can't quite clear out the swing highs that we had here in February as well. So this is, looking for a place that should just be, let's take the loss on the position that we have. There's enough internal, there's still enough intrinsic value to move it. We can reset now in this different volatility environment. We can reframe the trade and not be so out of the money, if you will. And while there's intrinsic value, make those adjustments. I think that's where we have to go. If you want to be long gold, this has been a terrible pullback, but the trades have been structured all year long continually that one loser does not eat away all of the gains of the previous winners. And so even at a max loss here, Jamal, this would be half the size of the previous winner, and that continues to be the way to structure these plays. Even if you're losing money, you lose it in a small form or fashion.
That is called smart trading, my friend.
That's the hope, because dumb trading doesn't work. See my bond P&L from the last 2 days. You and I were like Icarus, man. You're like, yeah, all last year we couldn't get a bond trade to work. I'm like, yeah, can you believe it? Look at us.
Yeah.
Mark goes, let me remind you guys of something real quick. Energy here today was the first thing to give it back after the Chinese yuan started to weaken here intraday. And once it hits that new all-time low, energy is the one that starts to keel over first. It's a 75 IVR here in oil. Now, interesting development yesterday, right? We talk about all of these military assets that have been moved into the Gulf Coast region. Trump surprised the world when he said that the U.S. and Iran are having direct talks on a nuclear basis. Maybe all the military assets being moved in showed how serious we were about actually attacking. In any event, U.S. and Iranian officials confirmed we'll be meeting this Saturday in Oman. Oman will be the indirect representative for Iran. So there's at least an attempt here to not bring us into a new conflict right now. And quite frankly, Jamal, strategically, we have all these tensions with our closest allies like Canada, France, Germany. Engaging in a kinetic conflict with Iran might not get much support for it on the global stage. So crude, though, here, bearing the brunt of whatever may be on the other side of this tariff talk, I still like having a geopolitical hedge in my pocket about what could happen with Iran, because who's to say that the talks go anywhere if they do? We did previously have a nuclear agreement with them in place. And if global trade is going to slow, oil is something that you will have a very difficult time catching that falling knife. You and I have long talked about the relationship between the demand for oil and global GDP. That has not changed. And so if we're going to go into a trade war, particularly between the world's two largest economies, oil is going to be ice skating uphill.
Precisely. That's actually one of the reasons why I haven't wanted to buy it. I mean, as of last Thursday, I was like, I think, if this thing is heading the way I think, I'd be interested in oil at 65. Well, it went straight through that on Friday. And I was a little worried then, and I just I'm not going to touch it. And sure enough, it's kind of been hanging around this level of 60. And like you said, if global trade is going to slow, oil has definitely got lower prices to see. So I haven't been interested in catching the falling knife. As tempting as it may be, I'm certainly not doing it right now. Probably some vol selling is probably the way to go, like you said, with IVR being on high. The only reason why I haven't jumped into it is because I got a bunch of different things, and I'm still trying to preserve some capital. So I think it's a great trade, but I just haven't touched it.
Yeah, I mean, when you look at volatility in equity markets, it's 100-something right now. So if you were looking at a 30 IVR in ES and a 74 IVR in crude, very easy to make the case that this would be a primary point of interest. When you see the IVRs that you have in single stocks or the index level, energy becomes less of a priority, so to speak, to play in right now. Tell me what you have going on in natural gas. This was a pain for you, but perhaps the past few days have been enlightening.
Oh, I got nothing. I took this thing off. What day did I take that off? It was. Can I find it here? I don't remember. But I took it off sometime, I think early last week. Again, as things started ratcheting up, and it just felt like this was sort of, not worth my time. Although obviously it's fallen. It honestly, at this point where it would be, I would probably be in trouble with my put spread at this point, because I had the 390, 410 call spread that was short, but then I was also short like the 370, 350. I was short the 370, 350 put spread. So at this point, I probably would have been in some trouble, but I took it off. I have nothing going on in here.
Here's the thing about natural gas, Jamal. This looks like a pretty darn clean head and shoulders pattern that we have here. Left shoulder, head, right shoulder. The right shoulder is at a lower point than the left shoulder, which is you like to see. That's a pretty clean neckline. Highs that you have in January, swing low here in March, and then as we make our way through the end of the month, and now we've broken below. That 100% extension gives you a downside target south of 270. It's a long way from here. I took my thing off last week with coming through the middle of March. We had that hold up near that 1 month moving average, and we had seen that interacted with a few times recently. So I took the short put spread. It fell below the $4 mark, and after hanging out there, I said, I'm going to get out. It was like a $2 loss on the short put spread, so $200. What do we see here? We get the bounce back. I'm frustrated, but the head and shoulders pattern looks like it's coming together. So sometimes technical analysis, right? I maybe should have gotten short. Yeah, short deltas would have been nice, but it helped me stay away, I think, was the most important thing. And that's one of the useful aspects of technical analysis through sell-offs like these. It serves as a filter. There may not be many corollaries that we can point to, if any at all, to line up the current space that we're in, this political, financial environment. But this is something that told me to be cautious and not get long again, and I didn't, and at least grateful that it has that level of efficiency. Sometimes not taking a bad trade is, the best one that you can do, because otherwise I'd be sitting underwater on something else here that Who needs another one of those in this environment?
It's also kind of interesting that just in these last 3 days, it has mirrored stock markets, right? And some of the other assets that we've seen. We don't typically see that with natural gas, but that's what's happened.
That is what has happened. We see here as we wind this session up, getting ready for Dr. Jim, we head over to the currency markets where it's been a back and forth all day. The Aussie was up by a lot more, up over 1.6%, runs into its 1 week moving average like so many of these other risk assets, and turns lower. British pound now is only up by about 0.25%, although it's holding the uptrend off the lows that we see over the course of this year so far. The Canadian dollar has turned slightly lower. You have a euro that is now slightly lower. The Japanese yen is poking up and firming up a little bit more, so at least there's some silver lining to all of this. The fact that the yen is holding up, though, while treasury yields have advanced, shows the kind of demand for liquidity here. I would also posit that a yuan that weakens dramatically throws the yen's position in all of this into a bit of a state of flux, too. If the Chinese yuan is going to weaken to the degree that the government may force it down to, if our rudimentary math here is correct, Mr. Chandler, the regional exporters in Asia cannot allow somewhere in the neighborhood of a 13 to 28% weakening of the yuan relative to their currencies, lest they lose significant manufacturing share. It's kind of like the Amazon method. Remember what Amazon did in the 2000s? Lowest costs. Where are they making their money? They're not making their money. Jeff Bezos was the alpha capitalist, willing to eat the losses with private capital until he pushed out all of his competitors. And what did they do? All the brick and mortars died. Most of them. Amazon won, and now it's been raising costs. China's going to try to do the same thing here. It can squeeze out its competitors with a lower exchange rate. So the Japanese government, the Thai government, the Indian government, they can't let that happen. So the yen is much of a safe haven it has been, so to speak, since the start of April and Liberation Day. I feel less confident being long yen now than I did in a while. And also, if the trade balance isn't going to be resolved and deficits are going up and inflation is shooting up by somewhere in the neighborhood of 1 to 4% by the end of this year, can't see the yen as a place where we'd want to be either. So any long yen exposure, I'm drawing it into question. We have the 007, 0071 call spread on. It's still working. Got a nice bit of yen vol that's been pumped in here to help out those calls. But
what do you think? Does it mean it's time to get out?
Here.
To reevaluate?
Yeah, I mean, I think I got to reevaluate everything. I mean, I had no conviction last week, as you and I discussed on Tuesday. But I'm feeling my conviction hardening in direction that does not make me like what I'm holding. Then again, if I liked what I was holding, my P&L would be higher. So that would kind of resolve itself.
Yeah, this one for me, I always, think about it in terms of the dollar, and I don't know the prospects for that much of a lower dollar. I don't know. Things can go either way, right? I just am not sure. This was definitely one that this yen position was one I was holding as a result of a more weakening dollar, and then just general chaos, probably in markets, which we've gotten. And again, this is basically we're up a little bit now, but I don't know. This is when I was going to ask you and wonder, whether it's a roll or if it's a close, and I'm on the fence with it too.
Before we head out here, I want to point to one more metric that we've talked about in recent weeks. We discussed it in March and we didn't quite get there, but it's the VIX divided by the VIX 3-month spread. Mm-hmm. And recent history, when that's moved above like 1.25, it's been consistent with the short-term low being found in equity markets. You can point to periods like in February 2018 or in March 2020 or in August of 24, thinking of recent history where that spread has gone above 1.25. We're currently sitting at 1.26. You can change your filter to be something higher, like 1.4. You're going to get the same thresholds. But volatility has moved to a place where we've really got ahead of our skis. And so the smallest, tiniest bit of good news that shows that we have a trade deal with Japan, or they're officially on paper 0% tariffs with Europe, and this then just becomes a China story, and we can refocus our framework on Fortress North America, right? Creating broader free trade zones that prevent Chinese goods from being dumped into these markets that cause improper competition, harm American workers, harm businesses in our sphere of influence, then we have a different narrative to play with. We're not there yet. You can see traders hanging on to hope, Jamal. We're going to wind down here with a quick look. We have Governor Ueda speaking overnight in Japan. We have FOMC minutes tomorrow afternoon. Does data really matter in this environment? We're really waiting for one person to tweet or say something. So stick around here today. We'll be covering it all after a brief break. Dr. Jim Schultz with From Theory to Practice is up. See you in a little bit, Jamal.
Later.
So you're an active trader, looking to increase your return, decrease your risk, or quite possibly both. Sure, you've heard of the Greeks. You know, your deltas, your thetas, your vegas, your charms, your vamas, etc. And you're wondering, hey, how do I use these guys to improve my risk-return relationship? Well, join me for a 10-episode crash course, and I'll show you exactly how to do it with all the gimmies and gotchas, one Greek at a time. We'll see you there. Strategies? That's easy. Taking off strategies? That's also pretty easy. What do you do with everything in between? Well, in our Options Crash Course Strategy Series, we're going to show you how to handle the winners. We're going to show you how to handle the losers. But most importantly, we're going to show you how to handle everything in between with simple and clear guidelines and reference points. We'll see you guys there. I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Tuesday edition of what it is that we are trying to do. And guys, before we get into the content today, I can't believe it, man. I can't believe it. I gave you guys false information yesterday. You come to the show, you come to my program in these periods of high uncertainty, and you expect truth. You expect me to bring you news that is actually true. And the reality is yesterday, I totally let you guys down. I do not do face pulls with back. Of course, I do them with delts because I hit delts and buys this morning. I'm like, we got to do some face pulls. And so my apologies for leading you guys astray yesterday. But welcome to the show. I'm glad that you are here. If you're watching over on the Tasty Live Network, then I would actually bounce on over to YouTube because you can join the conversation and join the discussion and communicate with all of your brethren who are also watching the show. You can celebrate if you're a bull. Man, you can even celebrate if you're a bear because who knows what's going on out there. I certainly do not. So, John, bring us into the market. And guys, again, once again, why even get out of bed? It's not like anything has even happened today. Even the S&P is up 18, right? Risk-free asset up 98, up 100. It's like it's nothing. Boomers up 300. Russell down 15. Like it's not like ES was up to 5,300 a couple hours ago. Like it's not like we had a face ripper like brewing, ready to go, kind of queued up and all set. Nah, man, it's basically just another quiet day in the market. Nothing going on at all. So just shut her down and try again tomorrow. Look at volatility. Volatility is even up a little bit today. You got volatility futures up 265. You got the old spot volatility, the old VIX up 60 cents on the day. You got volatility up to 47. Pretty surprising, to be honest with you all, especially when, so earlier, obviously, unless you have been living under a rock, which again, given the quietness of today and again, the quietness of yesterday, this would be a good time to move into said rock. But if you've been living anywhere else, then you know that ES has actually had a crazy day, right? You can see right here, ES was up to, these I got my Errol Coleman settings. Kind of they're my default settings now. You can see that ES, this was just a couple hours ago, guys. I mean, look at your timestamps. You're down to like, 10, 15, 10, 20 at that point. So a few hours ago, ES poked its head over 5,300. Like 5304, 5305, whatever. And I mean, right now you can see at 5100, it's basically up 9 or up 10. So at 5300, like we had padded just a little cool little 200 points. Like just padding the stats, like adding 4 or 5% to the old bottom line there. And I mean, it looked like, all right, like I don't know what came out. I don't know, like news wise, subreddit wise, like I don't know what maybe came out to propel the market this much higher, but it looks pretty good. Everybody's happy. It's strawberries and sunshine. And then all of a sudden, I mean, they all just came out of the woodwork, man. Like your Errol Colemans, your Tim Knights, like they all just came. Like, here you go. It's just, look at that. That's your basic downtrend, right? That's your basic lower highs and lower lows. And so, man, I'm no technician, as evidenced by anyone who's watched the show for any length of time. But even I know that looks like a pretty solid downtrend. Now, maybe it's been broken here. I have no idea. Neither does anyone else. But yeah, pretty interesting days. We are now unched on the day. Unched on the day. And I've been instructed to refer to days like today as massively unched. We couldn't be more unched right now. Like you could try to be more unched than we are right now, but you couldn't do it. You couldn't do it. Like you could try, but you would fail. E-mini S&P is up 4 on the day. NASDAQ up 31 on the day. It's unbelievable. It's unprecedented. Just some totally, totally crazy stuff. And so earlier today, the VIX, the old VIX, it was down. I mean, it was down a ton because the market was so strong. I mean, you could see right around the time that the market reached its peak, the VIX had kind of reached its trough. I mean, you were under 40. The VIX was down to 37. It's been a while since we've said, hey, you got the VIX down 8, down to 37. Like it's been a minute since that's been the environment that we've been in, but that is indeed the market that we are trading right here and right now. So pretty crazy stuff, pretty wild stuff. Yeah, we are literally unched. That's just some crazy stuff. And so I don't know what's going to happen the next hour and a half. I have no idea. Neither does anyone else. But I'm here for it, man. I'm 100% here for it. So all right. So if we look at the rest of the market, there's not really a ton to pontificate on, but I'll find some pontifications to give you all. You got bonds down at a 0.21. Man, look at that. You got bonds down huge, down into the 115 handle, which is surprising. It wasn't surprising when the market was so strong. Like it makes a little bit of sense that you have kind of this risk on, risk off type of mentality where you have, the market being strong, the equities rallying, and then money coming out of fixed income, money coming out of these safe havens and going into the riskier assets, your S&P 500s, your NASDAQs, your Dows, I mean, boomers, is whatever, right? But now that you've got weakness in the market again, I mean, even though it is massively unched today, it feels like a down day now. Like it absolutely feels like a down day. Like it 100% feels like a down day. And so I was going to go with my green shirt this morning, right? But then I'm like, I should probably switch to a red shirt now because now we're down. But then I'm like, no, I got to put the green shirt back on. Not because we're green, but because now I got to double shift at Publix to make up for the fact that we're not green today. So it's like, well, let me go ahead and put on the uni right now so at least I don't have to do it later. And so bonds being down now is surprising, given the fact that the market is weak. You got bonds down. You got gold is there's your other flight to quality. Gold looking good. Gold up 23 on the day, up right around 3,000 or so. And so, man, this is some crazy stuff. Lots of things happening on both sides of the market. Lots of opportunities. I would say, one comment that I will make. Like if you're scalping in this market, I mean, there's lots of opportunities. You've got to be very careful with your size, of course, but there's lots of opportunities on both sides of the market. But even if you're selling premium on days like today, then, one thing to consider is in markets like this one where things are changing so rapidly and things are moving so quickly, even if you are kind of like I go for my profit target type of thing, like the way I typically do my short premium trades, like you guys who have kind of, followed me for a while and you've adopted some of the tenets of my style of trading. And, those are famous last words, by the way. But if you've decided to do that, then one of the things that I'd like to do, generally speaking, is, if I have a strangle on or a short put or not really a ratio spread because it's a little bit different, but strangle and short put are great examples. I'm going for 50% of max profit, right? I mean, the same could be said for vertical spreads. I'm going for 50% of max profit. Okay. What do you do when you have like 25 to 30% of that max profit in like one day? Or in this environment, less than a day, like intraday? Normally, I would not take it off. Normally, I would leave it on and go for the full profit target. Now, I've warmed up to the idea even before tariffs, even before like we stepped into the apocalypse that we are all living in now. Even before all that, I kind of warmed up to the idea of maybe managing those a little bit earlier. Like maybe when you get that oversized kind of, outperformance in just a couple of days, considering taking it off. I've been open to the idea now for a little while. In this type of environment, if you do have the capacity, the availability, and the interest and desire to watch the markets more regularly because they are so wild and they are so crazy, if you do have opportunities intraday, like inside of the same day, then you might want to consider, taking it off. You might want to consider, booking the profits inside that day and then moving on to the next trade. Now, one thing you need to be careful of when it comes to that is your pattern day trader rules. Like if you can only do that so many times unless you have $25,000 of capital in your account, and you have to make sure like that 25,000 isn't like used for like positions and stuff. Like there's all kinds of rules, right? And so if you don't want to get dinged on the pattern day trader stuff, this is where the futures options again can be really, really helpful, very, very helpful. And so for whatever reason, and I don't know what the reasons are, you've got to ask the powers that be. Like you've got to ask the governors of what it is that we're doing. And of course, I'm talking about your Sosnoffs, your Batistas, your Sheridans. Like they're the ones that are telling all of us, the peasants and plebes, what to do. And so you got to ask them. I'm not really sure why the rules are the way that they are. But when it comes to futures options, you can get in and out all day long. You can get in and out all day long and you don't get dinged on pattern day trader stuff at all. And so if you've been kind of, dinged on that, or you've had some positions in just the last couple of days where like, man, I really wish I could have gotten out of that trade, but I didn't do it because I didn't want to get dinged on the pattern day trader stuff, or I'd already run up, my total to 3 or whatever, because you can only do 3 every 5 days, I think. If you do that fourth one, that's where they come and get you. And by come and get you, I'm pretty sure they haul you off to jail. Like they come and find you and like you're gone for a while. And so you probably don't want to do that. So 3 is kind of that line that you don't want to cross. Well, maybe you find yourself in a couple of trades that have been profitable, a couple of trades that have worked, but you've had to stay in them because you didn't want to, ring up the meter on the pattern day trader stuff. And as a result, the market, reversed back. The market did whatever. Like another subreddit came out and Johnny Pool's 47. Like he helped you yesterday, but he took you down today. And that's kind of it's gamings and gotchas. It's just the way that it works. I would encourage you to switch over to, or consider switching over at least, to futures options because again, you're in and out as much as you want, and you don't really have to worry about that stuff. So all right, so the market is now red. And so, man, wow, I can't believe it. I really can't believe it. And so that's some wild stuff, man. That's some wild stuff. E-mini S&P is down 13, NASDAQ down 20. And I'll tell you another thing that's pretty crazy. And I see you guys in the chat, man. I appreciate you guys. I'm going to get to as many of you guys as I can here in just a minute. I appreciate you guys so much. I see Daniel Rudy's in the house, man. I see Cynthia's in the house. Richard Todd's in the house. Joel James in the house. Emmett's in the house. Bill Buchanan's in the house. Don 721 in the house. Man, Ordenu's in the house. Look at you guys. Appreciate you guys so much. I'll tell you what's crazy. So if you have been watching the market at all today or yesterday, like you'll know exactly what I'm saying, even Thursday or Friday of last week, of course, it wasn't that long ago. And I mean, I'm talking like 3, 4, 5 months ago, maybe, when to get a 20 to 30 point range in the S&P 500 for the day was like kind of a stretch. Like there were many, many days when ES would only move 20, 25, 30 points for the whole day. Like that was the daily range. Like that's what we were working with, especially when the VIX was like 15. I mean, here, let's look at, hold on. Because I don't know how much longer we're going to have a market. And the fact that it's, it's sinking and sinking rather quickly. Let's get this thing out there while we can. The VIX is going to go back up to 50. Apparently it's on its horse now. So if we go in here, let me go to a daily chart of the VIX. Well, the VIX was 15. I want to say within the last 6 months. Like it wasn't that long ago, was it? No, not at all. I mean, look at this. Yeah, look at that. So I mean, December, right? End of December, you've got the VIX at 15. Excuse me. You got the VIX at 50 with these kids, man. Working through a little cold. It's like I'm always working through a cold now. Got 3 small kids and. Man, they're friends, and it's like, man, it's crazy. It's unbelievable, honestly. And so if you look at the VIX, though, you've got back in December, you've got, the VIX at 15, 16, 14, right? Did we get to 13? No, I think 14 was your low. But that's crazy, right? That was only a few months ago. It's only April. It's only the first week of April. And so that's pretty wild to think that, it wasn't that long ago that we're looking at 20, 25, 30-point ranges for the day. Now, if you watch ES, right, it'll move 15 to 20 points in a minute. And again, this is ES. We're not talking about NASDAQ. We're not talking about the Dow Jones futures. We're talking about ES. It'll move 15 to 20 points in a minute or two. That's pretty wild, man. That's some crazy stuff. And so, look at this now. It's about to go right back to uns. It was just down 20. It was just down 17, and it's about to be uns in just the time that we've been talking. And so it's crazy stuff. So, all right, there's your market commentary. Which again, it's not going to help you, but it's right on par with whatever you would find anywhere else. So there you go. What are we going to do with the portfolio? Believe it or not, there is not too much I want to do. Looking across the board, we've got a couple of positions that are actually working. Starbucks is helping us out. You've got Shopify is helping us out. We're getting helped a little bit on our MES and MNQ strangles. We were helped a lot more earlier when the market was so strong and ES was 5,300 and the NASDAQ was, 23,000 or whatever it was. And so now that it's weak again is not amazing for us. But I'm not going to touch the MES strangle. We've already adjusted it once. I know that we're underwater on the put side, but I'm really kind of, and again, I don't know. I don't know what's going to happen. I could be dead wrong. But as my experience, my own personal lived experience has informed me, you got to at least be cognizant of the ripper, man. You've got to be at least aware of the face ripper that's coming to get us all. Now, I don't know when it's coming. I thought it was happening earlier today, just like everybody else. I'm like, here we go, 5,300. This thing's going to close at like 5,475. It's going to be crazy. It's going to be super crazy. And then they just took it all away. Right? Again, who are they? Sosnoffs, Batistas, Sheridans, Molmets, etc. Well, you still want to be aware that around every corner is a face ripper just waiting for you, and it's waiting for me. And so I'm like, all right, it doesn't mean I don't adjust. I certainly adjust, but I'm just kind of aware of all right, I don't really want to get caught with my hand in the cookie jar on the upside if I can potentially avoid it. Now, you can't always avoid it. Look at this. EMA S&P's up 6 now. It was just down 17. 45 seconds ago? That's crazy, man. This is some wild stuff. So I just want to be aware. The position size has been controlled on entry. That's the most important part. So I have the freedom. I have the flexibility to kind of, adjust the positions the way I typically like to adjust them. And the way that I typically like to adjust my positions is a bit more patient than some of my own brethren on the network. Again, your Bob Nosnoffs, your Pony Babistas, etc. And so if you look at MES, I'm going to sit tight. I could be dead wrong. Maybe we're putting in a new low, by the close today. Who knows? Nobody knows. But I'm going to sit tight. Same is the case for MNQ. So for MNQ, you can see we're a few hundred points below the put strike. But again, that's kind of new information. We were not a few hundred points below the put strike just a couple hours ago. We were inside of our strikes when the NASDAQ was back over 18,000, which was earlier this morning. Right? That's some pretty wild stuff. And so I'm going to sit tight on this one too. And I'm going to sit tight. Now, I reserve the right to change my mind, of course, as new information presents itself. If we do really take another tumble lower and you've got MNQ at I don't know, I'm just picking a number, but 17,000, 17,100, something like that, then maybe, we'll consider making some adjustments at that point. And so, of course, it's gimmies and gotchas, right? If you wanted to adjust your MNQ strangle right now, again, I don't think that's a bad move. In fact, I'm even contractually obligated to tell you that's the best move because that's what Tom does, right? And so that's probably what you should do if you want to follow Tom right through the forest, right into the dumpster fire that you're both headed to, right? Go for it, man. I have no problem with it whatsoever. But again, if you want to be a bit more patient, just something to consider. Just something to consider. Now, some of you are like, but Jim, the moves right now are so crazy. The moves right now are so wild. I actually want to control my risk more closely. I actually want to be more aggressive with how I roll my strikes and bring in premium and improve break-evens and whatever. I like that line of thinking. All kidding aside, forget about dumpster fires and following Tom through the forest because we all know that's a bad idea. But just generally speaking, I like that idea a lot. I do. If you want to tighten up the risk controls now is probably the time to do it. And so, but I'm kind of thinking more beyond where we are right now. I'm trying to look to a couple days from now or a week from now where I'm like, all right, is the low in? I don't know. I don't know that the low is in for this year. I don't even know that the low is in for this little fiasco that we're dealing with right now. But it could be. And if it is, then, the market gets some more relief, like there's some more, tariff deals, negotiated or potentially negotiated or whatever, then, we could be looking at, NASDAQ 19,000 like in just a few days. It could happen really, really, really fast. So I'm going to sit tight and I am going to not do anything for those reasons. And again, that's our little secret. Don't tell Tom. But that's how we're going to do some things. So, all right, I want to go to, is there anything I really want to do? There really isn't anything I want to do today. We commented on a couple of things. S&P is up 12 now. And, we've got Bank of America. Yeah, look at Bank of America up 8 cents. There's your flight to quality. Forget about bonds. Forget about your Bitcoin. Look at your Bitcoin bros. Down 2,000 today. 77,000 though. That's weird. They were up like 1,500 to 77,000 yesterday. Now they're down 3,000 to 77,000. So I don't know who's controlling the daily pricing of the Bitcoin futures, but it's probably also someone in the Batista lineage, I would imagine. But if you look at the, where to park your cash today, obviously it makes sense. You park it in Starbucks and you park it in Bank of America. I've been telling you guys this from day one. Day one. We've been talking about this ad nauseum. Right? I've been on board with Bank of America since day one. Doesn't Bank of America have earnings coming up pretty soon? Hold on a second. They have earnings. Is it Friday? April 15th. Oh, tax day. Let's think here. Oh, that's a week from today. So next Tuesday, Bank of America has earnings. They usually have a before market earnings. Yeah, you can see that right here. If you look at the old little the little left arrow before the bell, it's kind of small to see. But as long as you don't have Sosnoff vision, you should be able to pick that up. You can see that that's before the market on April 15th. So a week from today, Bank of America has earnings. Do earnings even matter right now? Like seriously, does anybody even give a rip about earnings right now? Man, I feel like earnings are going to completely take a back seat to basically everything else that's happening in the market. Like if I go into, Tom's watch list and, we sort by earnings. Let's see. S&P is now unched again. Man, that's crazy. If you look at, Friday, I guess we've got JP Morgan and Wells Fargo. Does anybody really care about either one of these stocks at this point? I don't know. It's a bit of a rhetorical question just because, well, maybe it shouldn't be rhetorical because I don't know the answer and I guess I kind of need the answer. But yeah, JP Morgan, Wells Fargo, Bank of America is on Tuesday. We got Netflix coming up next week too, which is 4/17. That's going to be what, Thursday? That's Thursday. And then let's see, Tesla's on 4/22. Got Tesla coming up. And then if you go on down a little further, you got your Googles and your Microsofts, which are also coming up. They are going to be on 4/24. So they're coming up not next week, but the week after next. And so, right? 4/24. Yeah. So a couple, not this Thursday, but 2 weeks from Thursday. And so, we got a lot of things happening. And so, a little housekeeping too. I'm actually going to be out across Easter. We're going to Charlotte, North Carolina to be with my sister-in-law. So that's going to be, I don't know the exact days yet, but it's going to be maybe Wednesday of next week through Easter. And then I'll come back on the backside of Easter. And so if we have a market tomorrow, like if somehow we still have a market tomorrow, we ain't going to have one after Easter. So we should all probably start saying our goodbyes and start kind of doing all that little song and dance. But Bank of America looking good. Starbucks looking good. Yeah, there's nothing else I want to do here. I want to sit tight and kind of, exercise my right to do nothing. But all right, let's do something though. Where are you guys at? So, man, I see Orgdenu's in the house. What's going on there, Orgdenu? I appreciate you, my friend. Thank you for being here. He says, hey, Dr. Jim. Greetings from Italy. What's going on there, Orgdenu? He says, I love your show, man. I appreciate you. And thank you for putting that comment in the stream at this very time. I'm going to send you that cash that we talked about, and I will convert it to euros for you so you don't even have to do it. And, look at your action today. You've got the euro up, 18 bips. So you're going to get a slightly better price on that conversion. So congratulations, my friend. Nicely done, Orgdenu. I appreciate you. Down 721. Hey, Dr. J. How about a strangle on IWM? Ooh, let's take a look at it. 157 put, 197 call in 516. You know I never let you down. Yeah, I think you've taken me down many times. But that's all water under the bridge now. Like that's all, That's protein powder or protein shakes under the squat rack. So 177. Let's see here. You're saying a 157, 197. So I like the fact that it's really nicely balanced. I mean, it's pretty feng shui, man. You couldn't really make this more feng shui if you tried. I mean, you've got the stock at 177. You're going down 20 to 157 on the put side and up 20 to 197 on the call side. So that looks pretty nice. If I sell a 157 and then I sell a 197, I'm looking at a credit collected of 555, 560. And my buying power is only $1,700 because IWM's been beaten down so much as of late, which is crazy in its own right because this stock was this stock was 200 or so not too long ago. I mean, not too long ago at all. Like, hold on a second. I'll put this trade. Well, let me put this trade on first. I'm pretty sure IWM was 200 like maybe 2 weeks ago. I mean, we're not talking about like December. I think we're talking about like the end of March. Like if I go into the chart for IWM, man, look at that. Wow, that's crazy. No, forget about the end of March. The beginning of April, it was 203. Like 5 days ago, it was actually 203. And so sometimes I forget that, like, the 3 day stretch that we have just endured. Now, I know yesterday was crazy because it came all the way back and basically finished unchanged. And now today it's kind of another crazy day. But if you actually just go like from the top on, let's say, Wednesday before tariffs to the bottom on Sunday night, it's historic. Like, I think that 3 day stretch from top to bottom, it's in the top 5 of all time. It might be in the top 3 of all time. It might be only 1929 and then maybe 1987 or maybe 2008 is in there too. I know that it's 1929, 1987, 2008, and then now. Which I mean, if you think about that, it's like, man, you may not be hitting all your markers right now. You may not be hitting everything you want to hit perfectly. And you're like, man, I missed this trade. I missed that trade. I should have adjusted here. I shouldn't have listened to Dr. Jim there and blah, 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 blah. And it's like, yeah, definitely don't do that last part. But everything else, it's like, hey, we all make mistakes. We're not robots. Like, we're just trying to improve. We're trying to get better. But man, if you're still standing after all this, like if you're still like, you got a fighter's chance, it's like, man, that really says something. That really, really says something. Because, I mean, a lot of people that are kind of just adopting like the buy and hold strategy, like a lot of people that, like my father-in-law, for example, like they're getting hurt bad. They're getting hurt bad. Now, I think he'll be fine. I think they'll all be fine, whatever, as the market recovers. But it's like, man, just think about all the tools that you have in your toolbox. Think about all the things that you're equipped with that can, help you navigate these times that, a passive investor, a buy and hold strategy investor, they just don't have the skills. They just don't have the equipment that they need to kind of, more actively, adjust risk parameters and adjust risk return profiles. And so, man, if you're still standing, my hat's off to you because it's been historic. It's been absolutely unequivocally historic. EMI S&P is now down 15. And so watch, they're going to be up like 9 within the next 4 minutes. Like it's gonna be crazy, and I don't know where they're going. Or they might be down 40, right? I mean, it's gonna go one way or another. But I like that trade down 721. Thank you so much for bringing it to my my disposal. Sergio says, "Greetings, Dr. Jim. What's going on?" Man, this nose. What's going on there, Sergio? I appreciate you, my friend. Thank you for being here. Sam L says, Doc, are we green or red today? It feels like we're flipping coins out here. It certainly does. What a time to trade. Vegas has nothing on this market. Yes, what a time to trade. And it feels like something. I don't know. I mean, I'll tell you what. If they really – so again, I don't know what's going to happen the next hour and a half. Nobody does. It feels like they want to take them down for whatever reason, and they have the reasons, of course. But, if they send them lower from here, and let's say ES finishes the day, I'm just picking a number, down 50 or down 60, that would kind of make some sense. I mean, it's still crazy given what's happened this morning. But I feel like it's going to be even crazier if they reverse them back again and ES is up like 80. ES is up like 93 to finish the day. It's just like, man, nobody knows. Like this thing is wild. Has the VIX gone over 50 yet? No, it's actually cooled off a little bit, even with the market down. Because I think this is the low. This is the low of the show. EMI S&P is at 50.73. We haven't seen 50.73 while we've been on the show. and the VIX was 49 just a couple minutes ago. And so that's a little interesting. But Bill Buchanan's in the house. What's going on there, Bill? Short puts on the risk-free instrument, MNQ. Yes, indeed. In the sense that I definitely would not do that because the market's down right now. Yeah, but I do not do that. I mean, I don't know. But Bill Buchanan says for the income, of course, for that income. That's the only reason why you would sell options. You would sell options for income. Like, you don't have to go through some. Oh, here we go. There it is. Look at that. The Johnny Pool's 47. Guys, are you watching this? EME/SP is up 15 now. EME/SP is up 20. EME/SP is up still 20, but about to be 30. EME/SP is up 26. Guys, Johnny Pool's 47. He did it again. He did it again. Man, forget the news. Forget charts, man. I'm hanging out in subreddits, man. I'm going into subreddits. So when y'all see Jay Schultz F3 in the subreddits, you'll know that it's me. Like when you see Jay Schultz F3 in the subreddits, you'll know that it's me. Oh my gosh. I told you guys, I said 3 minutes. You can rewind the tapes. At 2:27, I looked down and I said, watch, this thing's going to be up 8. And now it's up 12. And it was just up 25. It was just up 28. And so, wow. So Johnny Pool's 47 saved us again. Now, probably the White House has just come out and said, well, that's fake news. And so we're sending it back down. But he gave you a couple seconds of relief. And it's like, hey, he's just one man. Like, what can you ask of him? Like, he can only do so much. He's just one man. Like, I'm just one man. I'm one man with an intern. Like, I can only do so much. Right? But, man, he just saved the market again. I can't believe it. And so that's really, really funny. I can't believe that just happened. And it's going back down. There you go. Yeah, it's fake. It's fake news. It's misinformation. We probably can't do this too many more times. We've clearly done it a couple times now where the misinformation saved the global financial marketplace. But I have a feeling at a certain point they're going to catch on to us. And so we're going to need to come up with a brand new strategy to save the global financial marketplace because clearly our leaders aren't going to do it. Our politicians aren't going to do it. Powell's not going to do it. We got to do it ourselves, man. Like we got to go ahead and just take this bull by the horns. EME/SP is now down 2. And so it's not like they were up 30, 90 seconds ago. And so, man, this is like, yeah, this is something. I feel like I'm playing like Pai Gow or something. I don't even know how to play Pai Gow, but I should probably learn. And so Daniel Perkins says, Dr. Jim, these things are crazy. They certainly are, as evidenced by what's happened the last couple seconds. Please tell me what it is that we are trying to do. How could you possibly expect me to know that on a day like today? Man, I don't know what we're trying to do when the VIX is 14. Like back in December when the VIX was 14 and a quarter, I had no idea what we were trying to do. So now that the VIX is, 48, 49, 50, man, I have not a single clue. I know less than I knew before, and I didn't know nothing then. And so, man, it's not good, man. It's not good for you, and it's not good for me. But I appreciate you, and I appreciate you being here. So Pick 93 says, why doesn't Tasty have the Monday and Wednesday 10-year options? Excuse me. I don't know. I don't know the answer to that question. And I don't trade the 10-year too actively. I don't even trade it passively. And so I don't know the answer to that question there, Pick 93. But I would email support@tastytrade.com. So email support@tastytrade.com. You can just copy and paste the question that you had in the YouTube, the YouTube chat there, and put it in that email, and then they'll set you straight. And the great thing about Tasty is, they listen to you guys. Like they listen to you guys. They want to know what you need. They want to know what you want. That is what has shaped and informed the platform now for, the last couple of years. And so if enough people start clamoring about having Monday and Wednesday 10-year options, then you can obviously, begin to, make a case that we need to have Monday and Wednesday 10-year options. Now, again, you may be thinking, Pick 93, I'm only one person. I'm just like a Johnny Pool's 47. How can I possibly make a change? How can I possibly make a difference? Au contraire, mon frere. You just need, a pick93@gmail.com, a pick94@gmail.com, a pick95@gmail.com, and so on and so forth. And just blast them, man. Just blast them. And skip, a couple go like pick 98, pick 101, so they don't catch on to you. But then, they get enough of those emails, it's like, man, they'll start making some change. EME/SP is now down 11 on the day. So it clearly, again, Johnny Pool's 47. It was indeed confirmed to be fake news. And so Frank says, Dr. Jim, widen out the verticals if they're in the money, but now that premium is higher. So if they're in the money, so if your vertical spreads go in the money, so if you sell a vertical spread, like if you sell a put spread and the market goes down, or you sell a call spread and the market goes up, you're not going to be able to widen that spread like while it's live, so to speak, while you're in the position without paying a debit. So doing it while you're in the position, you're not going to be able to do for a credit. You would have to pay a debit for that. Now, could you maybe roll out and widen it? You could, and maybe use some of the extrinsic value from the additional time to pay for the widening of the spread. You could do that. I probably wouldn't do that. I would not be as creative and innovative with defined risk strategies. I would just kind of set them and forget them. I mean, roll them for credits and all those kinds of things if you can at 21 days to go or inside of 21 days to go. But I wouldn't get super cute with like, trying to be super creative with, adjusting strikes and risk parameters and those kinds of things. I would control my risk on order entry and then just kind of leave it be. But what about widening out the spreads before entry? So what about widening out the spreads like before you get into the trade? This is where I think it can make a lot of sense. Like this is where, with volatility being so high, with the VIX at 49, now it is almost 50. I mean, there you go. So it's really, the VIX has caught a little bit of a bit here. You even have volatility futures up, 4. And so, man, that's some pretty significant backwardation that you've got right there. You've got the VIX, right, at 50. It's actually almost 50 right now. That's supposed to be a squiggly line. And then you've got, volatility futures at, 37. And so normally you see the reverse relationship. Normally you see volatility futures above the VIX, the spot volatility. And then when you look out the volatility curve, you see, volatility kind of further dated volatility being greater than nearer dated volatility. That is a contango market. That's what we normally expect with volatility. And there's a lot of mathematical reasons for why we would expect that. But there's actually just an intuitive reason why you would expect that, right? Generally speaking, with more time should come more uncertainty. So I expect there to be higher levels of volatility as I go further and further out into the future. Well, what's crazy about what's happening right now is it's so uncertain right now. It is so volatile right now, as evidenced by the fact that, EMI S&Ps, they were just down 30. Now they're only down 17. And so the uncertainty in the market is expected to cool off at some point. The craziness right now and the chaos that we're in right now, it is expected to calm down, in the future. And so right now you have volatility super high, VIX at 50, but you actually have volatility futures only at 37, right? Only 37. But yeah, you could, use the higher volatilities, Frank, to answer your question, to widen out the spreads. That is, that is definitely one way that you could play the higher volatility, and it would be a smart, strategic way to do that. And so hopefully that helps. Let's see. Kimberly is in the house. Schultz in the house. What's going on there, Kimberly? I appreciate you. Thank you so much for being here. Brad Glazer is in the house. Says, greetings, Professor. What's up, Brad Glazer? Daniel Rudy says, morning, Dr. Jim. Time to reload on some Reddit puts for me, man. There you go. I sold a 50 strike put for $1.50. The stock is currently 90, man. That's crazy. I'm still in that Reddit. Short put spread. That I guess you're the one. I remember you bringing it to me a few weeks ago now, and you got out because you were able to go naked. I decided to spread it off because the margin requirements were so high, and so because I spread it off, I wasn't able to get out when you got out. And that's one example of one of the biggest gotchas with defined risk. You don't hit your profit targets as quickly as you do with undefined risk. Like you're just not going to find, the profit factor on those strategies to be as effective and as efficient as it might be with defined risk. Now, some of you might say, well, actually, Jim, defined risk is more efficient because you're using less buying power. And so when you're like measuring things per unit of buying power and per unit of capital required, it's actually more efficient to use defined risk. And that's a fair point. That's absolutely a fair point. I still think that the slowness and the lack of speed, which is another way to say slowness, it really makes a big difference with defined risk as opposed to undefined risk. So here's a really quick story for you guys. You guys are going to think this is hilarious. So when I met my wife, this is so funny. When I met my wife, she worked at a tanning salon, and I was a customer. So don't judge, right? I mean, it was 2006, right? You gotta get that, you gotta get that bronze, man. You gotta get that little something. I mean, Tony Batista knows, right? My man, he's in there 4 or 5 times a week. There's no doubt about that. But anyway, so I was a customer, and obviously I was really into my wife. I wanted to ask her out, all those kinds of things. So I went in there one day in the middle of the day. Nobody was there. I'm like, well, this is my time. This is my time to ask her out. Like, and when she says no, I'll just move on with my life. So I went in there to ask her out, and I did it like really quickly. Like I can't remember how I did exactly, but I said, hey, you want to go get coffee sometime, whatever. And she said, yeah. And so that was great. That happened really quickly. But then I just kept talking, right? Which that might surprise you guys. But I kept going. Like I wanted to I wanted to, just grease the wheels a little bit. Like, let's get this thing started right now. Like, let's get this relationship, kind of off to a good start. So she was telling me about what she did. She was in nursing school and I was in my doctoral program. And she went to go put me into a tanning bed. And then she was like, figuring out like how many minutes I would have and like level 2 and like level 3 and like with the lotions and this and that, blah, blah, blah. And it was like a very, very simple calculation, very simple calculation. And she, it was like 10 plus 8 or something like that, right? And she reached for a calculator to figure it out. And here is exactly what I said. And this is exactly how I said it. I said, you can't do basic math? And that's exactly how I said it. And I was like, wow. I was like, I came in here wanting to be clever and witty, and I am neither of those things. And so I quickly realized what I said. And she did too. She's like, maybe I won't answer your call. And so now I'm reeling. I'm searching for words. I'm searching for something to get out of this, right? And so I'm like, hey, Autumn, I'm sorry. I shouldn't have said it like that. I'm a math guy. It's what I do for a living. It's like, it just comes naturally to me. I'm like, that was really dumb. I shouldn't have said it like that, whatever. I said, but like, take what you do for a living. I said, like you. I said, like, if you put me in like a nursing arena. She said, you mean like a hospital? Oh my gosh, it was so funny. I didn't laugh in the moment, but afterwards, man, we die about that. We die about that even to this day when we talk about hospitals. And, like if Amelia gets sick, I'm like, we better take her to the nursing arena. Like, that's the way to do it. And so, I try to find a good synonym, but sometimes it just doesn't exactly work out. But anyway, I digress. Even the S&P is up down 24. So let's go in here. So let's see. RC says, this market is pulling my face off. You're probably not alone, my friend. Not alone at all. Soul Train 68, Dr. Jim, what's going on? Is number one. Man, I appreciate you. Man, I appreciate you so much. RC says, Dr. Jim, you're my hero. I appreciate you, man. I appreciate you for appreciating me. I appreciate you being part of the show. Like, thank you so much. And it means the world to me that you guys come and you support the network and support my show and all that kind of stuff. I just appreciate you guys. Kimberly says, Extreme Ownership. Yes, the Jocko Willink classic. It's a great book. It's a great idea. It's an even better idea. And so I am definitely a Jocko Willink fan. And so he's very, very solid. And so good call there, Kimberly. YouTube Jim's in the house. Greetings, Dr. Jim. Hope all is well. I'm doing great. I'm just battling this low cold, but it's no big deal. I'm still holding a short put, Oxy 45, May 2nd. Earnings before May 16th, the expiration of May. Any thoughts? Would you consider long stock sell call at the current price? Well, I mean, that would be a covered call, which, I mean, a short put is a synthetic covered call. And so it's kind of the same strategy. You don't really need to change anything per se. Okay, so you've got the stock at 36. Yeah, that's tricky. That's tricky, And so I'll give you a couple of thoughts. So number one, when you have a short put, one of the big advantages that you have is when you have a short put that's deep in the money like this one is, if you're okay holding the stock longer term, then, you can just sit on the in the money short put and just keep the clean delta to the upside. Like, keep the fact that, if there is a big rebound in the market, a big rebound in the stock, then you're going to get paid back pretty quickly, which is nice. And so use that to your advantage if that is how you're viewing this position. If it's not, though, if you're like, hey, I kind of want to be in and out, I don't really want to, inventory, Oxy for, months and months and years, well, that's when you probably want to think about having some short call premium coming in against the short put. And so that's where adding a short call somewhere makes some sense. Now, the fact that it has earnings on May 7th, that really muddies the waters. And so you said you're in May 2nd, right? Yeah, you're in May 2nd. So let's go to the May 2nd weekly. Yeah, this is tricky. It's tricky because you can't sell, you have a 42 put, right? 45 put. Yeah, so it's really tricky now. So you're short this 45 put, which is on this side, of course. I was looking at the 45 call to try to find one that you could sell. You can't really sell anything, in my opinion. You can't sell anything above 40 because there's no premium there. And so, your best option at this point, if you want to just be done with this trade now, is I would sell a call somewhere between, you've got the stock at 36.58. You sell a call somewhere between 36 and 40. and you basically just create an inverted triangle for yourself, and then you're playing time. You want time to go by, you want the extrinsic value to come out of the options, and then if it does, then you're able to minimize your loss. This is not going to be a winning trade. This is going to be a losing trade to some degree. How do you decide which strike to choose, a short 36 or a short 40? It depends on how directional you want to be. If you want to be more directional and pick up less premium, then I would choose the 40 strike. And then, if Oxy rallies back, then you'll be in a better spot. But if you want to be less directional and pick up more premium, but potentially have to be willing to take a bigger loss, then you choose the 36 strike. So that's how I would begin to think about that. And hopefully that helps there, Jim. But wow, we're done with the show. Oh, man, that autumn story took a long time. And so I appreciate you guys, though, man. Look at you guys. I appreciate you guys so much. If I missed you guys, please come back. Well, I'll be with Errol tomorrow for today's assignment. But come back on Thursday. Put your comment in early. As you see, I get to them early, and I move sequentially through the show. And so I appreciate you guys. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com. Or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with Engineering the Trade. In the meantime, guys, trade them small, trade them heavy, and stay grateful. We'll see you guys tomorrow.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
What's going on, everybody, and welcome to the most dangerous show on the Tasty Live Network. It's Engineering the Trade. I'm your host, Jamal Chandler. We got more volatility in markets, man, about a 240-point range in the S&P 500 today. Last I checked, that was about a 4.7% range in markets. It's been wild. Obviously, markets were up big earlier today, and as soon as the news came out that the China tariff of 104% is going to go into effect sometime between today and tomorrow, I'm not exactly sure of the news, things got ugly, and currently down 16 points, just under 5,100. It's, what can you say? This is a very headline-driven market. This is what we've talked about a whole lot. And I don't see, you know what? I got to say, I've never seen a market quite like this. Been doing this for 20 years now. And sure, have I seen sell-offs? Of course. We all know the sell-offs that I've seen that have existed in the last 20 years. If you're not familiar with them, well, look them up. But you know most of them, right? I mean, they go by, we can name them years. It's like one-name performers, Madonna, Prince, right? I mean, it's a similar thing. 2008, 2020. I mean, they exist, right? But the difference is this time around, and the interesting thing is, like, some of those sell-offs, I wasn't necessarily paying attention to bonds. I traded a lot of different assets classes to some degree, but actually not as many as I do now. Back then, it was mostly equities. But still, when things are going crazy, when you start to hear about certain things. Like in 2008, it was like more of the one of the things that we were paying, obviously, besides what was going on with banks and looking at repo rates. You start to look at overnight activity between banks and how much they're lending to one another. Like that was the thing we were paying attention to. This one is interesting because you're looking at bonds right now. Bonds is. This is very interesting what we've seen over the last 3 days, this sell-off in bonds. And I think that's what makes it different. So I'll look at that in a little bit. And I want to hear from you guys in the chat. Again, I'm purposely not doing any slides today and want to hear from you guys more. But yeah, as somebody has mentioned in the chat, just to get off of markets for a second, interesting game last night. What a game, man, in the national championship game. Yes, I did have Florida in my Calcutta. Thank you for the congrats, Soul Train 68. You remembered. That's right. It worked out well for me. It was nice. It was kind of nice. It was a heck of a game, though, man. It was, wow, what a game. It's all everything you want. People talk about what's going on in the landscape right now with college athletes. I really think it's going to slow down, this idea of moving from school to school. At some point, I think you're going to see it change a little bit, especially the situations from year to year to year. I just don't think that's going to happen. I think some people, what I'm hearing, like some of these schools now, they don't necessarily want transfers that are, going year to year. They want somebody that's been at one school at least 2 years. You want a situation where it's not complete bare bones when you get in as a new coach and you got to train everybody. You want to have a situation where at least a couple of players that have been there for a while can train the new people coming in, and you don't have to do as much work. And I think what you saw last night is a situation of some of those star players had been there for a couple of years. And that's what ends up happening, right? Like every league is a copycat league. If all of a sudden in football, people start running the Wildcat and it's successful, guess what? Bunch of teams are going to start running the Wildcat. The interesting and in vogue thing right now in the NFL is what? Trying to have a younger quarterback with, that doesn't cost you as much so that you can pay all the other things around him. That's what Chicago's currently doing. That's what the new the teams that are going to eventually draft Cam Ward and Shadur Sanders, that's what they're going to do, right? And then eventually you're going to have to pay that quarterback, and that's going to hamstring you, and that's just how it goes. I think in college basketball, eventually they're going to have a situation where they have sort of a 2-year minimum stay. I assume that that's what's going to happen. That's the only way teams are successful. And if you look at the two teams that were at the top, they had dudes that had been there a couple of years, and it's it's almost like it's going to be a novel idea. Like, oh my God, these guys had teams that they stayed there 2 years, and look what the result was. Telling that's eventually what's going to happen. Dude did get dunked on nasty, Don. Oh my God, that was that was a nasty. Like I know exactly what you're talking about. But yeah, it was fun. It was a fun tournament. Awesome to watch. Let's get into the platform here and look at these crazy markets that we've been talking about that have been all over the place. I tell you, it has really been wild to watch what's been happening. Let's see a 2-day chart. No, that's not a 2-day chart. What are you doing? Whatever. Let's look at today. So, like we said, market had a high of 53. It was like as soon as it got to 5,300, you do feel like a lot of people who got caught up in that quick move to the upside yesterday that were long that and choking on that over the last 24 hours decided to get out, and markets have been reeling ever since. And especially once the news came out, it was like good night. Let's see. Why aren't my closing trades putting money back into my account? Yeah, I know. Can you explain how a pairs trade in silver and gold works? Well, a pairs trade, you can do it a bunch of different ways. I mean, obviously, a simple pairs trade is just buying gold and selling silver, right? I mean, that's one of the things that the gold to silver ratio does. But you could also do a vol trade, right? Which, look, I'm not recommending anything. You can do whatever you want. I'm just telling you what you asked. If you wanted to, you could say, I want to sell a put spread. And there's a whole bunch of different ways. Like I said, you could buy gold, sell silver, or do the reverse. You could, based on what I just said, you could do it via options. You could sell gold call spread, right? You could, and again, I mean, silver is definitely one that has a little bit. No, I shouldn't say that. So you could sell a call spread in silver, and then you could, similar expiration with whatever expiration that I did. What I do in there, I did in this case. I thought I did. Let's just say it's May, and you want to sell the 34.35 call spread in silver, and then you decide that you want to take upside in May. I'm sorry, downside selling, but really long deltas, right? In this case, you want to sell, a downside spread. And again, this is one of the things about like silver is definitely a little bit more costly. In this case, you would probably have to widen out. This is probably more appropriate. And this is one where you would ideally want to look at your beta-weighted deltas in this situation prior to the trade. God, why am I blanking on how to pull that up? That would give you an idea, at least kind of putting in terms of SPY, and you can get an idea of how, you don't want to get too out of whack with your kind of deltas in that situation. So that's, one of the multiple ways you could do it. And again, you're just looking to get long one you're looking, in this case, I was talking about deltas. So you're looking to get long deltas in gold in the both ways that I explained, and you're getting short deltas in silver. You could also decide that, say you think gold vol is not that high, and you think silver vol is high. That's another way people will buy vol in one and sell vol in another. So say you decided you wanted to, sort of, in this case, you're buying vol, and there's a multitude of ways you could buy vol, right? Like right now, I'm just looking at a call spread. You could say I want to do a long call spread in this situation. That call spread doesn't make any sense, though. Let's do the 29.80. Let's just say 30.20, right? So you want to buy this call spread in gold, and then you decide in silver you want to, sell vol and sort of sell a nearer term call spread, like that's a sell vol situation. Naturally, you could, buy a strangle in gold and sell a strangle in silver. So there's many ways you want to do it. The only reason why you do it is because you think something's out of whack in one and not in the other, right? Or you think one is a lot more undervalued and one is not. So those are a couple of different ways you could do sort of a pairs trade. Let's see. What have I done more recently? One of the things I did, as you can see, obviously there's a lot of red. Most of my trades right now are either short put spreads. Yeah, I mean, I'm taking the gamble. I only have a couple of short upsides. Meta is one, and again, I did this based on the fact that, well, if they're really going to start taking down stocks even more, then these are the stocks they're going to start coming after some of these bigger, higher dollar stocks. I've seen this movie before. Once they start really selling in the market, they go after the higher dollar stocks, no matter how they go after the generals, right? So in the event that they do that, I decided to sell a further upside, and I did it up against basically the 200-day moving average here in this case. So that's why I did 575, 585. Again, I think this is actually a good environment to sell upside, because when we do get the bounce back, the face ripping rally is going to be part of it, and then eventually it settles down. And so, I think it's wise to find opportunities to sell some upside. I wish I would have sold more upside this morning, I got to tell you. And I think the next time around, again, I just, these rallies are going to come and go. They're not going to necessarily hold. So if you are short put spreads like me, you have an opportunity to, when we do hit those higher levels, be able to sell vol, particularly on the upside, because like RC said, the vol crush is going to be nuts when it happens. It's just a matter of when it happens. Speaking of the vol crush and being nuts, I do have that kind of feeling. And so one of the things I did today was buy a VIX put. This is another way of selling vol, right? I decided to buy the 28 put in May, 42 days to go. Some of you were probably like, well, why are you buying the 28 put when VIX is 50? Well, just remember these VIX options are priced off of the VIX futures, right? So if you look to the left of the screen here, you'll see April VIX is 37.30, and that's where these April options are priced off of. This expires a week from today. This is the last time you can trade the April VIX. April VIX will expire next Wednesday. And so, as you can see, this is not priced off of VIX itself, the index, right? You can see right here. Just look at the put call parity. This tells you everything. See how far this put is in the money? That's because this April VIX is trading 37.45, right? And that's where this put is being priced off of, right? So this put is $15 in the money. It's really $13 in the money, right? Well, $12.60 in the money, but obviously there's about a $3 premium, and that's almost where this comes from, where this call value comes from. So in this case, I did this VIX put earlier when VIX was actually jumping back up. It was around 28 at the time. And that's the play. Now, what am I hoping for here? I'm hoping for the vol crush, like RC said. I'm hoping for a big vol crush. Let's just say VIX doesn't get back down to 12. That's kind of crazy in 40 days. But say within the next 30 days, VIX gets back down to 17. Well, this is a win because let's do put call parity. If VIX is 17, this thing is going to be worth 11. I paid $5 for it. I'm up $6, $600, right? So that's one of those things you can do. Now, again, it's a gamble just like anything else we do. It's a vol play. It's a vol sell. I'm just getting long VIX options to do it. I might do another, maybe. I'll probably wait to see if there's more fear tomorrow once these tariffs set in, and say this April VIX gets up to 40. Then maybe I look out. And look out to the 40 strike, right? Right now it's trading 30, 31. But maybe I'll look to do another at some point. I would buy one within the, another, maybe something $5 range. But I'm giving myself some time here, and, we'll see how it plays out. But just in case those who didn't know, I'm sure I feel like a lot of you on the chat are fairly knowledgeable about this, but always remember, these VIX options are priced off of the different VIX futures, right? So April is pricing these options, and obviously May, which is the K contract, is pricing these. June is pricing, the M contract is pricing June. What else have I done more recently? I really, haven't done anything since yesterday. I did close out a bond position. I might have missed an opportunity. So I've been long this for a bit. Let's see. How long have I been long this one contract? I have been long this put since, I was long the 120 call in May. I rolled it out to actually I rolled it upside at one point on the 28th, and then I rolled it out to June on the 1st and the 24th. The 124 strike, and I have this on. Now it was up obviously because since again I did it on the 1st, and you can see what bonds have done since then, right? Big move. These last couple of days, man, I'm telling you, this seems like either China and a lot of others are selling longer dated U.S. Treasuries because they're just not convinced about the prospects of a good economy in the U.S. I think that's exactly what you're seeing. Luckily, it's so crazy. I think, what day did I do that? I bought this put spread on 4-3. So we had last Thursday, as we were making, as it started to make this move, I was feeling kind of uncomfortable with the amount of money I potentially could make in bonds, right? And I was like, well, let me just buy a little bit of a hedge, which I typically don't do. But I was like, let me buy a little bit of a hedge. And I bought this put spread that actually served me well. I just closed it out earlier today. I should have closed them both at the same time because bonds are getting decimated, as you guys have seen here and mentioned on the chat. They're absolutely getting hammered because, again, I think people are just losing confidence in what's going to happen with bonds in the U.S. So, as am I. I'm a little confused by it as well, and I think I'm going to take a profit here. Let's see if I can get out of this thing. Come on, there we go. Because I just, at some point or another, you got to reevaluate sometimes on a position, and I put that position on initially just because I thought at some point bonds were going to erase this big drawdown that they've found themselves within over the last couple of years. Again, you got to go back. Let's go back 4 years, and let's go to a weekly chart. Bonds have been rocked over the last 4 years after COVID, after inflation, and all this other stuff. And right now, I just don't know the prospects for bonds. I don't really understand it. I don't know exactly everything that's going on or what makes sense in bond land as it's starting to get sold off. Again, I mean, if this tariff thing is really going to really take hold, I think we're in a lot of trouble, and I think that's why you're seeing bonds sell off. And obviously sell off bonds and sell off in equities is really not a good thing. That's where everything really gets confusing and scary. So I'm just, as much as I have all these different equity positions, I don't want to have positions that I don't necessarily fully agree with or understand anymore. So moving into cash on that one, bro. I'm moving into cash on that one because they're just getting absolutely smacked today. I mean, you just don't see bonds down like this much in a 2-day period that often. And I don't know what else to think. So I'm out of that, and we'll reevaluate. Another thing that I closed was the yen call spread. I had the yen call spread. Again, that was one of my sort of haymakers to the market, that if things get really crazy, maybe the dollar has some serious weakness and gets rocked. And that has worked for a little bit. Again, when you look at the yen moves, but also over the last couple of days, I don't know where the prospects for the dollar are. I mean, everything is just out of whack right now. Seriously. A lot of it doesn't necessarily make sense. I can reconcile trying to get long the market with the short put spreads in a couple of names where, with the idea that, again, markets might fix themselves by a little bit in the next month. But what I can't do is sort of be long into bonds as they're getting smoked right now, as people are losing faith in, the U.S. economy. And so, boy, market is accelerating here to the downside. 50.43 right now in ES. We are off. We are almost off 300 handles from the high. What a ride, folks. This is wild. I tell you. So now yesterday we had 453 points. Look at these moves, man. 149 on Thursday range, 360 point range on Friday, 453 point range between Sunday and yesterday, and 268 point range and climbing as of today. This is wild. Would I normally want to get long into this type of move? Yeah, but it's hard to pull the trigger when you're watching markets go like this, and you already have some long. So again, I'm trying to be prudent. I trust me. I want to add some long delta, but I'm trying to be prudent, trying to be smart here. What is the volume today, by the way? ES 1.87 million. I would expect it to be a little bit higher, but sell everything now is definitely happening. So you just, what's crazy too? We got, and so we have, speaking of events, we have the CPI, I think, PPI and CPI is supposed to be coming out this week, I believe. I think, oh yeah, we have FOMC minutes. I don't know how much that matters right now, because, again, things have changed markedly since that last meeting, so I'm not exactly sure how much that's going to matter. But nevertheless, we got FOMC meeting minutes tomorrow at 1 p.m. our time, Central Time. And then you got CPI coming out on Thursday morning, and you got PPI on Friday morning. Michigan consumer sentiment, I can tell you how that's going to go. It's going to be ugly. But, Kimberly, fear definitely paralyzes. Apple, look at that. We'll talk about taking a haircut. Apple down 4% on the day, 173. What can you say? I got a deep put spread on that one. I don't think that one's ever materializing. Look at the levels that you can get these things at, man. It's kind of crazy. What was the high in Apple today? Apple was up to 190 today. What a turnaround. Wow. So, markets were definitely hoping for a rate cut. And you can see that the markets have woken up to the fact that the Fed is not going to cut rates, and Jay Powell has stated so. He did so on Friday, and essentially that's what the last 2 days of selling are in bonds, that the markets are waking up to the fact that there's no rate cut. And I also think that, you could see, China, which is one of the largest holders of foreign treasuries, foreign being the U.S., I think they've been selling those treasuries too in an effort to sort of stick it to the U.S. right now after these tariffs have come. So there's a lot at play here, man. There really is. Gold is sort of hanging in there. I haven't touched it. Look at oil. As much as I want to buy oil, I can't bring myself to do it. 58.85 is awesome. I've tried to do it in other ways. I did XLE actually last week. That was one that I got long. I'm a little bit worried about, being long the future. I'll be honest with you right now. I don't expect a 2020 style move in oil by any stretch of the imagination. But at the same time, if this is very recessionary, what you're seeing right here with oil, and that is not good. Maybe there is something worth doing in the options. Let's see. Look at the expected range down now to 52.25, 64.5. That's a pretty wide range at this point. These options are a little wide right now. Oh, this is MCL. Let's just look at regular CL. Let's see what we got here. Gosh, I don't know. I almost want to sell upside. I'll be honest with you here. This is one where, I almost would rather sell upside. I don't know if I want to sell a condor in here or not. Maybe. Maybe this is one we're selling a condor. Could work. 56% pop. I think right now a lot of the trades, if you do any, they got to be a lot more risk defined. They have to be because creative and a little bit of two-sided action, especially in equities. If you're selling, it sucks to sell upside right now though. But if you're selling downside, you got to be able to sell some upside and some other things too. Again, I have more downside that I've sold, meaning long deltas. So I'm not worried about the face ripping rally for the upsides that I sell, because I'm definitely going to make more money on the downside stuff. But I just think, it's nice to be able to, if we do fall much lower, I know I can lean on this Meta and close that and get more capital back. I know I can lean on this Microsoft. Quite frankly, I don't have as much downside as I should. And that's one of the things I've been trying to. Every time I think about it, though, it's usually when we're down here. I'm not gonna sell down here right now. I'm not gonna sell upside down here. As a matter of fact, I'm probably gonna stay away from some downside unless we get. The next time I'll sell downside stuff might be if we get back towards those lows that we saw on Monday. I think that'll be the next time. Other than that, can Jay Powell resign? Yeah, there's definitely some saber rattling going on between those two guys right now. Let's see. Right now, yesterday's open was 5,007. If we breach 5,000, I might start thinking about selling a little bit of downside and then selling some upside against it. But right now, I'm not doing anything. I feel like this is exactly kind of the level we had been trading all day yesterday. Be honest with you, so I'm not doing it. Doug L., this is an interest rate problem. It is. Yeah, actually, you could argue that one of the things Trump was trying to do in all of this is get interest rates down. Well, they did get down for a couple of days there until they didn't. And once people started selling treasuries, it almost seems like China was like, oh, how can we get back Trump? Let's sell. I really do think it's China. because it seems like a great plan, in the time of a trade war. Let's just sell these treasuries, and that's going to put interest rates back up. And then he's going to have to make a move to do something about our tariffs. That's what I think is happening right now, personally, because how else can you explain that big move in these yields over the last couple of days? I think they decided to hit us where it hurts, and that's what's happening. So, my VIX trade, like I said, if I'm going to add to anything, it could end up being this VIX trade at some point. I might look to do another put but maybe I'll wait until May VIX gets above 40. God, if it gets above 40, that means this thing is going to be trading like 50, probably, this front month VIX. I don't know. It could be. So, yeah, the rally is all gone. But yeah, that's my positioning right now, folks. I'm holding steady. I'm checking to see if we break 5,000. Maybe if we break 4,900, that's something where I could start selling a little bit more downside. But trying to be careful here in some wild markets, folks. That's the show. Thanks for watching, and as always, be smart, be patient, trade them small, and trade them often. See ya.
On today's Trader Taste Test, we are going to the first Chicago location of Voodoo Donuts. Let's go. Okay, you guys.
Voodoo.
So we got a dozen of the classic Voodoo and then a dozen of the Voodoo dozen. So.
These are basic.
Basic?
This one.
Okay, that's going to be your taste test.
Good.
How many stars do you give it?
3 1/4.
Yeah,
see, this doesn't work for me. This is for children. That's why there's cereal on top of it. This is my jam. Nice old school donut.
Old school buttermilk.
All right.
It's not a crow.
Okay, what do you rate it?
3.25.
That's sweet.
3 point. I know, because I've trained him how to be a market maker. Now we load up the flotola.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Hello, everybody. Well, I usually have the courtesy to dress up for you a little bit. Although there have been times I've done this show without pants, but you can't see that low. But, no dress shirt today. I'm way too busy. Sorry, you get the real me. Sweatshirt Tim. And, but I do have pants on. I went that far. But I've been just maniacally charting. And those of you who know me at all know that I'm usually really hard on myself when it comes to trading because, I'm very good at charting. That's why we're here. I've charted for decades, and this is the one thing I'm really superb at. Trading, not so much. Blow it a lot of times. Today's a little different. Today I've traded well, and that's a good feeling. My perception was that we were going to climb higher for some indeterminate amount of time, and I would just tough it out, wait it out before I could short again. And I thought it would take some big government announcement to make that happen, but it didn't. It just took some, the cessation of bad news. And so we climbed yesterday, and we climbed all through the night and into this morning. And as I looked at stocks on a stock-by-stock basis, they weren't all shortable again, but a few were. Amazon, right from the get-go, presented itself like, I'm ready to short, pal. And I just started like bang, 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 and found enough because I'm really organized when it comes to my in-slope charts. I've got a very organized watch list. I'm a control freak, anal retentive, call it what you will, but I'm ready. And so I had everything ready and went through, and I found more and more things that, no, it is ready to short right now. And by happenstance, President Stable Genius, they've announced the 102% tariffs or something on China, something like that. So to their credit, and with my gratitude, they're sticking to their guns amazingly. And it's bringing the kind of market that I just love. And before I knew it, I came into the day long EFA, long NVO, long TLT, get rid of all of them. And before I knew it, I wasn't light short. I was like margin short, like there's no cash left and way into margin territory. And so it's been a very good day. Because, and I'm not an Elliott Wave fanatic, but I know a little bit about it. And in my experience in bear markets, it works really well. And so my amateur offering is that I was waiting for wave 4 to finish, which appears to have transpired between Sunday's open and this morning, and wave 5 to begin, which I think we're in right now. And what that means to me is that we're going to go lower than we were on Sunday. And at some point, based on some news, this phase will finish. And then I'll be sad again because this market's a ball to trade. Because once wave 5 finishes, that'll be it for a while instead of like a day, which is what we've just gone through. What will it take? Thursday CPI maybe to drive it lower, or it could just fall on its own weight like it's been doing for the past few hours. But I believe we're going to get below Sunday's lows. And, this is a tough market to trade, and it is not effortless to be like, well, it'll play it out as it does. I mean, when I go to sleep now, I'd be like, please don't surrender, because I'm extremely short right now. But I do also know what it feels like to get nervous and take profits and then wake up the next day and find out that you were right all along and the really big profits got away from you. That's a worse feeling. There's no worse feeling as a trader than looking at the mirror and saying, this is why you were denied profits. It's not the Fed. It's not Trump. It's you, kiddo. So that's where we're at. And I knew I'd be talking a little bit this at the beginning, so I've got a deliberately short list of symbols for you today. But I think the symbols, the charts speak volumes. And in case you haven't picked up on it yet, a couple of places you can see me in general, of course, slopeofhope.com, my 21st year, 21 years, been running slopeofhope.com. So for all your bearish goodness. And if you're on Substack, I have a presence there too, slope.substack.com. All right, let's jump in and look at some charts together. Here's the spider. Now, I will say, let us keep an eye on this channel because we are, again, getting kind of close to it. I mean, it feels like the past day and a half feels like about a month of trading to me. I'm ready for Miller time here, but the low yesterday was in the same zip code as the trend line. Maybe we'll actually tag that thing. So that's worth watching, although trends are getting broken out there. So no guarantee that'll stop. Like, say, the diamonds. That was not meant to be a segue. I just realized that the diamonds have busted through their trend line effortlessly. So the diamonds are down. IWM, I was bragging about my target here. Well, we're actually at it and a little below it right now. So we have exceeded a little bit my measured move target on the small caps. That is really stretched. It's just amazing what this tariff war is doing to the market. And I will also say this. They could declare right now, oh my God, we screwed up. For the first time in my life, I'm going to say I made a mistake and everything's off. Zero tariffs. And the market would go up 2,000 points or whatever. Let me be clear on this. The bear market's here anyway. Tariffs or no tariffs, there's plenty of big issues that are going to bring to bear the diminishment of prices for a long time to come. So don't make the mistake, because some people tweeted this at me, that, if the tariffs are the only basis for this so-called bear market. No, absolutely not. It's a nice catalyst, but it's here anyway, and it's sticking around anyway. So, yeah, don't be like, it's a bear market as long as this tariff thing's going on. No, not at all. And the cubes are getting hit hard, and as you can see, and yeah, I mean, things are really, really stretched to the downside. I mean, I'm very pleased, but kind of stunned how fast this is all moving. In particular, semiconductors, SMH, because this was really exceptional. The lifetime high was last July. The attempt to get up there again ended on January 22nd. And so the SMH was at about 270. And we're at around 170 now, 179. And so we've been falling in this whole series. And so we were here. That was just before Liberation Day, which, he said would be remembered it's one of the biggest events in American history, which is preposterous, but it's definitely memorable. But this is pre-Liberation Day, and then we fell on Thursday, fell on Friday, fell hard yesterday, but reversed and blasted higher today. And the cool thing is today's high basically put us where we were at Thursday's low. So we kind of took a time machine back to Thursday, end of day, and we're permitted another chance to short some stuff. And as I said today, I came in long EFA and got out early, and that worked out because it's actually down now. But yeah, so I came in kind of a mix of long and short. Speaking of our leader, haven't looked at this in a while. Here's DJT. It's been quite a ride, and on this one we've fallen from in the 70s down. We're in the teens. So whatever that is, negative 80%, something like that. And of course, that looks like a blue chip compared to this sucker. The Trump coin, way in the single digits now. It's about a negative 90% return on that, negative 90%. So David Sachs doing a crackerjack job bringing crypto to the land. But yeah, that's sort of hysterical, grinding around lifetime lows on Trump coin. And a little bit more serious crypto, here's Bitcoin, which is vastly important to the psychological landscape. I've said over and over again, kind of the zeitgeist I always say about the asset risk on, risk off. It has not broken support, but it might. It might. We're not that far away. Support is something like $73,500, which is about $3,000 away. So, as I've said before, there couldn't possibly be any more friendly administration to crypto. The laughable Bitcoin reserve idea, and Trump's, endless mollycoddling and pandering to those people, who have become eerily quiet lately. Usually crypto bros are kind of like religious zealots. You say anything against crypto, they like hammer you. They're kind of like being a little bit more church micey right now. Weird group though. Be careful. But yeah, Bitcoin is down again, but it has not broken support. If it does, that'll be kind of a big deal. I've also would hammer home the ZERP here, XRP, Ripple. I pointed out this diamond pattern when it was here breaking down, and I think this thing is going to get completely destroyed. In the midst of all this, of course, in a very serious, real world stock strategy, MSTR, this is down almost 9%, down $23. This has lost over 50% since it peaked in November, when all the delusions that the new administration made crypto, Bitcoin worth $1 million a coin, et cetera. This has been breaking down, and there's still some more breakage to go. But the thing is that I think Saylor's average Bitcoin purchase price is something like $64,000 or so. And so it's still profitable, but should it sink, should it cut below $73,500 and head toward, why are all your assets in this loser? It could happen. I keep saying MicroStrategy because that was their name for a quarter century, but strategy, I don't trade it myself, but it's very interesting to watch because this is tethered, so to speak, to Bitcoin's fate. As short as this list is, I'm not even halfway through it, so we're going to really pick up the pace because we have 90 seconds left. These are just some of the stocks I shorted early, and I emphasize early today, mainly because they were near important price caps. Amazon, our dear friends at Goldman Sachs. I'm just sort of highlighting the lines of stop loss lines. They're not all necessarily cranked up to the gaps. They're anchored to some kind of important point. Interactive Brokers, Meta, Micron. This is a beauty. Look at this. Breaking a multi-decade trend line like so, and a very pretty gap. Just this is a really fun market for a kind of a classic chartist like myself, because there's so many good setups. NVIDIA, you've heard of these guys. Beautiful play here. Broken trend line and a gap, just squeaky clean. And a little more obscure Valero Energy. Very pretty top on that one, and a nice gap as well. I would also point out, importantly, crude oil is finally really breaking, because we had all these little pipsqueak patterns that really never went anywhere. And most recently, we've been watching this one, which has, honest to goodness, finally broken it. And so that, I think, speaks well to the kind of sea change going on in the perception of what the global economy is going to look like. That is, don't underestimate how important that failure is. This is an incredibly important rupture in crude's price. And finally, here's the ES futures. It's being very, very Fibonacci friendly. And I had thought, and actually tweeted out, that we were heading back up to 55.37. Doesn't seem so. We're reversing here. So the next big test, obviously, is the low from Sunday session. And, should that break, how low might we possibly go? Well, 4,500 or so, it seems, is open. But we'll see. We're going to have to kind of take this a day at a time. All right, I'm a little over, but I hope you understand why. Hope you're doing all right. Hope the charts are helpful to you. And good luck to all of us. Thanks, and I'll see you tomorrow. Bye-bye.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
Well, we got No Vanetta today. She's out on a secret mission. Is this correct?
She's on a secret mission in New York City. But yeah, we're doing a funny little promotion, and we're going to see how it goes. And there's an outside chance, a very small chance she gets arrested. Yeah.
So you guys sent me to New York to deface a national treasure, and I did not get arrested. No, in partnership with a testicular cancer charity, we mounted cherries onto the back of the Charging Bull on Wall Street, and it was awesome. We did a test run last night at midnight. People went nuts for this. Some guy yelled at us, and this other guy was like, oh, he's just cranky. But it's all for a good cause. We're out there for a couple of hours. It took months of planning. It takes 2 people to hang them because that bull's ass is pretty tall. So that's why I'm in New York.
Those cherries got some good hang to them.
Mm-hmm.
Yeah.
Friday might be interesting. I'm not allowed to work on Friday. I have committed to my family because the Golden Prince is getting married.
I know. Congratulations.
So I have committed that I have to do family stuff, like take pictures.
You get.
I'll take things that Tom excels at for 100, please.
I'm just going to be a good,
attentive husband and father to the groom.
I'm never a good attentive husband. What I'm probably best at is
dancing. I watched you at the last wedding. You really excel at dancing.
I excel at picking up the tab.
Uh-huh.
My big question for you, and Slappy as he's gotten older.
What do you want to know about Steve?
Do you think after dinner, it was his 60th birthday?
No. Don't do it.
Beth knows Tony better than I know Steve.
Do you think he...
I have no idea what you're talking about, and I am just going to move on from this conversation. I'm with Beth. No.
That was like Minority Report, like a pre-crime Omaha. You know, like she knew the Omaha was coming. Like she got the little ball that came down and was like, okay, Tony's gonna go there.
Get the full scoop by checking out the archives at tastylive.com.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at tastylive.
I think I went down the typical path of investing in stocks, and I was really frustrated in the sense that it was a buy and hope type strategy. And so I was looking at, different ways to learn about options, and I saw Mike and his whiteboard, and it all made sense. There's another world out there with options. It gives flexibility. It's more capital efficient. And tastylive does it again. They teach it in a way that is fun. It's easy to understand, and you're learning from people that have done it for 40 years.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend, and I want to go on record and say I am officially scared by today's actions. E-mini S&P's down 117 after being up to 5305, Sadnov. My Taiwanese sources, known as the research team this time, and my friend Chris has told me that this has been the second largest intraday point range in history for the E-mini S&P. Sadnov, NASDAQ down 470. We were up 3% or more today. We've been down 3% or so, almost 4% in the Russell. The Russell was the weakest of the group, the first one to go red today. Dow down 625. I mean, Sadlov, it's an all equity day here, but when Apple has a $20 intraday range,
yeah. I mean, there's a bunch of things to talk about.
You got me scared.
So I'm just telling you how I felt as a trader, because I went home long last night, and I'm still long now.
I did too.
I had an unbelievable. I felt unbelievable this morning about how well I did, and I feel like throwing up now about how bad I'm ending up the day. Yep. And I don't think I came in this morning and saw the SPY was up 150, let's just say, and then they were up 200, and NASDAQ was up over 500, and I thought that there was a chance that they could, and we talked about it this morning. I said, I don't know if they can hold this rally. I don't think they'll go down much on the day, but I don't know if they can hold this rally.
I thought we would settle in up 150 points on the E-mini S&Ps. I was off by 300.
Totally fair assumption. But we both thought that they could go back and kind of test the lows. We just didn't think it was today. And
the velocity and magnitude of the speed of these moves is too much to handle.
Well, let's just say this. The first time that the S&Ps went down, they were down 20, and I tried to buy them. I missed them. I was like, damn it, this is the one chance I had. Like, that's the way I was thinking. I bought some NASDAQ futures, and I scalped them for like 50 points, something like that, crazy. Nothing. I mean, now 50 points is nothing. But the second time they went down there was this time, and I bought them, and I lost 250 points.
Unbelievable.
Lucky thing I got out. But I guess I'm just not. I don't care about my scalps. I'm just saying that the mentality, of the magnitude of the moves that you're talking about, like you know how I trade. Sometimes I'll sit there and trade for 5 or 10 handles.
Sure.
And
sure.
now we're trading for 200 handles.
Yes. And you actually think you have a shot when you're 50 handles underwater. Like, you actually think like it's not that big of a deal. Like, that's how much volatility has moved. I mean, volatility 40.65 Sadnov. Volatility's been moving. It's back near its highs, which I didn't think we would see again, not in this cycle. But volatility was moving 25 cents at a clip, Sosnoff.
Yeah.
It was like they were changing in 25-cent increments.
You and I talked on the phone about an hour ago before we got to this, before we were setting up last call, and you said to me, we both talked about joking, we're going to buy a little Reddit here, and I'm going to buy a little Apple here. So I bought some Apple.
Because we traded so good yesterday.
I know. Well, I sold Reddit today at 98 and change or something. I sold Apple at 88 and change, and then I bought Apple at 176. Sold it at 178 this morning. Bought it back at 176.
No, you sold it at 188. 188.
Yeah, 188. I'm sorry, 188. Yeah. And I thought I was a genius buying it back at 176. And then I bought more at 173. And now it's 170. In the case of Reddit, we sold it at plain 98 this morning. Bought it back at 90 and 88 and thought, oh my God, I'm a genius. But the reality is all these other positions, everything cratered and collapsed. I went from a green screen this morning to a totally red screen.
A real good green screen too. I mean,
really good green screen to one of my worst days ever in the top 20 or 30.
And you trade and I bet you think you traded well.
I couldn't have traded better. I sold so many thousands of shares of stock pre-market this morning when SPOOs are up 150. You've never seen me do that before.
I know.
Never. I just had my finger on the trigger and selling stock left and right all morning. Never covered a one lot of it until this afternoon, and when they're down 100, and it doesn't matter. They exploded volatility all over the place. This is a massive move. The /VX is up $7.50.
22%, Tom. 22%.
Yeah, I understand.
On top of 50% moves. I mean,
So what you're seeing right now,
I did not have it on my bingo card.
Yeah, no, nobody had it because this morning they just looked too good. It was just, I kind of felt like this morning, I'm like, the reason I'm selling into this is because it's too early for this. But I also I had to leave long deltas because you don't want to miss it, if it keeps going higher.
Sure.
And now I'm going to say a couple things that are going to be a little controversial here because there's some things to me that don't make sense. My most aggressive purchase today was in bonds. I lost money in there because I started buying them at 116.23 and they're 115.23, and I bought some all the way down here.
Now your thesis was you were thinking that bonds have been strong throughout the sell-off of the market.
On Thursday and Friday, bonds exploded. They went from 117 to 122. They exploded 5 points. It was a flight to quality. My theory was if the market is going to turn around, which I thought it could, bonds would explode. But they didn't. They didn't, which on the one hand is concerning, and on the other hand, it leads me to think that either the S&Ps are not going much lower from here, or bonds are going to rally 5 points tomorrow. But I think it's more like the S&Ps are not going to go that much lower. But there's also some other concerning things looking at the commodity markets, and I'll list them off. One, volatility. The move in volatility is not even remotely suggesting that the fear is over. You got
to respect this move in vol for sure.
Yep, you got to respect the move in volatility. I completely agree with you. That's number one. Number two, some of the other
flight to quality hedges, just they're not acting right. Gold was up 50 this morning on the up move. Now it's only up 20. And I've been talking about bonds all day. I mean, bonds down almost 2 full points after being down 3.5 points yesterday. That's 5.5 points in 2 days. That is a massive move to the upside for interest rates. Absolutely freaking massive. We don't see those moves in interest rates to the upside when the market is crashing. We see it maybe when the market's, when the market's exploding, or I don't know, but you don't see when the market's crashing.
Yeah,
ever.
Chris just because you're talking about interest rates, Chris just sent this to me. He says as stocks hit session lows, Fed funds and the 3-month SOFR futures are favoring the first 25 basis point rate cut in May, followed by additional ones June, July, and October right now.
Yeah, well, let me tell you something. These are not trading like there's a rate cut coming the last 2 days. I mean, you can say whatever you want, but when at 115.25, they're not cutting any rates. If anything, they're closer to a raise than a cut. I mean, how could you cut rates when they dropped 5.5 points in 2 days?
Yeah, I hear you.
And then just here, I'll give you both cases here. The bearish case is the easy case. They just went down too easy. They put up a fight for a half a day yesterday and for a morning and for half a morning today. And then they ran out of bullets. That is the bear case. And then that's the scary case. And then the bears took over and they just, to flip the NASDAQ futures around by 1,000 handles, because we were up 500 and something in NASDAQ this morning. We're down 500 right now. To flip NASDAQ 1,000 points, I don't know that I've ever seen that before.
Sadnuf, you're underestimating. It's 1,340 points.
It is?
Yeah, 18.3 and change is the high. The low we just made at 17.17.
I didn't realize you're telling me we were up like 700 points this morning in the NASDAQ?
That's the highs.
Okay. All right. I didn't even I must have just spaced out. Didn't see that. That's the biggest turnaround I've ever seen in the NASDAQ index. I've never seen anything like it. And so that's the bear case. If you're one of those trend people, which I'm not, but if you're one of those trend people, then that's your bear case. Your bull case, which I have to make both sides. Your bull case is you've been waiting for capitulation and you've been waiting for essentially that confirmation of capitulation. Like you could argue that you capitulated prior to the opening yesterday morning. And then you could argue that now that, when all the markets are open, everything, you have this mass selling, this unbelievable capitulation that today you're not quite back to the lows from yesterday, but you're close. You're within 100 points in the S&Ps. And you can argue that you have this, back-to-back kind of capitulation. Maybe there's one more of these in here, and then they kind of, and then that's it. The selling dries up. You can argue that this is what you were waiting for, Tony. This is the not that you were hoping for this, but you can argue that you remember that you said we haven't seen that panic. You can argue this is that.
Yeah, you definitely could argue this is that during intraday trading. Yeah, 100%. Because I think we had it yesterday too on the opening and the overnight action. But yeah, this is.
It didn't feel this bad yesterday morning.
No, it didn't. I didn't say I was scared yesterday. I was scared today. I did. I'll go on record. This was a scary move. Scary move. I didn't play for it. Didn't have it. It was a tale of 2 days, just like you said. The morning was phenomenal. And I even traded intraday real well, caught a couple of moves back and forth, and then got clobbered, Sosnoff. Then just got clobbered.
Yeah, I think we've been so used to as traders, we've become so accustomed to markets that when they sell off, they come back. That I think that the rally yesterday afternoon and the subsequent rally this morning, a lot of us thought, okay, this is the way the market's been for the last 15 years. Right.
I actually traded him from the short side, coming in long, traded him from the short side after that. And the problem was nibbling at prices that I thought were better than the sales I made. I mean, I don't know if that sounds.
I agree. I agree with you wholeheartedly. I thought the exact same thing. I thought the prices I bought stuff back this afternoon was better than the sales I made.
Stealing.
Yeah,
I thought I was stealing.
I felt the same way. This morning, I felt like I was selling them too early. I did a little bit, but not really, because you're never going to pick the exact top. But I didn't mind. This afternoon, I felt like it was a gift from the gods.
Yep.
I didn't think we'd get them back at these prices.
Nor did I.
Now it's going to be, now you're going to have, now you've got a really difficult story to tell, because now you've got the bulls are shaken, no question about it. Because if you thought yesterday was the low in the morning, now you're shaken. Because and you know that a lot of people bought a lot of stuff today.
And rightfully, yeah, of course. I mean, listen, I feel like I'm one of those. I mean, yeah, 100%.
I mean, if you asked the same question that you asked this morning, could we make new highs? If it was this year, this morning I said, yeah, because, we're up huge. You kind of got that feeling.
You put the kiss of death on us, odd enough. I blame you completely. You and that other kid, what's his name? Scott? Yeah, I blame him too. Scott had made a bet with me, or he didn't make the bet with me, that we would be, unchanged. It was a 5% chance that it would happen. I wanted even money. He wouldn't take it. He would have won by 150 spook points out there. He would have won by 3.5%.
See, he should have taken it just so he could face you. Like Scott, that's the way Scott gambles. Like, if he doesn't have any edge, he won't do it. But you sometimes
who do you think taught him that? You.
No, I would do things just to.
You haven't made a bet that you weren't a lock to win on entry ever in your entire life. I make spiteful trades. You don't make spiteful trades.
I don't make spiteful trades, but I make trades sometimes where I know that if I'm right, the pain will just be like, to beat you on that bet today would have been, for Scott, he would have been, it would have
been something you would put on your tombstone. Yeah, I get it. I understand.
Yeah. Anyway.
Hey, even the S&P just rallied 20 handles. Does that mean the traders were going home short? Now they covered them a little bit?
I don't know. Honestly, I don't know what it means. I think most of the traders were already out. They just rallied 35 handles.
Volatility has moved a point in the last 4 minutes. I mean, I'm not reading anything into it. I'm just saying that's $1,000 on every future, just in a /VX. That's how.
Usually on Wednesdays, Tony and I do, we have what's your assumption? And you can send in your assumptions for tomorrow, tastylive.com/assumptions. I'm not sure that we will have a regularly scheduled program. We did today, and I feel like we should have, because the market was up big. But I think tomorrow we need to talk about markets. And so we may be, if you're
taking phone calls,
we may be taking phone calls, and we'll take as many as we can get, starting at 7:00 tomorrow morning Central Time, because I think there's so much to talk. I think what we're looking at is kind of a once in every 5 or 10 year type of activity. You don't get volatility over 40 in the VIX futures, except for, again, it's happened 7 times in 40 years. So right. This is not normal. And I think that we should not waste the opportunity. We should not waste an opportunity to talk about some of the different things that are out there. I was sitting at the big boy table today, and your son, Nick, came up to me and he goes, and at the time, Tesla was unchanged. I'm telling you, he was unchanged. So the S&Ps were up maybe like 20 or something, but Tesla was unchanged. He came up to me and he said, Tom, where do you think the Tesla May 100 puts are trading? Don't look.
I'm not looking.
Tesla, this is May 100 puts. This is back when Tesla was unchanged to up small in the day.
May 100 puts for expiration? I mean,
35 days.
If they were $1, I would say they were expensive.
So I said to him, same as you, as an ex-market maker, I said, probably around $1. He goes, try $1.50.
That's unbelievable.
And so I sold some at $1.50.
What, the 100s?
Yeah, the 100s.
They're $2 now. That is crazy.
I'm out 50 cents on them already.
Yeah.
They're $2. The Aprils that expire in 9 days at the 100 strike are probably 50 cents. I'm not looking.
No, they're the hundreds? Yeah, 40, 40 some odd cents. Yeah, 45, 45. Yeah.
Anyway, but those expire. That's what high volatility is. I mean, the May 100 puts in Tesla. I mean, if Tesla, I
think the April puts are a better sale at 50 cents than the May, in my opinion.
I agree. I didn't even look at the Aprils before because when Nikki said that to me, I said, well, there's no way these things could be, I thought they'd be 10 cents.
Sure. I agree with you.
I agree with you. I just looked at them, but when you said it before, I just thought, okay, I should sell the Aprils instead. But I guess my point is that we need to have discussions about some of the things like this that are out there because Tony, this is the kind of stuff. I don't want Tesla. I don't like Tesla at all. Well,
you have a fake Tesla now. Yeah, sure.
I don't want Tesla to go to 100.
Of course not. Nobody does.
I'm long Tesla right now.
Sure.
So I think based on this.
Well, I don't think anybody wants any company to be cut in half, regardless. I mean, I would forget about Tesla, whatever it is.
But I'm telling you,
even the S&P just rallied 50 handles. They're down 100.
Yeah, they were just down 88. I mean, they just rallied 6. Yeah, but the crazy thing about this is, they're moving around basically, 10 points on a 10 lot, and. Please use limit orders. I mean, unless you need to close something, but if you're opening something, use limit orders. If you miss it, you miss it. If you're closing something and you want to put a market order in, sure, go ahead. But if you're closing something, if you're opening something, just use a limit order and don't use a marketable stop. Use a stop limit if you're using stops at all. Just protecting you because some of these things, I bought a NASDAQ future before when they were down 50. And then I was about to enter an order to sell it. And the next thing you know, the next tick was 100 points higher. Like it literally 100, like something happened. So you got to be really but that could work against you too.
Yeah, of course.
Yeah. So did we just see was that the capitulation?
Oh my God, I can't keep calling that's the capitulation, Tom. I mean,
I know.
Yeah, I mean, what a difference a half a day makes. I mean, and this is what's so wild about our
Apple
game.
Was just trading 169. Now it's 172.
It was down $11, only down 9.5. Yeah,
it was in the 169 handle. It just rallied $2 while we're sitting here talking basically nothing.
Right. It had over a $20 range today. I mean, Meta is a $500 stock, but it had a $4,500 range. I mean, these are 10% moves in stocks and stocks that are not small. We're talking, Apple, Tesla, Meta. These are the stocks. I mean, Google had a relatively tame move of only $10.
Yeah. I mean, Google, Netflix, NVIDIA had very tame moves today. Stocks with the big moves would be, I thought Amazon, Apple, Meta, Tesla, because Tesla was up like $12, I think, this morning. And then, AVGO had a huge move. MSTR had a huge move today. Actually, I take that back. Netflix is even up on the day. The Qs, oh my God, the Qs had, they're like the Qs probably had a $20 move today.
Yeah, they did. I think it was over $20, Thomas.
I'm just guessing off the top of my head. I don't know.
35 handles, Sosnoff. 34 handles, something like that.
Yeah, that's right. Actually, now I'm thinking of, crazy. Yeah. That's insane.
Yeah.
QQQ.
Yeah. Ivy ranks 125. Remember you were talking about those Ivy ranks this morning? They're all back, Thomas. They're all back.
Yeah.
So I sold Q strangles when volatility was in the Ivy rank was in the 90s. I thought it was a gift from the gods, Sosnoff, a gift.
Well, we're going to talk about all this stuff in the morning because there are some, I have some Q strangles on where they were up a lot of money this morning. They're down a lot of money right now. I think they're going to be an incredibly interesting play tomorrow. And boy, what a wild, just an absolutely wild turnaround. They moved Q strangles today that I have on moved $7.
That used to be a month, a volatile month.
That's more than a volatile month.
Yeah.
Yes.
A volatile month.
And I don't understand the bonds here at 115.13, down 206 on the heels of being down 315 yesterday, or 3.5 points. It doesn't. There's something, Tony, that the market
don't usually get it wrong by 7% top to bottom.
There's an old saying, we used to say it on the floor all the time: the spoos don't lie, and the bonds don't lie either. And there's something weird going on which suggests that the suggestion to me has to be that somebody out there is dumping our bonds at, like, there's somebody dumping our bonds into the face of this market sell-off like there's no tomorrow. Like, they don't give a crap. They're selling not every U.S. asset. They're selling our treasuries at a pace we haven't seen.
Oil had almost a 4% move to the downside, $2.20, so we don't even talk about it. That's how busy it was in the equity markets today, Sadnov. And bonds, and you've been talking about them, but a huge range in there. I mean, a $3,000 range on one bond is just a big move.
Yeah, but that's after a 5.5 point range yesterday. And you got to remember, the annualized year is only like 15.
Yes.
And they moved 8.5 the last 2 days.
My Taiwanese sources.
Taiwanese is not bad, though. That will solve a lot of the world problems.
Well, they say that China, I was reading what they were saying, China is dumping bonds just from what they've seen.
It has to be. China's like, all right, listen, the only story out there, I just bought bonds at 13. China has to be dumping bonds at a pace that I don't know that we've ever seen, or it's been decades. And I don't blame the Chinese for dumping our bonds, but when you start to think about it, what impact is that going to have on interest rates and whatever the Fed is going to do? At this point, at 115.12, the Fed is going to have to raise rates, not lower rates.
Stadnov, it would be news any other day, but even the S&Ps in the last 5 minutes or so rallied about 80 handles.
I have them at 70, but yes.
Okay. I love you, man. I'm going to take a quick 90-second break, and I'm going to come back with more Tasty Live after this with the Overtime crew. Peace.
Craig in New York City, what's up?
I just want to say, I've been with you since the very early days of Thinkorswim, and traded all kinds of markets here and there. And I got to say, I could be off so much worse if it wasn't for what you guys have sort of drilled into me over years and years and years. And so I just want to thank you, because you could have easily just taken the money and run when you sold Thinkorswim, and you didn't, and you started this. And you basically have just given me this full education in this thing that was completely foreign to me many, many years ago. And so even though I've lost money in the last few days, you've saved me a lot at the end of things. Like, losses could have been catastrophic, and they're not. Cool. So I appreciate you.
I hear you.
I appreciate you guys. Thanks so much.
Thank you, man. And I appreciate you holding on the line to say that to us. So thank you.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Stocks go up and stocks go down. Markets move. Beta is a way to measure the movement of a specific stock relative to the market as a whole. In simple terms, it tells us if the underlying has more volatility of price movement relative to the S&P 500. Beta of 1 is our control here, SPY being the underlying. If the beta of a stock is less than 1, it would mean the stock typically moves less than the SPY. If the beta of the stock is greater than 1, it means the stock tends to move with greater volatility than the SPY.
Crypto is better when it's tasty. The Tasty Crypto Show, hosted by me, Ryan Grace, and Frank Caberna, will help traders of all levels learn DeFi trading. We'll provide our insights on altcoins, crypto industry news, and blockchain education. And we'll have you swapping, staking, and trading using derivatives in no time, all using the Tasty Crypto Wallet app. So don't fork up your chance to become a crypto master. Watch Tasty Crypto only on Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Are we having fun yet? It's Tuesday, April 8th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan, as we take you through the rest of this trading day, 55 minutes until the futures market closes. And what a day it was. Before we get there, of course, if you're on the platform, if you're on the website, tastylive.com, come over to YouTube, join the chat, tell us what you're trading, what you think of this wild intraday reversal. Yesterday marked the largest intraday point range in the S&P 500 history. Today clocks in as number 2. The volatility has not disappeared. We go into today's market looking at the charts with stocks down at 50.20 right now in the futures after peaking at 53.03 and change here in ESM5. This occurs in a day where VIX drops down below 38, only to find itself into the end of the session back near 52. We've not seen action like this perhaps ever. Today is the first day in history where we have a market that gaps open 3% higher and closes down at these lows. We've never seen a day like this before. In fact, the only other time that's related to this in history, October 14th, 2008, which historically was not a great time to get long the stock market.
Yes.
Ilya? Sometimes bears wander into the arena where the matadors play.
Yes, they do.
Did you get the horns?
I wasn't loving it on the close. I felt pretty good about it going in today thinking, well, there was, in fact, a little bit of an exhaustive moment there Monday. We did have room for a little bit of a bounce. Very good, very good. Because, of course, yesterday, counter to all of my bearish leanings which remain, I decided to sell a little put spread action in SPY and the Qs. And it's not looking anything like an issue here, but of course, all the gains that were there for most of the day have completely evaporated because here we are again into the close with absolutely no confidence whatsoever. I still think we might have room for a bit of a bounce this week because the hopium around Fed rate cuts kicks off as of tomorrow with FOMC minutes. So maybe we're due for a little bit of relief yet, but man, was this attempt soggy.
Attempt soggy. Dylan, we have such a generous oligarch class here. Luminaries, people like David Sachs, who this morning at 9:57 decided to tweet out that the panic over the tariffs was over. S&P 500 decided to top tick him a few minutes later, and we're down 5.7% since that tweet.
Obviously,
these oligarchs are a joke. What's that, Ilya?
Obviously, we're not happy if the markets stabilize. Anytime there's been a rhetorical opportunity over the past 48 hours to stop the bleeding. Anybody in the vicinity of the administration has taken their shot to renew the selling.
Dylan, it seems that things really kick off today as we try to measure up a response from China. This morning, the Chinese yuan starts to break down to a new all-time low since it went to free floating convertibility a few years back. U.S. stocks, of course, taking it on the chin while our bond yields continue to press to the upside. Dylan, is this the new evolution in the trade war? Are we looking at a market that could potentially see FX channels?
Imagine we got the most volatile stock market in history, 5% intraday range in what are we plus 3 trillion to minus, it's like a $5 trillion range on one day, or $4 trillion range. The obvious answer is nobody has never in the history of the stock market has anyone ever had less of an idea that, because you now have Liz Truss in charge of the largest economy, the largest, most relevant, most powerful economy on earth. And the only thing that's keeping the stock market, every time the stock market has any buoyancy, it's because the stock market talks themselves into the idea that the President of the United States is presenting the position that has been presented on behalf of America relative to the world as a negotiating position that will be changed, and changed quickly. And so every time the market gets a little lift, you can see all these, I guess these are intradays here, but whether we've seen this over the last week where you get these lifts, and it's because, there's going to be a bilateral, the bilateral thing with Japan, or China this, or a carve out for cars that, or Giorgia Meloni's going to fly in from Italy and save the day for Europe, or whatever. They'll grab any narrative, or Trump's he's a deal maker. He wants everybody to think he's crazy, and it's part of the plan, and he's just never going to do it. And so far, every time the market absorbs some optimism that to discount the probability of the actual absurdity of the proposed tariff regime, not just from the president, but implicitly from the entire Republican Party, because Trump is functioning at this point with the implicit and explicit support of the Republican majority in both houses of Congress, which doesn't get talked about. I mean, the Republicans collectively should really be wearing total responsibility for this, which is comical when you think about their posture as fiscally prudent and sophisticated and what all their bullshit.
But how do you really feel?
Let's put it this way. You are at a moment when anybody who claims to understand the future is full of it. One thing that's sort of obvious, I guess, would be that, if you are, that there's an opportunity to sell premium somewhere, some way, maybe, but for the fact that, look at these charts. Look at the size of the intraday moves. I mean, these are currency moves. Currencies typically don't move like that in terms of day to day. I mean, you're kind of flipping through all of this. But the obvious thing would be to look to sell some premium. But God help you, even there, my good friend Ilya hasn't bothered, with selling a put spread in years. Finally eases into the shallow end, only to find himself up against a $5 trillion round trip that ultimately worked the wrong way. I don't see how any prudent human being would not assume the position of getting smaller and standing by.
Indeed,
as a rational position.
Absolutely. And I added a little bit of risk-off exposure to counterbalance this by buying a little put vertical in crude today via USO because I think it's broken down here through some big levels. But indeed, I mean, this is one of those times where you have to be really nimble and really take to heart that if you have strong convictions that they're loosely held, and if you don't have strong convictions, maybe hold them even looser, because this is not a time to extrapolate anything. I'm still short dollars and long bonds and a little bit long risk via those verticals and a little bit short oil. And so my exposure is all over the place, and I'm just letting the price action kind of.
What about a long bond position? I mean, how do you feel about
I still have one on.
Behavior?
I still have one on. Obviously, one of the, I think, biggest things that one can really scratch their head about in this whole thing is the ridiculously massive bond sell-off at the start of this week. I mean, that candle is just how one even I mean,
China.
That's just. You're saying China was dumping treasuries? That's your argument, Chris?
If you're going to have if the cost of the tariffs on China are $640 billion, given the 104% effective tariff rate, that's obviously going to be a level of cost that the American consumer, American businesses can't bear. So we're not going to trade as much with them anymore. And if you are going to defend your economy from this, given the trade elasticities, we talked about this on Futures Power Hour today, tweeted it out last night, put out a little chart today again, so just check my Twitter feed at CVECUFX. You'd have to see a yuan weaken dramatically to offset the tariffs. But the ways that you would do that is, well, hey, we're not going to trade as much with the U.S. going forward. Why on earth do we need to hold their debt, right? The whole point of us holding their debt is because we're recycling dollars earned from the trade and putting it back into the treasury. So we need to float some liquidity here and maybe sell some gold and flood the market, just start buying some foreign currencies and adding them to our balance sheet here to put downside pressure on our own currency. But Ilya and I seem to be at a disagreement over this.
I just think 930, and I take your estimate completely at face value. I think it's correct. It's a long drive from here.
So just to work through that math, by the way, it's the cost of the tariffs over China's total exports, which is 18.2% or so. And then you divide that by the elasticity factor, which in this case is 0.65.
Yes.
It's a simple way of trying to figure out the math.
Yeah, I mean, I have absolutely no qualms with the math whatsoever. And so let's take the math then as given. So if we look at where we are on this right now, USD CNH, we'll say, is our baseline for a real-ish market. So 7.43, let's call it, 7.4425 is where we are here, give or take. So let's say we go to 930. I mean, that's a lot of dollar appreciation in the face of a Fed that's going to maybe look readier to cut. In fact, if you look at Fed funds futures, there's already 100 basis points priced in for this year. That's just this year. And then next year between one or two, but at least one. So that's a lot of headwind for the dollar. And so who wins here? If China really wants to have at it with the Fed, and that's what this is, the level of chaos that's going to play out here could be dramatic enough to give us a stock market that's in free fall. Because essentially, if you follow the logic here, and I don't think that it's necessarily the case that China isn't doing this. They might be. But the mechanics would be they're sitting on a ton of U.S. government debt. They begin to sell that debt, and yields go up. And the pool of those yields ostensibly drives the US dollar higher because it becomes a higher yielding thing. And if you were to say, well, okay, but what about risk aversion? Well, in this sense, that would be positive for the US dollar too. So if that were to happen, the US dollar drives higher and dollar yuan surges maybe to 930. Is it feasible? Sure. Sure. But I think we need to think the Fed is going to be slower than maybe the markets hope. If they have to abandon all of this repricing of rate cuts, then it's feasible, but I don't see it yet.
What about the four companies that were benefiting from the idea of America as a closed economic system that does not trade with anyone? AutoZone or whatever. We were looking at those. I mean, is there something performing right now that is the winners of this chaos? Like if America is closing its borders to all interaction with any foreign nations, or is it basically at the point now where nothing? Where basically the economic catastrophe caused by the preposterousness of the very supposition of America sealing its borders globally to all economic activity is inevitably catastrophic, even for purely domestic U.S. companies.
I think it seems like it's going to be catastrophic for absolutely anyone.
All economic assets on Earth.
Absolutely. If only because the proposition is so economically damaging, considering we are the world's largest consumer market by a long mile, and the world's financial center, and the world's reserve currency, that you get the kind of panic that becomes a correlation 1 panic. And all of these nuances of, well, this company is mostly domestic and this one, nobody cares. They just want to dump it all, go to cash. I'll see you later. This is nuts.
Gold?
Gold also. I mean, if we look at how gold has performed so far, they're dumping it also.
So, I mean, they're dumping. Is there anything that's not getting dumped here?
If you can move it,
is still holding up okay.
What?
If you can move it right now, it's probably getting sold. I mean, that's been the attitude the last few days: raise capital, raise cash. Victor had a great chart that he put out the other night. Everyone who's saying, where's the market going to fall to? You have to basically pick a number, pick a multiple, pick an EPS target. My issue, as I've gone back and forth with him, and I'm sure we're going to do this publicly. Ilya, are you and I swapped for today?
We are.
Okay, so later today I'll be on the Price of Truth. How on earth do you determine the E right now in price to earnings?
Can't do it.
We're in complete
welcome to the problem that the Fed has in kicking off these rate cuts. Where even is the board to target at? Never mind the target.
So some very rudimentary math here. And listen, we've granted the Trump administration some slack here with their formulas, so we're going to grant me the same amount of grace for mine. Let's take the number of, let's just carve out CPI and look at the factors that go into CPI that are related to trade. And let's take the Chinese portion of those factors that go into our CPI calculations, and let's multiply them by 1.04. 104%. What do we get? Inflation right off the bat, if you just have everything else ceteris paribus, assuming no other changes to global trade, and we implement these tariffs against China, the Chinese component of the CPI basket increases 1.1% on the headline year over year. So just nothing else changes in the economy. A year out from now, we take the current inflation rate, you tack 1.1% onto it. That's going to bring you into the high threes, Ilya. If we have an inflation rate in the high threes, how much can the Fed actually cut right now in the short term?
Yeah.
This is the deep conundrum the market finds itself in if this trade war presses on. That we put ourselves into a stagflationary spiral that the Fed is incapable of handling. They don't have the tools to do it, to address it?
So far, it seems like the market is still reckoning that whatever economic pain is going to come as a consequence of this is going to overwhelm the sort of stagflationary impulse. Because if you look at what's going on with break-even rates, for example, the implied inflation expectation in bond markets, 5-year, 10-year are aggressively lower. And those are the sort of benchmarks. I mean, yes, there exist shorter-term break-evens, but they're kind of spotty as far as liquidity. So the things to look at here, 5-year, 10-year, and they're sharply lower last week and this week. And the supposition there basically is that, yes, the tariffs are going to be inflationary in the sense that they drive down demand and crush growth. And what that crush then does is it so hurts demand that the net impulse on inflation is negative. But not because the tariffs didn't raise prices, no, because what the tariffs did to raise prices crushed the economy. And so that's the implication in the bond market now, as it stands. That would give the Fed clearance, one would think, considering there's still time until the May meeting. There's a bunch more data they can see. CPI this week, in this sense, should be very, very important. But to your point,
can we just walk through the Trump? Can we go back to the mind of Donald Trump briefly, just for the pleasure of it?
Sure.
What if Trump's theory is I'm going to delete the income tax, and all of my revenue will come from tariffs. I mean, as a target.
I did the math on that too, but
what's that?
I happen to do the math on that too, by the way, for the sake of this conversation, but go on.
But let's assume that his next maneuver is not to relent on the tariffs and to basically let the world suffer under the clutches of the global king that is Donald Trump. The absurdity of this entire, I mean, it's just beyond absurd, but anyway. And that his next move is a massive income tax reduction.
Mm-hmm.
No taxes on tips, no taxes on expatriates, no taxes on anything under 100 or 200 grand, whatever, like some number like that, and a massive tax cut for the super rich. Does that make it better or worse? Obviously, it's not the math.
I defer to the man with the math first.
I mean,
Mr. Vecchio, sir.
Let's just square up where our effective tariff rate will be now, okay? If we think about the effective tariff rate right now and how the market's reacting, and it's sitting around 30%, 34%, to be fair.
The average for that's like a blended average of all imports.
A trade-weighted, correct.
Okay.
Right, so trade-weighted, if you look at all of our tariff rates globally that are going to be in effect by midnight tonight,
so cars now are 10 to 15 grand more expensive. iPhones are 50% more expensive.
Yeah.
Building a house.
And you'll see
50% more.
Yeah, and so I would encourage people to go on to Reddit and to the small business subreddit. And people have been posting some of their itemized receipts for the tariffs that have been in play, and they're getting hit with the original aluminum and steel tariffs from 2018, the original round of China tariffs that Trump put on and Biden kept from 2018, 2019. And then you have the new steel and aluminum, and you have the new Trump tariffs. And so people have been posting these bills like, I paid $3,000 for this, and DHL hit me with a $2,400 import bill before they can release it to me. Right. So it's really, everything is piling up. Everything is piling up. So again, the math here, if we wanted to do this, we're at a 34% effective tariff rate coming out of tonight, if this is true. All right. Given that U.S. imports are valued at roughly $3.8 trillion in 2023, a simple calculation suggests that we'd require an average tariff rate of approximately 58% to fully replace income taxes. This doesn't even consider the fact that a huge tax hike on our end could lead to decreased import volumes and retaliatory measures from our trading partners. This operates under the assumption that there's a linear relationship between tariff rates and revenues, that import volumes remain constant. And as we've seen from previous aggressive trade war episodes in human history, the relationships aren't linear, and they spiral. So even in the best case scenario,
and that's before we talk about tax
and they amplify
in a
and they
recession and unemployment benefit outlays in a recession. To the extent that all of this hits the economy, yes, it does maybe give you lower rates.
Is that the bond math? Is that the bond math today? That if we get what Trump is doing, we're going to have higher unemployment, which means we're going to have a bigger budget deficit than we previously forecast. And now we're cutting off our trading partners, which means there's fewer dollars to recycle into the system. And we're going to have to supply the market with more debt to pay for these increased costs. Because when you do something like this,
must go
without automatic buyers now, at least as readily, and so we're going to have more trouble placing this debt. And so, as I've harped on for a decade, Chris,
oh God, my long deltas in bond are so screwed. They're so screwed.
This. The one thing thou shall not break is the dollar, because it lets us have cheap borrowing. And if you break trade, which is financed in dollars, you break need for the dollar. So then you break our ability to borrow cheaply.
Which then creates a huge opportunity for Trump coin to become the new global reserve currency and replace the dollar.
Knock it off. Not in the show, sir. Not in the show. No, but this is okay. So there's no back patting here, right? Thinking about ideas that have been tossed out here in the past week and a half, we've discussed the concept of regime change in markets. Right? To loop back in, because we do have a bigger audience than we typically do, the term regime change in modern times, in contemporary literature, you really think of, men in little green suits storming some presidential palace and, declaring a junta. But the word regime change is from economic history. It's used to describe when you transition to different types of systems. And so you have mercantilism that goes until industrialization, or classic liberalism type of economics. And of course, classic liberalism falls to Keynesianism with the Bretton Woods Agreement. That is chipped away with Nixon leaving the gold standard in 1971. Thatcher and Reagan officially transitioned the system into what some may call neoliberalism in the early 1980s. 1983, you could probably put a starting point on it. This may be one of those turnings in history where we see a significant regime change, which means the playbook that we've been working from, based on all these historical relationships between real yields and gold, and what happens when inflation moves up, and how does the Fed respond? And, well, do we have the extraordinary privilege of the US dollar anymore? Because that is totally predicated as our place in the world as the capital provider. Elliot, what drives me so crazy about this conversation is that we're focused on our capital goods balanced right now. And I've seen some folks in the Trump world say, well, it'd be great to work out a trade deal where whatever the equivalent amount of our trade balances or trade deficit with this country is, they could pledge to buy back the same amount of US treasuries. That's exactly the system that we have right now. So,
my God.
What if Elon Musk is our only hope? What if because I'm sure Elon Musk thinks this is fully batshit rat in a coffee can crazy. I think Elon Musk is in there. Go ahead. I just feel like if there's anybody around the president.
Just the concept.
What are you doing, my man? Like, what are we doing here, sir?
Just the trade deficit as a concept. Consider if everybody you did business with had to do business with you in the same fashion. So somebody would have to consume.
They've got to place a trade.
That's right. That's right.
It's the dumbest idea in history.
I mean, how silly is it if every single time there had to be a balance between the dentist and the gas station clerk, and they had to provide each other services in balance. I mean, what?
Look, there's two sides to this.
I think Elon Musk is the only one who can get in the room right now and say something. because this is full cuckoo bird.
Yeah, so Elon Musk tweets out a lot of inflammatory things. Look, if you feel the need to use language like this to make you feel like a big, strong guy, I guess you could use it. But he's calling Peter Navarro a lot of nicknames here on Twitter today, very, very publicly.
That's what I'm saying.
You know, not how I would phrase things. I just think name calling is a little bit stupid. But he's declaring war on Navarro, right? And so at least in public, Trump's biggest financial supporter is declaring war on Trump's trade advisors. You know, if this costs Elon Musk a ton of money, can we forget that a few years ago, Elon was the guy who was tweeting out
Elon Musk
flags?
is not a free trader. Sorry. I mean, there's just sorry, I don't mean to interrupt. But if there's anybody in that administration who's a free trader, it's the first buddy. I mean, that guy.
That's true.
And Elon designed his company to try to be supply chain resilient, to his credit. There's a reason why there's a gigafactory in Germany and there's a gigafactory in Shanghai to try to limit the impact of any trade disruptions. You're sourcing your inputs as local as possible, if you will. It's a very sustainable way to go about doing things, right? It's decentralized to a certain extent. So if Shanghai, the gigafactory Berlin shuts down, U.S. car production isn't necessarily negatively impacted. But he's even not immune to any of this. And so Tesla here today takes another dive down 4.9%. We're seeing it across all the auto manufacturers. Stellantis through Jeep is saying that it's going to help its suppliers offset the cost of tariffs. You know what that sounds to me like, Dylan? Smaller margins for shareholders moving forward. Stellantis
lowering the old E on your E there.
Good news about Ford, though, because I've been public about my being in the market for a second car, now making all the calls to the various different dealerships, lots of friends and family discounts popping up. Two of the vehicles that I was eyeing, now $12,000 cheaper as of this weekend until June 2nd. Maybe they're trying to drive demand, but who has to eat that then? The company itself.
Kills the E, kills your E.
Unfortunately, listen, I like my Ford right now. I'm looking at a second one, looking at a Toyota, both cars made here in America, Indiana plant. Happy with that. I've been thought about this for a while. When I was chided by Tony and Victor in January for buying all my furniture as a hedge against the tariffs, I think that was pretty good hedge.
Who's laughing now?
That sofa now doesn't cost $5,000. Thank you very much. Right? But this is real. This is not just numbers on a screen for the stock market and for traders. The exercise that we are currently engaging in now is legitimate price discovery. This is a world that we haven't been in before. We don't know what the E is going to be in the future, so we can't possibly apply a multiple to it. And moreover, to that point, the economics here are that if the tariffs are in place, you're just not going to be able to build what you want to be able to build here. And if I could just soapbox for a second, back in a few years ago during the pandemic, had the opportunity to work on building a factory here in New York. And there were certain parts that when we were doing this, and we had a grant, and the guy who invented the N95 mask, Dr. Peter Tsai, he joined our board. We invented a new type of mask under his guidance. We could produce it for pennies here in the US, sell it for a little over a dime at scale, union workers on the old IBM grounds in East Fishkill, New York. There were certain parts to help build out the factory that, because of the supply chain issues and quite frankly, a lack of interest from private capital in helping source these kind of things, that we couldn't get the project off the ground, even with government grants in our pocket, because we won government grants for the project. There was component sourcing that we could not get anywhere else in the world to press N95 masks, except for in China. It took us 18 months of going back and forth to try to get those parts here into the United States from China. And we couldn't do it during COVID because of the supply chain issues. And ultimately, the project failed. Now, thinking about that here today, the supply chain issues have been since resolved. But now we're talking about jacking up the cost by 50, 100% for many small and medium-sized enterprises overnight who have 4 to 6 weeks of working capital on their balance sheets. And so I think about all the problems that we just had with installing electric vehicle chargers during the Biden years. We couldn't get broadband internet laid to rural America. They're huge policy failures. We spent all this money, and what do we have to show for it? Close to nothing. And so if we can't get things to work in good times, how are we going to flip a switch and get this stuff here overnight? This is a significant economic disruption. I have literally zero desire. Someone says there's no hand sitting in these markets. I am perfectly comfortable keeping a pile of dry powder here and wait for this falling knife to stop falling in equities here, because this is an 5.66% lower, the second largest intraday point swing in history from high to low. Yesterday was the largest one. We just had the biggest gap open higher to close lower and reverse on the day that just exceeded the October 14th, 2008 move. This is not a time to be cavalier and not underestimate the significant regime change that we may be going through. I stand off my soapbox.
I mean, so let's just to review your comments there. We are sitting today in the most volatile stock market in the history of the world, more volatile than 2008, more volatile than 2020, more volatile than 1997 or 2001. It's not a crash in the sense of 1987, but it is aberrational behavior, the likes of which has never been seen. It's an economic catastrophe in the making. And I feel like I feel like I have two choices right now, which is get out of the way, which is what I'm doing, or get long recession and go to Procter and Gamble and consumer staples and just sort of go full long recession.
I mean, if you had to hang your hat on anything today, it is that obviously the level of uncertainty has not eased, and the swings really speak to that. And also, we do not close below yesterday's open. We have a modestly higher low, a little bit of a higher high. If we look at the S&P, if we look at the NASDAQ, if we had to wince past the intraday volatility and look just at the results, we would say that on the week the markets have gone nowhere. There was the initial Asia open shock.
Don't do that.
Well, go to a week here.
No, I know exactly what you're doing. It's like if I was in a coma and woke up today, and so like, what's happened since the market's open? Okay, well, we gapped open lower, and NASDAQ opens up at 17,100, and we're at 17,196. It must be a pretty boring week so far.
No, not a boring week. And as someone that's trying to see if there's a bottom here, extra action-packed, as it were.
Markets are most volatile at the turns.
That's right. But also, if we look at the bottom line, this is a market that does not know where it wants to go, but the news flow hasn't gotten better and it hasn't gotten worse in the market since the opening tick, as it were. Obviously, Friday's chaos had to get some level of recognition when Asia opened on U.S. Sunday. That had to happen. So, of course, you have a gap. What has changed other than that? Well, we tried to go higher, and then, as ever, no good thing goes unpunished. So there was quickly those comments you mentioned earlier, and we crashed back down. There's obviously no level of confidence here. Nothing has gotten better, but the price action hasn't gotten worse. Just volatile. And so it makes you think why the market doesn't have the conviction to just crater. And when you look at the weeklies and you see where you're still hanging, that same reference high from 2022.
Yes.
You wonder if they just don't have the juice to make this thing stick through these levels until the Fed lets them down. And if the Fed doesn't let them down, maybe it survives this test. And we get to sell it again from, let's say, 1900 on NASDAQ. Because as far as I'm concerned, the trend is down. I just want a little counter trend bounce and lower vol readings to sell again. I am by no means suggesting that the flogging has stopped. I'm suggesting maybe it will resume after a break, such as not to kill the victim immediately.
That would be a place to hold it. The highs that you have from late 2021, early 22, and then the swing low that you have in the start of 2024 before the market ultimately kills higher, right? So the market now is unchanged from the start of 2024, which is nice. Dylan,
from the start of 2024, so 1 year's worth of gains have been obliterated.
So that thing where I was wrong a lot last year, not anymore.
There is a question here. I did see someone say in the chat yesterday, ask a question. What are some big economists saying about this? I was able to get my hands on Apollo's 2025 update, what the tariff means for the market. I think this was worth going through here just to get everyone on the same page. What does it mean for the economy? And Torsten Slok, you see him on CNBC Bloomberg a lot. This is his deck. Consumer confidence deteriorating, corporate confidence deteriorating. There's impacts on earnings and growth. There's retaliation, including tourism. We're talking about what happens in the S&P 500 and the true impact of Doge. But this is the plan here. I've seen some people in chats, and this is a great slide to articulate this. The goal here is to get from point A to point B. The pitch is we're getting a smaller government, we're getting more manufacturing, we're going to be less reliant on the outside world for all these things. How long is it going to take to get there? That's the adjustment period, and that's what the markets are caring about right now. But when you look at sentiment across the board, sentiment's deteriorating. If it's high income, if it's low income, it doesn't really matter. It's falling off an absolute cliff here. You can see that lower income tends to be a little bit weaker than high income, but when high income craters, it's typically cratering right before a recession. That happens to be the green line on this chart. We're having a similar type of cratering right now. We think about how consumers feel. More and more people are worried about losing their job over the next 12 months. Business conditions, nearly 80% of businesses think things are going to be worse. And if you're a small business owner, if you think things are getting worse, do you plan on expanding production? Do you think about hiring more people? Do you think about perhaps laying some people off now to start saving some money to build up working capital? CEO confidence in the economy is at a low. Larry Fink yesterday, the CEO of BlackRock, said that nearly all the CEOs he speaks to are of the mindset that the economy is already in the recession. The canary is sick, were his exact words. Loan origination activity within the economy has started to fall off again. IPO transaction values are starting to shrink. M&A activity is basically dead. And this is the shock that Apollo is currently modeling out here. The bigger the downside risk to the economy, the longer the uncertainty stays elevated. If this is a temporary shock, it is going to be a permanent decline in growth, but not that significant. The longer this state goes on, the deeper the pullback for our economy will be. So they say, Dylan, and this was nice to see, where do you hide out during all this? We don't care about the credit markets here. Where to hide out in the storm? What are the places that you want to be when things are doing poor? We've talked about the defensive sectors here all the time. We've been complaining that Staples Healthcare have been leading because those are the defensive names. You don't want them to do well because they have stable cash flows. They can pay dividends during the storm. It's confirmation bias, quite frankly, but we talk about the Philip Morrises, the world, the Coca-Colas, the PepsiCos. People are going to need their toilet paper, their toothpaste, their paper towels, their cigarettes to get through this, right? If we're looking to buy dips in places, in my opinion, the places to ultimately buy dips are going to be consumer goods products that are produced here in the United States, where there's large control over the supply chain. And in the short term and the interim, just from my own experience and thinking about my, supply chain studies and all those conversations with people in Thailand and China, early in the morning during those COVID years, and other efforts to build housing in New York and on the phone with labor leaders and what have you. This is a shock to the system, and we should not underplay how the damage can accumulate in a nonlinear fashion at the start of it. I'm a buyer beware person right now. I have capital dry. The positions I have on are mostly eating dirt. Golden bonds are not protecting me. So the way that I look at this market, right, it's tough out there. I'm still a week into it now, guys. No edge. No edge. I'm not going to pretend like I do.
I think it's getting worse. I would say not only no edge, I would say that each day creates less edge, not more. That right now we're in an expanding spiral of uncertainty and chaos, which is why you have the two biggest intraday swings in the history of the stock market.
Ilya, we've got 10
I think this is sort of speaks to the idea that the market kind of cares what comes out of DC, but is increasingly saying, you know what, we're just not listening to this until we hear from what the responsible side of monetary policy making says, the monetary side, because the market hasn't gone anywhere all week. It swung around a whole bunch and is now holding basically where it opened, saying, all right,
but does the Fed have the ability to stabilize? I mean, maybe part of the Trump strategy is to force the Fed to intervene.
This has been a narrative that's shown up in the conversation repeatedly over the past 24 hours.
Indeed.
And I am not suggesting that the president isn't thinking this or is. What I am suggesting is that this as a plan has got to be something along the lines of I've sprained my ankle, let's amputate the leg.
Oh, we're going there. I think this is actually the biggest risk to the market, which I am one of the main reasons why I can't just get long right now. A few weeks ago, the Trump administration fired 2 Democratic FTC commissioners. That doesn't seem like a big deal. It's deemed partisan because the FTC, these people are assigned by party. It's usually 3 on one side, 2 on the other. You keep the balance in place. Only when openings free up does that administration get to appoint the new person, but it's usually nonpartisan. We see here that the Trump administration is getting rid of these people, and the FTC commissioners that were fired are suing the administration under what's known as Humphrey's executor. Humphrey's executor is a really unique case. There was a guy named William Humphrey who was confirmed to be the commissioner of the Federal Trade Commission, and he asked for Humphrey's resignation because Humphrey himself was against a lot of the New Deal policies. Humphrey refused to resign. Roosevelt fired him. However, after being dismissed and before the new commissioner was appointed, this guy, William Humphrey, passes away. And so his widow steps in to sue. And what does the Supreme Court rule in favor of Humphrey's executor because he's now dead? The president does not have the authority to get rid of this person. The only way that the president has the ability to remove a commissioner is for inefficiency, neglect, duty, or malfeasance in office. So there's this idea here that if Trump can legally remove these FTC commissioners, they are arguing in court right now that Humphrey's executor and this law interpretation of the law that's been laid out for the past 80 years, we've actually been misinterpreting it. It only applies to William Humphrey himself. The president actually has broad jurisdiction to fire these nonpartisan individuals. The only reason why the Federal Reserve chair is protected is because we have interpreted Humphrey's executor to protect his role from presidential interference. If this court case goes through, I am not nearly bearish enough on U.S. Treasuries or the U.S. stock market right now. The independence of the Federal Reserve, if we go full Recep Erdogan here, the Fed refuses to cut, so Trump fires Powell. That is the nightmare scenario that is actually literally being litigated in court this very moment in time.
That is indeed the nightmare scenario. The one thing you cannot do to make this situation, so the one thing that you could do to make this the final stage of worse would be to take an independent Fed out of the equation. If you do that, then, I mean, there's not enough risk to sell.
What about a long euro position, a long yen position? Like what you're describing is basically an implosion of the U.S. dollar.
I am massively short dollars already. I've reloaded on almost all of it. I'm short now against the pound, the euro, the Aussie, the Canadian dollar, and I am not expecting to be this right. I am expecting something orderly. Around Fed rate cuts and yields starting to come in again.
Because Trump doesn't care about the law anyway. Who cares about Humphrey's executor? I think it's very reasonable that Trump would fire Powell illegally. Who cares?
Or attempt to.
Well, yeah. Of course. He's flying people to El Salvador illegally. Why does he care? He'll do anything he wants. He could shoot someone on Fifth Avenue, and no one would care. Those are his words.
Yeah.
So he can obviously fire the Fed chief anytime he wants. Who cares what the law? Like, if we cared what the laws were, we wouldn't be in this situation in the first place.
So what do we do here, guys? 5 minutes left in the show. We BTFD?
No way. I buy euros, buy the yen, buy yourself some United Healthcare, and call your mother.
Yeah, buying dollars seems like the one thing you don't do here. So selling dollars in small size, because FX markets let you do that, is a way to dip a toe. Otherwise, I'm not changing any of my exposure. I did get short crude oil today. So if we start seeing horsemen of the apocalypse appear on the horizon, then my oil short might work.
Can you imagine how bad that is right now for the economy? That oil's in the tank, and this is what the airlines are doing, right? Yeah. High oil is supposed to be bad for airlines. Low oil is supposed to be good as long as it's orderly. When oil crashes and airlines are down, you're looking down the barrel at a situation where the markets are pricing in a steep decline in global trade activity like we saw during COVID. This time, though, it's man-made. I really hate to quote Larry Summers here because the guy, he's just not my cup of tea. In fact, anyone who pals around with Jeffrey Epstein is not my cup of tea, to put that on the record here. So, that said, Larry Summers was on Bloomberg today, and he pointed out that this is basically like what happens in a hospital, right? Hospitals have this problem across the developed world where they just have some infections that they can't get out of the hospital itself, like staph infections or MRSA. And there are some cases where people go into the hospital to get treated, and what happens? They actually get sicker while they're there. And that's kind of what we're dealing with right now.
Doctors are the third leading cause of death after heart disease and cancer. The hospital's where you go to die.
This reminds me of that John Mulaney bit where he talks about the current situation and says, well, it's sort of like having a horse in a hospital. Yeah. You can't reason with it. It's a horse in a hospital. You don't know what it's going to do. Why? Because it's a horse in a hospital. Who knows what's going to happen?
Now the other side of all of this, if you were just a millennial madman, is this is an epic buying opportunity. All of these charts, it's worked for more than a decade. Every time it gets rolled, it got rolled in 2008, it comes back. It got rolled in 2020, it came back big. The quantitative easing is around the corner.
It's not.
The tariff pulled the Liz Truss of this whole thing is going to force them back, and you're going to be wishing.
This is perfect, actually.
You're going to be wishing that you.
I think Dylan is absolutely right, and I think Chris, you're absolutely right, and then in between there is right where I sit. Where I think all of what Dylan is describing is the hope that gives us a bounce, and then it won't work. And it will fail. And that will be the next sell.
Are we having fun yet? With that, overtime is out of time for this Tuesday, April 8th, 2025. We'll be back tomorrow, of course, same time, same place, here on Tasty Live every Monday through Thursday, right after last call, 4 p.m. Eastern, 3 Central. There's more of us coming up next, though. Ilya Spivak's back with Macro Money right here after the break. I'm back with Victor Jones for the Price of Truth, 6 Eastern, 5 Central, so be sure to stick around for Tasty Live. Until then, good luck trading. So for Ilya Spivak in San Francisco, Dylan Radigan, Milan, I've been Chris Vecchio. See you on the other side of the break, folks.
I distinctly remember getting an email from Tasty that Lookback had just been released, and I was doing the most laborious back test on the face of the earth before that. And I did 2 or 3, and I saw how quick it was, and I saw how quick the data was, and basically instantaneously, like, I was hooked. I'd always seen all the stuff on Tasty Live with all the data and all the value I thought that bring, and then it was all of a sudden I could control that and basically make my own segment for myself of what fit. And that democratization technology, I think, drastically changed not only the landscape of what's out there, but drastically changed my ability to learn at such an insane rate. And that's kind of when I developed a little bit more of my own path. I was like, this is the type of trade I exactly want to see, or I get some type of inspiration from Tasty Live to look at that. And that's when my consistency went from like 1 to 30, and I haven't had an unprofitable quarter since.
Trading is hard enough. Here's what liquidity is. You want to be like water. Liquidity is in reference to how easily you can get in and out of a position, from volume to open interest to actual price at which you can buy or sell your position. It's important for all traders, from stock traders to futures traders to options traders or even crypto. Tight bid-ask spreads and high volume are characteristics of good liquidity.
What happens when 2 titans of trading come together to harness the power of their prowess? Yes, let's watch these 2 dominate this popper shop. Wait a minute, I thought these guys were traders, not contractors. They're putting up a lot of bricks. Well, lucky for us, Tom and TP are better at writing than they are almost anything else. Subscribe to Tasty Live Cherry Bomb to get piping hot takes on the market delivered right to your inbox. Sign up at tastylive.com/newsletters.
If you missed the live show, here's our cherry on top weekly recap.
Well, we got No Vanetta today. She's out on a secret mission. Is this correct?
She's on a secret mission in New York City. But yeah, we're doing a funny little promotion, and we're going to see how it goes. And there's an outside chance, a very small chance she gets arrested. Yeah.
So you guys sent me to New York to deface a national treasure, and I did not get arrested. No, in partnership with a testicular cancer charity, we mounted cherries onto the back of the charging bull on Wall Street, and it was awesome. We did a test run last night at midnight. People went nuts for this. Some guy yelled at us, and this other guy was like, oh, he's just cranky. But it's all for a good cause. We're out there for a couple of hours. It took months of planning. It takes 2 people to hang them because that bull's ass is pretty tall. So that's why I'm in New York.
Those cherries got some good hang to them.
Yeah.
Friday might be interesting. I'm not allowed to work on Friday. I have committed to my family because the Golden Prince is getting married.
I know. Congratulations.
So I have committed that I have to do family stuff, like take pictures.
You get to.
I'll take things that Tom excels at for 100, please.
I'm just going to be a good,
attentive husband and father to the groom.
I'm never a good attentive husband. What I'm probably best at is
dancing. I watched you at the last wedding. You really excel at dancing.
I excel at picking up the tab.
My big question for you, and you know Slappy as he's gotten older.
What do you want to know about Steve?
Do you think after dinner, it was his 60th birthday?
No. Don't do it.
Beth knows Tony better than I know Steve.
Do you think he...
I have no idea what you're talking about, and I am just going to move on from this conversation. I'm with Beth. No.
That was like Minority Report, like a pre-crime Omaha. You know, like she knew the Omaha was coming. Like she got the little ball that came down and was like, okay, Tony's gonna go there.
Get the full scoop by checking out the archives at tastylive.com.
The markets swing in record fashion. Absolutely blistering ranges for Wall Street, both yesterday and today. But ultimately, they don't go very far after gapping at the start of the week as Asia-Pacific markets take stock of last week's bloodletting in the wake of the new tariff announcement out of the Trump administration. So where do we go now? Well, the spotlight probably shifting for help to the Fed, and that's where we start the conversation here as the news begins to pour in about what the Fed might do next and to feed the markets speculation about maybe, just maybe, getting a little bit of assistance amid all of this chaos. So let's just anchor ourselves here. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. We'll take a brief look first at what the markets are set up here looking like, because, of course, there's, at this point, a situation where we're looking at what is essentially a market that's still looking for answers, and last week's lead broadly still holds. So let's take a look here first at where last week left us. And we can see here, obviously, the bleeding is tremendous. S&P 500 down 9%, NASDAQ down almost 10%, huge shift lower in yields, expecting some kind of rate cut cycle to be closer at hand. Cyclical commodities marked by crude oil here, sharply lower. Copper's not on the tally, but its performance follows suit. Crude oil down over 10.5%. Even gold getting sold as liquidation comes for the markets. Euro and yen up a little bit against the dollar as that sharp shift in yields erodes the dollar's yield advantage. That's the baseline. That's where we start here. And with that, we start to then see that so far this week, we've tried to go lower, we've tried to go higher, we've ultimately ended up nowhere. This is a weekly chart of the S&P 500, and we see then that the markets aren't quite sure where this has landed, but they're not prepared to keep selling, it seems, at least beyond where the week has opened, even though the news flow has ostensibly not improved. In fact, nothing about positioning here suggests they've grown more confident, except that the backdrop has continued to deteriorate. Some more combative rhetoric out of the White House today, threatening still more tariffs on China. And the market has stopped falling, at least in the grand scheme of things. And it has stopped falling at an interesting and an auspicious spot. The top of the sell-off in 2022, the place that really was the level to break, defining this most recent rally from the lows in 2022 up through early December of last year, where this market topped. So this is, of course, a crucial inflection point. Whether you believe in technical analysis or you don't, all you really have to believe is that a majority of people that are participating in markets are looking at a chart of the S&P 500 and even just anecdotally say, oh, well, it's difficult to unsee that. And as long as they look at this as some kind of a point of significance, whether there is a bounce or a break, whatever point of significance, whatever this marks as an inflection zone is clearly recognizable. And as long as people act on that, it doesn't really matter if the level itself or the technical analysis implying it has any kind of validity or doesn't. If people do something on the basis that this is significant, well, then it's significant. If you break it and people start to sell more and the market follows through, well, it's self-fulfilling, but that doesn't much matter if it works. And if the market bounces here, it's the same kind of logic. And so we find ourselves at a real critical inflection point where the markets seemingly don't have conviction of direction and have to decide. Now, of course, the backdrop to all of this aggressive selling has been a dovish shift in monetary policy expectations, as the markets basically conclude that no amount of market discipline is likely to get the White House off its square. And so perhaps the outlet, as typically the markets hope will be the case when fiscal policy is not giving them what they think is the right thing, is to turn to monetary policy and say, okay, well, the Fed will bail us out. And so as we've seen the fall in stock markets, so too the outlook for monetary policy has shifted in a meaningfully more dovish direction here. In the green is 2025's expectation, and Fed funds futures in the yellow is next year, 2026. And the orange line is the sum of the two. And we can see that we went from in early to mid-February about 50 basis points over 2 years to now 133 basis points, which breaks down to 4 rate cuts this year. We're within a basis point away, and at least 1 cut next year, and about almost 50-50 shot at a second one. We've gone a good ways of the way to up to that line. We're not quite looking at better than even odds of a second cut. Things have cooled off a little bit versus yesterday, but we're looking at least 5 cuts in the outlook here with option for a 6th. We can see the same thing in the path for policy expectations and where the easing is meant to arrive. So already we are flirting with the likelihood that a rate cut is all but priced in for May. And this is really a critical point here because the markets are seemingly setting up for a sense of urgency from the Fed to appear as soon as the very next meeting. So to have the cut all the way priced in, we would be looking at a 413 on that May reading because, of course, we're looking at a range here. 4.38 is the range middle between 4.25 and 4.5, which is where current Fed policy is. So we are at this point almost all the way priced in to a cut. We've baked in 19 out of 25 basis points. And so call it about a 76% chance at this stage that already next month we'll get the first cut. And of course, things cascade. From there, we can see 4 cuts from 438 to 336 already on the menu by November, fully baked in. And then we start to edge lower still into the end of the year. With this in mind, the markets are going to pay very close attention to minutes from the March FOMC meeting that came out over the next day. And of course, this is backward looking. Since then, we've had a Powell speech just in the wake of the jobs report on Friday. But this will be significant because the markets clearly are searching for an outlet and waiting to see if perhaps one emerges. And so what this will be is a useful stage setting for where the Federal Reserve's pain point might be. And if the markets can identify under which conditions it would start to become concerned, then it can layer that context against events that have transpired, of course, most critically last week, but really since that March 19th meeting, and then see how urgent stimulus might appear and whether expectations that it is almost certainly starting to happen by May, that is the easing cycle, then does that make sense? Should those expectations be in fact higher or maybe lower? Here's the statement from the monetary policy group here, the FOMC, from that March meeting. And really the key to take away here is this part right here. Uncertainty around the economic outlook has increased. That's sort of the key change here. And of course, since we get this, Powell then comes out at the press conference and offers what is essentially a we don't know next steps, so we have a balanced view until and as such. So here's a summary of sort of the key comments, and probably the biggest one here is we are not in any hurry to move rates. So to the extent that this describes the committee as a whole, we are now looking at perhaps exactly the kind of thing that the markets would like to see less of, but also this part of it is priced in. And so what the markets are going to attempt to do here, it seems, is try to tease out what it would take to get off this setting to something more dovish. We see that the Fed already expects that the tariffs tend to bring down growth, tend to bring inflation up. But of course, according to this, it's too soon to say if it would be appropriate to look through those effects. Now, that's an important qualification here, because what the Fed is saying is that whether it is appropriate to look through the tariff effects, that is an upward lift on prices or not, will depend on whether the inflation will move quickly, and most importantly, will depend on whether inflation expectations are well anchored. And this is an important sort of thing for the markets to look at, because if the Fed is saying we're not in a hurry because inflation expectations are well anchored, if they become unanchored, and which direction they become unanchored in, that would be a telltale sign. We see here, moreover, Powell says sentiment has fallen off, but the economy seems healthy. If soft data effectively becomes hard data, we will know very quickly. Of course, we've had a little bit of an example of this in the NFP report on Friday, which didn't come in badly, but the jobs part of the data flow is typically lagging. And instead, what the markets might focus on is something more timely. And of course, we have CPI this week, and that's already started to show some signs of rolling over. And so this is really what we're looking at here as the tone for these minutes. And of course, here was the summary of economic projections where the Fed adjusted the forecast to exactly what we've just described. So they lowered expectations for growth here from December to March, but kept the path of rates unchanged, basically saying, yes, inflation is likely to be higher, growth is likely to be lower, but we don't know how lasting all of it is, so the path of rates remain. Well, so what do we then learn in context? Inflation expectations have become unanchored, down, not up. And this is exactly the kind of nuance that we might want to hear from these FOMC minutes. The implication here clearly is that the market is concerned about growth to such an extent that it thinks that growth will overwhelm what is happening from what is essentially a tax increase. To the extent that a tariff is a sales tax on imports, basically, we have a situation where prices are likely to go up, hence what the Fed is saying here. But if what that does is then destroy demand to such an extent that there is a recession, well, then inflation goes down, because the absence of demand then drives down growth, and whatever uplift you have from the tariff is more than overwhelmed by a collapsing economy. And if we look at what's showing up here in the break-even rates, the inflation expectations implied in the bond market, is the market sees this situation not as an inflation scare, but as a growth scare. These break-even rates, the 5 and 10-year break-even rate, they're sharply lower, saying what the market sees is not stagflation, just a regular recession. And of course, yields in the dollar are down in tandem, despite some wild swings in the bond market at the start of this week. The same thing with the path of inflation and this question of hard data. Already since January, we're already seeing that the 3-month annualized and the 6-month annualized pace of headline inflation, as well as core, that part that the Fed really cares about, because, of course, it doesn't really have much agency over global energy and food prices, that they're edging down after this melting up over the course of the second half of last year, where very strong U.S. service sector growth created a lift. We seem to have already crested. And of course, this week, we're expecting to see CPI data that is going to show us based on expectations, that the headline inflation rate came down to 2.6%, and that the core rate ticked down to 3% for the first time at the figure since 2021. And so, ostensibly, 3 points now make a convincing line. So if we're starting to see inflation cresting, and the market is saying inflation expectations are becoming dislodged, but it's down and not up, as long as the minutes broadly echo that these are the things the Fed needs to see to get out of wait-and-see mode. And now looking back in context, those things are occurring, one might then surmise that indeed the Fed is closer by its own measures, or at least probably a bit closer, to shifting to the dovish side of the spectrum. And then perhaps indeed rate cuts as soon as May, which is what, again, we're starting to look at here, that in fact that does make sense. Then, of course, comes the crucial question. If in fact that is what happens, do the markets find relief? We've, of course, seen that the markets are able to rally even in deep recessions, as long as the prospect of Fed assistance is on the menu. We saw this in spades, of course, during COVID, when the Fed announced, having learned its lessons from releasing stimulus in small doses and in defined ones after the 2008 collapse, that this time they were going to say unlimited QE, and it'll work until we deem it done. Just the very saying of that helped the markets to find a bottom. And then ultimately the provision of stimulus ended up being much more short-lived. Between March and August was really the extent of everything that needed to happen to convince the markets that the Fed would credibly prevent some sort of a credit seizing up situation. And sentiment bottomed right there. So if the markets walk away from these minutes with at least the sense that perhaps already next month the Fed will be prepared to ride to the rescue, a sense of relief might be the next step. And that need not mean that the recession isn't coming, and of course doesn't imply that whatsoever. There's nothing that the Fed can do or say on that kind of a time frame to spook GDP back into growth. Instead, what might happen is a bit of relief from the sentiment that has become so negative in markets, perhaps good for a bit of a bounce. But of course, then the question will become how durable is any bounce as that hard data that the Fed talks about starts to really show the degree to which recession might already be underway or is at least very close to gathering steam. And so while the bias here very much still is toward lower highs and lower lows, and so the trend appears down, markets don't move in straight lines, and you may, with the hope for Fed assistance, at least as cushioning against what is clearly a gathering economic headwind, to correct a bit higher, maybe somewhere in the 5,200 or 5,400 direction on the S&P, just as a loose reference, before the next leg down perhaps emerges. And that is Macro Money for today. As ever, we are here Monday through Thursday, right after Overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go from there. I am likewise on with Chris for Futures Power Hour Mondays, and coming up on Friday, on with Victor Jones for The Price of Truth this week on Wednesday. Back with Victor and Tom for First Call on Sundays, writing for the news and insights portion of tastylive.com, and commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. Thanks very much for joining. If you're watching on YouTube, like and subscribe. Macro Money's back tomorrow. Good luck.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
What is going on, everybody, and welcome back to Risk and Reward. It's been extremely volatile last few days in the market, but we're back with Errol and Gus. Gus, my brother, we survived. How are we doing?
Have we survived? Is it over?
Barely.
I'm not sure that it's over. I'm still breathing. I can say that much. Yeah, we certainly had a bit of a false positive this morning. I thought we may have finally found the bottom and be turning a new leaf for brighter horizons, and my long delta was going to make me a millionaire. And we gave it all back throughout the course of the day. So a little bit of a rough day in the markets, but it's a good day otherwise. Nice and sunny here in Chicago. Someone just made popcorn in the office, so the whole office smells like popcorn, and I don't mind it. Some might, I don't. So that's where I'm at.
I think the popcorn brings up the vibe sometimes. Just smelling that aroma. I know whenever I went into school and I smelled popcorn, it just brought the vibes.
You knew that was gonna be a good day. Sophos Donuts.
Oh, yeah.
What's going on in chat? Bob Sala, good to see you. Happy everybody's here.
Happy we all made it. As we said, it's been volatile. Been managing the portfolio best as possible. But I mean, the range that we're moving within just the indices is something I don't think I've ever seen ever in the market. So it's like you got to stay on your toes for headlines, real ones and fake ones. What were your thoughts on that yesterday, Gus? The market is so sensitive for any type of positive news specifically that we rallied off of some fake news. What were your thoughts on that?
Yeah, that was really crazy. I mean, two points to make here. One, you mentioned the intraday range and how crazy it's been. I did the great Christopher Vecchio did send us a thing just before I hopped on air that today was the second largest intraday range in the history of ES, which is pretty crazy.
Wow.
Beyond that, yesterday that was really crazy. I think it serves to show, how social media can make news spread as fast as it does. And also, I think it really, and this is something that happens more often than people would like to admit, but I think it really exemplifies that news sources shouldn't cite other news sources. Otherwise, we all of a sudden get this big circular information and nobody knows where it started. So, yeah, that was pretty crazy. That was wild. We were cheering. The office here was cheering as that candle was going off. We had no idea what was happening. And then, of course, pans out to be fake news. I did read, and they had tracked down the origin of it. It was somebody on Twitter with 1,000 followers, and then one mainstream news outlet had retweeted that, and then it just went crazy from there. So, 5 minutes where the market fully believed something that was empirically not true, and then we gave it all right back.
Again, it's like we're in such a new day and age. It just reminds me again with Citadel. Citadel was going through the whole fiasco when it came down to GameStop, not taking into consideration that any type of realm in social media could have some type of impact in some form. And it's just even crazy that an account from 1,000 followers, got retweeted or reposted, whatever it was, from another news source, and then it picked up, got a lot of traction. It's like 10, 20 years ago, nobody was worrying about what was posted online and how that might affect the market. So it's just such a new day and age that we're in. But nonetheless, insane ranges in the market. Here in a little bit, we'll hop in the platform, break down a little bit about the risks that we had put on. I think it was last week. It's been about a week. We'll put on some new positions, but Gus and I have a couple new ones today. We got to make our case on the tickers that we decided to choose, but we do have one of each from each other, and we're going to get into that. But Gus, March Madness. Before we get into risk and reward, how are we feeling and how are we holding up?
Oh man, I mean, I did well holistically on the tournament. I was very, very high on Florida headed in. I had a couple of futures tied up on them that paid out for me last night. So that was nice. Bracket competition, I sadly finished in fourth, one place out of the money. Had Houston won, I would have finished in third and finished barely in the money, but fell out, rocketed up from 12th to fourth, but it was not quite enough. There were 3 Florida brackets better than mine. So yeah, feeling good financially, but maybe the pride, maybe the ego's hurting a little bit after that one.
I hear you. That was a tough game yesterday. I know it was everywhere. We can jump into these slides here right now, team. But that's a tough way to lose it. And sometimes you just got to put a little risk on, it's risky. You go to the Final Four. You can either have a good outcome or a bad outcome, but I mean, you're going to feel it either way. But risk of the week, Gus, what do we got for the first one? We got a familiar face over here.
Yeah, rocking with Berkshire Hathaway is my pick of the week. This is risk of the week, I should say. I suppose it's not as big of a risk as I could take, but I don't think taking big risks is a super wise thing to do in this market. And as I said last week, this is risk of the week, not stupid risk of the week. So I have added more to my short put verticals, bull put spreads, I suppose, on Berkshire here. I sold the 465, bought the 455. They have 73 days left on them, so it's a little bit of DTE, but I want to make sure that I give adequate time for this thing to come out of whatever we're doing. In Buffett we trust is the first bullet point. Need I say more? The man is the GOAT. So moving on. They had $325 billion of cash on hand at the end of 2024. I'm seeing new reports that number might be dwindling closer to $230 billion as they begin to buy into this dip, which I'm happy about as a holder. And they thrive on bear markets. This is something major about Berkshire Hathaway. The critics of Berkshire Hathaway are the loudest when the market is good, when it's a bull market, and Berkshire Hathaway is sitting on cash, the critics will say, why aren't they spending that cash? But when the bear markets roll around, they are ready to pounce on the opportunity. Other, conglomerates like this are scrambling, and Berkshire is comfortably sitting on a bunch of cash. So that takes me to the next part. Hardly any bad purchases right now. I think if you gave me the $325 billion that I could make a sizable return on it within 1 year, because I just don't think there's many bad purchases right now. And I think that Berkshire Hathaway and Warren Buffett and his team, Munger and all them, are more suited than anybody to be making choices on what the best buys are right now. And then, my final point here, Berk B is like having a stock market genius manage your money for you. This is a very rare stock in the market where a great investor has started an investment company that you can then invest in. And so by proxy, I am essentially just handing my money to Warren Buffett and saying, here you go make money with this for me. And I trust him more than me. So that's pretty much the end of my sentiment there. Nothing too crazy, just a one slider for me. But yeah, Berkshire, I've doubled. I had one contract of each before. Now I have doubled my bull put spread. Expires June 20th.
I love it. All right, chat. What are we thinking? Do we like it? I'd like it. Berkshire Hathaway.
Rest in peace. Rest in peace to Munger. My bad. Ben has informed me that Munger has passed away. My condolences to Munger. My apologies.
Condolences, Munger. No, I like it. I think this is a great pick, especially in this time period of volatility that we're seeing in the market. This is an interesting pick. I really like it. The markets are volatile. We're sending it to the downside right now. So Berkshire Hathaway. I got to piggyback onto what you said too. I think I would trust Warren Buffett with my money over myself too. So I like this one. I like it.
I've seen yours already. I'm not happy about it.
I know I had to go there. I was even looking at our risk and reward watch list that we had, and I was like, do I do it? Does anybody know what it's going to be? But we did choose this one for today. Look, in Buffett we trust. I will piggyback on that, but I just have to say, in Elon we trust, but in Elon we trust at your own risk, okay? This is an extremely volatile underlying company, personality, and how he's tying himself in with his social circles. We now know there's going to be other things that are going to be influenced regarding Tesla stock. So I chose Tesla for today, another risky one. But I mean, Tesla getting near that 200 level is just looking really attractive right now, Gus. But Tesla looks oversold after broad market weakness, creating potential discount. Maybe levels we might not see in a while. Who knows? Global EV demand remains strong, and Tesla leads the pack. They're the leading underlying in the EV space. So if all EVs is going to go down, I would expect Tesla to survive if we were to have any other EVs go down. The company's growth in energy, AI, robotics. I know we talked a lot about the the robo-taxi. I'm really bullish on that, even though I'm personally a little skeptical and hopping in there with a robot. I am bullish on the industry. Tariff fears might be short-term noise with long-term recovery upside. It is a gamble. It is a lot of uncertainty, but it's definitely some risk we're putting on. So I had to go with the no trade list of Gus, but it is in our risk to reward watch list that we do have. So that's my case for Tesla. I want to get a little bit of premium on nothing undefined risk, but I want to take a stab at it, Gus.
Yeah, I mean, I do. As much as I joke about Tesla, I do think that this is a strong play. I mean, like I said, I don't know that there's really many bad buys that you could make right now. And Tesla, something that you didn't mention also is that Musk is set to return to Tesla. He's stepping away from Doge. I believe the original plan was just to have that go through the end of April anyway, 130 days or something like that from the inauguration. But it should be in the next 30 to 60 days that Musk will be rejoining Tesla fully. And I think that should help them a little bit as well. Maybe it'll hurt him depending on your opinions of the man. I don't know, but he's gotten him this far. So I do like it as apprehensive as I am about Tesla.
No, it's definitely a lot of volatility. We already know without the market crashing 1,000, 1,500 points, Tesla's a volatile one anyways. In a normal market environment, Tesla's typically really volatile. So especially heading into this one, I'm definitely going to be looking at defined risk positions. I'm not comfortable sitting in anything undefined, knowing we could just gap down 300 points like it's nothing. You know what I'm saying, Gus? And I know last week we did the Zebra in QQQ, and I had to manage that one like the next day. I think we had the gap down and the sell-off, and immediately I'm managing the position within 24 to 48 hours. So we'll jump into the platform here, show you some of the positions that I got on, and then look to see the options chain on Tesla and see kind of how I'll finagle my way in there. Let me shift on over. There we go. As we get started, let's check out VIX.
Hey, red and green candles. Let's go.
Red and green candles. Yeah, I went back to the OG. I just had to. How are we feeling about that? You missed the white and blue, and black.
Hell no, I don't miss the blue and black. Oh my god, man. Yeah, I was a blue and black. I was a blue and black hater from day one. Yeah, the contrast is just the contrast is what got to me more than anything.
You and Dr. Jim hating on my blue charts.
Yeah, you can play around a little bit, but the blue and black.
Yeah,
it was a lot.
We got Tesla. Although this stock will be trading at $50 by the end of the year. Tesla's trading at $50 by the end of the year. My first inclination would be to scoop up some Tesla long term, but my second, I'd be a little worried. If Tesla's trading at $50, the leader of the EV companies, if they're trading at $50, I'm a little concerned. So,
yeah, I think
I'll yield.
Oh, I've lost my train of thought here. Oh, yeah, I think. I don't know what Tesla's valuation is and exactly how their share price stacks up against it right now, but Tesla has always had, to a much lesser degree, well, in some cases to the same degree, but now to a much lesser degree, the kind of hype factor like this thing that Palantir has where you're able to trade well above your valuation because you are the future and there's hype surrounding the stock. But as we've seen this really steep pullback on Tesla, I have to wonder at what point we are actually hitting the true valuation on the company because we have to be pretty close right now, I would imagine.
Yeah, great point. Maybe we're getting near. Maybe we're sitting. Still sitting above evaluations. I love what you said a couple of weeks ago when you kind of mentioned how Tesla had a head start in that initial rally that we had seen. So when everything was pulling back, it was kind of back to the levels where Tesla should have been at already. So I thought that was a really good take. But either way, we'll see where Tesla lands within the next few weeks because when we're getting into Tesla, we're going to look at the contracts that are right over here in the May cycle. So let's go over here. I know we do have earnings on Tesla after the bell, April 22nd. That's going to be something to look out for, too, with that rising volatility and that increased volatility overall. VIX is sitting around 50 right now. Again, haven't really seen some of these levels on the volatility index since we were trading around COVID time. That was March of COVID 2020. Now we're starting to see some of these levels. So to your point, looks like we're going to have to sell some premiums, whether or not it's scary or not. But we do have a few of these positions on right now, Gus. QQQ getting absolutely hammered. This was one where I was kind of in the hole already. We had a relief rally. We got some of the credit back, and then we eventually made new lows again. That's 9 days till expiration, expires in April 17th. Because I was already in the hole, I already had 12, 13 days left on the position. So I was like, you know what? Let me hold it for the next week or two. Maybe we get a miracle rally to the upside, and I can at least break even on it. But that's the position that I'm in right now. I had no choice but to wait this one out. And then we have Meta, very similar position, sold an out of the money put spread on Meta. This is whenever we had the initial market sell off. I was just trying to get on some long delta, so I was selling some out of the money puts. This one ended up making lower lows on Meta as well. 9 days till expiration, expires April 17th. So kind of in the same boat with QQQ and Meta. Just going to have to be patient, sit on those two, and hopefully Gus puts a bid in the market so it rallies and I can break even on these. That's what I'm hoping for.
I'll try my best.
And then and then we got IBIT. I think I put on IBIT after you had mentioned one of your crypto positions because I wanted to get a little bit of exposure to the crypto realm. But I sold the puts at the 43 strike, sold the 57 calls. That one is down a little bit, but I'm going to be managing this one around 2 times their credit received. So I'm going to be a little bit more patient on this one, but still keeping an eye on it just because it is an undefined risk position. And I mean, in this market environment, we could get a 300 gap up, 300 gap down. You just never know from what I've realized over the last week. And then I was able to come out with some profits on the micros on NASDAQ. Fortunately, today, just a few scalps today. The market has been so volatile. I mean, I've been using one micro contract, and within a few minutes, I think I've been able to scoop up 50 points here, 100 points there, 200 points here. Was able to do that yesterday. And I mean, just a different type of environment I've never traded in before. I mean, most of these positions I got out prematurely as well, just because I was in so much in the profit so quickly. I was like, I don't even want to risk holding this any longer because the fact that I'm in the profit so soon, I know it could reverse on me any minute now. So my finger was literally on the exit button, just prepared to exit if I needed to, just because of the whipsaw action we've been seeing. I mean, it's not uncommon over the last couple of days to see a 50-point swing to the upside and downside literally within maybe a minute or two, no exaggeration. So I know you were talking about earlier how Chris Vecchio was talking about how one of the largest ranges we had put on in ES. Was like the second largest range we put on ES today. And that really speaks volumes because typically NASDAQ has a larger range than ES. And for ES to really become that volatile when it's not even known as the indice that is more or is the most volatile, I think speaks volumes. But regardless, been messing a little bit with the NASDAQ market, trading those micros, but risk management has just been in front of my mind. One contract, and it almost just feels like you're trading a mini at times, Gus. Like you're using one contract on the micros and the way it's moving, it's like, did I accidentally enter in a regular mini contract? But that's where we're sitting right now. That's really helping with some of the positions that we have on because the market's selling off. So that's hedging that a little bit. We're building a little bit of a cushion, but that's where we're sitting right now.
Yeah, I'm kind of in the same boat. It's gonna be a lot of waiting. I have just kind of been loading shares yesterday and today, just loading shares kind of willy nilly. I bought the whole Mag 7. And I got all three of the main ETFs.
You got some meta in there?
I got some meta in there. Yes,
a little bit of meta.
Yeah, you name it, I got it. I do have the entire Mag 7, and then I got. What else did I buy? I picked up a bunch of shares at Berkshire when I put on that trade. I got some Walmart. I got some Applied Materials, and then, like I said, IWM, SPY, Qs, all of it. I'm just waiting for a little bit of recovery, and then, the shares are just a nice cushion as I wait for the existing long delta options positions that I have open to get closer to expiration. I'm going to be in the red on those and trying to make up the
Which
loss.
one was that again?
What? Oh, just any options positions that I have in general. Yeah. Everything. Yeah. I'm waiting for moves back up and catching strikes. And so it's going to be a long road of recovery on those before they even flip to the green, in terms of P&L open. And so I want to have a bunch of shares that can be working in the background and gaining value at the same time. And this is all under the precedent that we reverse sometime. It must happen sometime, but hopefully it is in the next 90 days. Like I said, this morning I really thought that we had found the bottom, and now we're testing it again. So we'll see how we open tomorrow.
Yeah, it's like any underlying that we pull up, it looks the same. I know there's a saying, correlations go to 1 when everything's fallen out of the window. And that's kind of what it seems like right now. It seems like almost everything is correlated. So kind of another reason why I'm really going to be meticulous on that risk. Just heading into the next week or two.
Next week, huge week for earnings as well. It's kind of it's the beginning of the big earnings cycle we get every quarter. But Goldman Sachs on Monday, Johnson & Johnson, Bank of America, Morgan Stanley, a bunch of other financial groups. Tuesday, Wednesday. But it's a big week. We got Tesla going off, as you mentioned. Netflix is Thursday, TSM Thursday, United Healthcare Thursday. So a lot of earnings next week. I don't know how I feel that plays into the broader market environment here. I don't know. And also, this is more subjective, but I always feel like it would be so crappy to be a company in a time a company reporting earnings in a time like this. Obviously, it's crappy to be a company in a time like this. But reporting earnings in the middle of a steep downturn, it's like the market wants your stock to go down. Like you are working against the world. You could report really good earnings and still move down. So I don't know. We'll see if maybe some positive earnings reports on some of these market makers, Netflix, the biggest among them, is enough. I don't know that it will be, but we're going to find out.
Yeah, we're going to find out. The VIX is sitting at 50, so nothing is a surprise at this point. I think we've seen the most surprises that we could see, especially just the open after yesterday. I think that was probably one of the dirtiest rallies I know we keep mentioning it, but yesterday's rally was one of the dirtiest rallies I think I've ever seen in my life. And I'll probably ever see. A 1,500 point rally just from the initial sell-off out of market open yesterday was something for the books. Put some screenshots down. We're trading through some very historical moments right now, Gus. But gonna be paying attention to some of these earnings too. Again, I'm gonna have to pay attention to Tesla. This is one that I could potentially even trade it. Look, I know trading into earnings is crazy, especially with Tesla, but I'm really not against it, especially if I can just manage that risk. If I can manage that risk, I'm not totally against it because I know, again, you're bringing up earnings, and earnings is right around the corner. So something to think about.
Yeah, usually earnings are a nice way to generate some volatility in times of low volatility, and we are quite the opposite. I'm hoping earnings bring some stability, and that's never a fun camp to be in.
No, not at all. I'm just checking out the micro NASDAQ again just to show again how volatile some of these markets have been. And again, I don't know if anybody else is trading some of these futures contracts, but if you are, I mean, you can literally size down maybe half the size that you're using, even smaller, and you can still experience a very similar volatility than you typically see, even just by sizing down. But that's been like the motto of the week: sizing down, size down, size down, size down.
No, yeah, I agree. I mean, in times of risk, this is something Tony says all the time. I'm stealing this from Big Bat, but in times of risk, you gotta trade small. I mean, if you don't know, you don't know what's happening tomorrow, if you hit a home run, on a small thing, that is always the FOMO there. That's going to feel less bad than totally striking out on a big trade, always. So, yeah, and it's also so hard to be directional, and it's little stretches like this that make me want to get back into day trading, man. Because when I started trading options for the first time, it was like March or April 2020. I mean, right in the middle of COVID, and the volatility was like this. Wow. The volatility was like this every single day, and I was like, this is awesome. I'm going to be a day trader.
Were probably juiced.
It was nuts. I mean, it was, and the reason that things would go up and down were totally arbitrary. Sometimes it was wild, but all of that volatility, I happened to catch the right end of some tail risk a few times, and I had me thinking I was going to be the greatest trader in the world. And then all of a sudden, a year later, I was like, what happened to all the volatility? You mean to tell me it's not like this all the time?
No.
And it's not. But the point is, all this volatility and these intraday ranges, and we keep going red to green and red to green and red to green, and it all makes me want to get back into trading much shorter term, because there have been ample profit opportunities just intraday on these. And I almost start to feel like if we never know what's going to happen tomorrow, that doing things intraday might be smart. I mean, at least you can have some sort of idea of market sentiment and direction. If you get long on something and we have 3 more days like the days we've been having, you're just going to be screwed unless you have a long-term time frame. So.
No, 100%. And again, with the directional trading, I know even going into today, I know I had in my head volatility's increased. I'm like, am I okay with taking a $200 loss right now within a few minutes? Like, just getting into some of the trades, I was like, am I okay if the market flips on me right now? Am I okay to pull the trigger and get out? Like when we ask ourselves, am I okay to do that? Like, will we actually manage the risk? And that's just something that was top of mind. It's like, pull the trigger. If I'm down $100, $200, just get out and I'll call it a day. But it's at the same time, it's like, can I take advantage of this volatility a little bit? And it's like, if I can accept the risk, then I'll do it. But if I start to see my habits are not respecting the risk parameters that I put in place, especially in this environment, I know things can get ugly really quick. So that's just something that's been top of mind as well. But no doubt. Yeah, I mean, anytime where I'm starting to say, oh man, would day trading be more certain? Would day trading be smarter? It's like, things are pretty crazy, but I don't know that that's the incorrect sentiment to have. I mean, we all also are blessed, I suppose, fortunate to have options at our disposal and knowledge of how to use options, because there's no more powerful vehicle to be able to create leverage on that volatility and also to be able to make money as things move down. I mean, it's like you talked about with the zebra you threw on the cues. It didn't go your way, but had that been short or whatever it may be, you would be so much better off than if somebody had just shorted stock. So it's really powerful vehicle to try to take advantage of downsides. Also, margin is a bitch if you're trying to short. Oh, 100%. And I mean, again, with that zebra too, that was just so unfortunate. The next day, I just had to cut it. It was like not even any question about it. Sometimes I think you get to a point in some positions and it's like, I could let this ride a little bit, but I knew to myself, I was like, I would be very upset. Like, even just internally, I'd be pretty upset if I let it ride for the rest of the day to see if I can capture some of the profit back that I was down on. But I knew if things went south, I knew I'd be in a worse position. So I just made the decision, I'm going to get out. It was unfortunate. I think it was one of the days we had a pretty big gap down and sell off. It was one of those days. And I remember just thinking, I was watching it after hours. And because it was a zebra, I couldn't get out of the position. It wasn't a futures contract, so I could get out in after hours. So I was just watching. I was like, I really have to wait to see where this thing is sitting tomorrow morning before I can exit. So anyways, part of the risk that we take whenever we trade some of these zebras too. But at the same time, I knew we nailed a couple zebra trades before that. So everything's going to have a positive or negative consequence with some of these trades.
Well, yeah, and it's just emphasis on the fact that stop losses and price targets are such a valuable tool and something that you should absolutely be implementing on every trade. And it's funny because if you open up any book about trading, not necessarily investing, but about trading, on page 1, it's going to say never enter a trade without having a price target and a stop loss in mind before you go in. And that's something that I'm very bad about myself, actually, is I will be directional. I will, from a technical standpoint or a news standpoint or whatever it may be, my thought usually ends at, I think this is moving X direction. And it's not usually, I think it's going to move this much in X direction. Here's where I'm going to get out. And so in times of severe volatility like this, it's really important to keep in mind every trade you make what your actual stop loss and price targets are going to be. If you're trading on Tasty, I assume all of you are. We have wonderful stop loss features. You can stop market on the way up. You can stop market on the way down. And I use the hell out of those. If I got something moving up, I constantly have a trailing stop loss going behind it. If I set a trade that I know is going to be volatile, I'll set brackets on both sides to get out at a certain price, a certain profit, and a certain loss. And it's something I've talked about before, but I feel like we have a greater propensity to hold on to losers sometimes because you really want your original sentiment to be validated. When you have a winner and it goes up 20%. 100%. Yeah, you have a winner that goes up 20% and you're like, oh man, this was a great trade. My sentiment is validated. I'm out. But you have a loser that's down 50% and you really want to believe what you originally believed. So yeah, it's hard to keep emotions at bay and keep all that from swirling in crazy volatile times like right now.
No, I think you hit the nail right on the head. I mean, I know there were some positions where it's easier to hold on to a losing trade sometimes. Like sometimes it can be difficult. And I know I had this issue. It's like difficult just exiting the position and admitting you are wrong. And sometimes it doesn't even feel like in the moment you're battling between that, but subconsciously that's sometimes what you are battling. But being able to just eat that loss. I know there's a saying, it goes best loser wins. And I know there's some positions that we've all probably been in. And it's like, man, I would give anything to cut that at $100 or 200 now, but in the time being, you didn't even want to cut it, and then the market sells off even more. You're like, I'd give anything just to cut it at this price point right here. But market is really volatile right now. Again, key is going to be sizing down. I know earlier today, I think I seen Nick tweet talking about using limit orders, especially in this environment.
That was yesterday. Yeah. No market orders.
Yeah. And I thought that was funny because I know Dr. Jim will be on my case about using market orders, and I get it. And I thought that was funny because over the last couple of days, I've been definitely using limit orders, and I just think it's funny because Dr. Jim is always just like, "Come on, Errol, you need to be using those limit orders. I don't know what you're doing with those market orders." So that was another thing top of mind heading into today.
Well, yeah, it's it is so important, especially with options, especially where 1 cent in your that's $1 in your notional. It's a bit different with stocks, depending on how big your purchase is. If you lose 20 cents a share, that's probably not going to matter in the macro. But with options, you got to be so careful because it can move 10 cents on you, and all of a sudden you're in $10 worse than you expected notional.
Most definitely, Gus. Risk of the week, Berkshire Hathaway. I do really like the pick, especially in this time that we're in right now with how volatile the market is. I'm looking at Tesla. I'm still going to be looking at it. I know we have earnings soon on Tesla, so I'll keep that in mind. But anything else to add on before we hop out of here today, Gus?
Yeah, no, nothing concrete. Remember, guys, it's not about how hard you hit. It's about how hard you can get hit and get back up. And you gotta make sure you have money left in the account to get back up. So manage that risk. Better times ahead. Greener grass ahead.
No, I love that too, because one thing I've been saying too is like protect your confidence. Don't do something in the market that's going to ruin your confidence. And that's something I've been telling myself. Don't put yourself in a position that is going to nip at your confidence. So anyways, that's going to wrap it up today. Thanks for taking the time to hang out with us. The market's been really volatile over the past couple of days. So managing that risk is going to be first and foremost. But that's going to be it for today. Thanks for taking the time, and we'll catch you guys next time. Peace.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Christy Ross, St. Norbert College, Wisconsin. Number 85, because I like trades that have an 85% probability of success.
Lindsay Grata, University of Illinois at Chicago. Number 14, because that's how many times Tom asked me, where's my lunch?
Tom Sosnoff, State University of New York, Albany. Number 0, really? You gave me 0 because I like being delta neutral?
I like the looks of that lineup.
Well, Be Mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
You work a lot of hours.
Yes. I bet you can't guess how many hours a week I work.
Really?
Mm-hmm.
60.
61.
Oh, God.
$1,000.
So
Boom!
close.
Oh,
So
my day
close.
is starting out great. Want to go double or nothing?
Let's see. What color are jeans?
Blue.
You got
Common color of jeans. They write songs about it.
I thought it was tough.
Double. I win double.
Great job.
Yes, and you get nothing.
I'll pay you in love.
That's not how this one works.
I will pay you
No.
in hugs and kisses.
There is no hug and kiss worth $1 million. Cool.
I could make it worth $2 million.
I've kissed you before and it's not that good. Woo! This is what I love. Every time the game hurts you, she gives it right back to you.
What do you mean I don't kiss good?
You're awful. You're very mouthy. Man, this feels good. Oh, this is why I do it. All right, come on, let's keep going. I'm on a roll right now. What's the matter?
I didn't know I was mouthy.
You think it would be good, but it's not. You should practice more.
Okay, my turn.
Okay. Try to make a little money back?
Okay, you want to go big?
Yeah, let's go big.
I'll get it on this man's game. I'll get in this man's game.
Yes.
$5 mil.
$5 million?
$5 million and a speedboat.
A speedboat?
Uh-huh.
This is serious. Yes, I'll take the bet.
Okay.
Oh, boy, here we go.
I bet I know the name of your childhood friend.
Nobody knows the name.
Really?
I never talk about him.
Oh, really?
Oh.
Lenny Cancelleri. Bam!
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Oh, yeah.
It's Tuesday, April 8th, a little after 5 p.m. Central Time, the best time. You know what that means? It's time for Tasty Live's evening show, a little podcast, a little podcast called The Price of Truth, the show where we like to explore the incentives that govern our world. And good God, have they given you a lot of incentives to chew on. It's probably the only thing there is to chew on right now. More on that in just a bit. Before we get started, we should say what's up to everybody out there on tastylive.com, Tasty Trade desktop and mobile applications. If you don't already have both, go get them. I am pleased to announce, as we typically do on Wednesday, a little switcheroo here at my request, a little switcheroo. I am pleased to be joined by Chris Vecchio today. Chris, we got a lot to cover, but before we do it, I just wanted to say what's up. How are you, my friend?
I'm doing well, Victor. You know what you and my cat have in common?
I don't know, parasites, worms.
TMI, my friend. Okay. You guys both have April birthdays. Happy birthday, Mr. Jones.
Thank you, brother. And you want to know what's crazy? I was going to say this out loud. I actually had you switch with Ilya. Yeah, no, the worm's fine.
That's fine. Okay.
Emotions, I actually don't share. I had you switch because I get a kick out of these conversations, man. The conversations I have with you, I value them. I think they're thought-provoking. They challenge my own thoughts, and I appreciate them at a very deep level. So this is my little birthday present to myself, which is why I asked you and Ilya to switch places.
Let's be real. Let's be real. You sent me a Scroller Jones Sunday night into Monday morning. I wake up with 16 pages, and I didn't have enough coffee to respond. And then I never responded. And you're like, okay, I'm putting this guy on the spot. He's coming on the show a day early. I'm having this conversation.
No, not at all. That's happened many times, bro. Like people just, they say brevity is the soul of wit, and I write scroller emails. So what does that say about my wit? And people, I get to this point where people just go, okay, I tap out. I'm out. I'm not doing this back and forth with you. And so I'm totally used to it. Chris Vecchio, my friend, they took some heads today. Market was up 4%. In a complete swing, a couple of percentage points to the downside. S&P 500, just if you're not caught up on the day's action, S&P 500 down 1.5% cash. The NASDAQ down nearly 2%. The Dow Jones, your grandfather's favorite index, low volatility. Blue chip, dividend yielding companies down 0.4%, and the Russell down nearly 3%, 2.75%. Vol spiked bigly up to 52 in the cash. VIX future at 39.90. My friend, open-ended. Get us started here with your monologue, and we'll jump in. I got a host of questions for you, my friend. Your thoughts on today's price action?
Sure. I mean, let's just give some high-level contextualization here. This is only the fourth time in history that we've seen 5% intraday swings in the S&P 500, the others being 1987, 2008, and 2020. Those are all periods that we, at least from the financial markets perspective, consider to be crises. So we're living in the middle of a crisis right now. However, a week ago, we wouldn't be having this conversation. It was all about what would Liberation Day bring. And what it's wrought is a decline in the S&P 500 that's wiped out all the gains over the past year in just 4 trading sessions. So we are in the midst of that crisis. We also had a really unique occurrence today. The S&P 500 gapped open by more than 3% and closed lower on the session to a reversal that has never been seen before to such a degree. It exceeds the gap open higher and close lower in the middle of October 2008 during the midst of the global financial crisis, which I suppose affords 2 perspectives in that observation itself. One, obviously headline indexes don't bottom until March of the following year, but individual stocks begin to bottom quickly thereafter. I'm not saying we're near the lows, but we're in the historical territory that one might consider to be washout or wipeout. The reversal today, though, obviously is painful. It's a second largest intraday point swing that we've seen in the S&P 500's history, only exceeded by what we saw yesterday. So these are the interesting times that you never wish to live in. It's just a very difficult market to get your head around because there is so much inconsistency coming from the administration itself. Elon Musk is at war with Peter Navarro, or I'm not going to pollute your program, Victor, but a slew of other nicknames that he's putting out on X right now. Betting markets have Howard Lutnick as the first one to leave the door, in part because reporting is saying that Trump is walking around the room, kind of like in my head, given how I view him, like Heath Ledger in that scene in The Dark Knight when he gets up to the party. He's like, do you know who the Batman is? Do you know where the Batman is? Right? Do you know where Bruce Wayne is? Because apparently he's asking who came up with the formula to decide the tariff levels. And Bessett and Lutnick are like, oh, we got it from your Council of Economic Advisors. And Stephen Mirren inside the administration is like, well, this was actually recommended by someone else. And they're playing the blame game right now. So maybe there are signs of a turn, right? If Trump wants to put someone's head on a stick and get rid of them out of the administration and turn the ship around, that's always there. But the economic reality here is beginning to bite. And the reality is that tariffs are now in place. And with tariffs in place, all those little components that when you go online and try to find a place to buy them from, and the only place you can buy it from is China, those all are now 104% more expensive. And the sick reality of all this is that if you do a very simple back of the math envelope calculation, we take the percent of CPI that's related to imported goods, and we take that component that's directly related to China, and you would increase it by 104%, it would have a direct impact of raising headline CPI this year by 1.1%, everything else held equal. So given where the Fed is today, if we go from 2.5, 3, depending upon the inflation metric that you use, if you go from 2.5 or 3 where we are today and add another 1.1% on it a year from now, is that a world in which the Fed can come by and deliver support to the economy if there's a tariff fallout? That's a 2022 situation, perhaps. Do we get hikes? Do we get cuts? Either way, it speaks to a conversation that I think you and I want to have here publicly, which we were talking about a few days ago. How do you determine the right earnings level in this market? How do we just discover what the E is here? So this is a market in the middle of a very, very robust price discovery exercise right now. And I just don't know when it ends. And that leaves me with very little edge or confidence to operate on one side or the other.
Very little confidence to operate on one side or the other, meaning what? Meaning you're getting a much better price at 4,900 in the S&P, and take your pick on individual equities, but you don't have the confidence or certainty of the future in order to participate. That's effectively what you're saying?
Yes.
That you've got pros and cons on both sides. You've got a discounted price on one side, and you have clear economic uncertainty on the other. And so you are not sure.
I wouldn't phrase it like that. I don't have economic uncertainty. I have economic certainty on one hand. This is going to be very destructive in the short term. That's it, right? That's people are going to be out of jobs. We're going to see lots of layoffs. Companies are going to shut down. Small and medium-sized enterprises without the balance sheets or working capital to push through this will close. Some will fold sooner than others. You got to wonder what pharmaceutical supply chains look like coming into this country. Those aren't fixed. Those are dynamic priced, and those are resolved typically on a weekly basis in some cases. I'm very concerned about what this looks like for distribution of, groceries and food to rural areas in the country. I think this is very poorly thought out, and the lack of runway afforded to companies here in the United States could bite hard very quickly. I mean, we operate on a lot of small, medium-sized enterprises operate on very thin margins, Victor, particularly like grocery stores, for example. So the economic pain could happen quicker than anyone sees it, and the stock market is weighing all future growth prospects. And right now it's suggesting that future growth prospects are weaker for the country writ large. We need to see some sort of plan here to get a step back, but that's why I also don't want to get short right now. because this is coming from inside the House. If Trump comes out tonight and says, I've directed the USTR to begin negotiations with the European Union, Japan, Canada, the UK, South Korea, India on bilateral trade deals to reduce trade barriers between our countries to zero, the market's going to be up like 6% tomorrow, right? So every day it gets worse and the market's going to bleed out a little bit. But the second we hit that tripwire, as we saw with yesterday's Walter Bloomberg rumor, this thing's just going to rip. And that's what, I don't want to be caught in that convexity. So I am idle, unfortunately, and it frustrates me.
All right, let's wade through all this. So let's start with the Walter Bloomberg tweet from yesterday. Let's start with what happened, and then the impact. Do you want to lay it out for people?
Sure. I'm a dad, one time over, hopefully second time over in a few months. Mm-hmm. So forgive my joke here. Walter Bloomberg, unrelated to Dave Reuters, he tweets out that that Kevin Hassett says to Fox News, well, he says that we're going to be looking at a potential opportunity for President Trump to give a 90-day pause on tariffs.
Yeah.
Now, this is an interview on Fox News that is tweeted out and circulated publicly 2 hours earlier. And so the snippets of it are out there. Like there's an account that I know I follow. It's probably on the more left-leaning side of things. ACYN, A-C-Y-N, he tweets out clips of stuff. But this is tweeted out at 7:30, 8:30 in the morning. And no one really thinks of it because, of course, President Trump is the guy, as Kevin Hassett actually says. In response to the question, is President Trump considering a delay to the tariffs? And Hassett says, This is President Trump's decision. He's going to decide what he's going to decide. 2 hours later, Walter Bloomberg tweets us out that Hassett says that President Trump is considering a 90-day delay. And we have the rip of all rips. From low to high, the S&P 500 rallies 8.26%. Right, every 2% of the S&P 500 at these levels is about $1 trillion in market cap for those watching at home. So you say it rallies $4 trillion, it's a little bit 8.26%, right? And along the way up, we get this headline coming out of Europe that their chief of trade is willing to bring industrial and automobile export tariff levels down to 0%. Pretty good deal, right? So you got some fuel to that fire. 20 minutes into this rally, Victor, not to let anyone have too good of a time, the White House tweets out, no, this is fake news. And the market gives it up. We fall down to about 49.80 from 5,300 or so in very short order. As we rally back here, we see that the Trump administration, Donald Trump himself on Truth Social tweets out yesterday that, of course, if China does not rescind the retaliation that they set forth, we would be tacking on an additional 50% tariffs to what was already announced. So China tariffs go from 20% to 54%. And by the way, we're getting another 50 on top of that to bring it to 104. Now, the market, while it fell backwards and kind of replaying this as the course of the day, and it feels like this past week has been one long day for what it's worth. Yesterday in particular, we see that the market, while it does pull back, people start sending messages out, and you could see it in the various hedge funds and the writings that are in opinion pieces, if it's Twitter, social media, what's being discussed. 104% tariff. Surely this is a negotiating ply. It's a tactic. It's not real. That would wreck everything. Okay, this is going to get China to the table. And, we start to rally again. We rally this morning. But China is sending out messages the entire way. They're going to fight this to the end. They're going to do whatever it takes to push back. They're calling this bullying. They're letting the yuan weaken. Now, in 2018 and 2019, I linked to this in a Twitter thread yesterday. I had modeled out if China wanted to completely negate the impact of the Trump tariffs, they'd have to allow the yuan to weaken somewhere in the neighborhood of 720 to 730. And the simple math being that they have a certain amount of exports that they can improve upon through global trade if they allow the yuan to weaken. At the time, studies of trade elasticity showed that it was basically elasticity of 1. And so for every 10% appreciation in the yuan, you're getting about a 1.5 trillion boost to Chinese exports. So modeling that out, you look for the yuan to move X% and you get to 720 to 730. This time around, doing that same modeling, with a new trade elasticity. There's an article that I read yesterday in the Asian Journal of Economics Journal, rather, that says that from 2009 to 2023, the elasticity of demand for Chinese exports is about 0.65. So a 1% decline in the real effective exchange rate of the yuan leads to a 0.65% increase in Chinese exports. Using those ratios, that means from the level of about 727 prior to Liberation Day, the Chinese yuan would need to rally to about 930 in order to offset the effect of the Trump tariffs. And if the Chinese government is going to fight these tariffs in the early stages, they let the yuan weaken. They do so by perhaps selling treasuries and offloading gold in order to free up the liquidity they need to make the changes on their FX reserve balance sheet to let the yuan glide lower. This is a clear message today from the CCP that this is a trade war that is not going to be resolved simply overnight. Perhaps Trump is going to treat China differently. The best thing that he can do for the market is signal that this is, Victor, like you and I hoped, as we're trying to piece together some semblance of a logical outcome here, a fortress North America, or maybe even a fortress Western world. That clarity only arises if we get announcements of deals sometime soon. But the China news, 104% increase overnight, that is going to hurt a lot of businesses here in America, which have no other outlet right now for components manufacturing here in the U.S. And I have an anecdote to discuss that, but I've been talking for a while, so I'll stop.
A lot there. That was great.
Yes.
Let's do this. That the China deval, that was always the potential, the method of them defending against tariffs. That was on, as you mentioned, that was on the table before. That's on the table again.
Sure.
Here's what I'm really curious about. I think when we went into this, two points real quick for your reaction. The first point is, you and I had this conversation about Trump 1.0 administration, and effectively, Trump was an unknown quantity as a politician at that time, and so he would make these proclamations, he would make these tweets, this policy by Twitter, and you would get these massive reactions in the marketplace as the market tried to discount worst case scenario, and they were dealing with a person whose style was to say something that might be 2 times worse in order to get his negotiated settlement closer to what he thought was an advantageous deal. And by the end of the presidency, you started to see more muted responses, more muted discounts based on those claims or proclamations. And at the beginning of this presidency, I mentioned to you that keep that in the back of your mind. It's been 4 years. We're now going to get large proclamations. Keep it in the back of your mind. What's interesting, and Michael Cow, Urban Cowboy on Twitter, said something very similar, which is, it seems like these proclamations at the beginning weren't getting fully discounted. And so he's getting the luxury of going further and further and further and doubling down on these proclamations. And what I said about that issue, after sort of having this conversation with you, that this person would make these massive proclamations and you have to understand their negotiating style, is what I don't think I considered is that knowledge is vol damping. So the fact that we all know this about this guy means, volatility is mean reverting. That means he's got to get the same level of sort of market response, or perhaps response in his counterparties, to believe that this guy is making a legitimate threat.
Yes.
The claims have to be bigger and bigger and bigger, and he has to hold the position for longer and longer and longer. And so when I think about that, that's point number one. Point number two then is the guy path dependent? Is this administration path dependent? In other words, you've got this standard distribution of outcomes. We all know what the happy path is. The happy path is you make these proclamations of tariffs. People don't want to suffer any volatility, social, financial, or otherwise. And so they pick up the phone, they give you a call, and you get one of three things, or all three. You get a commitment to lower any existing tariffs or trade barriers. You get them effectively promising new commitments. So excess dollar savings won't just go into the Mag 7 or won't just go into the U.S. Treasury market. You're going to divert some of that as a commitment to capital expenditure in the United States real economy. And the third thing is you get is, I'm going to be with you in strategy as you attempt to shift this negotiation towards China. In other words, he builds a multilateral coalition in order to take on the quote unquote final boss, the U.S. versus China trade war 2.0.
Yeah.
So I think we all know that is the happy path. And I think the market thinks he's bluffing to try to get to that happy path. The more I think about this, Chris, if you came into this with only one solution, only trying to get out of the distribution curve in one direction and not being at least open or willing or having a positive net outcome on both sides. In other words, if you were path dependent, you're kind of effed before you even start. Because if idiots like me sitting at my desk can figure out your best outcome, all of the most brilliant market participants and strong leaders throughout the world can figure their way around your best outcome, which means you have to be independent and flexible in what you believe to be the true outcomes. So I guess what I'm asking is, do you think there's a card that makes Donald Trump's hand going towards the left tail distribution? In other words, he escalates, and he doesn't necessarily get enough people, enough coalition of the willing, so to speak, to the table. Is there a path that he says, okay, in that scenario, let's just say, for example, I've now got to have massive printing and I have to subsidize industry, right? I got to subsidize farmers. I'm going to have to subsidize all types of industry, which in a way is going to weaken the U.S. dollar, and as is a way to sort of counteract the potential weakening of the Chinese yuan. And he might be okay with that in a way of another big print inflating away the debt. Do you think that there's anything on the left side of the distribution that Donald Trump could come away with this as a positive outcome? I don't hear anybody potentially having that conversation. I hear everybody focusing on whether or not this is going to work, meaning he's going to get to his happy path. But what's his sad path, and what's the probability he's okay with it?
What's the left tail? Elucidate my mind, Victor. What's the game-winning outcome here?
This is what I've been racking my brain on, Chris, because I think I was too intellectually inflexible. I dealt with a billionaire couple that went in on a startup.
You and your wife.
And one of the things that this group kept telling me is, you can't be so closed-minded in your decision making. You've got to be open to letting the entire range play itself out. And you've got to be open. You have to put yourself in more positions where you're okay going left or right. And I can't get that out of my mind. It would be crazy to put himself in this situation if all of us know his cards and all of us know the set of cards that make his hand. You can't win a card game that way.
Oh,
so that means, in a way, you have to be path independent. You have to be okay
with
these negotiations not playing out.
I think that's the key feature of one Donald J. Trump. There's no path dependency. Path dependency being the idea that like past events help pave the way for future outcomes. I think Donald Trump wakes up every day with a fresh set of eyes on the world.
I think so too.
Right. And so that's really the issue here. I mean, like, you talk about building a coalition of the willing. Who is going to be willing right now? If you really wanted to effectuate this Fortress North America, go after China, you fix the USMCA first. You get China and Mexico on the same page. And you get Europe on the same page. And then you make your play against China, right? Like you play it out over time. You build the barricade. You build the arsenal of democracy, as Churchill might say, if you will, before you go to war. But Trump is effectuating this trade war in the exact way that the rest of the world did in the 1930s, much to Churchill's chagrin. Instead of banding together and building up before we fought the big bad evil, we just did everything on our own terms and stayed fragmented. And by the time we had to fight Germany, what happened? Well, they were able to steamroll everything for a little while. If we want to build a coalition of the willing, even something with Canada, do you think that Mark Carney or Pierre Poilievre would be someone more on the same page as Donald Trump? I mean, like if he really was trying to do this to build a grand coalition against China, he would have made the U.S.-Canada relationship as easy as possible for Pierre Poilievre to win that election, and then negotiate with him on the trade terms instead of a Mark Carney, and then go after China. So I don't think there's any path. There's no path dependency here.
I can't presume to know that if what my read on what the administration is trying to do is correct. So I want to start there with humility and what I think I know. But if what I think I know is directionally accurate, I would say there's two things that I don't really understand the plays. One of them is what you're saying. I think we want to win on every deal. And the problem with wanting to win on every deal is sometimes maybe you give your neighbor a little bit better of a sweetheart deal, but you get it back and giving yourselves higher probability and winning the bigger negotiation that ultimately you're after. But if we want the best price on every deal, if that's what you feel, that you're the great negotiator and you've got to get the absolute midpoint price on every deal that you strike, I think that could be a potential strategic error, to your point. And the second thing that I don't actually understand is they were patient about talking to the market, right? April 2nd, Liberation Day, markets respond, they go quiet, which I thought was like strategically, I thought that was actually kind of smart. It was kind of a bold move. But then you get a reaction from China and you just can't help yourself. You can't help yourself by waiting a couple of days. You immediately have to come over the top. And you've escalated the situation with China before you even have the opportunity to have the discussions with other trading partners and build a coalition. You've created even more vol, even more negative solution for people. You've made yourself less of a trustworthy negotiator. So I think what I think is true, I think those might have been strategic errors. What you might have done is, again, go play ball with Canada and Mexico. Maybe they get a little bit better deal than otherwise, but at least you've got some people on your squad. You start building the coalition. And the other thing is just wait to retaliate to China. Give it a beat. Give yourself a couple of days. Keep talking to the coalition. If you've got 70 phone calls, as they said they did, get those to a good place before you start going, just batting piñatas. So I think, to me, that might be another strategic error. We shall see, though. But clearly the market is voting. Can I ask you, do you think this is a gigantic... Go ahead. Feel free to respond. Sure.
Yeah, no, the market has voted here. And, I think that we as human beings always feel like we have more control over outcomes than we actually do. TARP passes. Did that stop the sell-off? Did that stop the bleeding? Did the housing market recover right away? Recessions are nonlinear. I know I put on my best Southern drawl I could a few weeks ago when I said, Victor, the Secretary of Treasury is talking about detox, and we hear other people saying we have to cool down. That's fancy talk for recession. But you don't, gambling with recession for what? to refinance the debt at lower levels. Treasury yields are up since Liberation Day. We've wiped out $12 trillion of equity value. And now if we were to refinance today, we're refinancing at higher levels. You have people like Chamath, who, gosh, this guy is the worst person on Twitter. Not only is he a SPAC king and telling everyone to grin and bear it as the stock market goes down, while he insists on making America dress well again in his imported Italian suit, which obviously contributes to the trade deficit. How dare you, hypocrite, not help our trade deficit in a patriotic manner and buy Men's Warehouse like the rest of us, Chamath. But you're also out there promoting the fact that you own a mine for rare earth minerals, Chamath, that we will be working in. And don't worry about losing access to China's rare earth minerals because you have ownership over one. God, these San Francisco, we deserve better villains, Victor. These are Gilded Age cartoons, and not even because Andrew Carnegie was building libraries across America and promoting values of free trade across the world in his free time. It just disgusts me. So yes, the people right now who are paving this path, trying to convince everyone that this is a good policy outcome, it has failed. And even if it's a good trade-off, we wiped out $12 trillion of value for what? To save $100 billion in interest expense every year for the next decade? We couldn't get there. We need a change in policy. The market does not care, as we said a few weeks ago, about gender, ethnicity, creed. It doesn't matter about your religion. It doesn't matter about anything except the future value of cash flows. And the market's telling us right now that this is bad for the economy. Druckenmiller once said the best economist he knows is inside the stock market. What is the stock market telling you? I just don't want to see people lose their jobs over this policy, Victor. And I did the channel checks this weekend.
It's too late.
People, it's too late.
It's too late. Here's the problem with what you're saying. Here's the flip side. The flip side is you're in a hand right now, Chris. Okay, and you're sitting behind, a friend or foe, whatever. But their fate on the card game is linked to you and your fate. And you just put a $12 trillion worth of chips in the pot. And you're saying, fold the hand, fold the hand, fold the hand. And I ask you,
fold the hand.
You fold
Save
the
face.
hand.
Save face.
Hold on.
Save face.
I got you. Let me work through the thought. Let's have a good conversation.
Sorry.
If you fold the hand, where are you left? You have no world leader is going to do business with you or take anything you say seriously. You have a base who you've asked to come along with you. You've inflicted this massive economic pain to some of them, not all, because I would argue there's a decent portion of this base that's not an asset owner, and that's sort of the problem. That's how you get to this point in the first place. So if you fold the hand, do you think stocks magically recover back to 6,000 because you say, okay, that we're not going to go forward anymore? We've probably stepped into a place where we've already shifted sentiment, we've already shifted sort of allegiances, we've already shifted capital flows. So I hear you that the easiest solution that is to say, fold a hand, find an off-ramp, and back out of this. Cooler heads prevail. But I would ask you to consider where that actually leads and whether or not you're in a stronger or weaker position. Again, and I'm also acknowledging that there were two bets in the hand that I think were sort of miscalculated. The Canada bet and retaliating to China instantly. If what I think is happening, I think those are miscalculated bets. But again, I ask you, we've started this process, and no matter what you try to do to change the distribution in this country, it comes with economic or with financial pain. We are going to have to pay the piper of the financial volatility that we have held underwater like a beach ball. We're going to have to pay that price if we actually want to do something about redirecting capital flows and redistribution of outcomes in the United States. So if we're saying, you know what, the pain is too deep, we don't want to address this issue, let's just leave things as they are, That's what folding the hand means. You effectively give up on this. You're not going to do a wealth tax because you know what that leads to pain too. And once you try to press that and they start selling off stocks, you go, okay, forget it. So you either acknowledge that the American system as it is the best system, and the redistribution is just it's a feature, not a bug, and you got to live with it until we hand off primacy. Or you do something bold through some measure. And I'm not saying this is the best place to go. I'm saying anything you try to do to redistribute capital flows is going to have a negative financial impact. So my question to you again, what happens if you fold the hand?
I think one of the features of Donald Trump, if you've watched him enough for the past decade, and if you've been a New Yorker, you've known him your entire life, is that he loves to declare victory and take credit for things. He never, ever takes responsibility for things. I think that's a feature, not a bug of who he is. So the solution here is clear. You don't need an off-ramp or a hand folding. You need a way for Trump to say that he's declared victory somehow, right? That's how this process starts.
Yeah, that's
the market
an off-ramp. That's an off-ramp.
Right. I wouldn't call it a hand fold, though. I think that what ultimately the best path forward here, and I think what the market wants to see, is when one of these foreign leaders says we're prepared to work with the United States on 0% tariffs and reduce other trade barriers between the economies, we'd like to see a formal agreement put forward that Trump speaks about. Like the U.S. and Japan have agreed to a 90-day negotiating window. And during this time, the proposed tariffs that would have been implemented on April 9th have since been paused. If there's no agreement by the end of the 90 days, then those tariffs will go into place. Something as simple as that, right? And Trump can come out and say, see, this worked. Japan knew this would hurt their economy. It would hurt our economy. It's best that we reshuffle the deck. We both can walk away from this now. We're going to negotiate and get a deal on the table. And that's just that. Even a 90-day window, you're not upending supply chains. You're not upending those inventory purchases for the third quarter, which are starting to start right around now that the second quarter has officially begun, right? You can begin to formally plan for the future. And that's desperately needed, because if you look at business surveys, consumer confidence surveys, surveys of small business owners, right, across the board, regardless of political affiliation, you're starting to see that the future is looking a little less bright. And if you, as a business owner, think that business conditions are going to be worse 6 months from now or a year from now, you're just not going to deploy the capital that you need to make additional hires. You might cut staff. You might, as we talked on first call, begin to reduce shop hours so you can avoid the layoffs initially. But that's bad for business, generally speaking. You're reducing aggregate demand or even aggregate supply within the community. So that's not the desired outcome here. The desired outcome, as we've discussed in other forums, leaner, more efficient government, more manufacturing at home. I wouldn't say closed borders, as Donald Trump said yesterday. He's for open borders, but he's for limited mobility of labor, high mobility of capital. Okay. And that only comes if you have free trade deals in place. So if we want to give Donald Trump the benefit of the doubt and we want to get an off-ramp here, we need to see him find a way to declare victory in some form or fashion, that the process of taking down the cap has begun. And even though there have been potential signs of that from other countries, the U.S. administration has not budged so far. It really wanted these tariffs to go into place first to show other countries that they're not going to back down. I don't think that's a function of looking weak. He's done his part. He sank the market 20%. The tariffs are in place. He can start declaring some victories now. And that incentivizes other countries, by the way, to come to the table, because every time someone lowers a tariff rate, like Israel did last week, and they still get hit with one in reciprocity, or Australia, who we actually have a trade surplus with, got a 10% tariff, they may just say, like, what's the point of us coming and groveling right away? This is an irrational set of actors. There's real politics at play here. We can't just fold. So I hope there's an off-ramp for the sake of, again, businesses here. I don't want to see that layoffs go up by hundreds of thousands of people over the next few weeks. That's horrible.
Yeah, I agree. But didn't your Federal Reserve tell you that that was already going to happen? Didn't they already tell you that unemployment was going to go from 4.1% to 4.4% in their magical piece? Isn't this? when the central bank, there's been two periods in time in the last couple of years where the central bank has told you unemployment was going up. The last time was 2022, and now they're telling you that same thing is going to happen. Is that not in the price, Chris?
I don't think that's fully in the price because the scope and scale of the job losses that we would see would be well beyond the Fed's expectations that they've outlined thus far. And that is why this is such a policy conundrum for the Fed here. There's a few things that are going on right now. You see that inflation swaps are coming in across the broader market, but in turn, term premiums are going up, which speaks to policy uncertainty. Likewise, swap spreads are beginning to crumble, which suggests there may be funding stresses beginning to grow in the banking system. That's what draws the Fed to the table. That's one thing that didn't happen during the SVB and Signature Bank crisis of March 2023, right? Credit markets really remained calm the entire way through, and that's why a few weeks after SVB and Signature Bank go down, the Fed actually hikes rates again, because they're not going to just cut for the sake of cutting. They need to see some rhyme or reason as to why it's necessary to cut. You're beginning to see that pressure build up here. I think that's why today, when you go into the market close, what happens for the first time, we see a market that's beginning to price in a chance of a May rate cut. In fact, May, June, July, October now priced for 4 cuts this year because of how those interbank lending swap spreads are beginning to move. But that's also, again, why is the Fed cutting? The Fed's cutting for terrible reasons. You don't want the Fed cutting for recession reasons. You want the Fed cutting for maintenance reasons, and that's decidedly not a maintenance reason.
Now, this brings us into the movement of the long end today, or basically today and yesterday. So the long end has tanked over the last couple of days. We're now at like a 115 level. And so my question to you is, what do you think is happening there? Do you think it's the U.S. fiscal situation that's rearing its ugly head, that this time it is different, that in the past the recession playbook was, hey, I'm going to go buy bonds and hide out in low volatility assets and protect my capital? But if this time the world sort of believes that you're already, this is what I've always thought, you're already at 6% deficits to GDP. And when you're already at that level of spending, deficit spending, and you get a significant growth slowdown, you've got two choices. You can either try to put your earmuffs on, I see nothing, I hear nothing, and just pretend it's not going on out there, and you do not increase government assistance during a slowdown, and you are going to have a mutiny on your hands. You're going to have social volatility on your hands, to the likes of which we've likely never seen before, or it's been a while since we've seen, I should say that. Or you increase government spending, which means that 6% of GDP actually goes up. So if you're looking at prices and you're telling me, Chris, that the probability of recession is increasing and you're seeing it in the price and layoffs go up, if you're telling me that that's the world you see, I'm asking you, why would I want to be an owner of a long-dated treasury right now? How is that not the sucker's bet at the table because of our fiscal situation, and because the likelihood that I'm going to maintain my purchasing power is so low that a 4% yield is not enough risk to take in a U.S. Treasury given that potential setup? Do you think that's what the bond market is saying, or do you think it's something different, that there's some massive foreign holder of Treasuries that decided to dump over the last couple of days to teach Trump a lesson and make this difficult, or some combination thereof? What do you think's happening there?
Why can't it be a little bit of everything? We may have trade balance deficits with these countries, but you know what we have with them? Current account surpluses, because that's how it balances out. No one's talking about that. It's like we're focusing on a very specific balance sheet item and saying, this is out of whack. What's happening at the long end of the curve is a very good question. Someone who's long bonds. I don't like when trades go back to break even in the span of 24 hours after holding them for quite a little bit of time. But the reasons for which that is happening alarm me. If we have a J-curve type of outcome here with trade, you talk about a significant pullback early on and then things stabilize. To what level? Who knows? Could be a lower level. Maybe it's the same level. Maybe it's higher. History tells us it will be at a lower level. But that also means in the short term, we're going to narrow our tax base. And so at the same time, as you point out, that we're looking at these challenges on growth, we're not only shrinking our revenues, but we're also shrinking the source of revenue, right? So even if the source stayed the same size, that revenue would shrink. But we're also shrinking the base of that revenue at the same time. So that puts more strain on the deficit.
And you're likely going to be increasing spending on the other side of that.
Well, I was about to get to the unemployment benefits now that come with the increase in unemployment, which means now states' funding is strained, federal government funding is strained, and so you have less taxes, more spending. The deficit is going to actually widen out relative to expectations. Here's the funny thing about trade. There is no reason for any other country to buy our debt except for the fact that they have all these US dollars sitting around that they have earned from selling us stuff. And so if a country is being told, actually, we're constructing this big trade barrier between the two of us, they may say to themselves, well, why on earth are we holding U.S. treasuries? We're not going to participate in future auctions. We're one less buyer at the table because we just don't need to hold the same composition of U.S. debt anymore. We're not going to have as many dollars coming into our system. And so, in fact, if we want to effectuate a change of weakening our currency to help offset and insulate our economy from these efforts, why not sell off some debt? So do I think it's possible that China or other people are reducing US dollar holdings? Yes, I do. Because we're telling them, we're sending a big bright signal to them that we will be sending less US dollars to them in the future. And there also could be retaliation in there, but there's no proof of that. So that's a good story to say. But it would make sense if that is what's occurring indeed. But again, if the stated goal was we want to bring manufacturing back, it's just very difficult to do, having experienced that myself. I'll tell you that this is not going to happen quickly or overnight, and you're just going to see a lot of places shut down. And just a small anecdote here about like my own small components issue. My fridge broke. We had a pipe burst in the house. I've kvetched about that here on the show previously. The very particular piece that I need to fix the refrigerator so that I can get ice back and have to stop refilling a tray myself. There's only one country on earth that makes it. One. Can't buy it here in the US. It's China. I can't buy it here in the US. I can't find it in Thailand. I can't find it in Mexico. It's not available in the UK. I'd have to buy it off of eBay, so someone would have to take a piece out of a fridge to give it to me. I don't trust that thing to be working. I want a new component for the refrigerator for the ice machine. I can only get it from one country on earth. And this cost is $23, and I ordered it, and I still haven't gotten the call from customs yet to see what the tariff schedule looks like, but maybe it's going to cost $46 now. Who knows? But I purchased it for $23, and I'm still waiting for it to come in. And it's held up at the moment.
Some part of me wonders, remember in the CR, there was the move by the Republicans to make sure there was a raised debt limit, like a significantly raised debt limit?
Yes.
Some part of me wonders that probably plays into this, right? If you know you're going to go into this and you know your right distribution outcome is this set, your left distribution outcome is this set, and you probably want to open up the budget in order to be prepared for that left tail set of outcomes, which is, man, can you imagine that world? Almost can't imagine it. So then the question becomes, now we set the table with this conversation. I've really enjoyed it so far, and I knew I would, is what do you do? What do you do with an incremental dollar, Chris? Because, and again, this has always been the set of choices I think we've faced since 2002. If you look far enough on the left tail, there's a big fucking print just sitting there. Either a fiscal impulse, a monetary impulse, it's just sitting there. And we haven't even talked about the $80 trillion of unfunded Social Security and Medicare liabilities that are sitting out there that we've got to deal with in the next couple of years. We're not even talking about that. But on this left side, dealing with our problems is the same thing that we always do. And on the right side, there are times history has told us. If I were to go back through the list of things that you and I have probably lived and traded through, the dot-com burst. I've got a list here: 9/11, Afghanistan, Iraq War, Katrina, $150 oil spike, Great Financial Crisis, Lehman Brothers collapsing, Madoff, QE, Greece, flash crash, Arab Spring, Fukushima, MF Global collapse, debt ceiling crisis, LIBOR scandal, Cyprus banking, taper tantrum, Russia annexes Crimea, oil price crash goes negative, Swiss franc shock, China circuit breakers. I could keep going on and on and on. That history has told us that you don't want to abandon the right tail of outcomes. So, Chris, I'm asking you, on the left side, you have massive currency depreciation potential. And on the right side, it's that, people are much more afraid than reality tends to be, implied vol tends to be overstated. That's the cleanest way to say this.
Sure.
What do you do?
Well, if vol is overstated, and obviously it closes up higher here today, VIX is at 52.33, but IVRs across a number of assets are easily 75th percentile or higher, right? S&P is 123 right now. Directionally neutral vol selling down here is the back-tested best thing to do. And I know that's not a very sexy answer, and remember when I was an oil man, Victor? Simpler times. This is a market where if you look at the history and you want to bucket out volatility, you have rightly critiqued, why did I segment this out in when the VIX is under 15 or 15 to 20 or 20 to 25, and why not just do it in the different deciles? But for any study, the way you want to cut this now, we're in VIX levels where on a risk-adjusted basis, on an average daily volatility basis, the best bang for your buck, the best risk-adjusted return that you get is being a directionally neutral vol seller. That could be something like short iron condor. That could be something like a short strangle. You're afforded a great deal of vol right now, so you could blow those, short gut positions out really wide right now and still get compensated with a high probability of profit to a reasonable degree, as far as I'm concerned. That's what I did today in notes. I still have long delta exposure on in notes, but I wanted to bring that in a little bit, because if we do go into a serious growth scare, if history is any guide, but history is from the guide post of the U.S. being the global hegemon and not trying to extricate itself from the global system upon which it sits atop of. I don't know how good of a guide history is right now, but let's just assume it's still a valid guide. Then bonds, notes, gold, those are places where you head out in a recession, which appears to be around the corner. But there's a volatility is running up the board right now, so directionally neutral vol seller is the best risk-adjusted return on your capital if you look at studies, and quite frankly, people can do this on the platform. You can backtest on the platform and, do this discovery, if you will, yourself. And I would always recommend anything that I say, double check it, please. Not you, Victor, though. Take me at face value.
Why not Bitcoin? I know that's going to sound insane, but if I think right now the market's got to find somebody's puke point, right? It's got to find the administration's puke point, and it's got to or it's got to find our counterparties in trade negotiations. It's got to find their puke point, or it's got to find a central bank's puke point. And I don't know, man. A lot of these people are looking like they don't want to fold the hand. And I'm not sure if the system, after suppressing vol for decades, I'm not sure if the system can just withstand the massive beach ball that's being let up out of the water, withstand it without breaking some pipes, man. I know I'm sort of speaking and talking more metaphysically than reality here, but why not Bitcoin? Because on the left tail, if the market goes and finds the puke point, you're going to have a response, whether that's a fiscal response, a monetary response, a backpedal in negotiation, or a hand that's laid down. And in those cases, wouldn't Bitcoin be the best performing asset in those scenarios, left or right tail? Why not Bitcoin, Chris?
I mean, on paper, wouldn't it be? But it hasn't behaved as such. It still behaves like a high beta asset. That's the most confounding thing. So from a trading perspective, from a hodling perspective, from the fact that, if the deficits are going to blow out and the Federal Reserve is going to give us lower rates and Trump's going to go full Erdogan and, through his administration's lawsuit challenging Humphrey's executor, he's going to find ability to fire independent commissioners in the government, which granted the appeals court rolled back yesterday, but one has to presume he's going to challenge it to the Supreme Court. But if Humphrey's executor is removed, then he could fire Powell on the spot. And then how does the market behave without an independent Federal Reserve, right? Victor, the field is wide open. This is the most wide open trading environment that we've had in a very long time, where
I love it.
I don't want to say I'm ill-suited for it. But what I've recognized that I'm not a good scalper. That's
the greatest opening line. That's so funny. Let me clarify. I know there's a lot of people out there that are taking some pain, that are nervous about their position, that are nervous about how to navigate, they're nervous about the economy. That's not what I mean. I have empathy for,
of course,
people. I've lived my entire life in service of retail traders. Okay, either building them, technology, supporting them from a service standpoint or with education. I in no way mean to make light of the volatility and the financial volatility that creates for everyday people that I've lived in service of. Let me be very, very clear. But also, after doing this so long, Chris, I can't believe it, It's like it's been 18 years, bro. 18 years in the blink of an eye. And I sit here and I look at the numbers on the screen. And every day, those numbers on the screen are projecting a future world, 9 months into the future, something like that, right? 6 to 12 months. Let's call it 9 months. And if you do it long enough, you can actually see that world forming in front of you. You can see the unemployment. You can see the jobs either being created or disappearing. You can see the shifts in the economy from one type of economy or certain types of jobs, capital allocation in one part, moving to another part. You can see inflation miles before everyday people are paying higher prices at the grocery store. You can see wealth inequality. You can see it in those green and red numbers moving up and down on the screen. And after doing that for a long time, I processed this pain, this sort of frustration. I processed it like a year and a half ago. There's this clip, this conversation I had with Tom, and we talked about being a humanitarian and also a capitalist opportunist, knowing that when things get crazy and when things get volatile, when things get chaotic, there's price dislocations. And the whole point of this game is to try to find and take advantage of those price dislocations. But you have to be sort of a weirdo to not be able to process the empathy of what all those price dislocations and those numbers moving on the screen actually means. And struggling with that is hard. But the fact that this is a 9 to 12 month discounting mechanism in the future, I don't want to say it was like I saw this coming, because that's not what I'm trying to tell you. What I saw is an inevitability, Chris. I saw a debt problem that was so big that you had two choices. You either keep going down this path and you make what is already a bad wealth inequality problem even worse, or you try to fix it. And if you try to fix it after decades of kicking the can and kicking the can and kicking the can, I don't think people know just how difficult it would be to even attempt to try to fix that. And I processed that like a year and a half ago. So as I sit here in the screen and I watch the numbers go up and down, it's it's not that I'm cold-blooded or emotionless or whatever. It's just that you kind of process this, man. Like, you can't just borrow money forever. You can't crowd out all your tax money forever. Eventually, you have to pay. And what's happening right now is we all have a choice on how to pay by taking out more debt and crowding out more of our tax dollars from productive spending, or doing something about the trajectory of our debt to give ourselves more runway to maintain the U.S. hegemony. And that we have, my biggest problem is with people who just think there was never a problem. There was never a problem at all that we didn't have to do anything about. I think that's completely unrealistic. And if that's where we start the conversation, what I always ask to people is, okay, what's the solution? And I think that's the hard part. You know, you can squawk unto your heart's desire about why what we're doing doesn't make sense to you and why we should stop. But then again, I ask the same question that I ask everybody else: what is the solution? Because without one, less of your tax dollars go to school spending. Less of your tax dollars are going to go towards police and firemen and public services. We are going to have a Social Security crisis in the next 5 years where we cannot afford to pay out 100 cents on the dollar. We will pay you out, but our deficits explode in order to do so. And so my question has always been, when we started this show, The Price of the Truth, man, I started talking about shit that, like, people are like, what are you doing, dude? What are you doing? Why are you talking about debt? Debt doesn't matter. Why are you talking about deficits? Deficits don't matter. Why are you guys over there talking about politics? Are you crazy? And it was because I strongly believed, man, like, we are in this moment where we are going to be forced to make a choice. And we are now seeing ourselves struggle with making this choice. And it's a hard choice. There are no good outcomes. And I think, as Thomas Sowell said, there are no solutions, only trade-offs. Chris Vecchio, Tax the Risk says misdemeanor. I don't disagree, man. But that has a cost. That's what people don't understand. Everything has a cost. Chris, I'll give you the last word here.
If we want to get down to the first floor of the house, there have to be better options than jumping out the window. You know, I feel like what's being presented in front of us is a very false dichotomy where it's like, well, we want to get downstairs. We can either install a fire pole or a slide. And I'm kind of like, stairs? There's a better way to do this. You can, like, I don't necessarily agree with Trump's stated goals, but if I were him and wanted to accomplish them, this would not be the manner with which I would want to do so, because it spends so much political capital upfront in a way that could materially hurt a lot of people where you don't have the buy-in. When people say, yeah, it's some pain for some gain, we're going to be worth it. Well, you have to give something people to think that it's worth it. And the polls just say that a lot of individuals don't right now. You know, this is like the polling about tariffs is like a 52-20 issue where everyone else is basically undecided. I would suggest, if this really wants to happen, we want to reshore manufacturing here. We want to bring jobs back home. We want to bring back good middle-class jobs back home. They need to approach this in a different manner, because this is going to get bad very quickly. And that's not just for equity prices. I'm not buying zero DTE calls tomorrow. I have no plan on doing that. But for the sake of the economy, like, please give clear messaging.
What do you think about, let me ask you this question. What do you think about those clips that have been circulating? I posted this on my Twitter as well, which is the sort of the 90s, I think it was the mid 90s, where Nancy Pelosi and Chuck Schumer were talking about the trade deficits with China and the need to do something about it as it eroded the middle class. And then I think other clips of Bernie. Bernie's said this several times, but I think I posted the one from 2005. So what do you think about the messaging from people like Chuck Schumer, Nancy Pelosi, Bernie Sanders throughout the mid-90s, and juxtapose that to the solutions that they implemented when they had the reins of power in the years that followed all of those statements?
It's a good question, but I'm going to approach this from the trader's perspective, which is to say that as new information comes to light, we reserve the rights to change our position at any time. If I'm going to be long today, that doesn't mean I have to be long tomorrow or even long after I finish the sentence. I have the right to go into the market and flip. And I think over the span of 20 or 30 years, the facts certainly do evolve and change. If you pulled a clip today of someone in the 1990s speaking about how the U.S. should work with Russia and say, well, you were saying this in 1994 about how the U.S. should work closely with Russia. How come you're not saying it now in 202024? Things certainly change. Trade relationships certainly change. Letting China into the WTO.
So in your opinion, go ahead. Sorry.
I think China joining the WTO
go ahead.
Certainly is something that changes the facts on the ground. If it's given preferred trading status, that's certainly something that changes facts on the ground. A lot of what was being done in the 90s occur, and what happens in the early 2000s around all this is still when the United States is the world's largest counterparty in terms of trade, where over 50% of nations worldwide have us as their global trading partner. We can set the rules of the road when you have more than 50% of global GDP and 50% of global manufacturing capacity on your side, an event that we had, or rather a series of events that we had in our pocket from post-World War II up until about 10 years ago. But once that changes, and once you're the plurality and not just the outright majority, the manner in which you can go and effectuate these changes evolves. Europe has become very close with China, right? Europe can never fill the U.S. consumption gap that we take away from China with these tariffs, but it can certainly work more closely with China. And do we really want that to happen here? Is that in our best long-term interest, having China and Europe on the same side when we have our own geopolitical issues to worry about? Maybe, maybe not. I personally don't think so. So again, there are ways to get from point A to point B that don't involve cutting off our nose to spite the face. And again, there's no path dependency here. I don't think that we're waking up with any coherent strategy day to day. By the time it gets to 8:30 a.m. every morning, you've heard from 3 or 4 different Trump officials. Peter Navarro saying that Elon Musk hasn't built a damn thing. Elon Musk saying that Peter Navarro, slew of words. Just insert something inflammatory over the past 24 hours. Howard Lutnick's going to be obviously backing up Trump.
He's not wrong. He's not wrong. Navarro's
absolutely wrong about Musk.
He's not what are you doing?
Don't make me defend Musk.
What the hell are you doing? First of all, he's got the weirdest hand motions of anyone I've ever seen. There's 3 people in my life. And by the way, now that I've said this, you guys will never be able to not see it. But Navarro's hand motions on camera are so unnatural. It's like, in Men in Black, that guy, the alien gets into the human body and walks around and you get to what is this weird action? That's like Navarro's hands. And there's 3 people who have that. Gavin Newsom.
Sugar water.
Peter Navarro. Yeah, sugar water.
That's Peter Navarro, basically.
He asked for water, sugar water.
More.
It's Peter Navarro, it's Gavin Newsom, and it's Andrew Yang. They have the weirdest hand motions of any human being I've ever seen. But back to the way you answered the question. I'm going to challenge you a bit because I think it was a cop-out answer, Chris. I think you're saying that you reserve the right to change your mind, but then on the other hand, you're also saying that the realities of wealth inequality from globalization exist, and that you clearly see the link to China, to WTO, outsourcing our manufacturing to other low-cost labor economies. You clearly see the scarring that created. You see it as a problem. You see it as something that should be solved. But you're saying that in this case, these people who are outlining the problem in the mid-1990s, that somehow new facts have come in that validates them changing their minds or changing their position. How can both of those things be true, Chris? What new facts came in that changed Nancy Pelosi or Chuck Schumer's mind about what the Chinese trade deficit was doing to the American middle class? That so much so that they chose to do little about it when the Dems had the reins of power. Tell me, what exactly changed?
Perhaps a good analogy is maybe 20 or 30 years ago, let's just use the, for lack of a better phrase, like let's consider like this a small cancerous cell in the body, right? And this is again, not a great analogy, but let's just say China was the small cancerous cell in the body. At the time, the preferred treatment was just like chemotherapy. This tumor has gotten so big that just doing chemo alone isn't going to be enough. We have to do surgery. So if you're just saying, okay, let's do the chemo now, that's not necessarily going to get rid of the tumor. We're going to have to cut it out first and then do chemo on whatever's left over. There's multiple steps to this is the point. If we want to extricate China from the system, we can't just use a sledgehammer here. It is interwoven in South Korea, in Japan, in Canada, in Europe, in every place that we do significant business now. The people who we consider to be our main allies, China does significant business in as well. And that's something that Russia did too with Europe. Europe was very conflicted with how to handle Ukraine because they needed Russian oil. So Russia did a great job over the preceding decade funding green groups, leftist groups to get nuclear power shut down, right? Stop any real progress towards a green future. And they just become more hooked on Russian gas. And so when Russia wants to make its movements, Europe says, we don't like this, but like we kind of depended on these guys. If we really want to fight back against China, you have to go in there on a very surgical level and disentangle and detangle the trade relationship. Otherwise, you're going to hurt all of our partners that we need to win this battle along the way. And they're not going to like us for that. They're not just going to be dragged along. So I don't think opposing the highest rate of tariffs overnight since the late 1870s is the way to do this. I think we can get to where we want to go from point A to point B, if these are Trump's goals, without doing this in the manner that is the most destructive for us. Because this is just going to hurt a lot of us for no other reason other than this being ham-fisted. Like Victor, you and I sat down and we have these stated goals. I bet you and I could sit down tonight. You get a beer. Well, it's early in the morning for you. So you get a beer. I'll get a beer. And we'll sit. It's your birthday, right? We'll sit down. You and I could figure out if we wanted to do this, we could actually put together a cogent, logical plan. What dominoes to knock down first, what reforms to get through, what tax policy changes to do, build up the arsenal of the willing nations to box China in, as opposed to, why the heck are three historical enemies in China, South Korea, and Japan all talking about working together? They can't solve stuff for anything for thousands of years, hundreds of years. And now they have a reason to turn towards one another? Come on. You and I could figure this out better. This chat could figure this out better together. This is not the right way to do it.
I disagree.
I have more faith in the chat.
I don't want to disagree. I don't want to disagree with that. What I actually want to say is that if you telegraph something to the market that it doesn't like, it will Liz Truss your ass. The market is so sick in its ability to inflict pain to a max level degree that I think it's much harder than you're thinking. Like, I think the world that you live in, and I respect the world that you live in, the world that you live in is a law world. You think you can sit down and write out the law, write out solutions, and then go past that stuff. And I'm telling you that your world, that idealistic world where you write down the best possible outcome and then you go, guys, I solved it. This is smart. You go running into people that are getting their palms greased to go, I don't like this, or I've got a reason to shoot you down, or I'm going to do whatever thing to get in your way. And I think, or let's say you put it in front of, you end up getting it passed, and the market tanks your borrowing costs. And so I just think there is an element of being held hostage here. We are held hostage and it's difficult to solve these problems. And there is an element of surprise here. There is a little bit of something to the crazy madman strategy that is perhaps necessary to break through all of those forces, all those incentive structures that are holding this hostage. I'm not saying, because people do this all the time to me. They go, "Oh, I can't believe you're for tariffs." I go, I'm not. I'm not necessarily for tariffs. And my best case, the best case outcome that I can see, is that all the other nations come to the table and they negotiate a tariff-free relationship between the U.S. and that counterparty, and that ends up helping to fund new capital expenditure in the U.S., which means we don't have to take on a bunch of debt in order to do that. That will only further our problem. And so I can see an outcome here, regardless of it's the right strategy, the right tactics, the right person leading it, the right whatever. I can see an outcome where getting the rest of the world to share the debt obligations, to invest back in American manufacturing, to help at least create new revenues. I don't know if it creates new jobs, quite frankly. I've said this before, because I think the manufacturing plant you build today is very different than the manufacturing plant you built in the 80s or the 90s. So I don't know that it actually gives us new jobs, but it probably generates new tax revenue given our existing tax scheme. So I see a happy path. I don't know if we get there, and I don't know what the probabilities are. But again, to everybody who's criticizing what's happening, I'm not defending it. I'm only asking, what is your solution? And I hope you'll reach out to me at Victor Jones on Twitter. The Owen Jones is 0 because I like to be difficult, or you email me, victor.jones@tastylive.com, and have a constructive, respectful dialogue that's built on finding solutions and not necessarily Monday morning quarterbacking and tearing down the world, because I don't think at the end of the day the rabble-rousing is actually productive. Chris Vecchio, I told you this was a little birthday present to myself. You did not disappoint, man. I really appreciate your perspective. I appreciate you joining, being flexible to switch your evening nights around. If the people want more from you, and they should, tell them where to go.
You're welcome. I gave up a chance to go into Manhattan tonight to be on CNN, so I have to do that Thursday instead. You can find me. Not kidding. I'll find you. You can find me here, of course, on The Price of Truth. Usually Wednesdays, but this week and next week as well. I'm here on Tuesday, 6 p.m. Eastern. Usually Tasty Live Monday through Friday, Futures Power Hour, 1 p.m. Eastern. Overtime, 4 p.m. Eastern with Radigan and Spivak. And then Tuesday mornings, Let Me Explain with Tom and Tony, 9:40 a.m. Eastern.
My friend, you know where to find me. Chris has got a couple of schools to go check out, I am sure, so we're going to let him get out of here, and I will I will see you back here tomorrow, same time, same place, same great network, only on Tasty Live. Until then, good luck out there, folks. Peace.